Peter.
I know you from somewhere.
I'm back.
Let me think. Yeah, you are. Look at you. Welcome back, my friend. Missed you last week.
You couldn't think what would be a funny place that you would know me from?
I didn't know you
in your life.
You actually had, you're all shaved, you're cleaned up, you look good with everything.
Yeah.
Fantastic quarter zip, I just got to say. I mean, someday I'm going to be able to live the life, but up to this point, it's Costco quarter zips for me.
Your old quarter
I had
zip.
to fight an old man for the medium. Yeah.
But
so there's one blue left, and he was not giving it up right away. He was doing a lot of looking.
That's not Costco.
What?
That's not Costco.
This one?
I can see the logo on that. You're not sure?
I'm not sure. No, I do. This one's not Costco. Nonetheless, so welcome back. You had a good Christmas. You're off on the West Coast with your family.
Yeah, so my family, all of us are from Chicago. My mom's from Chicago Heights, Italian. My dad is from Beverly, Irish. Two different Irish and Italian South Side Chicago neighborhoods. Growing up, Christmas Eve.
Tell me, so Chicago Heights and Beverly, are there actually walled cities where they, like at Christmas time, they have those things that I watched Gladiator 2, which you can.
Yeah. Oh, you saw Gladiator 2.
It's not as bad. Everybody said it's absolutely horrible.
Okay.
It makes no sense because I don't quite know what the plot is.
Okay.
But the action was okay. But, they had the old catapults where, they.
Oh, there's a war going on.
Yeah, there's always lots of wars going on.
Okay.
And, they put the jug with the flame stuff in it, shoot it out over the wall.
Yeah.
I imagine Chicago Heights and Beverly.
So now
Is it kind of a battle or not?
I know in 2024.
It's aggressive. Once you go past around 1200 South here, which is right kind of at the end of Michigan Avenue, it gets very territorial.
1200 South. So would the equivalent of 12th.
12th Street. Yeah,
12th Street,
I've never ventured further south than that.
You've never even hit Roosevelt.
No. Again, I've been down to 47.
So I can't tell. I know that this isn't in vogue in 24, soon to be 25, but this sounds to me like anti-Italian rhetoric. Like you're saying Italians, it was the Romans in Gladiator 2, they're always fighting. And now Frank's from an Italian-American neighborhood, are they lofting, bombs at each other, them and the Irish? We're always fighting or something. Is that what you were trying to get across, the anti-Italian-American?
Absolutely not. The fact that you kind of bucketed them into these clans or, derivatives.
Because your name doesn't end in a vowel. Mine does. So I don't know if you can say all this anti-Italian kind of stuff. I've been watching The Sopranos. They don't take very kindly to language like this.
Oh, bada bing. All right.
But yeah.
All right, Polly Walnuts.
We used to, it would be Christmas Eve, Italian side of the family, in the far south side. I don't even know. Let's just call it Chicago Heights.
You do the 7 fishes?
Yeah, that would be Christmas Eve, Italian-American kind of.
And you get the fishes out of the moat surrounding the.
The presentation, I think, is up to interpretation. Okay. You're just supposed to try to work in as many fishes as you possibly can.
Okay, gotcha.
And then Christmas Day would be my dad's side of the family, Irish. Awful food. Everything cooked way beyond well done.
Well, that sounds a little bigoted. If I was to say that, I mean, wow.
I'm Irish. I have red hair. I can talk about the Irish, I think.
Wow.
And I don't know if all Irish food is bad. It was just my grandma, great woman. She taught me a bunch. Not a good cook. Everything the bread, it would be like buns in the oven. Those are black. Everything was just here's a pot roast or whatever. There's no red meat in sight. It was unbelievable. But this year, so now my family's crazy. My brother lives in San Francisco.
And you're bougie now. You're in San Francisco, so I imagine it's all this health food.
It wasn't that.
Was it like tofu?
It wasn't that at all.
Fish or something?
It was like my dad tries to reenact all this stuff. And of course, he's the Irish side of the family, wants to be Italian. And so it's prosciutto all over the place. It's all these
listen
awful.
to you with the gabagoo.
like awful for you, like cured meats, and I felt like I was like sweating.
I was gonna say enough
the whole
sodium
time.
for a year in a day.
But it was like 2 days in a row because we're in San Francisco, all in the same Airbnb, the same house, and so like Christmas Eve and Christmas, it's just like all like food constantly coming out. The first thing that they did when they landed was go to Costco and just get as much food as possible. Because I think now my dad in his older age. Have you found this now that you're really old as well? Going to the grocery store is like his favorite thing. Is going to the store your favorite thing?
I hate going to the grocery store.
Really?
Yeah.
But you go to the Grand is chaos.
I go to the Costco. Oh, strictly for.
You don't even like going to the Costco.
I do because they've got like I want a generator. And they have different generators, and I haven't pulled the string, the cord on it yet, or whatever you call. Because I'm not quite sure if I'm getting one big enough, or if I'm being cheap and getting a small one, and it's not going to power anything. Let alone, I don't know how I'm going to power things if power actually goes out. Because unless you buy a really expensive one, it's not wired in your house. Long story short, I go there for like. Light bulbs, batteries, and tools. Those are fun. Those 3 aisles, my wife knows she can leave me safely
at Costco, though.
Yeah, and rarely am I going to muster the strength to pull the generator off the pallet to put it on the other pallet with no idea of how to load it in the car. So she knows I'm safe there. I can wander. She'll go do all the shopping. But going through those,
she does.
Going through the lines of like buying food and then getting in line to pay for it, that's torture.
Yeah. No, I agree with you. I hate going there, but my dad, he's gotten in the mode of like it's like some like beautiful mind math problem of like how can I get like he's doing like YouTube videos on like actually this olive oil is better than this olive oil and this price you can get this time of the year and everything else. He loves it, so it was a good time. I did some hiking. I was able to get outside.
Yeah, those were good. Those were nice pictures.
Yeah,
That one was really nice with the waterfall.
Yeah. It was nice. We went to Muir Woods in Marin County, north of San Francisco.
It looked cool and rainy.
Yeah, it was overcast a lot. We went to Alcatraz.
Is that where
my kid's sister really wanted to go to Alcatraz?
I wondered if that's where you were.
Yeah,
that was a solo picture of Kelly.
It was nice and also
Tell us
not
a lot
so nice.
about your relationship. We should walk through that at some point.
What?
Just a solo picture of your girlfriend in Alcatraz.
I thought it was fun. Yeah, she was in the yard.
Yes, that's what I meant. Yes. It looks like she was fashioning a shiv, so you should be afraid.
It was fun. That was also the nicest. I was kind of mad because it was the nicest day that we were
Was
there.
that worth going to? Because you got to get on the boat and everything, and
it was fine.
Okay.
It's cool for like 30 minutes.
Yeah.
But it feels like, thankfully the boat's only like 15 minutes. But it does feel like it takes a big chunk of your day.
Right.
For like essentially like, oh yeah, like Capone was here. And like, this is kind of an interesting structure. But like you kind of walk through it and then you're just like, all right, it's pretty good. There's like plants and stuff, but you get that anywhere in San Francisco. So I would have rather been like
because down in Beverly you have a Supermax. So I'm just fascinated that this interest
the whole
have
town
in
is
prison.
actually you talk about the walls and it is a prison. The whole town. You're such a jerk. You know that. But yeah, it was good.
Well,
and
good. It's good to have you back. Don't like you being away a whole week. Wheels.
Yeah. What happened? What happened last week? What I miss?
What did you miss? Actually, there was a lot going on. I mean, dollar again, pretty darn strong up till Friday. It relented a little bit, but equities, U.S. interest rates, bonds were down to 113. Tuesday, we had a pretty nice bounce in bonds and notes. It seemed like maybe they got these guys trapped. All this higher yield talk, and they failed. Thursday they traded again. Friday they failed. Commodity currencies are still getting just beat up. Kiwi, yes, up a little bit today. Aussie up a little bit today. But even the safe haven stuff like Swiss, absolutely getting crushed. So is this two-way tape action? This is just waiting for the next. It feels like, I mean, there's no risk to being short here. In other words, the tape action itself, I thought we had a couple of days where early in the day, it's funny, and the ranges have gotten so compressed. You look at a 25 pip bounce, you're like, oh, market's higher. Then you realize, no, it's not. It's just the range.
It's a rounding error.
The ranges are really low. So tape action wise, commodity currencies bearing the brunt. China hurting a little bit. Commodity currencies a little bit. Gold was off a lot. Silver back under $30.
Wow.
Thinking we were 35 in November. We're back under 29, 30 in silver before we bounce back to 30 today.
And Pete is calling out a lot of the metals action with the Aussie chart up because this is a commodity currency.
Right. And so I'm trying to look for, and we know there's a positive correlation to metals. It's dynamic. It's not as tight as it was 5 years ago. For Aussie, for Canada, it used to be crude. For Kiwi, it was just part of being Aussie and their proximity to trade. But the usual suspects in terms of, okay, what's going to cause this to be oversold? What is giving it maybe some lift? None of the usual suspects are helping these commodity currencies at all. Yeah.
So it feels very much like the dollar is even with this rally of, you see Kiwis up 30 pips, 0.5%.
Yeah.
It feels like the dollar is holding on to all of its strength going into the end of the year here. And we're waiting for, and that's what's interesting about a week like this, is it could be today, tomorrow. It could be the end of this week. It could be next week. And I know we'll talk about the economic calendar.
It could be from 52 cents too. Let's not forget that.
Exactly right. So, and that's what Pete's point of, it's not that there's no risk to being short. There's, of course, equal risk on both sides.
Absolutely.
But it feels like down here at a point like this, there's more risk to being short something that's so beat up. But the last several days, the fact that we got down here going into the Christmas holiday and then around the holiday week, we have seen really no significant bounce in any of these currencies or sell-off in the dollar. Feels like there's not asymmetrical risk to being short this currency or long the dollar, even amid all this strength. It seems very symmetrical, and the market telling you very comfortable with all this dollar strength.
And last week we had big down moves in equities, big up moves in equities. Mm-hmm. Friday was a weird day. They sold equities really hard, especially tech. Came back last hour and a half, and it was just like
so weird.
And then Sunday night they had to put another 30 points of juice in. It's just like they're not. I don't know if they're ready to release or not yet. Crypto's having a little bit of a hard time. It's 93,000. How hard a time is it? It's less than 105, but not that much less. Yeah. And we're still $13,000 above where we started out in November. But that story aside is that from a trader standpoint, you're looking for all these things have an ebb and flow to them. There's correlations that are sometimes more robust than not. When you're looking at, is this cheap enough? You're looking for something. You're getting equities up, doesn't help a strong dollar. You're getting equities down, doesn't help a strong dollar. You're getting gold up $40 and then gold getting crushed. It's not helping a strong dollar. So when I look at my little toolbox of, okay, what is maybe giving me a little bit of edge to say that short of that, this is really cheap. And I'm going to get out at what I think is an even cheaper level, but I'm going to get out because I don't know where the bottom is. Now, you go into year end, is it also a month end? It's a year end. Traditionally, we see FX flows.
Yeah.
What are they? I got no clue.
Yeah.
When do they come? The first wave usually hits around 10 in the morning, Chicago time. Why 10 in the morning?
This would be tomorrow.
Happens to be tomorrow.
Okay.
That happens to be 4 o'clock London time. That's end of day. A lot of funds and firms manage their hedges, manage their books once a month, and they do it at that time. And why do they do that? Because within their paper, their documentation of methodology that they give to investors says this is how we trade. We put things on at this point, we manage it. If they don't follow the methodology, then they're not providing the appropriate fiduciary responsibility. So that's a reason why sometimes we see these kind of outsized flows. Now, does that mean there's this wall of buying that comes in, of short covering, or does this mean The guys are, hey, I've got to rebalance because I don't have enough short Kiwi now because the Kiwi's worth less, and I'm going to go ahead and sell it. I don't know. And you'll see these little fits and starts. And what that is are guys trying to figure it out.
Well, and
so be mindful. There could be outsized ranges tomorrow. At 10, 10:30, and 11 o'clock is an interesting point. 3 o'clock, U.S. equities close, an interesting point. Tuesday is not like Christmas Eve. It's a full day for everything. U.S. equities, bonds, everything stays open a full day. So we'll trade a full day in FX.
Yeah, and a couple of things. On the month-end flows and the year-end flows, whatever you want to say, and going into that Wednesday holiday, the worst thing you can do is try to create a story before it happens. I feel like we get sucked up into this all the time of like, oh yeah, this dollar has had such a run, and so I'm going to get short this US dollar going into these month-end flows because these guys are all going to be, having to rebalance and be covering a lot of these long US dollar. But creating a story going into it, it's a 50-50 play. Coming out of it, though, looking at the tape action as that month-end flow is happening, and maybe you see US dollar selling off, and you look to either ride that trend if you're a trend follower, or go against that as a day trade tomorrow, knowing that, hey, this is the end of the month, I'm putting this on for 15 pips, 20 pips, whatever, as a day trade. Doing something like that historically has been more successful as a strategy for me than trying to predict. It's the same going into the Super Bowl, where it's like, oh, this team has a good offense and that team has a bad defense, and so the story is going to be X, Y, and Z. You never know what the story is going to be. And so trying to predict and create a narrative in your mind of this is how the price action is going to go is really tough. That's when you're really talking about, you're guessing at that point, but waiting for it to come out. And then, that's how you tend to strategize around these things, right?
And maybe that's a poor analogy, but if you start to see, earlier in the US day, Kiwi's getting sold, it's taking out the lows. There may be a little bit more to be done as it's rolling into these time frames. So I'd be mindful of being the contrarian there and buying that. Mm-hmm. I might be looking to see maybe it goes a little bit further, but I'm also being mindful that some months there are no flows.
Yeah. And that's 10 a.m. Central Time, so
10 a.m.
11 Eastern.
You tend to see a chunk go through at 10 a.m., 10:30, and 11 a.m.
Okay.
Is it every time? No, but just you kind of keep a track of that. And then you see a chunk go through at 3 o'clock when U.S. equities close.
Okay.
We'll probably go through a little earlier because now people are, part of it too is people get worried that if they've got a lot to do, market's going to be thin. Mm-hmm. How bad am I going to get hurt on this fill? So there's a lot of assumptions that go in to this. You really have to think about that a break here in Kiwi, 30, 40 point break, may not be the one that I want to say now it's super cheap and I want to buy it. Because number one, if it's 7 in the morning and maybe there's more to be done to the downside.
Well, you're saying in the next 24 hours. Yeah.
Right. Number two is you can't get out on Wednesday. Yeah. So then you're waiting to Thursday. Mm-hmm. And whether or not it follows through or not, I'm not sure. So pick your spots. Be mindful. There may be a little bit more outsized moves. And this is the one thing where I beat this to death, but have an idea where you want to get in. Have an idea where you want to get out. And make that decision ahead of time. Because if you're going to buy a 40-point dip here right at 10:30, it just flushes down 30 pips really quickly.
Sure.
Chances are that's just order-driven and not really driven. You might want to fade that, but if it goes another 20 points, you're out and done.
And then you're going into New Year's saying, hey, I'm going to see how this shakes out on Thursday.
That's not a good feeling. That's not the trade. Because that market will, again, the markets will reopen Wednesday afternoon of New Year's. Chances are they're going to open up right where they are. So just give yourself the opportunity to take advantage of it.
And that's why I get so kind of anti creating these narratives in your head.
No,
because then it's a new story. Then now it's January 1st.
But talk about that, because that's so important for traders. I mean, your P&L zeroes out. You start over a little bit. Go into it with a fresh mindset. Yeah. And you know what? Dollar is incredibly strong here. We'll look at euro a little bit really quickly, because it hasn't gotten beaten up quite as bad as these commodity currencies going into the end of the year. Yes, we're still at the lows, but we're getting a little bit better.
Sorry, I'm going crazy here.
A little bit better tape action in
that. A little bit better of a bounce the last week or so since this big, rally in dollar that we saw, like I say, going into the holiday week, compared to these commodity currencies where, they're still pretty much right there. But I do want to maybe end on this last point, because you brought up a great point of like equities moving back and forth. U.S. dollar pretty much unfazed. Metals moving back and forth. U.S. dollar pretty much unfazed. Crypto, is there a correlation? Who knows? But U.S. dollar pretty much unfazed.
Hey, it is the new gold. It is the new silver. It is the new equity market. I read all those stories this weekend. It's like, okay.
What it's not is the new bond market.
Yes.
And bonds, maybe we end here. What has been some of the tape action in the Treasury market the last week? Because I do notice here today you're seeing a little bit of a U.S. dollar sell-off. You're seeing a little bit of a move lower in U.S. rates. Is that at least a place that people can go for some semblance of correlation or understanding of this U.S. dollar? Or did we see, in your mind, good back and forth in the U.S. Treasury market last week, and the U.S. dollar unfazed by that? It seems like that's one of the only places that if you saw bonds, for whatever reason, rally a full point or a point and a half or something over today or tomorrow or at some point this week, maybe the U.S. dollar gives some. Exactly.
Agreed. 113 in the bonds, where we notes are so 108. That's the lower end of the range. Remember, we started the election 118, went down to 115, all the way up to 122 in bonds, and then all the way back down to where we are right now, 113 and change. Still the lower end of the range. 10-year yields, 462, I want to say. 2s10s out.
Look it up.
2s10s out to their.
Yeah, 10 years are still at 4.6. So Pete saying bond and note prices at their lows, yields still at their highs. 4.6% in the 10-year.
That's the highest we've been all year. The 2s10s, the yield in the normal sloping yield curve, back to 31 basis points. 10s over 2-year yields. That is, again, a normal upward sloping yield curve is what you traditionally see. We're starting to see that come back. I don't know what that means really right now, because
just general, I would say it feels like, and you're seeing it in the prices, as you see the run-up in 10-year yields and you see the normalization of the U.S. yield curve, it feels like it's all just translating to U.S. dollar confidence.
Exactly. It's not giving you a leg to normalization of the yield curve with the back end rallying. In other words, longer dated yields being higher is not helping your short dollar cause
because we thought that it was going to. If you look at historically all of the yield curve inversions for the last 30 years, like you and I have done so many times that people who've watched us are probably bored of it, the normalization is always, and I can say this with our compliance people watching, because if you look for the last 30 years, it's historically the case. Historically, it has always been the short end of the curve getting hammered.
Right.
And you've seen the yield curve, it's normal, short end of the yield curve is low, long end of the yield curve is higher interest rates. It becomes inverted because inflation, whatever, we have to hike short-term interest rates. And it almost always normalizes with yields in general getting hit, but the short-term really getting hit. And we're seeing one of the first times that I have data for in the U.S. Treasury yield curve, normalization with long-term interest rates actually coming up. And so, again, if you're looking for U.S. dollar weakness because the yield curve's normalizing and rates are normalizing lower, you're not really getting it. We only got 2 cuts. How many cuts did we get? 75 basis points, but one of them was 50 basis point cut. 2 cuts this year. They're pricing in only 2 next year. Until that story changes, this U.S. dollar, it feels really confident at these highs. And so I would be not watching. It doesn't seem like you can watch gold or equities or anything for some semblance of a U.S. dollar
point.
story.
Keep
but
your eyes
interest
on rates.
Yeah.
Yeah. Great way to walk through that. Absolutely. And even things like, it's interesting, if you can bring up Swiss really quickly.
Sure.
Swiss, the classic safe haven flow. Now, we had U.S. equities down and up.
Wow. Yeah.
Unrelenting.
This is great. This is
dollars.
really strong.
Yeah.
Wow.
Right. And I thought the Swiss would actually get a little bit of a reprieve.
And Pete's saying that the Swiss franc and the Japanese yen are tend to be, when risk-off sentiment is abound in the equity market, they'll get a little bit of a rally.
You would always buy yen and buy Swiss and just park those as synthetic U.S. equity shorts.
They're highly correlated to the VIX.
Yes.
And you're seeing no rally in this franc or in the yen if we pulled it up.
Right.
Because it's an interest rate story.
Right. It's an interest rate story. So let's stick with that. We'll see how that shakes out. Tomorrow should be an interesting day. Good to have you back, my friend.
Glad to be here, man.
Guys, coming up next, Tom Sazov, Tony Batista, and Vanetta Logan. We'll see you back here tomorrow at 6:30. Have a great day.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready?
TikTok.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm going to say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the Fed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, yeah.
Who do you think is funnier? Who is the better debater?
I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Woo! Get tasty, pre-market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, my knucklehead friend. Happy Monday to you. How are you?
I'm good. Never better.
Are you?
Yeah, pretty.
Well, you probably feel a little bit better now that the spoos have sold off a little bit. 56 handles on the E-mini S&Ps. What's up with this little New Year's, pre-New Year's resolution going on?
I don't know. They were down about 15 when I woke up, and I mean, as foretold last night on First Call, I said they'll take out the lows from Friday, but I don't know.
Can you get off my street corner?
Yeah.
I mean, you've been stealing my stuff for 30 years now, building billion-dollar companies on my back. I mean, must you have everything? You know,
as foretold.
You know what I'm most pissed about? That you didn't cost me $250 million. Okay, that's what I'm most pissed about. All right, obviously.
How's it 250? It would be 500 million.
Well, that's like after taxes. I think you get 500 million. I'd have to give you half. That's 250.
You know, there's only one winner.
I know. You rich people, you'd probably find a way where you wouldn't have to pay taxes. Us heathens, we would have to pay taxes.
Well, there's only one winner in California. I don't know if he stepped forward or she stepped forward yet, but only one winner.
Yeah, I know. That's why I'm saying you didn't cost me any money. So I guess we're still friends. Because I was going to be really annoyed if I had to hand over $250 million to you.
Really? I don't think you would have been. Honestly, I don't think you would have been. I think you would have been pretty damn happy.
I might have been.
No, I think you would have been. Because for $250 million, you don't have to talk to me again.
That's right. That's my number.
You don't have to talk to anybody.
That's my number.
Yeah, right, that's your number. You don't need to talk to anybody. You can just go hide somewhere in, where would you go? Bora Bora or somewhere? God knows where.
I go somewhere in the sand. I don't know.
Somewhere. You'll hide somewhere.
You could bury me like cat poop. I'd be in the sand.
Exactly.
I'd be fine.
Yeah. So
Sadov, I did something you probably would have guessed last night, Sadov. Impromptu trip to the United Center.
What?
See, I told you.
Was there a Hawks game?
There was a Hawks game on. They played the Dallas Stars. Well, they played them for one period, and then for two periods, they just, sat on the back of their skates. It was really, God, they got nothing.
They got nothing. They
don't have a defense. They don't have a goon. I mean, Bedard's got a couple of nice dangles, but the poor kid, I mean, they don't even hit him anymore. It's like, we'll let you have a shot, whatever. It's sad.
You stay for the whole.
So long.
You stay for the whole game.
About 7 minutes till the third period was over. So after they went 5-1, I was done. Although we did have a parlay, 5 or over, and a goal being scored. We got the goal being scored, and I don't know. We didn't stay for it. We ended up pushing it. Yeah, it was.
I am supposed to go next Sunday night, the 5th.
Oh, are you? Oh, dude, you see, everything that Bat does, you got to do. It's unbelievable.
Oh, my God. I've had these tickets for like a year.
I mean, get your own original idea, please.
And I have an event that night afterwards, a crypto event. So I got a packed day next Sunday.
Is it a day game? Sunday day game?
Yeah.
Oh, gotcha.
Yep.
Otherwise, it was going to be like a midnight event. I mean, by the time the game is over, you don't get home till 11.
No, I wouldn't stay out. No, it's like a.
No, not you. No, you couldn't do that. Not on a school night.
No, it's either a 1 or 2 o'clock game. I can't remember.
Yeah, makes sense.
Oh, look at that! Look at you traveling downtown, big boy. Get the big boy pants on. It was a nasty day too.
I was only because I was with my wife. If I was alone, I wouldn't have done it. Yeah, my wife and kid. Yeah, that was it.
It was raining,
and we took Nick, and we took the senior Batista. We took Nick too.
Well, you should have. You almost killed the kid last week. So what the hell?
Almost ripped his face off like that monkey. What was that monkey's name that ripped people's faces off? Remember? The pet monkey?
I do. I mean, when you say rip people's faces off, it ripped one person's face off, but it's the worst.
Hey, you build 1,000. You build 1,000 bridges.
Yeah,
it only takes one, Tom.
Don't ever listen to that video of it. I mean, the audio of it. It's scary.
It's frightening with that monkey, the chimpanzee or something, the pet chimpanzee.
It's frightening. It really is frightening. Yeah, no, but really yeah, I can't watch any Hawks games. Thank God this year. I mean, they did us a favor. So
they really did. They really did. I think Comcast is actually on our side by not letting us have the games.
I feel bad for the advertisers, and I was going to go to the Bulls Knicks game on Saturday night actually, and the Bulls didn't come through with tickets for me, so I'm out.
Yeah, I heard that story.
I tried.
I get. Yeah.
But anyway, yeah. What's going on this morning? Look at these SPUs. They were down a little bit last night. You know, no big deal. They are actually
20, 17 to 20, 20 and change. I saw.
Yeah, actually, when we started the show last night, they were up about 5 or 7, and then they, by the end of the show, they were down 1 or 2, and they kind of sat around there. Yeah, now they're down 58, which is pretty surprising move, and also a crazy move. Natural gas opened up last night, opened at 5 o'clock last night, up about 36, 37 cents.
Which is a huge move in itself, 36, 37 cents.
Huge, 10%. It's a 10% move.
Yeah, it's up 17% now.
And now it's up 57 cents. I mean, that's why I only have a small position there, but it's kind of like a lone wolf, because when you look at everything else, there's nothing else, except I will say.
Yeah, oil isn't doing anything, right? I mean, it's a product of each other, oil and nat gas.
No. I mean, bonds finally have a little bit of an uptick. We sold some this morning. I'm working some right now at 25. They're 23, 24, but they're up 15. Notes up 10. We sold out. I bought a bunch of notes and bonds on the close. They sold them down to 113.02, 113.03, but then they were there last night too.
Yeah, right.
They opened there last night. You could have bought them all you wanted at 03, 13.03. So there wasn't something special.
Right.
Yeah, just looking at the rest of the market, pre-market. Yeah, I'm not sure. We'll figure out what caused this little.
Not sure. They look kind of weak this.
No, I know.
Volatility's up 17 cents. It's another 4% move to the upside. I'm sorry, 72 cents.
I thought that, on Friday they looked really ugly midday, and they were down, almost 110 at one point, and they really looked heavy. And then all of a sudden, the paper started to dry up in the afternoon. And by the end of the day, they were only down 65, 70 in that range. So they rallied about 50 handles. They just gave it back up. But that was a pretty impressive rally in the afternoon. So it's something, as they say.
Yeah, well, they're giving it back now, and some of the stocks that have been rallying or haven't had a downtick in a little while. You got Tesla's down around 9 or 10 or so, trading back to 422. Ivy Rank was coming in there. It's kind of rallying a little bit this morning. We'll see how it opens anyway. I don't like when they open down 50 or 60. I like when I wish we were open during this period of time. That would have been some good two-sided action, maybe.
Yeah.
When they open, down 1%, you're rolling the untested side on existing positions, and then you're looking for things that have been depressed on the way down. You don't get a chance to kind of be offensive with the positions you have on. So, well, we'll see. What'd you do this weekend, my friend?
Nothing.
That's good. That's usually what you're very boring, is what you're telling me?
I was a little boring this weekend. I mean, I did the normal Tom stuff, but I would say I wasn't overly impressive with my getting.
As foretold, with your weekend festivities.
Yeah, exactly. Yeah, I wasn't, like I said, overly. I didn't overly exert myself by doing anything memorable. But you know what? The weather was kind of crappy, so we just hung around and did
at least
stuff.
It was warm. At least it was warm.
It was definitely warm.
Yeah. I mean, thanks for asking. I'm feeling a little bit better. I still have a little bit of a sniffle, but thank you for asking. I know I've been sick for a little bit over a week here, but
you sound a little like crap still.
I'm getting better, but thank you for asking. I really appreciate it. It's very kind of you. I know.
Well, you got everybody here sick, so I think you got everybody here.
I didn't come in. How can I have everybody sick there? It's just what's going around.
Oh,
you gotta blame it on me. I'm patient zero now.
If anybody could do it, you could do it.
That's right. That's where I excel.
Yeah. I mean, yeah, you know what? I probably watched too much football this weekend. I'm embarrassed to say. And
who do you watch?
I don't know.
There's no Bears. I mean, if you can watch that.
Thank God. Thank God. Yeah. I didn't really watch any college football. Just watched the pros. And yeah, just ran around doing crap I guess I was just running around doing crap all weekend. It was quiet everywhere. Spent some time in the coffee shop.
It really was.
It was quiet there. It was quiet everywhere.
That's true.
True. I caught up with some work and did a bunch of other crap.
I took down all my Christmas ornaments and stuff. You happy about that?
I don't really care. I mean, of all the things I have to think about in my life,
I could just feel the warmth. Coming from you.
Your Christmas ornament display is not on my list of top 10,000 things in my life.
All my inflatables are down. All my ornaments are down. The house is back to normal. I mean,
yeah.
You're not proud of us?
Yeah, no, not really. No, not really at all. No. So, not at all.
It's okay.
Yeah, what I'm trying to decide now is, should I go out to dinner on New Year's Eve?
Well, you're a little bit late, a little bit long in the tooth, as they say, for getting reservations. So, I mean, but I know moving a shaker like you can call the Sheridans, and she can get you a table. I know that's a phone call you don't usually like to make, but you'll grovel for the wife and ask. So maybe if you're nice, she'll do that for you. So let's just assume you can get a reservation. Where would a guy like you go for New Year's Eve?
I don't know.
Like, honestly, like, I'm trying to think right now. Where would a guy like you, like, what would you? Some French bistro?
I don't know.
What would you do?
It depends.
Where would you go?
No, I don't want to go like at New Year's. I want to go early.
So why don't you go to like the Whitehall? We got a place over here called the Whitehall, where like it's like an old age home where they do it like at 5:30 or something like that, 4:30. They got a 4:30 seating and a 6:30 seating. I'm looking it up right now. Why don't you go there? That would be fun for you. They got tapioca pudding. Be good for you.
Is the 4:30 seating open?
I know you'd like to get the earlier one for sure.
Bond's trading 25. It's a golden nugget miracle.
I mean, bonds seem to be the canary in the coal mine. Wouldn't you agree with this rally that we've had in the market, or maybe fizzling out thereof?
I mean, we've been saying all along that eventually the stock market has to catch up with the bond market. Eventually,
or vice versa, right? Or you got to have a biblical a rally of biblical proportions in the bonds.
A rally of biblical proportions in the bonds. Yeah, I don't see that happening. I think the better chance of the stock market catching up with the bond market and finally recognizing it, but kind of happening this morning. I mean, I'm looking at positions. All the dollar's down finally.
That's got to mean the euro is up. Yeah, euro is up small.
Yeah.
Mm-hmm.
Yeah, and the Nasdaq and the S&Ps versus the Russell is actually a really good trade this morning. So far so good.
Even the yen's getting out of its own way, Sadnov.
Tiny little crappy bit. Little.
Well, it's an uptick. It's something it hasn't done all year basically.
Yeah. No, I know. I'm looking at different screens here just to see. Man, we haven't had a kind of a down opening like this in a while, especially on a Monday. Surprising going into the last day of the year. I figured today I had the best chance of taking out Friday's lows, and then tomorrow they usually don't mark them. They usually don't mark them down on the last day of the year. I mean, I take that back. They usually don't mark down on the close on the last day of the year. So we'll see what happens. But we'll be here all day tomorrow because
full day tomorrow, right?
We got a full day, and we got the guess the market giveaway at the end of the day where the S&Ps are going to close. Plus, Tony and I made a small bet. I have 59.66, which is exactly where we are right now, to the penny as the closing price.
No. You no.
I have it.
No.
You have 59.25. I have 59.66.
SPX, not ES.
Oh, SPX. You're right. SPX.
Okay. SPX is going to be lower. It's going to be closer to 59.25 where we are right now. So the bat is actually in the lead.
We'll see. Well, whatever this guess is here.
Seriously, for $20, you're not going to be a mother.
John, this is not relevant right now.
Oh, John, that's so sad right there.
Yeah, that's sad.
The saddest thing I've ever seen in my entire life.
Yeah, that's sad. Don't show that.
The bat is gonna win, though.
When you say win, you lost 3 out of 4 quarters. I don't consider that a win.
No, you start the race. It's how you finish it.
We're gonna be putting in though our. I've already put in my guesses for 2025. So
have I.
We'll tell everybody after. What is it? January 3rd, the cutoff?
Yes, January 3rd is the cutoff.
We'll tell everybody after January 3rd. And
yeah, because we don't want to give them an unfair advantage to fade.
I don't want them copying us.
That's right. You don't want them to copy us. Do their own homework.
And the markets will officially be closed on January 9th. It's a Thursday. It is a national day of mourning for Jimmy Carter, and so the markets will be closed Thursday, January 9th. So it's like a snow day for traders.
It's an extra day of decay, free. You get that.
I knew they weren't.
January.
I knew they wouldn't do it on a Friday or Monday, so it had to be Tuesday, Wednesday, Thursday. They don't want to go for consecutive closed days.
Right.
Yes.
Right.
Jimmy Carter
Makes sense.
was the first president that I voted for. First time I could vote.
Well, your record stands strong, Sosnoff. I don't know if he goes down as one of the most troubled candidates that we've had. I don't think it's a good adjective.
Hey, his presidency was one of the best terms of my life. Late 70s. Those are my heydays.
Late 70s, you were dating Rosie Palm. You had just gotten out of high school.
No, I was in college. 1970.
I'm sorry. You were babysitting the iguana.
1977, 1978, 1979, best years of my life. No doubt about it.
Well, you peaked.
I peaked
then.
I peaked in the Carter era. Yeah, I mean, Jimmy Carter brought in.
How apropos.
That was the era of Southern rock bands, and for me,
I'll give you the Southern rock bands. That is true. That was also wasn't that the blackout in Chicago in New York too?
Sure, 1977.
Yeah,
blackout in New York. Talking Heads 77. Yeah, I was in
Son of Sam.
The
Iran hostage.
I was on
problem that we had. Mm-hmm.
I was at Rye Playland on a date with a girl, with a couple of.
You don't have to fudge. You don't have to fudge the story.
I'm not.
Now.
I'm telling you.
After so many years, after just about 45 years, you don't have to say it was a girl. It's okay.
All right. I was on a date with a guy. We were at Rye Playland. We were not on a ride. we were at Ride Play Land.
You were the ride.
And we were walking around, the lights went out. We thought it was just Ride Play Land that night. Mm-hmm. And I don't know did you ever go to Ride Play Land? It was like a crappy amusement park, but it was right on the water, and it was like it was just there was a lot of stuff going on.
We
there.
had Coney Island. What do we need Ride Play Land for?
It was our
Johnny's.
It was the Westchester version of Coney Island. And so
no, man, no. We had Coney Island. You whatever.
I said it was Westchester version of Coney Island. So we were Ride Play Land. The lights went out. We thought it was just Ride Play Land, and but so everybody's like, it's kind of a little bit hectic because there's only emergency lights and all the people are stuck on the rides. We're like, we got to get the hell out of here. So we start walking. We couldn't find our car because it was like everything was dark. And then everybody starts at the same time. It's like maybe like 100 people walking. Everybody's like, "Son of Sam!" Like everybody kind of starts chanting and talking about, and everybody's like, "Oh, great! This is gonna be like we're gonna die."
Yeah, the Son of Sam was a mass murderer going around New York shooting people. I told you this. He actually shot my, I guess you would call him my. I don't know. My mom got remarried, and his son shot him in the leg.
Well, we all thought because he was in like that whole area, like the Bronx, like that Queens, all the way up to like Westchester, and so Yonkers and everything. So we all, everybody thought they were going to die. Anyway, that was that night. I'll never forget that.
I was pumping gas out enough. I was working just like I am right now at that very young age. Thanks to Jimmy Carter, gas was just gone over $1. I remember it. $1 a gallon, and I was pumping gas, and all the pumps stopped, all the lights went out. People were not happy.
I don't know. I was okay. It was.
People were not happy. Then all the shenanigans started.
I'm telling you, best 3 years of my life, the Carter era. So anyway, all right. Well, let's go. Let's move forward and do what we got to do.
Well, in true fashion to the Carter years, even the S&Ps are down 57, NASDAQ down 226, the Dow's down 344, and the Russell's down 14. But we'll take a quick 90-second break. We'll come back. We got more with Confirm and Send right after this. This is Tasty Live.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah. Get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it. but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. You know, and Tasty Live in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures from theory to practice. I don't think there's a show that I don't like, to be honest. You know, that education piece is highly important. I found that Tasty offered that.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market. We talked a little bit about it this morning. Even the S&P's down 58, trading near their lows of 59.62, about 5 handles off their lows last night. They were down around 10, 15 on the opening. You said they rallied to only up around 5 or so. I didn't see the rally, but man, when I woke up at 6 o'clock in the morning, they were down around 26 and then sold off about 20 handles very quickly. Immediately following that, NASDAQ down 227, Russell down 14, and the Dow down 343. NASDAQ is the weakest on a percentage basis. Volatility up 78 cents, back to $18. That's a number it saw on Friday. Briefly, we'll see if it holds 1773 right now. Bonds a little bit of a rally, 113.24. Saw them. I didn't think rallying up to 113.24, but that is the truth. They are up 16 ticks right now. Bitcoin's been weak all day or all night, down 1,500 on the futures, 93.8 trading near its lows. Oil up 27 cents, staging a little bit of a rally, trying to get out of this pretty tight channel it's had from right here on the high end. We'll see what goes there. Gold up $3.60, been going sideways the last couple of days. Volatility contracting ever so slightly. Silver seems to be doing like what nat gas is doing to oil. Silver going down this morning. Gold going a little bit higher. They seem to be the opposite of each other every day, but still going nowhere, going sideways. The big mover on a percentage basis up almost 16, 17% is nat gas up 55 cents. That's a huge move. That's $5,500 on the futures. Big move.
Yeah, we have some strangles on in there. That is our biggest loser this morning, but on the good news front, everything else is going our way. So, and all the bonds and notes that we bought on Friday afternoon, because I bought them right into the close, we sold them all out this morning. So we just have our.
I remember you were trading them after the bell, and we kept saying to ourselves, "Oh wow, somebody really needs."
I was like, please don't fill me. Like I didn't want to get filled because I'm like I don't want to buy any more here. But we sold it. It worked out. So sold them. So who cares?
Yeah.
Now I have my core position on. That's it. Anyway, Friday was 21 DT. One of the reasons that we roll at 21 DT is because it reduces our risk by about, I'm saying our delta risk by like 25 to 30%. It also reduces our gamma risk and our theta risk because you never know what's going to happen. And like today's a perfect example. Vol's up, this would be a morning where for the positions you don't roll, it's going to be painful.
Right.
And that's why we do everything mechanically. So we rolled everything last Thursday and Friday. And so I think, our positions are relatively small this morning. So it's going to be, I don't think it's going to hurt much at all.
Yep.
I'm Tom Sosnoff. He's Tony Batista. No Vanetta Logan until Thursday. She'll be back. Wednesday,
next year. Not till next year.
She'll be back Thursday morning at 7, I believe. And Tony and I will be doing the show today and tomorrow, both morning and afternoons, along with, I think, pretty much a full team here. And tomorrow's a full day. So just as an FYI.
Yep. So
let's do this. Confirm and send. We got a special, little bit longer one than usual, but because Vanetta's not around, but we can get into some more details and stuff like that. So it's Monday, December 30th. We are coming to a close of 2024. I wrote in my cherry bomb mayonnaise sauce, which I have not been able to conquer.
You're quite funny.
The ability to get off a ski lift without killing myself because my legs. I mean, I'm fine skiing. I just can't. My legs don't work the same way I'm pushing off a ski lift. And I would love to end construction on the Dan Ryan. Haven't we suffered enough?
Oh, you mean the 1994? Yeah.
Yeah.
I mean, it is just terrible.
What has it been? 3 years at least?
Yeah. And they usually open it for the winter. They have a sign up there. They're testing. They're testing the lanes right now. They're testing them.
I mean, it's been 3 years. Chicago highways, which you're forced to go down basically, have been under construction. So we've lost a minimum of 2 lanes for 3 years, and Chicago traffic is bad to start with.
Yeah, it's horrible.
So yeah, it's kind of crazy. And let's do it. Monday, December 30th.
Ready.
2 days left to go in the year. Getting lighter every day now. I feel good. Getting lighter, getting warmer.
Yeah, sure. It's dark at 5 o'clock at night. You know it.
Lighter. I heard you mention something about they suck the premium out for the weekend. Can you elaborate on that? Do you mean the market makers or fund managers reduce their bids or offers so that the premium drops? What does it mean they suck the premium out?
Yeah, I mean, I think it's a pretty broad-based term that we use. And I guess you are talking about liquidity providers or those that make the bid and ask. I guess that's the liquidity provider. But really, it stems from the retail investor, too. I mean, remember, you know, everybody tries to attract business. So if there's a lot of buyers of options, they're obviously not going to look to sell things at the same volatility or the same price, even with the stock not moving. So they raise volatility. When there's a lack of interest, they lower volatility. And that's really what we're talking about. And as you get into the weekend, you never know whether it's going to be on a Thursday, Friday going into a weekend or into a Monday, Tuesday, when they're going to raise or lower volatility. So it really is something you can't play for. Now, the only thing you can't play for is everything goes to parity at expiration. That's an absolute.
You know, in our world, which is obviously we live in this crazy derivative space. I think we've used the term, they're sucking the air out of these options, or they're sucking the premium out of these options about 50,000 times. They are the collective, it's the collective of
market,
everybody who trades derivatives. And it's funny because everybody kind of watches the same movie. They do the same things at the same time. And on a morning like we're seeing right now with the S&P's down over 60, they're going to pump premium in. So they may have sucked premium out on Thursday or Friday for the weekend, but they are going to be adding it back in this morning. And so it's the collective money flow, or the collective the collective capital that goes into either buying or selling options on balance. And so, when they suck the premium out, it just means there's more sellers of options than buyers. And when they add back in premium, it just means the totality out there, there are more buyers than sellers. This morning, there will be more buyers of premium than sellers. So if you're a seller, you'll be able to sell anything you want. I mean, with S&P's down 70, they will pump some juice in this morning. I promise you.
Yeah, you got volatility up 6%, sure.
Yeah, you got a little bit of a flight to quality going on this morning, especially, and a little bit bonds are up on a flight to quality. I mean, S&P's down 70. We don't get a lot of openings like this, especially,
no, you don't.
Especially on a Monday morning.
Yeah.
What did Boeing do, by the way? I didn't look after.
It's down about $6 or $7, 174.
Okay. I was curious what it was going to do after the plane crash in Korea.
And we had 4 plane crashes this week or something, right?
Well, there was one plane that was shot down. I mean, Russia shot that plane down. So that's real. I mean, there was an Air Canada.
Three and a half incidents where planes were involved that people died.
There was an Air Canada flight that I think caught on fire, but nobody died, and they landed safely. It was either one of the engines or one of the landing gear, something caught on fire, but everything was fine. There was the crash in South Korea, which was horrible. I don't know if you saw that, but the plane landed on its belly, and that's going to be a very interesting investigation, because I personally, it looks like, I don't want to say it looks like pilot error, but I don't know. It looked weird to me. But when you watch the plane come down, it looks like it came down perfectly. It looks like those guys landed it with no landing gear beautifully. They just ran out of runway, so they might have landed it far out there. I don't know what happened.
Yeah.
But that was ugly. I don't know what the other ones.
Do you think you were a pilot in another life? Because
no, I don't know. But I don't know what third crash you're talking about.
I thought I read there was 4 plane crashes this weekend.
There was a fire on Air Canada.
No, I mentioned the Air Canada, John. It was just, but it wasn't. It didn't crash. It was just caught on fire.
Okay, I mean, a rose by any other name smells just as sweet, right?
Yeah, there was
something in South. There was something in South Korea too, wasn't there?
I just told you about that. Yes.
That's the one that went upside down. Okay.
No, not upside down. That's the one that landed on its belly.
Okay, landed on its belly. I don't know. Whatever. I don't know. There were 39 total aviation accidents. I don't know. I don't freaking know. Who cares? Go ahead. I mean, I care, but I don't have anything.
Okay.
Else.
Anyway,
Boeing's down $7 to answer your question. Okay, that's what you asked me. That's what I answered. $6 to $7.
I just asked because I was just curious, because it was only
You got a screen in front of you. Type it up. It's BA.
I got a position on in there. I don't think it's going to do very well this morning.
I need a little downside movement
because that stock has been on a tear.
It has been.
Anyway, let's go next slide. That's your premium question. If you're a long stock and selling covered calls against it, is there a minimum price at a specific delta that you're willing to accept? I think I've heard you say that you use the 30 delta call. We do. But what is the minimum amount of premium you'll collect? If you can't collect that minimum, would you move to a higher delta?
I mean, the premium's going to be set by the implied volatility of the stock. So, I mean, it's not like you can do something about it. So I go to the 30 delta. Everything is relative. Now, will I move a little bit closer to at the money? I think I would be lying if I said I wouldn't. So, yeah, I might move a little bit closer. Now, what is that number? I don't have that number as a percentage basis to my overall cost on the stock. Usually, I'm doing lower price stocks with higher implied volatility, so it doesn't become a factor. When it's a low premium like what you're talking about here, it's usually a dividend paying stock, which has a very low monthly implied volatility.
There could be a situation where, like, let's just say it's a $10 stock, and you don't want to sell the 10 calls, but the 11 calls have like 30 cents in them. And you're like,
yeah, you're talking about a relatively low price stock now.
Yeah.
Now talk about a $60 stock.
Right. I know. What I'm saying is there's absolutely a minimum amount of premium in most cases that we want to collect, but it's relative to the stock price. So if it's a $10 stock and I could collect 50 cents, I mean, that's 5%. I'd be fine with it. If it's a $60 stock, and I could collect a couple of bucks. I mean, Tony and I both sell between the 30 and 35 delta when we're just opening a trade as a default on a covered call. If we're forced to, because the premium's really low, we'll go to 40 to 50%. I mean, I don't care. I mean, listen, it's still a high-class problem if the stock goes higher. So what you're not going to do is go further out of the money. What you're always going to do is default to closer to the at the money strike. So like if I want to sell the 30 or 35 delta, but there's no premium in it, I'll just go to the 45 or 50 delta. I don't care.
Sure.
It's still a bullish trade. Right. You still want the underlying stock to go higher.
Right.
So there's no reason for not, go. You're never going to go lower than 30 or 35. You can for sure go higher. Okay. And if you don't think the minimum is enough, then go higher. Go to a higher delta for sure. Let's go to the next slide. I have a broken wing butterfly that's moved against me. Now that it is 21 DTE, what's the best plan to try to salvage the most out of this trade? I like to be mechanical with my trading and follow the rules provided from the research, but I do not have much experience with broken wing flies. This was a put broken wing butterfly that went against this guy.
Now let's think about what a put broken wing butterfly is, or any broken wing butterfly is. It has an embedded short spread in it. In this case, it's a put spread. It has an embedded short put spread. That's what this play is. A long put spread versus a wider short put spread. So there's an extra short put spread in here. You can roll all three legs. Unfortunately, you'd have to do it as two trades. You could break it up and do the long side and the short side if you wanted to get both months done at the same time. But typically you close one and open another, maybe at different strikes. There's not too much, like an iron condor here, there's not too much you can do with a broken wing butterfly to kind of extend duration on it. Yeah, you could break it up and make it into a straddle. Yeah, you could break it up and make it into a 1/2 ratio spread, but then you're changing the whole thing. Usually with a put broken wing butterfly, you're going to kind of set it and forget it. There's not too much to do if you can't roll from 1 month to the next. You could sell it in bet. You could sell a call spread against this. That wouldn't cost you any extra buying power. That's one thing you could do.
So as I remember this email, it was a put broken wing butterfly, and I can't remember the exact stock. It might have been UNH or something. I don't remember the exact stock, but which means this person had embedded a short put spread into a put butterfly, and the stock went down below the strike. So it's basically short a put spread. So like Tony said, you could sell a call spread above the market. I have to tell you the truth though, when we trade broken butterflies, it would be very rare for us to sell an out of the money call spread against a broken wing butterfly that's being challenged. Our preference at this point, with 21 days to go, would be to either hold out and see what happens. I probably wouldn't adjust anything because it's defined risk trade. I would either hold out and see what happens, or close the trade. Because at 21 DT, you can still salvage a lot. Remember, when you do broken wing butterflies, the short put spread in there is usually between the 16 and 22 delta. So it's somewhere down there. So the chance of getting there are pretty low, and the chance of it coming back and landing above that are pretty high. So these things don't, I mean, the loss at this point is probably relatively manageable. So A, you either take the loss, or B, you kind of gut it out. If you want to do something against it, you sell a call spread, but we probably don't do that.
Yeah, selling the call spread doesn't use any more buying power. That's the only reason why we even look at it.
Okay, that's fair. It's all right. They're all doable. I'm just saying, I don't remember the last time I sold a call spread against a put broken wing butterfly that was in the money. I just
That's fair enough. Fair enough.
Let's go next slide. I have a lot of positions on that are around 21 DT and need to be managed. Remember, these people wrote these emails over the weekend. Friday was 21 DT. Some of the positions are not profitable, and I need to decide whether to roll, close, or hold them. What IV rank would be the minimum you would need to roll the trade?
And you know what? If they're not profitable, hopefully they had a little bit of short delta to them because we're down a little bit, and you catch a little bit of a break here because we were rallying the last few days, I guess. Maybe it's working out for you. I hope it is. Anyway, with the IV rank, what's the minimum I'd be looking for? I mean, I get a little stubborn. I would like to say over 30. I probably would roll at the latest, like the extremes, over 25, 20 to 25. But over 30, I guess, would be my answer. I would prefer you to do.
Yeah, I mean, based on Tasty research and just, I mean, occasionally I will roll a trade that has an IV rank under 30. So I don't want to say that I'm 100% mechanical on this in that I won't do something. But if the IV rank is over 30, we'll roll. If the IV rank's under 30, we probably won't. But occasionally, if I think the stock is super liquid or I like it, whatever, I will. So that's all I want to say, is that there's an outside chance that we'll roll under 30, but for the most part, 30 is the cutoff. What's the minimum you need to roll? It's 30. IV rank. Let's go next slide. So in general, what is the range of annual returns that can be reasonably expected from trading options? That is, let me just preface this by saying there is no such thing as.
I was going to say, tell me how much risk you're taking, then we could talk. Like, I mean,
I'm going to give you like a weird. Tony and I will both give you our own answers to this, but it is, you cannot reasonably, once you get above risk-free rates, you cannot reasonably expect something. It's just, I mean, we all do it for different reasons, but I don't like that term, but go ahead.
I just do it to beat Tom. That's what most people do trading that watch this show. It's pretty easy, but go ahead, Tom. What's your answer? I'm sorry.
Well, so the way I answer this question is start with risk-free rates, which let's just say are 5%. They're a little less than 5%. They're 4.6, whatever they are, 4.6.
And you try to triple them? I mean,
and you try to do some multiple of risk-free rates. I like to tell people that for all the effort you put into trading, for the learning, the resources, the time, the risk, and everything else, you need to make some multiple of risk-free rates. And that multiple, let's just say risk-free rates are 5%. Let's round up. Then that multiple needs to be on the low side 3 to 4 times, on the high side 5 to 7 times. We like to say that a reasonable expectations from trading, and this goes back to, this is 40 some odd years in this business, 18 to 36% would be targeted, be an objective. Do we always get there? No. Have we done better than that? Of course. So we're all over the place. But if you wanted me to throw an answer out there, 3 to 4 times risk-free rates at a minimum, because you're not going to do all this work for an expectation of 7 or 8%. It may be that you make nothing. Maybe you lose money. I don't know. But the expectation has to be greater than risk-free rates. It has to be some multiple. It can't be, 150% of risk-free rates. So it can't be 7.5% because it's too much work for an extra 2.5%.
Right.
Now, if it ends up there, great. You tried. You got, listen, I have no idea where it's going to end up. It really depends.
I'd rather try and fail than have never tried again.
Sometimes the market accommodates you, and sometimes the market wins and doesn't. We don't control that. So what's a reasonable expectation? Some multiple of risk-free rates.
Fair enough.
Okay.
I mean, it's hard to say, 3 or 4% when the market's up 20, 25% a year. You say, oh, well, I just stayed long in the market, but that's not a typical market.
Sure, of course. If you want to exit a losing long position, can I sell a deep in the money short call to collect the premium and hope that they will call away my long stock? Is that a viable strategy? This person is long some stock, Tony. So
yeah, and they're trying to get out for a little bit more than what the current price is, I'm assuming, right?
That is correct.
I mean, you could. I mean, I don't know how much premium you're gonna collect. I mean, typically it's not a lot if you're deep, in the money. If you're talking about a 70 delta call, maybe there's some premium there. If you're talking about a 90 delta call, then there's probably not a lot of premium there. I would rather you sell an out of the money option and collect the same amount of premium. I don't know. This is a tough one. Usually, if I want to get out, it's best to just get out.
Could you do this? Of
but
course.
To answer your question, if the stock stays where it is, yes.
If you sell a deep in the money short call and it has, let's say, maybe 50 cents, $1, whatever in premium, because it has, just because it's an option rather than stock.
Time has value.
So time has value. So it has some premium into it, and you sold that against your long stock. Yes, 99% of the time, or whatever the delta is on those.
No, not 99% of the time. If it's a 70 delta,
whatever the delta is, is it a viable strategy? Sure. Would we do it? It's not the way we trade, because we'd probably just sell the stock. We're not that, when we want to get out, we just get out. So
we're not that cute.
Yeah, it's a little too cutesy for us. But is it a viable strategy? Sure. Lots of people do that.
But it does leave you open to risk, though, right?
Yes, of course. Of course. Whatever the delta is, that's your risk percentage.
Yep.
But is it a viable strategy? Yes. Do we do it?
Mm-hmm.
No. Let's go next slide. What are you looking at or looking for exactly when you have the futures on your watch list? Do they give you some directional bias for the day? What insights can you draw from the futures being up or down in the morning with respect to how the trading day might go? And how does that play into your options or into option decisions?
Well, I don't know how my P&L is going to go, if that's what you're asking. I mean, I know what my beta-weighted delta is, my overall portfolio, so I have an idea of what might happen in the market to my own position. But when I'm looking at the futures, I'm looking at what's going to happen. I mean, they're called futures for a reason. They're kind of indicating what the market is going to do. Now, like today, you've got even the S&P's down 70 handles. You're looking at a over 1% move in the market. I'm not going to worry about any stocks that I have short delta in, but I'm going to look at stocks that I might have long delta in and see how they're performing pre-market and what I might need to do there. I guess I'm just planning on where my eyes are going to go throughout the day, where the opportunity is. I'm not going to be looking to sell too many things today, probably. If I was looking to buy something, I might be looking at those stocks that I was looking to buy that might be depressed, try to buy them on the cheap. That would be my thing on the futures, right? And see if there's some continuity to it. Are all the futures lower, or is it just the E-mini S&Ps and the NASDAQ and the Russell and the Dow is higher? Is it more of a mixed sell-off, or is everything lower? Like we have today, this morning, you have everything going lower. Is it more broad-based? So that's what I look at when I look at the futures. But it really does tell me what's going to go on for the day, for sure, at least for the opening.
Futures are the most liquid, most leveraged, most liquid products in the world. They have massively deep liquidity, especially the index futures, and they lead the markets. They're the first.
A lot of exposure in just one click.
Yeah. One S&P future right now with the index at 6,000 is $300,000 worth of stock with a single click. These are rich notional products that trade, a million contracts a day. It's a massive amount of depth and liquidity. Of course, if you saw our watch lists, and we do have defaults in there for my watch list is default on Tasty. Every single thing on my screen right now is a future. I don't even have a stock. I have to scroll down my watch list to get to stocks. My page only holds futures, and then I scroll down to see stocks, after the market opens and things like that. But around the clock, every trader that I've ever met has been trained just to watch futures markets, because the futures markets will dictate what the stock market. So of course, there's individual stocks that will have weird moves, and they'll move against the futures and things like that, and they'll have crazy stock moves. But in our world, we live on a futures watch list. It doesn't necessarily give us directional bias. It doesn't actually give us a crazy amount of insight. What it gives us is it's like tape reading skills. It's like understanding the game. It's market know-how. It just gives us a sense of engagement, and it lets us know everything that's going on.
You also know how much, how busier you're going to be on the opening or in the first, half an hour or something like that too. You see a market down like it is today, or up if it was the same percentage to the upside. You're going to be a little bit busier with positions, existing positions, and for looking for new trades. I mean, it's futures show you what the opportunity is going to be for the day.
Yeah, usually we don't have a lot of days where they open down 80. That's where they are right now. So get your helmet on. Yep. Let's go to the next slide. When you were a market maker and there was a new issue coming out with nothing more than an underlying price, how do you determine the price of an option?
Well, Tom would wait for me to make a market, and then he would just tighten it up a little bit. That's typically what he would do. Right, Tom? Is that how you would do it?
I don't think so.
No, you're right. Nobody really knows, and that's why the markets are typically wide. When you see a new product come out, we'll even talk about it. Wow, this is a popular name. I'm surprised these markets are so wide, because they're looking for the liquidity too. And that liquidity comes from everybody. That's you, me, liquidity providers, the rest of the retail market. As those orders come in, then they kind of tighten up the markets and tighten up liquidity, tighten up the volatility.
Yeah, that's it.
You kind of go by expected move.
I mean,
so the stock has an implied volatility.
Everything is based on, first of all, I got to remember something. You're not talking about amateurs here. These market-making firms have been doing this for a long time. They're the best in the world at what they do. They could essentially make a market on anything. It's the same thing as saying, how do you make a market on the Packer game this weekend? Well, there's a lot of different people that make the first market. Everybody jumps all over it, and usually they're pretty damn good. In the market making business, they just determine, they have a lot of different methods for determining what a fair volatility is. And then once they determine the volatility, they start with wide markets, kind of a set volatility so they don't get picked off too bad. And as soon as the order flow starts coming in, they'll know very quickly if they have the vol set too high or too low, and they'll adjust really quickly.
Yeah, and how they know if they're buying too many options, the volatility is too high. If they're selling too many options, the volatility is too low.
And they will quickly adjust price, and they will quickly adjust the option prices. They'll quickly adjust the volatility, and eventually, when they're confident that they've set everything right, they will narrow the markets.
That is correct.
It's a skill, and they're really good at it. Let's go next slide.
They are. Yes, they are.
And the last one. Once I find a liquid underlying with high implied volatility, what criteria should I use to choose a bull, bear, or neutral option strategy? If you're not looking at recent or past trends, on underlying, how do you choose?
Yeah, you know what? It's a great question. Now, we play the contrarian role. You're going to have to find your role that fits you. So if a stock is on the lower end of its range with high implied volatility, I might look for something that's a little bit more neutral to bullish. If it's at the high end of its range or most recent move, I might look for something that's a little bit bearish to neutral. I mean, so that's how I do it. That's how we do it. I'll also look at the sector. If it's a chip stock and chip stocks have been flying high and this one hasn't participated, I might say, you know what, I'm going to lean a little bit more bullish on here than I am bearish on the stock. That's all. It's a crapshoot. I wish I had a great answer for you.
Yeah. This is a tough one because I'm a contrarian, so I look more I look more for price extreme. So if I think something is too expensive, or too cheap, just relative to other things and where it's been, that's kind of how I make my decision. If I feel like everybody else is too bullish or too bearish on something, that's how I make a decision. But there is nobody knows the answer to this.
Right.
So the default's always some neutral strategy if you don't know. If you have high implied volatility and you don't have an opinion, just go neutral. If you have an opinion, you can tweak a little bit bullish or a little bit bearish. Some people do it based on price extreme. Other people do it based on their own interest in that underlying. Some people like certain companies, some people don't. Some people are bullish, some people are bearish. It really just depends on what you're thinking, what you're looking for.
It really comes down to the strategy, right? I mean, if we looked at any stock and you had a strategy that had a 65% pop, and you asked me if this was a good trade, I would say, yeah, it's a good trade. I have no idea if it's going to work out or you got the direction right, but I'd say your setup is right on entry.
Yeah, I agree with you. I mean, listen, this is. I wish I knew the answer. Our default is neutral, but we are pretty opinionated too. So don't think everything we do is neutral because it's not.
Awesome. Let's take a quick 90-second break and come back. We got more Tasty Live. What comes up next on? Oh, that's right. We've got an option chat with my man Kai next. We'll be back in 90 seconds.
Hey Doc, your tips on diet and exercise have been illuminating. I'm sure busting my ass at the gym 5 days a week is gonna be way quicker than just giving me the skinny shot.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Batten down the hatches, everybody. He's going on the skinny bitch diet. He's gonna be hangry.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
Beth got us presents. What is this all about?
This is so nice.
Oh, a little mini fridge. I love it.
Oh,
I love
look
it.
at that. And it's red.
It goes well with my Mr. Coffee here.
She gives you something hot. She gives you something cold.
Tom's is a regift.
What?
Man.
Beth wrapped up something that she'd already given you.
No, I think I've given you this before.
I want the refrigerator.
It's for your pistachios.
It's for your
Pistachio. No, you put your pistachios on top. You stick your nuts in the. You don't have to take it out. You stick your nuts in the little space, the little hole. Don't
and
use that hole for anything else.
Shells in there. Yes, to keep it clean.
I love it. Good job, Beth. Good job out of you.
I want the mini fridge.
Aw, you're literally a billionaire. You could buy your own mini fridge.
So if you're in a random store, right? You're at Trader Joe's.
Okay.
Okay.
Trader Joe's.
You're standing on.
Am I holding a cart or am I pushing?
You're holding a little
basket. I got a little basket.
Okay, you're Trader Joe's.
Okay, that's fits me.
Random guy, me.
Yeah.
Standing in front of you. You don't know me.
Stands in front of me. Okay.
Right in front of me. I turn around. You look at me. My fly is open.
Nah.
Do you say anything?
I think so.
It's a serious question.
I think
you don't
so.
Say anything.
I am not clocking men's in the line.
I would say,
do that.
Hey, your fly's open.
I would do that.
I would think it's a trap that he would want me to talk like purposefully. So I'm not going to say anything.
What if he says to you, more importantly, what if I'm the dude in front of you?
Yeah, do not engage.
My fly is open, and you say, hey, your fly is open. I go,
thanks.
Do you like that?
I would like.
What do you say next?
Thanks.
I want to go home.
I was a late bloomer.
Were you? Too big?
Yeah, I was an athlete. I was.
Oh yeah. You're too busy with Aragon and Argon?
Yeah.
In the shower, what's your go-to for soap?
Like a Dove Liquid soap.
Thank you.
Unscented.
Thank you. Liquid soap.
Yeah.
These two guys,
liquid soap.
These two
Hate it.
guys use a bar. I'm like,
Hate it.
what year were you born that you still use? It's disgusting.
Pretty disgusting.
Huh?
I can't stand liquid soap.
So that when you pick it up, there's hair all over the bar, and you're, oh my god, it's disgusting. Like, actually, I got to remember in your bathroom. Do you have a pump with liquid soap, or do you have a bar in your bathroom in the first?
No. Communal bathroom. Communal bathroom used the liquid soap.
Yeah, right.
This I have to hear. What's the logic that in a communal bathroom it's liquid, but in your private?
Yes, I agree with Tony.
They're not cleaning their in my powder room. Okay, that's the logic.
Oh my god.
Get the full scoop by checking out the archives at tastylive.com.
It was a great show. It was very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
It's options. Jive.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with this option jive and my friend Kai. Welcome to the show, Kai. How are you?
I'm doing great. How are you guys?
Doing fine. Thank you for asking.
Is it good?
What do you got for us this little week in review?
Yeah. We don't have earnings, but we have something else interesting to take a look at it.
Let's see what you got.
What you got for us today, Kai?
All right. So the routine about the index performance. So last week was on average it was a quiet week. So at least from the beginning to the end, can we go to the next slide? Pretty much the performance under 1% for most of the indices. S&P is up as everything is under 1%. So S&P is only up 0.76%, and Dow and Russell pretty much flat. So last week, we don't even need to look at the expected move. It's pretty much everything's under the 1 standard deviation expected move.
Yeah, for sure. Although today you've got a move that's probably equal to or maybe even greater than the expected move for the market, all to one side, the downside.
For sure.
Yeah.
Right.
And also last Friday, we had a big down day, and we have like 2-3 weeks up. 2-3 days up, so it's kind of even out last week. So that's reason. So we have like 2 consecutive days have a pretty big down day. So next slide. Last week the expected move is $82, and so the percentage is 1.4%, but we only have less than 1% move, so definitely inside the expected move. But this week we have expect move is 1.3%. IB was lower, but this morning came back up a little bit more. I think now it's 18.1 or something, but yesterday was still 16. So yeah, we're right at the expected move right now. Just look at one day.
Yep.
So let's see the rest of the week. We're still in the Santa Claus rally week. So let's see how this week performed.
Where is Santa?
Not on hiatus today.
Looking back 45 days ago, if you sell 1 standard deviation strangle, right now we're right at the middle of the put and call. So anything you sell in the past 45 days, you should be fine for indices.
True.
Yep. So next slide, the IVR change in the past week. The interesting is that IVR actually went down, even though the IB increased on Friday in general. the IVR decrease, except the bonds, because we know the bonds actually getting very close to the all-time lows again. So S&P, gold, euro, oil, natural gas, Bitcoin, the IVR all went down. Especially the Bitcoin, pretty much stayed flat. Went down a little bit, but the IVR keeps going down.
I mean, I don't trade a lot of nat gas, and nat gas is up big today, so that implied volatility is going to be back to the upside here. But man, that's a product that volatility really moves around in. I don't know, that's the biggest kind of surprise for me.
Definitely, because last week we saw the IVR jump all the way up to 92% IVR.
Yeah.
So now it dropped to 22 yesterday. It came back up. So yeah, definitely the IVR is everywhere.
And equally surprising is how oil implied volatility is really, I mean, it's gone down the last couple of weeks here. I see that, but it's been a much smaller, muted move compared to nat gas. When you look at bonds and the market, they're kind of running step by step. I mean, bonds getting down to their lows now, volatility is going higher. That seems normal, but the oil nat gas move seems to be, I wonder if oil volatility is going to creep up here with nat gas volatility creeping the way it is. That's going to be my takeaway from this.
But you guys trade more oil than natural gas for sure.
That's true.
Yeah. All right, so let's go to the next slide. I cannot say the major movement because last week was kind of quiet, but some extremes we saw in the market. Definitely the U.S. dollars. So the U.S. dollar to Japanese yen, the yen dropped to $1 USD to 157, almost 158 Japanese yen. And this morning, it came back up, the yen. So in the past 10 years, the lowest point for yen is $1 to 160, almost 162 yen. That happened mid this year, July. And so this is pretty much the lowest point in the past 10, maybe 20 years too. This is one of the lowest time. And last week, the return is negative 1.4% for yen. And over the long term, the downside move for yen is negative 1%. So last week for yen, still the move is outside the expected move. Or not outside expected move, so larger than the average long-term movement. Yeah. So next slide is talking about the it's still U.S. dollar against the Canadian dollars.
Yeah, these are. I mean, we couldn't agree more. We're at an extreme.
Right. So just try to give you some context. So right now, $1 USD equals to $1.44 Canadian dollar. Based on the data from yesterday, and we almost came back to the level in 2016, which we saw the highest, lowest point for a Canadian dollar in the past 10 years, which was $1 equal to $1.46 almost. And last week, Canadian yen moved negative 0.77%, and the average downside move is negative 1.3%. So look, just based on last week, the movement was not that big, but right now we're sitting at the low, considering the dollar versus Canadian dollar.
Yeah, I mean, every one of these is at a multi-year low. We talked about this, actually, we talked about this last night on First Call, but Canadian dollar is, everyone. Canadian, Aussie, Euro, Japanese yen, not British pound, but all the other ones.
Not pound, yeah. So this is the same
level. Seems to be the strongest of the group, right?
Yeah.
Yeah, right now the level is exactly same as 2020, slightly lower than, slightly higher than the 2016. Yeah. So next slide. Next slide, we have the strongest and the weakest performance in the S&P 500. This is a weekly performance. I only put in the very liquid one with at least 3 stars based on Tasty Trade platform. So last week, the biggest winners, Starbucks, is up 5%, and the FedEx 4%, Broadcom, Walgreens, GM, all up for 3%. And their IVR, except the FedEx, they're pretty high, so very close to 50%. So the worst performers, the CCL, the RCL, those cruise, CTAS. I believe we had earnings last week or 2 weeks ago, probably 2 weeks ago, and First Solar and PLTR. So these are the 5 worst performers. Anything you trade last week?
I mean, we have positions on in Starbucks, AVGO, WBA, and PLTR.
Not AVGO? Really?
AVGO, yeah.
Oh, okay. Starbucks had a really good rally last Friday.
Yeah, I know. And we've been long Starbucks, but it's been a pig for so long that finally came back a little bit.
Yeah, and Starbucks is down small, about 50, 75 cents this morning with the market being down.
Okay, so next slide, we take a look at what happened in December. So, because we're at the end of this month and almost at the end of this year, and next week we need to take a look at the best and worst performer in 2024. So for this month, the best performer is Broadcom, is up 33%. And Tesla is the second one, is up 20%. Lulu's up 17%, PLTR up 15%, and BA is up 14%. Boeing has actually rallied a lot in the past couple of weeks, 2 weeks or so. It went up from 150 all the way up to 180.
Yeah, luckily we missed that one.
Yeah.
Okay. And the worst performer, the top one is CVS, is down 35% in a month, and NUE down 32%, Lennar down 27%, CTAS again down 23%, and UNH down 20%. UNH 20%.
Yeah, UNH was a big move for sure. But luckily, you know, it's not the type of stock that you're going to have naked options in. It's more of a defined risk strategy because the markets are kind of wide if you have anything in there at all.
Exactly. I believe I try to trade UNH every single time when I check the price. The bid-ask spread is wide, and also I think the buying power versus the credit is not that attractive.
Yeah, it's not. I agree with you 100%.
Yeah. So I never traded that before. So the last slide is about the trading volume. So last week, and I believe this week, the trading volume will be probably the lowest point of the year and of the month. So this is the ES, same to SPY and SPY, all the indices trading volume. So this is ES, number of contracts exchanged on a daily basis. So this is the past 24 years data. We see the average daily trading volume for different months. We definitely see the December has the lowest trading volume, which is 1.22 million contracts. The second lowest one is July. That's 1.3, less than 1.3 million contracts exchanged. And the highest trading volume is between March and September. I don't remember a specific number, but this is the chart showing you this month, especially these last 2 weeks, the trading volume is going to be low. So market is relatively quiet compared to the months before.
I'm surprised by that. It doesn't feel like that. I thought December was actually a lot busier.
On average, it's still the lowest. I think probably because the holiday season, people are walking away, just leave their positions on. I checked the SPY; it's the same.
Yeah, no, I believe you. I believe you. It's just I'm surprised. I think January is traditionally very busy, so we'll see.
Oh, okay. Okay. And I checked this year so far, the average daily trading volume for ES is 1.3. So this month is slightly higher than the historical average, but it's very close still. So it's around there, 1.2, 1.3.
That's higher than I thought.
Very good.
Yeah.
Awesome. All right, good job out of you. Even the S&P is still down 71. We'll take a quick 90-second break. We'll come back. We got the opening bell next. Appreciate your time, Kai. Have a happy new year. Talk to you soon. Peace.
Yeah, you too. Happy New Year, guys.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to tastytrade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. tastytrade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
I started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets is the biggest takeaway. And that's kind of just the overarching principle I follow.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live at the opening bell here in about 6 minutes. Even the S&Ps have been steadily lower, Sadnoff. They're lower by 75 points or 75 handles. That's near their lows of 59.45, about 7 points or handles above that. NASDAQ down 310. NASDAQ, even the S&Ps are the two weakest of the group, followed by the Dow that's down 460. And the Russell that's down 19. Volatility up a full point to 1795, just a scotch off of its highs of 18. Bonds up 23, Sadnoff 114. That's a decent sized move for bonds back over 114. Bitcoin down 2,000 now to 93.3, down just about $2,000. You can see there at the low end of its range it hasn't seen since early in November. Oil up 56 cents. Gold down $7. Gold volatility and the gold itself been going kind of sideways as of late. Silver down 21 cents, a little bit larger on a percentage basis than that move in gold. Nat gas is the big mover to the upside, just about a 20% move in nat gas, up 61 cents. Huge move in nat gas. I'm going to assume the volatility with the IV rank in the negative right now is going to shoot up here on the opening. That's all I have right now, Sadnop. We'll see where the rest of the market opens here in about 4.5 minutes or so. What's your game plan, Sadnop? I know you rolled a lot of stuff, probably thankfully. I know you had some short delta, but I know you rolled a lot of stuff on Friday. What do you think here?
Well, I mean,
are you getting bailed out on any stocks that you've had that possibly that you had in Jan that you didn't roll?
No, I rolled everything. I mean, we're gonna have to roll down a few things this morning, like Boeing and I hate rolling down after a plane crash though, because those down moves they're not sustainable. But we got to roll down some calls in Coinbase and MSTR just to keep my deltas in line. We probably got a couple other ones, but for the most part, so far so good. I mean, the Russell's relatively strong compared to the NASDAQ and the S&Ps, which is good. And all the currencies are higher and bonds are higher. So it's a good one for the good kids so far.
So far, yeah, I know. Usually when the market goes lower like this after making highs the way it did, you're gonna have a good day. I know I'd rather see it kind of stair step lower than the violent volatility uptick that you're gonna get of a 70 handle move lower in the E-mini S&Ps, but I'll take it for now.
I mean, it's kind of rare. You had a big down move on Friday. They rallied back so much that I just thought
Santa Claus rally, end of the year. They shook out the weak hands. I get it. I get it too.
But let the games begin. Nobody ever knows. I like that part. That's my favorite part of markets. Nobody ever knows.
No, nobody ever does know. You are 100% correct. And hey, while we got a minute here, Sadnop, maybe we can put up that art card. If you think you know where the market's going, well, we need your participation. It costs you absolutely nothing. Guess the market from tastylive.com/guess. That's where you go. We got $1,000 for you for the first 3 quarters and $2,000 for Q4. You got to have your submissions in by September 3rd. You got an extra minute right now. Put them in. Only takes a second. Win Tom's money. He might even get a phone call. Do they get a phone call, Saz, from you?
No.
Do they get a phone call? Do they get?
They get a phone call. They get a phone call, but not from me.
Is it a check or money order, or is it like pennies?
Oh no, we make you come to Chicago and pick it up in pennies.
Oh, is that what it is? Good. Very nice.
We give you Starbucks.
Well, please guess the market.
We give you Starbucks. We give you Starbucks gift cards.
At the SPX, enough, not the / E-mini S&Ps that you mistook your bet for earlier today. It's the SPX.
I'm good. SPX. Yeah, I think under 6,000 here will bring a few more players into the mix for tomorrow, so it'll be good. 6,200 would be
6,000 significantly. We're 59.55 right now.
Yeah. I'm just saying.
I mean, that's a week's move right there.
6,200 would be a lot more difficult to. I think 5,900 you'll find more people that are going to be on the dance floor, but we'll see. We will see.
You will. A lot of end of the year dividends too. So if you've got John Deere, it has like a $1.60 plus dividend. You want to check out that. Humana's got a 90-cent dividend. You might want to take a look at that. There is a plethora of other ones. They all get them in before the end of the year. So check out any at the money or in the money options you may have in those stocks. That's my public service announcement, Sadnop. We got less than a minute.
Let's go. I'm ready.
I know you are.
Bring on the. I want to hear the bell, and let's go. Let's get.
I want to hear the ding. That's
Party
what I wanna
started.
hear. There you go.
There you go. All right. Here they come spinning out of the turn.
Down 75 and they come spinning out of the turn. You can't have one ding, got to have two dings.
Yeah. Ding, 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 ding.
Tesla down 11, coin down 6. JP Morgan down a few, Nvidia down $1 and change. Let's see what some of the other movers to the downside are here as we come just out of the opening. Even the S&P still down 76. You've got Tesla leading down 13, Netflix down just about 12, MSTR, as you would think, down around 12. Also, Costco down 10, Goldman Sachs down around 8 or so. Lulu down 6 or 7. Let's see what the upsides bring us. Boyle, that's that ProShares.
Oh, be
Ultra.
careful! Be careful! Be careful with that one.
Yeah, you don't want to be trading that. You look at the markets here in February. I'm sure they're going to be quite wide. Yeah, $8, $10 if you even find anything to trade there. Totally agree with you.
Yeah,
nothing there.
that is a dangerous little animal. Just be awfully careful.
Yeah, and all volatility products really to the upside here. Look at this move on the high option volume list. It's just about everything is lower, really nothing to the upside side. Now, if it's pretty broad-based, as you can tell from the futures, as even the S&Ps, the NASDAQ, the Russell, and the Dow are all lower.
Yeah.
Volatility making a new high, Sadnov.
Yeah. I haven't done anything yet because I am waiting to see. My biggest problem, child, this morning, it's going to be Boeing.
Boeing down 8.
Boeing gave us a hard time to the upside, and now it's going to torture us to the downside, huh?
Yeah, it's too big of a move.
Yeah.
Which is surprising because my Taiwanese sources are always the ones that come to bat for me. And they told me a little bit like, they said there was nothing that could happen in South Korea. The pilot did everything he could do. It didn't seem like it was that faulty of a problem with the plane.
I don't think it was a problem with the plane, but how do they know the pilot did everything they can do? I'm going to guess that there was a little bit of pilot error in there. That's my amateur.
Your detective work that you do?
I am an amateur aviation detective. Yes, 100%.
Aviation inspector. Yes.
Yeah, I mean, I got to tell you, it's a little easier when you rolled on Friday. It makes things easier today.
Sure.
No doubt about it.
Because your delta was reduced too. Mm-hmm.
Yeah. Looking
Boeing down 10 now.
Which one?
Boeing down 10.
Yeah, I was very fast to adjust Boeing on the opening today.
Markets are a little wide, I'm not gonna lie.
They're not great. You don't have to lie. They're not great at all in Boeing.
Mm-hmm.
Yeah, I'm looking around to see if there's I haven't done much this morning.
No, you've just really rolled down pretty much.
Yeah, I'm just trying to take care of just a couple of things just to keep my deltas in line. This is kind of the morning. This is kind of the move that you don't do anything like. I kind of don't think you do anything crazy. But 85 is a decent size,
85 on even the S&P is a 1.5% move. Yeah, I would say that's decent size when the expected move is probably 50 or 60 for the week. Yeah, I would say that's decent size. I think that would be an understatement.
Well, we haven't seen an 85 move on the opening in quite some time.
Mm-hmm.
So I adjusted Coinbase a little bit. I adjusted everything except MSTR because it's a tough one to. You got to wait for those markets in there in MSTR, especially in February, to kind of narrow down a little bit. Now they're Now they're a little tighter. A little bit tighter.
What's on your radar here, Sadnov? Anything to the?
I haven't opened any trades. I'll tell you right now, looking at my positions on the good news front, we were short SPY, we're short Tesla, we're short Qs. All those things are good. On the bad news front, it's only Boeing.
Costco down around $12 here has had quite a move lower from.
I don't have a Costco. I don't have a Costco position.
I know. I was looking for a new position in Costco, not one I usually go to. Ivy Rank is percolating a little bit in there. Stocks got sold off about 60, 70 handles over the last month or so. Well, it's been a stock that's been rumored to split.
I mean, how many people in Costco right now do you think are in there because they think the stock's going to split?
Yeah, okay. Maybe more than a few.
Maybe more than a few. I think it's kind of like a scary, overwhelming number. Let's see if there's anything else here that's. I don't know if there's anything here that's scary, but there's some. This is clearly not.
They're close all watertight doors here, Sadna. They're taking them out to the woodshed right now. Volatility's not down ticking. It's actually up ticking. They're not done.
I would agree with you. They are not done. But the funny thing is, I've been able to almost roll everything pretty easily.
Well, with volatility expanding, you would think you would be able to. Sure.
Yeah. I mean, I don't think we've had many issues here rolling anything. So far so good. I mean, I'm talking about liquidity wise. Like you usually can tell, how liquid things are and what's going on. And I think that this market this morning has been pretty damn good for, rolling.
Yeah, pretty orderly down move.
Yeah, pretty orderly down move. So down 84 on the opening 2 days before the end of the year. I don't think I remember something like this. I remember an ugly Christmas.
Usually we wait till the first week of January.
I know. I remember an ugly Christmas Eve once, but I don't remember an ugly New Year's Eve.
Mm-hmm.
I really don't. It's kind of weird.
Well, this would be considered ugly.
Oh, 100%. Very ugly.
Yeah. Yep.
New Year's Eve. You know what stock I don't like? I have to tell you what stock I really don't like. IBIT. For as much hype as that stock has, and for as much volume as it has, it is one crappy trading stock.
Yeah, for options, 5 million shares have already traded. You look at the options; they're 20, 30 cents wide. What's
and they
the
don't
volume
trade.
look like?
And they don't trade though. They don't trade like at good prices. They don't trade between the markets. Like I don't think it's a good trading vehicle. You have to give up on a crappy spread. You have to give up a couple of pennies, and it's very hard to make back.
It's got good open interest too, man. It's surprising.
I know people play it because they buy upside. They buy upside in there. I don't understand it. Like if you really want to trade the upside in digital assets, just use Coinbase.
Yeah, I hear you.
Or even MSTR. I get better fills in MSTR than I get in IBIT.
Mm-hmm.
And the MSTR markets are wide. By the way, we have a crypto event coming up in a week, next Sunday at 5 p.m. If you live in Chicago, we're opening the doors. We're only inviting, it's a small, intimate gathering. Ryan Grace is doing a 1-hour presentation.
I like this kid, Ryan Grace. I like him. He's a good egg.
You don't have his porn mustache on there though, on this picture. But Ryan is doing a 1-hour crypto talk. Everything you wanted to know about crypto, but we're afraid to ask. It's going to become a digital collectible about a month later, and we're testing it out. But it's about an hour talk. And when Ryan's done, I invited Edward Woodford to come to do a Q&A. Edward is one of the leading industry experts on crypto. Nothing's off limits. He'll answer anything about anything. And he is one smart dude. So is Ryan. And so from 6 to 7:30, we're going to be doing a crypto event next Sunday night. We'd love you to come if you're in Chicago. It's obviously free, but only about 50 people max. Coffee's on
Very
me.
nice.
Coffee. coffee and pastries are on me.
You got to go to tastylive.com/events, right?
tastylive.com/events. Yep.
Beautiful.
All right.
All right. You ready to take a quick 90-second break?
Yeah, I mean, Spoo's down 87. Are we missing something here? Do I need to do something else? I'm confused.
I mean, you mean because you have a positive P&L and you're having
I
a nice
expect to
day,
have a positive P&L because everything's going my way today, but I'm not sure what that
because you have good positions?
Yeah, when they go your way, they're called good positions. When they go against you, they're called bad positions.
Well, speaking of a bad position, I mean, nothing says Monday like this, man. Dr. Jim is going to slap you in the face right after this with a little bit of the skinny on options. Abstract applications immediately following these messages. We'll be back in 90 seconds.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You made me print out something for you in 40-point font.
From the smart mouths at Tasty Live.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Want to know what you're getting into before you dive in? When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Tasty Trade. Make your move.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Tomas, we are back, my friend, and nobody says Monday like this, man. Dr. Jim, the skinny on options, abstract applications. Mr. Monday, how are you?
I'm well. So can we talk about this, guys? No one looks more uncomfortable than Tom Sosnoff in a tasty promo. We're all on the same page, correct? No one looks more out of place. No one looks more like, I really don't want to be here than Tom Sosnoff reading.
You would think he was doing it from memory. All he has to do is read the teleprompter.
And they give him simple lines, Tony. They give him like, I went to the store. Like, we need some bread. This is not complicated stuff. But, man, he does not want to be there.
He does not chew up the scene, man. There's no.
Man.
You guys, this is so unfair because I literally am one take Tom.
Yeah. You literally are nothing but the furthest from one take Tom.
Man. Oh, man. That's just so funny. All I know is that whenever I need a laugh, I'll watch a Nate Bargatze clip, I'll watch a Sebastian Maniscalco clip, or I'll watch a Tom on Tasty promo clip. And I always get myself a good laugh. So, gentlemen.
That's my top three right there, too.
I mean, it should be everybody's. It should be everybody's.
Mm-hmm. Those are your top three?
I mean, in today's world, who's gonna top Nate Bargatze or Sebastian Maniscalco in terms of comedians?
Oh, nobody. I can't listen to Sebastian Maniscalco anymore. His stuff's okay. I mean,
I'm with Tom on this one.
Oh, wait, hold on, Tom. Sit this one out. Tony, this is your guy.
I know, but he's
floors. Dude, he's going to L&B's for Red
it's
Sauce.
Kind
he's
of
doing all the same things you're doing.
He's worn out his welcome. It's gotten old.
Yeah, it's gotten old.
Man, maybe his stuff now. Okay, whatever. I don't care about that. But you go to peak. Like, aren't you embarrassed? And like, oh my gosh, man.
Soon as he made that movie with De Niro.
Yeah, Robert De Niro. I didn't even see the movie. I didn't see the movie.
He jumped the shark. I didn't see it either. It's too.
I'd rather.
I don't know. It's too old.
I'd rather listen to Bill Burr and Nikki Glaser.
I agree. And I got to tell you, Sebastian's right here down the street from me.
I know.
His dad still cuts hair and stuff. He comes in from time to time. I mean, I like the guy, but
Yeah. Okay. Anyway.
Yeah.
All right, guys. So 2024 is coming to a close. We're going into 2025. Tom's looking for some hand-cut locks in the Midwest. That's not going to work. So what?
I forgot to tell you, Tony.
So what are we actually trying to get done next year?
He forgot to share something with me. Hold on 1 second. Go ahead.
L&B's Pomoni Gardens is opening up in Manhattan.
How does that help me?
They're a franchise now? They're a franchise?
I don't know. They're opening a second location.
I could ride my bicycle to the original place, or I could try to travel to Manhattan, which I didn't go to until I was almost 16 years old. I mean, why? Because now it's bougie? Now you people in Manhattan got it?
Yeah.
Yeah, not gonna help me. Sorry.
I'm shocked that it's a chain restaurant now there, Tony. I mean, man,
it's a chain.
You and me, we have another commonality, another common denominator. So that's pretty amazing.
We both like chain restaurants.
I mean, how could you not? So
you just ruined me, Sosnoff. Thank you.
All right, guys. So what are we trying to get done for 2025? Right. So what are we doing here, man? Talk to me about some resolutions. Talk to me about what we're doing. Personal lives, professional lives. Tony, what do you got going on? I read Tom's stuff.
I tell you what I got going on. I'm going to take $20 from Sosnoff to start my 2025 because we made a bet on SPX that Sosnoff had to have. Look at him. He had to have the bet. I got 59.25 on SPX. He's got 59.66. I'm a lock.
Where is it right now? It's 58 something, right?
58.82. So it's closest. So I mean, I'm a lock.
By the way, Mr. Locke was crying on Friday.
I wouldn't.
I was only crying because I thought you were going to take lower and you took higher. That's why I was crying.
I don't. Yeah. There's no. I mean, I wouldn't be counting any chickens just yet because I mean they can rip your face off today, tomorrow. Oh, there's no question. That's very much in play. I mean, it's going to be, especially since
Volatility still bid here. Volatility up $1.40, still bid. Keep your eye on that.
I know, and that's the thing. I mean, they scared the children this morning, and it's like, man, it could be a pretty wild couple days to close out the year, and so pretty interesting stuff. So Tom, what is your biggest personal goal for 2025?
Oh, 2025.
Is it the ski
what
lift?
is your do you do a New Year's resolution? Is there a goal that you have, Sosnoff? I mean,
Jim, I just want to be a better person. I'm going to work on my legacy, but I do want to be able see, there was some, I posted my list yesterday. I mean, you should have read it, because it's very important.
How do you think I knew about hand-cut locks?
Right.
How do you think I knew about hand-cut locks?
So one of the challenges for me is I really loved going skiing last year, but when I'm in the middle of a 4-person chairlift and I got to get up, so sometimes it's like, you got to,
What? Is that you getting up from a chairlift?
Yes.
Yeah,
Wow.
Describe the scene for the audio-only crowd out there. What are you doing right at this moment?
I'm getting up from the chairlift. See, because you can't use hands, so like, it's a little more challenging.
Yeah, it's like a Turkish get up. You got to do a little Turkish get up.
No, they got it.
Yeah. Okay. So, okay. All right. So what do you think? So give me a delta. Give me a delta that you'll be able to get this done.
Maybe 50-50.
50-50 at the money vertical. Okay. I didn't really see that one coming, but that's okay. I like it. All right. Well, that sounds pretty good. That sounds pretty good indeed. All right. Well, you know what? For the final piece of 2024,
hold on 1 second. Time out for a minute.
Okay.
He's lying to you because the places
I know
Right.
that.
The places he goes to, they're gondolas. Okay.
No.
So you got to take your skis.
No,
off,
I don't like gondolas.
Okay. You get into them. Okay.
No.
You ain't going to a Wilmot chairlift.
No. I don't like gondolas.
Yeah, you're such a liar, Sadam. If you don't have to get up from the chair, you'll go on a gondola.
I don't like gondolas.
You're afraid of heights?
I just don't like gondolas. I don't.
Whatever. I'm so sick of you right now. I'm even the S&P down 91.
I don't like gondolas. I don't like gondolas.
Okay. All right. Never mind.
Yeah,
I'm sorry,
So
Dr.
next
Jim.
week. So by the way, so next week, and Tom, I know you're sweating my Dolphins about to sneak into the playoffs, but
no, I'm not sweating your
Lions,
Dolphins.
You should be sweating Snoop Huntley because he's taking us right to the promised land. But my Lions tonight are going to clean up the Niners, and then you've got Lions Vikings, final week of the year for the #1 seed in the NFC. Man, that's pretty crazy stuff.
Well, it's nice that it played out that way, so at least there'll be some game next week that means something, because that'll be the only game. The Bears-Packers game, unfortunately, won't mean too much.
Did you guys see that Broncos-Bengals game yesterday?
I watched it. It was great. One of the best games of the year.
I didn't see any. I just saw the last few minutes, which is obviously where everything really happened.
It was great. It was a great game.
I mean, missed 33-yard field goal. Like, Burrow takes him in. Like, wow, that was really something.
It was a great game, and Joe Burrow, he's really good.
Yeah,
really good.
Yeah, he's about 8-8. He's about 8-8 goodness. Yeah, that's about how good he is. All right. So speaking of 8-8 goodness, man, let's do some finance. We're gotta get into market measures in like 3 minutes.
I'm ready.
Let's do a little something. Yeah, let's do it. Let's go, John. Cue us up on the start here. So how do we trade market skew? So today, this is going to be kind of a continuation off of what we talked about last week, where we talked about strategically diversifying. But I wanted to give the people something super practical that they can use and start to implement in their portfolios right away if they so choose. And admittedly, every piece we do on this show isn't always super practical, since the title of the show is Abstract Application. So, John, go ahead and get us going here on the very first slide. So the underlying mathematics and statistics of the market govern the lion's share of the decisions that we make on a daily basis, many of which are centered around the normal distribution and the statistical characteristics that it possesses. But the actual markets with live prices aren't perfectly normally distributed, but are instead often skewed on one side of the market. Guys, did you know this? Did you know that there's skew in the markets that you can trade?
I think so.
Tony, were you aware of this?
I've been doing it my entire life. I mean,
did you know that L&B's is opening up a second location in Manhattan?
That just jumped the shark. It's very disappointing news, actually.
Did you know that they're following the bonefish blueprint to greatness?
It's actually the low point in my life, and I've had quite a few low points in my life. I'm not gonna lie.
So am I gonna be able to buy the red sauce at Publix in the next couple months?
You'll probably go to Phoenix first, and then to Florida somewhere. Yeah,
that's gonna be amazing. You know, I mean, it was pretty average the first time I had it, so maybe they can.
Oh my God, you ate it like a starving Armenian. I mean,
maybe if we get some preservatives in there, like give me something. You know, I mean, you hyped that thing up for months and months and months, and I'm like, what is this? Is this like a ketchup kind of marinara mixture? Like, I don't know what this is, but
that's the last time you'll be there.
That's probably true. All right, so we can trade skew in the market.
You ate L&B's. First of all, you ate L&B's after you went to dinner.
Yeah, I get it. I honestly get it mixed up. So L&B's, Spumoni Gardens are two different places, correct? Or is that the same place?
No, it's the same place. One's the pizza side. The other side is the Spumoni side.
That's what it is. That's what it is.
You ate both of them, and you were elbow deep in pizza and Spumoni.
We actually have pictures of it. That's actually true. That absolutely happened. And so, yes.
There was a guy.
Next time I'm in New York.
There's a guy on TikTok, Tony. He was going through. He was sitting at Randazzo's I think you could sit at the bar there. Is there a bar there?
Yeah. Well, it's a counter bar.
A counter,
not like a drinking bar, but yeah.
He was sitting at the counter, and he's doing. I should have sent this to you. He was doing a play-by-play of ordering fried calamari and then having them pour
with the spicy sauce on
with the spicy sauce on top. But the greatest part of it was because they put so much sauce on it you couldn't see the calamari, you know?
Yeah.
And he's going through a play-by-play how this is the greatest dish known to man. Like
it really is. They put a hardtack, like a hard piece of bread underneath it. They pour the sauce on top of it. It's just amazing. It really is.
It looked spicy. Good. What he was presenting looked awfully good.
Yeah. Sorry, Dr. Jim. We're just reminiscing.
No. I mean, I was there. I mean, I had the fried calamari. It was at Randazzo's, I believe, right?
That is
when
correct.
We went out there.
Correct.
Yeah, that's right. Yeah, we went out there, had the fried calamari, and so it was, it was pretty good. I'm not really a calamari guy. That might surprise you guys, but it was okay. It was all right. Okay, so
doesn't surprise.
So let's go. Let's get back into some finance. So all right. So how do we trade market skew? So John, go ahead and click us here on the second slide. So let's talk about skew and what it looks like to begin with. So first and foremost, we have to understand what no skew would indeed be. That would be the yellow curve that you see here on this graph. That would be, your perfect symmetry, your normal distribution, kind of your theoretical bell curve where everything is neat and tidy and nothing is kind of messy. But when you get into the actual markets, things get a little messy. Like you start dealing with, live living and breathing prices, it's not going to be as perfectly, tidied up like it would be in a textbook version of the normal distribution. So negative skew and positive skew. So you have negative skewness and positive skewness. The negative skewness is going to be the green curve where the actual average value that's found in the distribution is shifted to the right, but the big outlier moves are shifted to the left. And then the blue curve, that's going to be your positive skewness. This is where the average of the distribution is actually shifted to the left a little bit, but the huge outlier moves are shifted to the right. So it kind of seems a little counterintuitive. You have to really think about it in terms of, positive skew is actually shifted lower. You would kind of maybe naturally expect it to be shifted higher, but it's the outlier moves that are shifted higher. And then with negative skew, it's the outlier moves that are shifted lower. Okay, this is skewness. This is how it sets up. Both of these exist in the markets, and I'm going to show everybody how they can think about positioning their portfolios, right now or for 2025, whatever, to take advantage of both of these types of skews. All right, so John, hit us on the next slide. But before we get into that, I need to throw a shout out to my boys in academia, man. A shout out to financial academia, which of course, Tom, that's where you plucked me off the street, man. You plucked me off the academic streets and you said, hey, come join Tasty. And I resisted you for so long, but man, your courtship skills, they're quite strong. They're quite strong. And so here I am, almost 9 years in now.
They are mighty.
Yeah,
I kind of wined and dined me.
My recollection was different. It was more like you were crying and begging, and I couldn't take the crying anymore, so I just said, all right, whatever.
I just remember you sold me at Parlor Pizza. So this is when you had me. You had me when we went to Parlor Pizza, just you and me, just man to man. You got a huge spread, and this was my first experience having authentic Chicago pizza. And nothing says authentic Chicago pizza like Parlor Pizza. So we sat down, we had some pizza, and I'm like, man, this is my place. This is my place. Do you remember that?
I forgot about that. Yeah, I do.
You showed me Parlor Pizza, and then I explained to you how the limit order book works. So it was a great conversation.
Sound off. You got him with Parlor Pizza?
He doesn't know. He's a Domino's boy.
You never told me that. I would have been so much more appreciative of him.
When you say get him, yeah.
I mean, that's an easy get.
Yeah, I know.
Yeah, I mean, he got all the stuff. He got garlic bread. I think he got some calamari. He got this and that. But the pizza, man, I was like, ooh, this is some good stuff. So, all right. So in academia, though, there's a great paper by Harvey and Sadiq in 2000 where they actually talk about what they term conditional skewness. And what they show is that investors actually adjust their required returns that they have for a stock, for an asset, for an index, based on the skewness that exists in that asset class. And here's where things start to get really, really interesting. With positive skew, the way that investors will begin to position themselves in their portfolios to respond to a positively skewed market is lower average returns are acceptable, which is what we saw on the previous slide. That's what positive skew is. But the investors are wanting greater potential price moves to the upside. They need greater potential outlier moves to the right side of the distribution. When it comes to negative skew, investors are okay with, the potentially large drawdowns that come with negative skew, but they demand higher average returns. Okay, here's where this gets fascinating. The positive skew and the negative skew and kind of the lower average returns and the higher average returns and, more outliers to the upside and more outliers to the downside, both of these exist in the markets every single day, and it's a continuation of what we talked about last week. So, John, hit us on the next slide. Tom, here it is, the crescendo for all of 2024. Are you ready? This is where a short index as your core plus long individuals as your added positions, which is what we talked about last week with strategic diversification, this can be a great solution because if you do this, you are actually taking advantage of both sides of skew that exist in the marketplace. If I'm short the indexes as my core position, now again, last week we talked about the fact there's a number of ways to do this, but you are positioned for the negative skew that does exist in the major indexes. SPY, DIA, IWM, even QQQ. QQQ is a little bit different because it's so tech heavy. But then you have the individual names. This is where you layer on the long positions. And whether or not you want to be net long or net short, I mean, that depends on your directional bias in the overall marketplace and how you want to position your portfolio. But a lot of individual names have positive skew, guys, like your Teslas, like your Nvidias, like your Bitcoins. These are going to have positive skew. So if I actually layer on some long individual names up against my short core, now I'm tapping in to the skew that exists on both sides of the market. Gentlemen, your thoughts?
Well, let's be fair here. This is the way most people, this is the way virtually everybody trades, right? That's why, the reason you have negative skew in the indexes and positive skew in the individual stocks is because this is the nature of A, the velocity of risk, and B, this is the way people trade. I mean, listen, I love this as a theoretical discussion topic. I think it's much more difficult in real life to put into play. I trade this way, so I'm always short the indexes.
So it sounds to me like what you just said is it's very difficult, and we actually need someone, a liaison, a tour guide, to take us from theory to practice. Is that what I'm hearing you say?
I'm just saying that
if only we had someone, if only we had a show,
if only that
was
person
just dedicated to that idea, right? Where, man, this is really hard to do in theory. But if someone could just take us over the bridge to practice, like, could we build a show, even a show that's been around for like 8.5 years, and maybe they could show us the way. Maybe they could carve out the pathway forward. I don't know, Tom, what do you think about that idea for 2025?
It would be interesting, but I'm just saying that this is the way, essentially the way we trade. You know,
of course, but hold on. You said most people trade this way. I disagree. I completely disagree. Most people, most traders, even active traders, I don't think they're positioning themselves with short core positions, short the indexes.
No,
I
they
just
don't.
think
They
that's
don't.
the case.
Hold on, they don't position themselves with short indexes, but the index is where they go to get short.
So elaborate on that a little bit more, because I need more information there.
I don't think that money managers position themselves long stock short indexes. I think that's counterproductive to what their objective is. But I think
I don't care about. I'm not talking about them. I'm talking about individual retail traders, investors.
Individual retail traders don't think this way, but they end up with these positions on. You're generally going to be long individuals, short indexes. That's the end. That's your end position.
Yeah, Tony, help me out here, man. Do you think most traders, active traders that are in the markets, so the people that we're talking to, the people that we want to have a conversation with, do you think most of them end up in this spot? I don't think they do.
Well, if you're a premium seller, I think you do, to Tom's case. I mean, that's what he's, that's his premise. That's what he's thinking.
You can't get long, Jim. Nobody's gonna. You can't. If you're nervous about the market going down like now, whatever, you're not going to sell individual stocks. You just can't. I mean, you can sell longs, but you can't. You're not going to open short trades to cover the rest of your delta risk by short stocks. So you're going by individual stocks. You're going to go to the indexes. That's all I mean. It's not because it's not something that people do because they're thinking about it this way. It's just because that's the only really way to do it.
Yeah, I disagree. I guess I have to stand alone, much like Jason Bourne, and just be on my own team here this morning. That's fine. I mean, when you think of Dr. Jim, you naturally think of Jason Bourne, so that's a very, very natural.
I find it interesting that you have a Jason Bourne obsession, but isn't it Jason?
I think I brought him up one time. I think this is the only time I brought him up on the show.
No, you brought it up multiple times, but doesn't Jason Bourne like 25 years old by now?
Oh, I mean, you guys are hate. Wait. If you're gonna hate on both Sebastian Maniscalco and Jason Bourne in the same episode, I'm done. Like, this is it. This will be the final episode. This is gonna be it. Like, I can't handle that. Like, you can hate on me all you want.
2016 for little Jason Bourne.
20. Yeah, but that was that the weird one with Jeremy Renner? That doesn't count.
I think it's way earlier than that. I want to make it
clear I do not associate with that Jeremy Renner version of Jason Bourne.
No, I think this is the one with what's his
Matt Damon?
face? Matt Damon from Boston. Yeah.
Okay. All right. Well, anyway. I disagree with both of you, and you know who else agrees with me? And Tom, you're the one who told me this. The data disagrees with both of you, because Tom, you told me, you said, hey, most of the customers at Tasty Trade are long delta. They're long delta. So, I mean, that's what I'm talking about here. I'm talking about being short indexes and long individual names. I'm not talking about going to indexes to get some delta to this and that, blah, blah, blah. I'm talking about a net exposure in the markets. Most traders are actually long.
Yeah,
and the data agrees.
Yeah, agree. Agreed.
Wow, you got an I agree from you. That's pretty good.
Most customers are long.
There you go. That's right. And so I just wanted to open up, and I know this is obviously how you trade, and this is how I think a lot of people should think about approaching the market. And this is going to be new because most traders that are watching this show right now have positive delta. And it's like, man, I don't know, maybe rethink that a little bit. Maybe shake it up a little bit because we know you're not finding hand-cut locks in 2025 in the Midwest. So maybe you can do this. Like, let's give them something they can do, Tom. You know, like your Turkish get up off the chairlift, that ain't happening. Hand-cut locks in the Midwest, that ain't happening. So let's give them something they can get. Man, now I got to watch the whole Jason Bourne trilogy in the next couple of days just to cleanse my palate. You guys, man, I can't do this anymore. John, I can't do this anymore.
Jeremy Renner came back in 2012, my Taiwanese sources told me.
Yeah, they really tried something there and it really failed, Tom. It really failed.
Yes, they did.
So, all right, here we go. So as active traders, we rely heavily on the mathematical properties of the market, while the normal distribution is central to what we do. The live markets often exhibit skew on one side or the other. And now we have a portfolio strategy to trade that skew in strategic ways. And for anyone out there that might be looking for a tour guide or a liaison to take them from theory to practice, there is a show on the Tasty Network at 2 o'clock Eastern, 1 o'clock Central. It's been there for going on 9 years now with that exact title. And I know the host personally, and he will not let you down.
Good job out of you, Dr. Jim. I got two things to tell you.
Man,
Tom, you can buy the market now 59.30 on the E-mini S&Ps. I'm going to tell you that right now. But besides that, Dr. Jim, I want to show you a picture, and not because you're in the picture, but there's something peculiar about this picture. Can we put this picture up for a minute, please?
Oh, boy. Here we go.
My Taiwanese sources who were with us and in the picture there, Mr. Shark Jeev was there. You can see him right there.
Oh, there it is.
The thing about this picture is not the best picture that we have from the trip, but if you look closely, you are the only one eating. You were elbow deep in pizza after having dinner.
I think that's a deep fake. I don't know that picture is legit.
Deep fake?
I think Shark Jeev doctored that one up. I look a little off. I look like I've been inserted into that picture after the fact. But no,
you look a little off, all right.
Solid. That pizza was solid. I mean, it wasn't parlor, but it was solid.
It's better to be more off than more on. You know that. Remember that.
You're a little off, all right.
There you are. You're the only one eating. See that?
Oh.
Everybody else is eating.
Man, look at that. Those were the hair wax days and the glasses days. Look at that. Man. All right. Okay.
All right.
There you go.
Figured I'd bring you there. All right.
Man, I appreciate you.
Listen, I'm gonna let you go. You went well over your time, Dr. Jim. I appreciate it. But we're gonna take a quick this year. Try to help us in 2025. Okay, stay on track. We're gonna take a quick 90-second break and come back. We got more Tasty Live after this. What do we got coming up next, Saz?
Market measure.
You are correct. You got it right. At the end of the year, we'll be back in 90 seconds. Let's Tasty Live.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Christy Ross, St. Norbert College, Wisconsin. Number 85, because I like trades that have an 85% probability of success.
Lindsay Grata, University of Illinois at Chicago. Number 14, because that's how many times Tom asked me, where's my lunch?
Tom Sosnoff, State University of New York, Albany. Number 0, really? You gave me 0 because I like being delta neutral?
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
The beauty of Thinkorswim was that we were different. From the name to the front end technology, was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with this market measure. Even the S&P is down 100, Sosnoff.
Yeah, did you think you would see that today?
No, I thought we'd be rallying about 6 handles ago.
Oh, well, I mean, I don't want to say anything,
but you're going to, I have a feeling.
Anyway, I'm Tom, he's Tony. This is Tasty Live. Thanks for spending the morning with us. And yeah, we don't get a lot of Monday mornings down 100 in the S&Ps.
No, we do not. No, we do not.
I mean, we had the Monday morning, August 5th, with the big debacle, and then they turned it around on Tuesday, but they opened down 250 that day, closed down about 100 or something like that, if I remember correctly.
Yeah, that is correct. Correct.
Anyway, as we wrap up the year, remember, Tony and I will be on all day today, all day tomorrow. We'll finish up the show this afternoon with Last Call. No show on Wednesday. No show now on January 9th. So it's a week from Thursday. So we'll be back Thursday or off Wednesday. We'll be back Thursday, Friday. And then next week, Monday, Tuesday, Wednesday. No show on Thursday. All the markets are closed for Jimmy Carter. And then Friday, everything is back in business. That'll be January 10th. In the interim, we got a couple things going on. We haven't announced our schedule of live events for 2025 yet. We will be announcing our schedule of live events in 2025, which is going to be a full slate of events starting in May. We'll be announcing everything probably sometime in February. But between now and, because we're still securing locations and getting everything done, but between now and the end of March, we're going to have 3 live events. I'm sorry, we're going to have 3 digital events along with 3 very small live events in Chicago. The 3 digital events will be Ryan Grace, it'll be Dr. Jim, who you just saw, and it will be Mike Butler, along with Katie and Nick. All three of these, anybody can sign up for. So they're free. They're digital collectibles. People all over the world watch our digital collectibles, actually millions of times. It's kind of crazy. It's funny. I'll tell you a quick story. Back in 2012, we did on the 25-year anniversary of the crash. The crash was 1987. 25-year anniversary of the crash. We did a documentary called Cancel Crash. And we decided, okay, this thing will live for a long time. We did it 25-year anniversary of the crash. We produced our own documentary called Cancel Crash. It's about 40 minutes long. It's actually a really good piece. We were hoping that 5,000 or 10,000 people would look at it. We spent a lot of money doing it.
Yep.
I think a little under 3 million people have watched it. And
that's unbelievable.
Which is crazy. Our videos have been watched about 250 million times now, all over the world. So sometimes, it's kind of cool to do this stuff. And we'll keep producing new stuff. But Ryan, everything you want to know about crypto, Dr. Jim's doing a beginner trader from start to finish. And then Mike, his friends and his whiteboard, he's doing a more advanced thing. Sign up at tastylive.com/events. You basically can sign up for all three through a single process, and you own them all. You can go to them anytime you want, or you can watch them January 25th, February 22nd, and March 29th. Before each event, we're going to do a very small, intimate gathering where these guys are going to be able to give a kind of a trial run, dress rehearsal, so to speak, of what they're going to be talking about, along with some extra special guests. Each one's in Chicago. Each one's really small, only about 50 people. And the first one is next Sunday. If you want to sign up for it, tastylive.com/events. Just go there and you can sign up for it. It's doors open at 5. The event starts at 6 o'clock next Sunday night. It's a very small, like I said, intimate group, only 50 people. All right.
Very nice.
Let's do it.
Looking forward to it.
You're not going to be there, but I'll be there.
I might make a special trip. You never know. I mean, not with your attitude.
I mean, I'm hoping that you would go, but I have
Oh, that's a little better. That's a little better.
Well, I think it's important that you learn stuff. And you're not the sharpest tool in the shed. And I like to surround myself with the sharpest tools. So
you're only as smart as the 5 people around you, and I'm bringing down the average. I got you.
That's right. I got you. I only have the potential of the people around me. And so
I understand.
It's important.
It makes sense.
All right.
I'll do better.
Here's a market measure that our team put together, our research team put together for you today. And you're going to like this one because it's the best of market measures. We decided for today and tomorrow, it is the best of market measures. Our research team is spread out all over the place this week. And so Gad's actually visiting family back in Rwanda. We're going to be broadcasting live from Rwanda. We've never done that before.
We're worldwide, G. We're worldwide.
We are worldwide. And you better learn where Rwanda is on a map. That's all I can tell you. Because I'm going to
I actually looked one time, so I know.
Because I'm going to quiz you. That's all I'm going to tell you.
The deal.
Yeah, but we've got everybody all over the place. So we're going to be... but we decided to do best of the market measures today and tomorrow, part 1 and part 2, 2024, a whole year's worth of 250 different market measures. Let's take a look and see where we are. So at the end of another exciting trading year, market measures are all about conducting research to look under the hood on option probabilities, volatility, and trading strategies. Some of our studies are on a much larger scale than others, but all of them provide valuable insight for our portfolios. We decided to revisit our most popular small-scale studies for the first part of the best of 2024 market measures to explore the theoretical and practical applications of different measures of central tendency. All right.
Okay.
Let's see where the boys are going with this one. Calling this measures of central tendency. So consider the sum of a pair of fair 6-sided dice. 100,000 trials. You'll be better at craps for this, I promise. There are 36 possible pairs and 11 possible outcomes from 2 to 12, with some outcomes being more likely than others. These outcomes and their probabilities are eloquently represented with a histogram. We have it up in front of you. That looks like a pretty normal distribution curve.
Mm-hmm.
Let's go to the next slide. The first moment of the distribution is the mean, which describes the central tendency of the distribution. For a sufficiently large number of occurrences, the mean corresponds to the expected value of the distribution, meaning the more occurrences, the closer you're going to get to that expected value. The more times you do something, the closer you're going to be to your expectation, as long as what you're doing is mathematical. Let's go to the next slide. The second moment is the variance, which is the measure of the spread or the variation of the distribution. The square root of the variance, standard deviation, is commonly used as a measure of uncertainty, and obviously the model's down below, math model. But again, we use standard deviation for almost everything that we do. When we measure risk, when we look at portfolio volatility, everything is a measure of standard deviation in the derivatives world. Let's go to the next slide. For this experiment, we have calculated the mean to be 7.0 and the standard deviation to be 2.4. We can conclude that the expected value is 7 and the uncertainty on that expectation is 2.4, meaning that on any given roll, the outcome will most likely fall between 5 and 9. Additionally, since we assume the underlying distribution is approximately normal, we can further conclude that there's a 68% chance the outcome will fall between 5 and 9. Did you ever hear somebody at a craps table go, "What do you think the chances are I get a 6? I want to hear somebody say, "It's 68%, genius."
Nobody ever says it, though. I'm not going to lie. I've been at a lot of tables.
Nobody ever says it.
Nobody ever says it.
You're exactly correct. Nobody ever says it. Let's go to the next slide. To understand the third moment, skew, which Dr. Jim just talked a lot about, let's make a modification to the experiment that makes the distribution asymmetrical. Consider two scenarios where the dice are biased. And so this is interesting. Why would you make the dice biased? Well, because the markets have a bias to the upside. That's kind of, so that's where we're making the small adjustment here. Mm-hmm. And so you can see we've kind of changed the numbers a little bit to add a little bias. Let's go to the next slide. So the small bias case results in a distribution with positive or negative skew. In this case, skew, and you can see the very different than a normal distribution. This distribution looks something completely different. Here, the tail is heavier on the right side of the mean, which is the positive side, and the majority of the probability mass is concentrated on the left side of the mean or the negative side. Okay, that's with a small bias.
Sure.
Go to the next slide, please. So how does this theoretical model apply to options? Well, let's take a look. From 2005 to 2023, we looked at a bunch of different strangles, 16, 20, and 30 delta strangles, 45 days to expiration management, 21 days. For each type of contract, we determined the mean, the median, and the mode of the P&L, and the P&L distribution as a percent of initial credit. Let's go to the next slide. So the average P&L of these contracts range from 13 to 21%, but the P&L midpoint, the median, was roughly 2 times higher than the mean, and the most likely P&L, the mode, was actually 3 times higher, which is very interesting because, it kind of shows you how much opportunity there is, mm-hmm. and how opportunity is very different than mean. And this is because of this is because there are small biases in the model.
Understood.
Let's go next slide. This means that these trades average between 13 and 21% in the long term, but the most likely P&Ls on a trade-by-trade basis are 3 times higher. This is called risk. This is called what we do. This is why what we do is so interesting, because of that asymmetrical opportunity. I always talk about that. I want asymmetrical opportunity. The reason we trade is for asymmetrical opportunity. And that's what you're looking at here. Just remember, most P&Ls on a trade-by-trade basis are 3 times higher than whatever the mean or the theoretical number is going to be. Let's go next slide. So some of the takeaways is a really good piece put together by the research team, putting together the best of 2024. The mean, median, and mode can all be used to describe the central tendency of distribution. The mean is the average, the median is the middle, and the mode is the most repeated observation. For a skewed distribution, these statistics will differ. And for SPY strangles, the midpoint P&L is roughly 2 times higher than the average, and the most profitable P&L is roughly 3 times higher. Tomorrow in part 2, we will take a look at our most popular larger scale research, the heavy pieces.
What does that mean to you, Sosnoff? Is that like a teaser?
Yeah, it's a teaser. I don't even want to know. I don't even want to venture a guess where they're going with this one.
Even the S&P down 103, NASDAQ down 412. It's been a pretty orderly down move here, Sosnoff, with just one little blip trying to get its feet underneath them. Russell down 39, and the Dow down just about 700. Volatility continues to rally also. But you know what? A little teaser I got for you, Sosnoff. We got Mr. Scott Sheridan coming in next. That's right. Nothing says Monday like this man, too. Mr. Scott Sheridan, Tasty Trade World Headquarters, coming up next.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision, there wasn't a lot of innovation, and I think that left a door open for us, which we really liked. After almost 20 years of open outcry, standing in the pit trading, I felt like all the markets were moving from kind of traditional open outcry to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. Most of our competitors have legacy technology, and some of them are multiple firms. Their technology has just been rolled up into a single platform. That's not the best way to build a platform. We built ours literally from scratch. It's from the ground up, so we were able to design it in the way that we wanted to design it, with the flexibility that we wanted. And obviously beyond that, we do have, in my mind, the greatest customer service in the industry. You want to reach out to me, you want to talk to JJ, it doesn't make a difference who you want to talk to. We're always available, and not only are we available, we look forward to your questions. We're here to support whatever you're looking to do. So you can trade stocks, you can trade options, futures options, crypto. We're agnostic to product. We have the tools that you need to be a successful trader.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Tomas, we are back, my friend, and you know what that means. Time for a little bit more Tasty Live with this man. That's right, Tasty Trade World Headquarters. Your friend of mine, the very popular, the very handsome, that's right, Mr. Scott Sheridan from the Scott Sheridan Studios. Take it away.
Where am I taking us? Where are we going?
Anywhere out of Sadnov's arms.
Oh, is it one of those? No, I'm fine.
No, he's been good. He's got a good P&L. Okay. Everything is going his way. I'm waiting for the disaster to happen at 2:30 today, when he's like, I cannot believe when they're down 102, how they come back to be down only 40. It never happens.
Hey, I don't know about that one.
I just got an email that they go, I continue to watch the show because I just wonder how Sadnov used to be so good and now he's become so bad. Like, I just keep watching for the turn.
I'm surprised that you get those emails because that's the emails that I get about you. It's probably from the same person. Oh, my God. Two 3-year-olds going at it.
We're four now.
You're four.
I'm this many.
Two 4-year-olds going at it. Speaking about going at it, I've got another really good episode of this podcast that I talk about. Again, Tom, it's a little much for you. It's 4 hours. So, oh my God, who watched a 4-hour podcast? You don't watch it, you listen to it. Oh my God. So it's these guys, it's called Acquired, and it's how they did it, how companies did it. They're really, really interesting. So this episode, first of all, if you're gonna if you're gonna listen to one, you start with Costco. You'll love it. You will absolutely love it. Once you listen to the Costco episode, you're gonna listen to them all. But they just did one on M&M Mars. It's fascinating. Isn't that a Chicago company? It is. Yeah. It's a privately held company, still privately held. Yeah. $50 billion. Is it $50 billion now? In revenue. Annual revenue is $50 billion. And here, spoiler alert, I don't think it ruins it. Their biggest source of revenue is from food, dog food, cat food, pet food, and products, other products, but for pets, the veterinarian side. It's crazy. I never did my pet idea. Oh, which one? Toast? No, pet toast? Yeah. No. Why not? Could be fun. It could be, what do they call the cups? The pup cups. You mean the hot dog water? What's hot dog water? You don't know about the hot dog water?
Hot dog water was my idea. You stole that. You know it.
It was Josh's idea. What's hot dog water? It's Josh's idea. Hot dog water for dogs. Just give them the water of a hot dog? No, give them water with little chunks of hot dog in it. Hot dog water.
No. He's ruining it.
No, I'm not ruining it. We have the whole thing.
Yeah, you are. You make hot dogs and the water. You ladle out the
No,
water.
I don't care what he says. You don't make hot. It's not. It's water with.
Are you trying to kill your dogs?
It's little chunks of hot dogs. Dogs would love it.
He ruins everything. I'm serious.
Oh my God, you've been out of the dog game in a while, but you did say that you want to get a dog for 2025. I was really happy to read.
Yeah,
right. I was happy to read that.
Hot dog water. Come on, hot dog water.
Are you going to do this?
What do you mean? Am I going to do it? Of course, I'm going to do it. I mean, probably.
Cane Corso?
Yeah, probably. Oof. But
he's not getting another dog.
I'm working on
it. You're a seller? I'll buy it.
I have a few issues. Which changed their policy.
Oh no. No more. You're not grandfathered in?
No, I'm grandfathered in, but they don't have the 24 hours a day anymore. And I need a 24 hours a day.
What do they do?
I think
he's an absentee dog owner.
Wait a minute. What do they do?
Is what he is.
Yeah, really.
I don't think you can drop your dog off till 7.
That's late.
No, I know.
That's bad. Just make it 6. You're fine.
What do you mean make it?
Just tell them you need an exception.
Okay. It's a publicly traded company.
Is it?
Yeah.
And what do you have to pick them up by?
Oh, I don't worry about that. They drop them off.
Why don't they pick them up?
And they don't take puppies.
How old? A year?
No, they have to be spayed.
And they probably don't take cane corsos, and they probably don't want cane corsos around children. So I am a seller.
They do take cane corsos.
Cane? That's
what cane. Cane just means dog in Italian, okay?
Oof. He's Italian. I got to go with this.
Oh, I'm sorry. Anthony.
Wait, is that cane nigiri? Isn't that some type of sushi? Cane. There was a farmer.
Speaking of sushi, you were talking about a little bit of sushi on the break.
Okay. I don't want to spend your money, but I'm going to do it. Okay?
Go ahead.
Take your son and the missus and any of your other offspring that are interested. Sushi-san down on Grant, not on Hubbard. On Grant has an omakase room upstairs.
Oh my
Only 10 seats. Arguably one of the best meals I've ever had.
Why?
It was for sure one of the best meals I've ever had in Chicago. But it could be. It was so good. And it's interesting because there's 2 seatings. We did the earlier one. So 5:45. You can get there at 5:15 if you want. 5:30. You sit out in a nice little room. You have a cocktail if you want before you go in. Everybody goes in at the same time. It's right up your alley. Everybody goes in at the same time. I think we were up at 7:30. So 5:45 to 7:30-ish. We're gone. Then the next crew comes in. It was amazing. Really hard to get into. I know people, if you want to go, I can make it happen. Just saying.
I told Sadnov, you might wait. I won't ask for the favor right now because Sadnov's going to ask you for a New Year's Eve reservation.
You know what? It's funny you say that because he just gave me the puppy dog look. He's like, yeah. He asked me this. Oh, see, it's really funny. He said something to you because he just started with, "What are you doing for Thanksgiving for New Year's?" And I said, "Just a couple people come over, really low key."
No, I'm not asking you for.
So then he's like, "Yeah, trying to get a reservation somewhere," but he didn't want to say it. So just say,
"No, I'm not
where
asking
do you want
you
me to get you in?"
I'm not asking for
Go
you.
ahead. Where do you want me to get you in?
No,
you are. Yeah, you are.
I already got the connection at what the.
Yeah, it's just. By the way, as it shows, it's starting. It's so good, and you should go back. You got to go back and get the beef Wellington.
That's the only reason I want to go there.
You have to go, and it's over. I think by the end of the year, so you got to go. And then you're going to go, and you're going to say it sucked.
I know. Right. I don't think you really understand. I mean, I just don't trust your taste in like certain things. I mean, it's like you scare me a little.
Okay, how about this?
Yeah, I know you'll pay for it if I don't like it. I don't need.
Wasn't that nice? Tony, wasn't that nice? He wouldn't offer that. And by the way, if this show keeps going any longer, Tony's going to be right. Spoozy's going to be down 40.
Thank you very much. That's right. As foretold, Sosnoff got 12 handles right now. Should I take it?
Oh my God, you would have been stopped out of the downside when they were down 108.
No.
Oh my God, I know you. I mean, you're like unbelievable. You want the poetic license of being able to do anything.
No.
Okay, he would have been stopped out. He'd have been had his tail between his legs, crying.
Wow. Maybe on the old big futures, yeah, but these little guys.
You know what's amazing? The old bigs. So let's think about this. These are a 10th.
No, they're a fifth.
10th, exactly.
A 10th. They were
inside.
500, then they went to 250, and these thank you, Tony. The original SPOOs were 500, but that's when SPOOs 5 points was limit.
Right.
Opening limit.
Yeah, pretty much.
Yeah, it was opening. 5 points was. Do you remember if the what with the MMM, right? If they were up $5 or down $5, it was limit. We're going, wow, we're limit $5. They're down 84 right now. We're going, big deal. They'll be maybe, who knows, down 40 or
5 the limit.
5 points was the limit on the open. 5 points. Was, I remember sitting in the lounge having breakfast. We're like, oh my God, we're gonna have a delayed opening. They're down 5 points.
Yep.
I don't remember.
Okay, well, if I didn't feel old before that, I guess I do now.
Sadnov doesn't remember that because, you know.
So
he
think
wasn't
about
really
that. So
trading back
now
then.
these are, well, think about it. It's 1/10. So this is an 8-point move.
Yeah, no big deal.
Right. It's an 8-point move.
What are you worried about, Sadnov?
Tom's so confused right now. He's looking at his screen. He's trying to come up with.
I'm not confused.
Let's talk about football. What do you think? Who do you like in the playoffs? By the way,
You can't win with a crappy quarterback. Tell that to the Vikings, right, Sadnov?
By the way, fully computer drafted team. We're gonna end up in third place. Should have been second. We're gonna end up in third. It's okay. Go ahead. Let's talk about football. Who do you like?
Who do I like?
You want to talk about college? Or you want to talk about pro? Let's talk about
Pros.
college. Who do you like in college?
College?
Yeah.
I mean, I hate this, but I think you got to go with the chalk. It's going to be Oregon.
Oh,
Georgia.
I'll take Ohio State over Oregon.
Okay.
Okay. What's the line?
Ohio State.
Yeah.
I don't know what the line is.
Okay. We got to do this because, well, we got to do it by tomorrow because the game's Wednesday, right?
I don't know when that game is.
Wednesday. They're all
Okay.
Wednesday.
Fine. I'll take Oregon.
You just said that. Okay. You got to bet. I don't know what the line is.
And then
I think I like Georgia. I like Texas. If you don't like any of these teams, let's go.
I like Texas.
Texas, Georgia, and Penn State.
I like Texas and Oregon. You can have everybody else.
Well, I like Texas, so you can't. So I'll take Georgia, Ohio State, and Penn State.
Georgia, Ohio State, and Penn State.
Georgia lost their QB, didn't he?
I'll take the other.
But he was hurt. He was hurt already.
I'll take the other side of all those.
Great, done. We'll talk about it tomorrow or later.
In the pros.
Yeah, in the pros. Who do you like? Bears. What's the line of the Bears game? Whatever. It should be like 40.
I'm not even.
I don't even know if anybody's playing though for the Packers.
Is it over? It doesn't matter for the Packers. Oh, see, that sucks. Yeah.
I don't think the Bears could stop Josh Jacobs on one play.
I don't think the Bears could stop anybody.
Okay, so I will take. I can't believe I'm going to say this. I think the best two teams are still Kansas City and Philly.
Over Buffalo?
Just told you, Kansas City and Philly.
Really? You think that's the Super Bowl?
I think that's the Super Bowl.
So you think Buffalo? Let's get our Buffalonians all crazy. So you think Buffalo's going to choke again?
Of course,
if Cincinnati makes it in there, they can't play against Cincinnati. Well,
no. Buffalo's in already.
Buffalo's locked up the 2 seed.
Locked in.
I understand that, but if Cincinnati gets in, then Buffalo plays Cincinnati. First plays last, I believe, and they have not played well against Burrows in Cincinnati. Burrows is hitting on all cylinders, and they lose in the first round.
Probably.
Oof.
After watching Joe Burrow play on Saturday.
And you're going to Philadelphia's going to get through Detroit or Minnesota?
Detroit and Minnesota stink. Philly's going to kill them. They can't stop Saquon Barkley. No chance. I'm going to tell you, I love Philly again. But I think right now, it'd be hard to bet against Mahomes.
He's good.
He's great.
He's good. And it's amazing how they lose people and doesn't matter.
Doesn't matter.
Doesn't.
I would not.
Hey, you're right.
You're right.
The Bear-Packer game is off the line.
It is off?
Yeah. And by the way, you're right. I would not want to play Joe Burrow and Cincinnati because his receivers, they can't run the ball, but their receivers are amazing.
Yeah.
Jamar Chase, computer picked him first for us. There you go.
He's good.
He's good. Wow. He's really good. Right? That was our first pick.
Yeah.
He's good.
Yeah, he's good.
All the receivers are good. The white kid they have as tight end, he's a monster too.
What was this? I saw something that Bowers, who the
He's
Georgia,
great. Absolutely.
I loved him in college, but
Absolutely
said he broke Ditka's. Was it a single season tight end?
Yeah.
Ditka had the record.
Yeah.
They said he broke Ditka's.
I think he had the yardage record or something. But Brock Bowers is
big.
absolutely unbelievable.
He's fast. He's big and he's fast.
Strong, big,
fast,
talented,
like bull.
Unbelievable.
Reminds me of you back in the day.
He was a little like doesn't have my hands.
I see a lot of sauce now.
Doesn't have my
Brock
hands.
Bowers. He's just running over people. Tony, what do you think?
I'm with you, Scott. No matter what you say,
right? Just running over.
I didn't run over people. I just, I just had the hands.
Like mitts.
Soft.
Mitts. All right. Should we get Tony, did you take your 12-point profit?
No, I did not.
Okay.
He's down again.
You're down again? You got to wait now?
No, I'm unchanged. I'm up 2 ticks.
All right. All right. Top 15 symbols going through the system. First 40 minutes a day. No broad-based indices or futures. Time for you, number 15. TLT at a 41. For everybody else, Tesla at a 78. NVIDIA at a 25. MSTR at a 31. Boeing at a 55. PLTR at a 77. Coin at a 25. AMD at a 60. Apple at a 37. Amazon at a 56. AVGO at a 44. iBit at a 73. TQQQ at a 31. Microsoft at a 44. MU at a 24. And number 15 for Tom, TLT at a 41. Rounding out the next 10. Meta at a 49, RGTI at a 34, GLD at a 48, UNG at a 72, SMCI at a 32, and Goog with an L at a 55. Do you ever make chili for New Year's? Or was that Super Bowl?
I make it for New Year's Day.
New Year's
It's on my
Day,
game
burn
plan.
ends?
Burn end chili. Hey, did you make your burn end chili?
I made it, Sosnoff, and it was great. I should have given you your props. I forgot. It was outstanding. We had it on Friday. I chopped it up like you said I should. Put a little kidney beans, little black beans. My wife doesn't like white beans. Little tomato. It was excellent.
I told
it was
him.
very, very good.
Burnt end chili is the greatest.
Where do you get your burnt ends?
Costco.
Costco.
Hey, it's all done for you. You don't have to go to. You buy.
It was.
Did you do 2 packages? You got to do 2 packages because you need a lot.
I only did 1, but I got to be honest with you, ate it all. It was none left
I'm making
over.
that. I got to go get that.
Their burn ends.
Really,
their burns are
really
great.
good.
It's in the center section. One of the yeah. I got to buy that.
And they it is the best meat for chili because it tastes great and you can keep it in decent sized chunks. You got to chop them up.
It holds
chop it
up,
up,
too.
see?
Whatever you cut it,
It holds up, exactly.
Yeah.
Exactly.
It's not like little pieces of steak. I got to give him this. When he's
It's a game changer. I've been doing it for like 5 years. It's Wednesday.
He has been, and I finally.
No,
did.
I remember
finally
because
saw
he
it.
said he was going to bring some over a couple times, but he never did.
I'm going to do it for Wednesday.
No, he actually brought it one time, but I don't think it was the burnt end chili, Sadnov.
It was.
I think once he drove by and threw it on the front yard and honked and said, "There's something outside for you."
I drive by your old house all the time just to see if there's packages out there for you.
And I apprate that.
Yeah.
I do.
And make sure nobody's like robbing your place.
I appreciate that too. And we were over there yesterday just a little bit. It's a slow process. We're working on this. Okay. We're the only people that can't get our stuff out of a house to sell it. I finally said to the 6th.
You got to hire like one of those.
We're hiring a company. I said.
They just throw everything out.
I said, you mark it. Donate it. Throw it away. Take it. I don't care. We're done.
What are you going to take it to?
Wherever they want it. I can care less what they do.
No, I understand, but what are you going to like?
We have a lot of giveaway.
Oh, okay.
We have a lot of giveaway. I mean, after being in the house for so long with our kids and everything, I mean, there's stuff that would be useful if somebody wanted it. They could come have it.
Scott, this is usually the time when Tom is doing this, when he invites like the low-hanging fruit, like Kai, my son, anybody else from the research team.
Sahil.
To come over and grab stuff?
Yeah, they furnish their house.
And they can hey, anybody need a bedspread? Do you have a dog chair that's been pissed on? Anything that
I let people shop in my basement. I let them have whatever they want. Come over. As long as you take it away, you can have whatever you want.
See, that's smart.
Not the tasty trade side. Not the tasty trade side. Those guys are bougie.
There we go.
I'm talking about the tasty live side.
Josh just volunteered. He's happy. He
Josh,
He said he's happy.
Josh will come in there. His whole family will redo a bedroom. It'll be great. It'll be great. Can we do that?
I think I'm hiring.
I get to rent out the truck. It's a win-win for everybody.
Who drives?
I usually drive. I include that in the rental fee.
All right, I like that. You're probably less than whatever the services we're going to use. We might have to.
Thank you, man. Appreciate it.
Yeah, thank you.
Appreciate it.
Thank you.
You just bring it down the street,
right,
drop it off at my
say
house, put it in my
something nice.
basement.
Say something.
My basement with somebody else that I can let people just shop there.
Just open up your garage, throw it in the back, and let people come through.
Yeah.
Who's the creepy guy down the street?
My son just asked, do you have something like a cabinet he can put for dishes or something like that? He needs a little something like that. Like a cabinet for dishes.
No, but I think we have like some beverage refrigerators that could go.
Ooh, a bougie fridge. He can use that in his loft.
See?
I like that.
Right?
I like that. I like it.
Oh my God, it's frightening. Every time I walk in, I throw out like 10, 15 bags of stuff, and we're not making any headroom. Like, it's just like we're going headroom. Like, here, we got to go, get stuff out. Moving's horrible.
Horrible.
Hey. It's nothing like getting kicked out. That's a lot harder.
Oof.
I'm just going to tell you right now, okay?
Oof. Yeah, I actually heard that about somebody recently. They didn't want to own up to it, but that's bad.
Oh, what? They what?
Yeah, I'll tell you later.
Oh.
Yeah, I can't announce it on air.
Yeah, getting kicked out is a lot worse than moving.
Yeah,
Trust
but
me.
it might have been for valid reasons that she kicked him out.
Oh, God.
Oof.
Hey, there are always valid reasons. We're going to take a quick 90-second break. We're going to come back with more Tasty Live after this with Liz and Saj. You're not going to want to miss this. TP is in the house. We'll be back in 90 seconds with Tasty Live.
Oof.
Peace.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Strategies? That's easy. Taking off strategies? That's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
Stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Hello, everybody, and welcome to the TP and J show. TP, thank you for joining me.
Oh, you're welcome, Jen. I love doing the show with you.
And I appreciate you hopping on last minute. Liz's son is in a basketball tournament, and the game just happened to be right smack dab in the middle of our show. You know, you never know when you're going to play. It's like, as you keep winning.
Get it.
So he's playing right now. TP jumped on for her. So thank you, TP.
You're welcome. So her son is a senior, right?
Mm-hmm.
And her daughter's a couple of years younger.
A junior.
And a junior. And are both your kids gone now, Jen?
No, well, my son, you know, he's turning 21 in January. Yeah. He's a junior in college. And then my daughter, she's a sophomore in high school.
Well, so, yeah, you know how, because I don't know if you heard, Liz was always make fun of me and you. She'd be like, oh, Jenny and TP, because we're empty nesters. Ha ha, look at them. Ha ha, they're getting old. Ha ha.
And we have the older kids.
she is right there with us, Jen. She can't laugh at us anymore. Ha ha, Liz.
She is, which is why she wouldn't miss the basketball game, because she knows this is, you know, her last season. This is it.
All right. Now, so Jenny, you know, I love my kids. You love your kids. I get it. You know, all right, we'll get that out of the way. We'll just say that as the disclaimer. But both my girls are in college now. I do not miss going to those high school events. I really do not.
You know, I will say, I really do miss going to the football games and watching the football games. And my son was the kicker, so I didn't have to worry about him getting hurt. So right. I really miss watching him kick at those football games. I will not miss, and this is going to sound terrible, I won't miss, because my daughter's on the dance team. I'm not going to miss the dance and going and watching the dance, because the dance drama is real. Dance drama is real. Dance, that's all, everything you hear about dance, it's all real.
It is true. And, you know, I also where the high school is, it's getting really busy now. A lot of people are moving out there and the traffic is awful. So I don't miss that part. I don't miss that part at all.
Well, and your girls are doing well in school. What are they both studying now?
So my older daughter is going to graduate in the spring. And she's getting a degree in theater. She's double majoring. She's getting a degree in theater and another in finance. Because I told her, and I think I've told you this story too, is I said, look, you know, she's a smart kid. I said, a theater degree isn't going to be particularly challenging for you. Okay. And I don't want to dismiss it. I don't want to downplay it. That's not what I meant. But I said, you know, because she got a lot of scholarships to go to school. And I said, because there's no huge cost to going here, instead of screwing around and taking a bunch of classes in, like, you know, whatever these random classes to fill out your requirements, focus on getting a degree in finance, because it's not that hard. It's not like you're doing, you know, like my other daughter's studying biology, and she's going to take organic chemistry and, you know, labs and all that crap, and it's hard. And so I said, finance isn't that hard, so you can do a double major in it.
I mean,
Besides, I can help her.
Finance isn't that hard coming from TP, who is a genius. Finance can be hard. No. I'll tell you, I went to U of I. Our finance classes were hard. I remember, like, statistics classes, and I even took some derivative classes back in the day, and they were hard.
Yeah, but so it's really, I think you can get through those class. Maybe not. Well, even the derivative, because she took like a finance, investment, blah blah blah. Really, if you understand the present value of money, just discounting money, the E to the negative RT, whatever it is, you're 90% there. What she really had trouble with was the accounting. She hates accounting.
Oh, accounting. I hated my accounting classes. I didn't
like it either. And I can't help her with that because it doesn't, it's like, yeah, whatever. Put the numbers here, put them there. It doesn't really matter.
I know. I thought you were going to say you want to go to school and get a theater degree, get a finance degree too, because we've got a show for you. She can have her own show on Tasty Live.
Well, right. And it's, I'm not saying one is more valuable than the other. I'm not saying, the finance degree, because I don't necessarily think a finance degree is like a ticket to a job. But Jenny, let me ask you this. Because, college is gone.
Oh, I think I briefly lost TP, but hopefully we'll get him back. John.
Yeah, we see it.
Okay. Hopefully he'll come right back. In the meantime, oh, there he is.
Am I there?
Oh yeah, yes, there you are. Okay. I just missed your final comment. TP? Hello, TP? TP, I can see your eyes blinking. Hopefully we'll get him back. I will, while we're waiting for him, let everyone know, don't forget to guess the market. You have until January 3rd to guess the market. I don't know if I know you're busy over there, John. I don't know if you're too busy to pull up the art card for guess the market. But get your guesses in, guess the market. You have till January 3rd. Guess every quarter where you think the SPX is going to be. And the end of the year, you can win $1,000 each quarter, $2,000 the end of the year. I got my guesses in live on air. I don't know. We'll see what TP has to say. If he already put his in, we will see. He is coming in. I see him waiting in the waiting room. He is ready to come in. All right, there he is. Hey, TP.
Sorry, Jen. I don't know. I had to restart my connection. Sorry about that. Okay.
Well, no
so
problem.
Here's what I want to ask you, Jenny. So when you get out of school, I think the most important thing is get a job as quickly as you can. So rather than taking, I'll take, a couple of months off or 6 months, or I'll travel around or anything like that. I think that's a bad idea. I think getting out there and getting a job shows your next job that you're serious, that you work hard. What do you think?
I mean, no disrespect to the people who let their kids take these gap years. They weren't the thing when we were young, right? You hear of these kids saying, I'm going to take a gap year. I'm going to go travel Europe. I think it's crazy. My son is working every day over Christmas break. He's working full time over Christmas break, and he'll start working as soon as he graduates. But that's just how we grew up. We didn't grow up with, I'm going to go travel the world.
Well, I didn't know what a gap year was until like 10 years ago. So anyway, no, I just think it's that because a lot of kids don't jump into jobs, and a lot of my daughter's friends are thinking, oh, maybe I'll just get some little job doing this or that. It's like, no, your degree has a half-life. Okay, your degree now will never be as valuable as it is right now, and get your real estate license if you can't get another job. Do something that means something to the world.
No,
right?
I agree with you. We have some kids. So I live in a little cute town where there's like restaurants and shops, and people come here because it's just a cute little quaint downtown. And we have some kids who have graduated college who live around here, and they're just working in these little local shops in town while they're trying to figure it out, even though they've already graduated and have a degree. It's insane.
And so I don't want to bog down the whole discussion with this, but I want your opinion because, we've been around for a while in business and that sort of thing. I think it is better to get a miserable, low-paying job at a company everybody recognizes than make a little bit more money at some shop that I work for, the Jenny and Liz and Jenny coffee shop. Nobody knows what that is. But if you get some crappy job, even at like Amazon or Microsoft or Tesla or whatever, or IBM or Chase Bank or whatever, everybody knows, oh, I know that company. You worked there.
Well, then that's on your resume, and that's your starting point for your next job. So it is.
Yeah, so anyway, I could go on and on.
Hopefully these kids will. So when I was graduating in the 90s, the job market was amazing. We all had a million offers. We could go anywhere we wanted to. And I know when some people, like my brother-in-law, he's much younger than me, maybe 11 years younger than me. When he graduated, we were in a recession and no one could get a job and kids were unemployed for so long. I hope that doesn't happen for our kids as they graduate. Hopefully the job market is easy for them. I don't know. We'll see what the market brings.
There's lots of jobs down here in Austin, Texas. So whatever. I don't know. We'll see.
Well, good luck to your daughter. I do want to say, TP, I think I'm right. Was your anniversary yesterday? Oh no, there he goes. Again. Oh man. All right. Well, while we wait for TP to come back, let's jump in the platform, John. We'll talk about what's going on. We have, if people can see, SPOO's down 77. We'll jump in the platform and I'll pop into Twitter and we'll see what's going on. We are taking live tweets, include the hashtag LIZJNY, and we will take live tweets. I know John and the crew are ferociously working to get TP back. Sometimes we lose him because he films from like a tower in his ranch in Austin, outside of Austin. So sometimes we lose him and his internet is not always the best. But we're in the platform. We've got SPOO's down 78. You're back, TP? He's coming back.
Am I back? Can you hear me, Jenny?
I can hear you. I can hear you. I can't see you, but they'll get you set up in a second. Talking about the market, we've got SPOO's down 80. It has been worse. They have been lower. I honestly didn't expect this. After Friday's close, I thought we would be up today. I don't know why, but I did think we would be up today. The only thing that's working for us is our M2K MES is going in the right direction. You can see here we've got SPOO's down 1.3%, Russell down 1.2%. I guess it's not that good, but we do have our M2K position down 275 while our MES is up 400. So that's moving in the right direction. The net position is still down since we put it on, but at least is going in the right direction. Hello, TP, you're back.
All right, I closed everything. So Jenny, I do not have my platform up, but I do remember a few things that we wanted to talk about.
All right, but
go ahead. You were talking about the markets. What's your take?
Before we get into that, I was going to say happy anniversary because if I'm correct, yesterday was your anniversary.
Tomorrow is. Thank you, Jenny.
Tomorrow.
Thank you.
Okay, so my anniversary was yesterday, and 23 years. How many years have you been married?
Me too, 23 years.
So we were married same weekend, same year, same weekend, right after September 11th.
That's crazy.
That weekend after Christmas. So I was married on the 29th, and you were married on the 31st?
31st, yeah. Jenny, we're almost anniversary twins.
I know. Oh, did you do are you going to do anything fun?
We'll probably go hiking at a little hill around here that's very pretty and stuff. So because my wife and I like to, get out and do things, and the whole going out to dinner is kind of like, it's whatever, but it's whatever. And so we'll make a picnic and go hiking somewhere tomorrow, somewhere pretty, and just kind of hang out, talk, look at the birds, bring binoculars, and argue about the next year. What did you do? What do you do?
Our house has been taken down by the flu or like the norovirus or something. So was Liz's house because her daughter has it now. her son had it, Lily had it, and then right before Christmas, my dad had it. Right after Christmas, my son had it, and now my husband has it. I'm the only one who hasn't had it.
You're a machine. You are a machine, Jenny. You don't get taken out by anything.
I don't know. So far, so good. But yesterday was our anniversary, and it was sick. But we'll celebrate at some point in time.
So here's the deal. Do you ever do like the 23rd anniversary traditional gifts?
TP, I'm telling you, yesterday I woke up, forgot didn't even realize it was my anniversary because you're so busy with Christmas and the holidays and the kids home.
Yeah.
And it was like 10 a.m. where I looked at my phone and I saw the date and I was like, oh, it's my anniversary. And he was up sick, so he was locked in his, room. And so I texted him, happy anniversary. That was the extent of it yesterday.
No, that's wonderful because after 23 years,
maybe we'll make some big grand plans to go somewhere for the 25th. I don't know.
So Jen, what are you making of this sell-off?
Okay, I was saying while you were gone, I was just saying how I'm surprised because Friday, I took off most of my short positions on Friday, thinking we would have a bounce today. And then earlier today, whatever remaining short positions I took them off as well. So now I have 0 short positions. Is that a mistake? I don't know. What do you think?
No, not necessarily. I have some short. I'm making a little bit of money on my shorts today. Like we talked about, Jenny and I talked a little bit about before the show started. On a hunch, I sold a put spread in the NDX, and I took it off before the show opened for like a 40%, 60% profit. I was using 0 DTE options.
Oh,
so
good.
I had a hunch that the sell-off was a little overdone. Unfortunately, I don't have my platform up, but see, now but they were down like 420 at one point.
Yes.
That's when I bought them. And so it was just that's all it was. I didn't know they were going to bounce like this. I sold put spread in bonds. I've sold a call spread in
Wait, but did you do that
the euro.
today? Did you do that today?
Just right now. This is what I'm remembering I've done. And because I've done some other trades today, but because I had to shut my platform down so my internet isn't stressed out. So I'm kind of flying blind here.
I will read it to you. Okay, so here I'm in ZB. The crazy thing is we had ZB up over 114.05. Now it's back to 113.28. I'm surprised because I have long bond positions. I did not close them. I thought, oh, well, maybe this is just the start of a bigger move higher in the bonds. So when you said you sold a put spread, I was surprised. I didn't know we were back down to 113.28.
Yeah, I just sold a put spread just as a contrarian trade. I was a little surprised at the weakness in the bonds and the rise in the 10s and the 30-year rates. Mm-hmm. And I don't, is that going to make it harder to get the economy going? Well, it's going to be tough for home buyers, so there's that. But I was surprised at how strong interest rates are.
Was there news today, or?
I don't think so. I don't know. It's the whole. I don't necessarily look for the news. Stuff happens. You get sell-offs in the market. I think partly because it's slow this week. What I would do if you could pull up a chart, Jenny, on SPY, just pull up a chart on SPY. And you look at, and if you can add in the volume, is there a way to do that easily?
Chart volume.
It's under.
Where would you find that? So chart layout.
Don't worry about it. So they don't worry too much about it.
But you know what? I wish I could, because oftentimes I think, oh, I wish I had the volume on here.
Go to, and I can't.
Hide all
I'm also blind.
I don't see it on here though. Chart settings. I'm sure.
Is it a study?
I'm sure that.
Is it a study, Jen?
Oh, you think so?
Yeah.
Oh, here, maybe under the indicators. Indicators.
Down to V.
Okay, here we go. And here we go. So volume subgraph, volume main graph. Which one?
Subgraph. Do subgraph so it doesn't get in your way.
Okay, there we go.
There it is.
And I'm happy to have that on here.
So look at this, and I realize we're only in the first couple of hours of trading, but the most recent bar there, that green bar, is very low. So I think, and we've had some big volume days over the past couple of months. I just think there's not a lot of volume, and so I think the sell-off was just, there wasn't as much liquidity, and they just got whacked. That's it.
Well, listen, I say that about the holidays. When you're trading around the holidays and not a lot of people are trading, if a big order comes in, it can move the market because there aren't as many people trading.
100%. 100%. And so do I think, would I be bullish, longer term, not just for today? Maybe. I think we're going to be fairly choppy for the next few months. That's just my hunch. And look at that chart of the SPY. We've stalled out. We couldn't make a new high over the past week. We're selling off a little bit. I just think, we may just be stuck in a range for the next couple of weeks.
And that would be fine. That would be great. We had a year where we were stuck in a range all year, and it was one of the best trading years for premium sellers. So if it's choppy back and forth, great. We'll take it.
So what's the VIX doing now, Jen? Just to fill me in.
It's 1725 right now, but it's off its high. It was up to 1922, so we're quite a bit off the high. And SPY's only down 70, so it's kind of like cancel crash. People aren't scared anymore.
Yeah.
Right?
Well, that's exactly what happens. It's in low liquidity days, you just get these. You just get these intraday reversals as, the market catches up to itself or surprises people or whatever. Use whatever analogy you want. But I wouldn't put too much faith in the sell-off, and I don't think necessarily the VIX isn't showing a huge level of complacency here. If it were down around, 14, I'd say, yeah. That I'd be worried about a bigger sell-off, but it's around 17 right now. That's a decent number for the VIX. It's not very high, but it's perked
It's right around average, right? Average is around.
Yeah.
So, So do you use that as a tell, thinking, okay, I don't think SPY's going to be down 150 by the end of the day. We're probably just going to bounce around here.
And so that's why, if you want to sell some premium, if you wanted to do a short-term trade, it's 10:30 now. It's a little, the premium isn't great, and you're not going to make a huge amount of money. But right now, if you wanted to bet on a bounce, you could go into, and the reason I choose NDX is it's a bigger product than the SPX, and it's more volatile.
Okay, so I'm glad you brought this up, because we will on our show trade the 0 DTE's SPX, and we'll just buy a call spread, wrap it around the at the money, and try to take a quick $50 out of it.
Yes.
So we do that in SPX. Now you're saying NDX you think is better because it moves more.
If you have the capital to trade this stuff. Okay, because as your viewers know, that the price of an option is linearly related to the price of the stock or the index. So if you have a $21,000 index, its options are going to be richer than if it were a $2,000 index or a $5,000 or a $100 stock. But it takes more capital. Okay, so if you, and with a 26% IV rank, just for the sake of argument, Jen, click into the 25-30 put spread. So sell the 21 130s and buy the 21 125s and see what you get for that.
Well, the markets are wide. It's bouncing around $1.70, $1.80, $1.95. It is bouncing around, but the markets are wide. So how do people know in NDX, exactly where to put their order in? Because you're looking at, here's the market on this spread, 20-cent credit at 320 credit.
This is where trading experience helps, and where the way you get experience trading the NDX is to trade the NDX. Okay. So I would put it at $1.90 and see if I get filled.
Okay.
Again, if you're thinking you're going to bounce, I'm not telling you to do this trade, anybody out there or whatever. And then if you don't get filled for a while, and the markets, and it's just kind of, and maybe the index is dropping a little bit, say, gee, I'm not getting filled at 190. How come? Maybe I'll take it down to 185. It's typically you have to give them a tick, typically. So let's say 5 cents, maybe even 10 cents to get filled in the NDX. But that's the sort of mental library you have to build up as a trader. Okay. What do I have to give the market makers to get filled?
Now, what are you looking to take out of this? Since you're taking in just $1.90, what are you looking to make out of this trade? If it's looking for like a quick scalp out of it,
85 cents. I'll look for 50% profit. If I'm Jenny, I take what I can get. Okay, I don't argue with the market. My point is that if I can, this is what I did before the show started. Sold a put spread, lo and behold, the NDX rallied, and I saw 60% of the max profit. Boom, done. Okay. Take it. Okay, take it. I'm not going to argue with it. I'm not going to dick around with it. Excuse my language. I'm not going to say, gee, maybe I can get a little bit more. No, I'll take it because it was just a hunch. I did a trade.
Okay.
Don't. I would, if I sold that for $1.80, I would be ecstatic to make 90 cents out of that thing.
All right. So we sold it for $1.90. I'm going to put in an order right now. Now, here's my question. Liz and I will often put these on an SPX and we take just $50 out of it. We'll say, hey, let's just take $50, try to get out before the show is even over. Yep. But then we've gotten some comments that is that enough with commissions? Is $50 enough? But I think so. I don't know what you think.
I think it is, partly because there's zero commission to close on the platform. So it's, you pay commissions going in, but you don't pay commissions going out. But I don't want to, I don't mean to be flippant about this, Jen, but making $50 is better than not making anything.
And
$50 minus commissions. Let's say you pay $10 commission. Let's just pick a number, and I only make $40 on that trade. If I could make $40 in the course of 3.5 hours, I'll do it. It's why I will do that trade because it's making those $30, $40, $10, $100. It's those little bits and pieces. I don't look for the $1 million trade. Oh, I'm going to buy a pile of calls in Tesla. They're going to go up, but I'm going to make $1 million. I don't know. I don't do that. I make small amounts of money because I have bills to pay. I have kids to put through college. I have my own, I need to buy my groceries because I eat a lot, as you know. And I look to make $40, $50. How much did I make of that NDX put spread? $60. Okay. And that's a $21,000. So, but technically, Jenny, and let me introduce this question, is if you're making $50 in the SPX, how much do you have to make in the NDX? Well, a bigger profit because it's a bigger index and you're taking more risk.
But if you're doing a $5 wide spread, it's still a $5 wide spread.
Yeah, it is. And so that's why I like the NDX. If you want to take more risk, you can widen those strikes out. They'd be happy to trade with you. Mm-hmm. But this is the sort of thing where if I can make $90 or $85 on $5 worth of risk, sure. Yeah, why wouldn't I do that?
Right.
Now
on a day, so I know you used to like to sell far out puts in SPX. So when we had, down day Friday, down day today, are you looking for puts to sell in certain places?
I still have that. I still do that trade on just as a long index replacement. Yeah. So was I selling? So I do that, but that's sort of a strategic trade. My regular daily and weekly trading. Yeah, I was looking to sell. I sold some puts and did put spreads in NDX. I told you the trades I did today.
Mm-hmm.
I have some put spreads in NDX, or not in NVIDIA. I have some put spreads, and I'm going back and through my memory without looking at all the. It's going to shut my platform down. I have trades in Google. I have trades in Apple. I have trades in, I'm looking through the stuff that I have, same as you.
I just didn't know on like down day after down day, then you're thinking, oh, I'm going to go, we've got 2 days, down days in a row, 3 days, down, 3 down days in a row, vols up. I'm going to really go out there and start adding some puts.
Yeah, I mean, I don't necessarily count the days like that, but here's what I am nervous of doing is selling calls into this sell-off. Okay?
Rolling down calls.
Rolling down calls. So if I'm defending, let's say, a short put or long stock or a put vertical, like I said, I have a put spread in NVIDIA. Okay.
Mm-hmm.
I'm not threatened by it yet, but it's losing a little bit of money today. And like Google, I'm losing a little bit of money in Google today, or in Apple. Would I sell calls or call spreads against it? I
don't like to do that.
No, because I just have a queasy. If you force me to come up with a number, I think my hedges over the decades I've traded have probably cost me about 35% returns.
TP, this year you're going to, I don't know if you'll be surprised or not, but I used to use SPY as my hedge. So I'd have short puts in all these different products, long positions in all these different products, and I would use SPY as my hedge to hedge that long delta. This is the first year in I think a decade that I did not use SPY as my hedge, and this is my first year I have a positive P&L in SPY.
So hedge. I think hedge is a 4-letter word. Okay. I don't. I grew up at a time when you hedge your positions. Yeah, But as I get older and the more and more I trade, is hedging. I don't like it. My hedges lose money.
Right.
Okay. If I think I'm wrong on a trade, just take the stupid thing off.
I agree, and cut down your size. Or if sometimes I will take, if I have puts in something and they're losing, I will actually move them. Like I'll buy them and move them lower. And if I have to pay a little bit to move them lower for a little bit of peace of mind, I'm okay with that.
But selling, so let's say I'm threatened on some puts today. I am not selling call spreads.
Mm-hmm.
In anything, because I'm afraid that this is a low volume sell off, that it's kind of a head fake in the downside. You're not getting that much premium on those calls, and we could blow back right through them. And
tomorrow, you could blow.
Yeah, and
who knows?
It would take a good profit in that long trade and turn it into a mediocre or small profit.
Right, and then after you've dealt with the pain of the losing position, then to lose on what how you were trying to defend it is so frustrating.
And so, Jenny, one of the questions you had for me before the show is to talk about some of the symbols that I have my biggest P&Ls in. Right. Some of the worst trades, some of the best trades, right? And I remember, like, Meta is one of my biggest losing trades this year. Then the numbers are pretty big. And so, one of the, Yeah, it's a big number.
Oh, TP, we just made our $50. All I took were $50. It's kind of like in SPX when we do it from a study based on Jejun, and when we get our $50, we yell Jejun. But now with our NDX, and now with this NDX trade, when we win on it, I'm going to yell TP.
Well, thank you, Jenny. No, Meta has been my biggest loser this year, and that's because I got whipped around by selling premium against stuff, and it wasn't really a hedge, but I traded too big in there. Well, I don't want to say too big because I had the capital to do the trades and all blah, blah, blah. But I was trading a lot of naked options in Meta. It just didn't go my way. That was my absolute biggest loser.
If you look, it's at a range of 400 to 630 or so. So when it has over a $200 range, it's hard to sell strangles and keep managing those.
Yeah, and that's what I was doing. I was selling short-term strangles in Meta, and just getting whacked back and back on the upside and the downside. So Meta was a big loser.
So now your lesson, like the takeaway from this, is your takeaway, I'm not really going to sell strangles in Meta unless maybe it splits and it becomes a lower price product, or I'm like, what is your takeaway? Do you have a takeaway here from your Meta over the year?
So my takeaway is that bad trades happen, and it's not Meta's fault. Okay. Don't blame the stock. And I don't even blame myself because, I'm up on the year. Just my trading, I'm up on the year. I'm profitable in 2024. And Meta's a loser. Okay. It's not Meta's fault. And I was doing the trades that sort of fit my criteria, right? Mm-hmm. So my point is, I will go back and look at Meta again. I might look at Meta this afternoon after we do the show and I get my internet back, right? Because it's got a 47% IV rank. I know where I can get filled. It's a $600 product. It's got the options have premium. You can get if you have the capital, you can get rewarded trading Meta. Okay, so
it was a rough year for strangle sellers here.
Yeah, for me, absolutely, that was my biggest loser.
Okay, here's one of our biggest losers, mine and Liz, both of us now at this point. It wasn't before, but now it is. So Intel's gone from almost 50 to 19, and we've just been selling puts, rolling puts, rolling puts. So when something goes from 50 to 19, it's a challenge, but once it goes from 50 to 19, we're not throwing in the towel and saying, oh, we're not trading this anymore. But this was probably our worst performer in 2024.
You can't. So the main thing is not to turn away from liquidity. All right. So whatever my or your opinion is of Intel doesn't really matter. Is it a liquid? Are the options liquid? Do they have premium in them? The nice thing about Intel, Jenny, is it's a $20 stock. The capital requirements aren't huge for selling puts in there. I can do that in a modest size. I could do, if I have a $25,000 account, I can sell a put in Intel and see what it's like, to get my feet wet and selling naked premium. And so it's liquid. It has a high IV rank. Don't walk away from Intel. Yeah, you had a losing trade in there. Okay, it's not Intel's fault. It isn't Intel's fault. It's not even your fault. It just happens. Stocks and indexes are standard normal variables. They move up and down. You can't predict which way they're going to go. There's no news. There's no analysis. It's just they move up and down. Sometimes it's Intel.
I could handle Intel more than here's Starbucks, and I have lost this year in Starbucks because
so have I. Starbucks was a bad one for me too.
Drop down and then skyrocket up. So drop down through your puts, skyrocket up through your calls, and it was really frustrating. Starbucks was very frustrating this year.
I had some. It wasn't one of my biggest losers, but Starbucks. I know I lost some money in Starbucks. I know I lost some money in Netflix. I know I lost some money in trying to think.
And we're not trying to be I'm not trying to like make the show negative, but you're going to have losers, right? You have a positive P&L this year. I have a positive P&L this year. I'm happy with how my year went. You're happy with how your year went, but we're going to have these losers. And I think my question to TP was, do you stick with them or do you throw in the towel? Like if I were you, I might say, oh, I'm not going to trade Meta for a while, but you're going to stick with it. And like you said, it's not Meta's fault.
So you know where I have a losing trade is it wasn't a big loser, but it was a loser, is in Uber.
Oh, wow. Uber was tough for people.
And I've given up on Uber. Why? Because I don't like trading the options. I don't think it's a great trading product. Pull up the options in Uber, Jen, if you can. And let's just take a look at some of them.
In Jan, you can go to the 25 Delta and you're getting about 80 cents.
I mean, it's not bad.
But I get it. There are a lot of people who've been struggling with Uber.
I don't like Uber. And so, yeah, I don't have a hunch with Uber and I don't feel like trading it. And I haven't getting rewarded. So
the buying power isn't great. 80 cents on the 27 Delta put and you're using $1,000 in buying power.
Yeah, I think that's kind of a lot.
It is a lot. If you compare it, like we were just looking at Intel, which is only $20, look for 80 cents in Intel, and you've got the money put is only using $350.
Right. So I would walk away from Uber only because I don't like Uber.
I'm walking away from Walgreens Boots Alliance. Now, Walgreens Boots
WBA.
Alliance.
Yeah.
I'm walking away from it, and I feel bad.
I know that Liz is very bitter about WBA. So in a nod to Liz, I do nothing but short WBA. I've made some money on my shorts, and I refuse to get long in honor of Liz.
Well, no. So TP, this is what happened. Liz's mom passed away a year ago, a little over a year ago. And when Liz inherited all of her mom's things, her mom had an account, and the only thing in the account was Walgreens Boots Alliance.
Right. Yeah. No.
The whole account was Walgreens Boots Alliance. Thank God she sold most of it before. Thank God her mom didn't live to see the day for Walgreens Boots Alliance to be $9.
And it's not to criticize her mom, because you know what? She did the best she could. And she saved money. She put money away every month or week or whatever it was into the stock while she worked there. And she built up a position over the years. Nothing wrong with that. Way to go, Liz's mom.
No, and so we still kind of think of her when we trade Walgreens Boots, but I have to throw in the towel with it because there's not a lot of premium in there. It's tough. Those options aren't great anymore.
No,
I
they
used
stink.
to trade Verizon, and then those options for a while were so cheap. If there's nothing in the options, it's not worth it.
This is the problem when your kid becomes a trader. Okay, they look at they get whatever you've left them and say, "Mom, Dad, what the hell were you thinking?" Okay. Most kids, oh, this is so nice. Oh, they were thinking of me. Oh, blah, blah, blah. It's wonderful. When your kids turn out to be traders, this is what you get. So like my kids will do, when I'm dead, they'll be like, "Dad, why were you doing this? NDX? What were you thinking?"
Funny.
Bonds? What the hell are you trading bonds for?
Funny stuff, TP. Funny stuff. All right, I just went into Twitter because it's already 10:45. We only have 15 minutes to go. I went into Twitter. We've got a handful of tweets coming in. Ron Grace comes in. The new TP trade. Way to go. I agree with you saying using SPY as a hedge is hard to make money. The only way I have made money in SPY is by buying calls.
Yeah. It's Ron, you know what? I don't love buying calls. So Ron, the only thing I'd say is I agree that the proof of the pudding is in the taste. Okay. If you're making money buying calls, well, there's no denying that they worked for you. But I don't think you want that to be a bread and butter trade. And I don't think it is for Ron. You know, I think he's a pretty experienced trader. But don't, everybody listening to this, don't necessarily think that, gee, this month I'm going to buy some calls. And maybe, Jenny, maybe I'll try to buy some calls in Apple. And maybe I'll try to buy some calls in Intel. And maybe I'll try to buy some calls in WBA. You don't want to fall into that trap.
No, but so I will say I have been, if there were some underlyings where I did want to have some long positions in and say you don't want to risk as much as buying the underlying or putting on a zebra, I have put on calendars where, let's say, pay $5, and I've done this in SPY, where I put my long further out in time, and let's say pay $5 for this calendar, and my short is 0 day, and I just keep selling 0 day, 0 day, 0 day, 0 day, 0 day until I've collected enough to cover the cost of it, and then I just leave my long. I don't know what you think about that.
Yeah, no, it's a great idea. Yeah, it's really about strategy. You know, Jenny, I understand why it's fun to talk about the symbols. It's fun for me to complain about Meta and Starbucks and you to complain about Intel and all that stuff. And it's true, right? It's engaging. But really, the most important thing isn't the symbol, it's the strategy. Okay. So
not the symbol, it's the strategy. That should be our new t-shirt. New t-shirt with TP's face on it. It's not the symbol, it's the strategy.
Right. And so because, you know, I won't necessarily walk away from Meta because I can trade it, you know, and if I have a loser in NDX, I'll still trade it. If I have a loser in bonds, I'll still trade it, right? And so it's maybe I just need to adjust the strategy depending on whether IV is high or low, like you, Jen, you're talking about, you know, buying the zebras, buying calendar spreads if the IV is low, and it has been low. There's been a lot of low vol products out there that make good calendar trades.
Right. And with the 0 DTEs, it is nice if you stay in a range selling those 0 DTEs every day. It's actually they've worked out okay lately. And I know in the last few days we've had some big movement, but if we don't, it's nice having the option to sell those 0 DTEs or go 2 days out or 3 days out.
Right. And, you know, Jenny, it's not. So we pioneered the daily options years ago. And, you know, Tom and I introduced that idea to the exchanges and stuff like that. It took off. They didn't, you know, they were kind of sluggish about it. Who wants to trade a 0 D? You can just trade the monthlies. No, people want flexibility. And so this goes back to the point we're talking a little bit about a little earlier, Jen, is, you know, how much money do you take out of this NDX trade or this SPX trade or whatever? It's, yeah, if I can sell that 1 DTE or 2 DTE option against a long option and make 10 cents on it, I'll do it. $10 on it, I'll do it. Because it just chips away. It chips away. It chips away.
And there's a difference at selling we sold the 0 DT put spread. We made that $50 pretty quickly. If we sold a put spread that had a week to go or 2 weeks to go, we wouldn't have made that $50 so quickly. That put spread doesn't lose its value so fast.
Correct. And so that's why, especially if people are just kind of starting out trading, you know, you've gone through a few quarters, some expirations, you've put some trades under your belt. Start to put trades on, you know, our default is, you know, 55 or 60 DTE, you know, 30 delta, whatever. Start to look at some of the 0 DTE options, keep them small, and look at how they respond. Okay. Look at their P&L. The only way you learn to trade is by trading.
Okay? I agree.
The only way you learn to swim is by swimming, right? So,
CB, I just want to make sure we get to some of these tweets.
Some
people have questions. So Herb came in earlier, an hour ago, with this question, and Michelle did say 23-year anniversary, also this 27. So TP, Michelle, myself, we're all celebrating our 23rd year anniversary.
And Michelle, let's keep our fingers crossed for another 23.
Yeah, right. 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 Okay, so Herb comes in. He's looking at Feb 21 SPY. If he sells the 650 put and buys the 635 put, so that's a $15 wide.
Yeah.
So if I sell the 650 put and buy the 635 put for $14.98 credit, is the max loss $2 and the max gain? Why would it be 650, 635? Let's take a look.
Because
Feb
it's so
21.
deep in the money.
Oh,
So he's selling it deep in the money put spread.
yeah,
Right.
650, 635.
Because what's SPA? What's SPY right now?
Oh yeah, 588. I mean, it's
So
kind
he's
of like
selling it
buying a
deep-
call spread for $2.
Right. So he's selling, yes. So that is synthetically buying a call vertical. So selling a deep put spread is synthetically the same. It has the same risk and reward as buying that 635, 650 call spread. Okay.
Right. And
so
it
if
looks
he
here-
sells that,
It looks
What-
like you
what-
could get more than $15 on it. It looks like it, but that's
that's because the markets are wide.
yeah.
You're not going to get filled. I don't think you're going to get filled at 15.
No, it's the same trade as buying this call spread.
Right. And so I would do, if you're going to do that trade, I would buy the call spread because the markets are tighter.
Mm-hmm.
It's the same risk reward, but you're not going to give up as much slippage. You actually get the trade done. So, and that's where.
And look, $1,500 in profit potential. This 635 call only has a 4 delta, very low probability of getting up there, but it's all the way out in Feb, and we've seen crazier things happen. Who knows?
Yeah, I mean, sure, it's a bullish trade, and you've got negative theta. So, okay.
It's only $28.
Right. So, okay, yeah, fine. I mean, but that's $28 you have to, if it's a losing trade, that's $28 you have to make up somewhere else.
Right.
Right. So my point is to the tweet, there's nothing magical about selling that put spread.
No,
Okay.
it's just, flip it over and buy that call spread, same trade.
Right. So that's why, and so he's talking about the buying power reduction. That's because the credit is so big, it covers the width of the strikes.
Now he's
That's
saying
why-
$14.98, almost as if he bought that call spread for $2. I don't know if he'd get filled at that price because we talked about how the markets are wide. I think to get a gauge on what price you'd have to pay to look at that call spread, that's probably more realistic.
What it is synthetically, Herb, that's buying that call spread for 2 cents. I don't think they're going to give it to you.
Right.
And there's some cost of carry involved and yada yada yada, but I don't love that trade.
Look, it's the symbol, not the strategy.
Yeah.
That's the quote. That's going to be the quote of 2025.
Thank you, Frank. And Frankie, Frankie has way more trading experience than even you or I, Jenny. So I defer to Frankie for a lot of this stuff.
Yeah, Frank's amazing. He did come in when we were talking about volume. He said Friday's option volume was 53 million contracts, 5% above recent average levels, with calls leading puts 7 to 5.
Yeah, people were betting long. It was kind of busy on Friday. It's kind of
Now
busy.
I know, and he was wonderful. President Jimmy Carter passed away.
It's sad. I remember Jimmy. Do you? I don't think you're that old.
No,
Do
but
you remember Jimmy Carter?
Not too much, but it was sad. But just there will be a day where all the markets will be closed. The markets will all be closed. I think when they have his funeral in D.C., where the day of his live broadcast funeral, that the markets will all be closed.
Hey, pull up Jenny while we're at it. Pull up NDX. See how we're doing on that put spread.
We're already out of it.
Oh, you took the prop. Where is it now? What's it doing?
We're
What's
already
NDX?
out of it, TP.
Yeah, you
let's
made your
see.
money.
Yeah.
You made your money. Now you don't need me anymore, Jenny.
We were the 25.
Yeah, they came back. Now they're only
25.
down 245. That's let's like $150 rally back.
25.30.
They love the market. I wouldn't go in again here. Just
No, but
whatever,
okay, so it's $1.10 now. So we sold it for $1.90, and now it's about $100 winner now.
Yeah, that's awesome. No, that's awesome. And so it's I don't want to say it's an advanced trade because it's a put spread, but it's a big product. It's tougher to get filled, but it's good to experiment with and see what it takes to get filled. So I have to write it. So one of the things I do, Jenny, is every 6 months, my cherry bombs are the predicted ranges for the next 6 months.
Oh, really?
So back on July 2nd or whenever it was, I put out the ranges going from July 2nd to the end of the year. And it was looking a little hairy, with this massive rally.
Uh-huh.
As I sit now and I looked at the Spider, Qs, IWM, TLT, and VIX, each one of those products is within the range 6 months ago.
Interesting. So I could see July 2nd, NDX was around 20,000.
Yeah.
Now with it around 21,000 in the range.
And the ranges are wide enough that they are still in the range.
I'm surprised about TLT though. But if we go back to July.
But look at it. It had enough.
Yeah.
When you look at it, for a 68% range, for one standard deviation range, it's still inside.
It's crazy though to think, okay, it was 90 in July and we rallied all the way up to over 100 and now down to 89, 88. What were we? Yeah, 88.
Yeah, it's so that's why people buying calls in SPX or SPY. Yeah, I get it. But market neutral, just selling premium, it's boringly predictable, and that's kind of what trading is.
Now you're the bond expert.
Yeah,
you're the bond expert. What do you think of people who even here at this level say they're still bearish on bonds?
That's fine. Do it with a defined risk trade. Don't go naked. Don't sell naked calls and bonds. I just think so. If you just look in TLT for a second, let's check out the skew in TLT. So pull up the options and go to any expiration. Go to 39 or 50, 53 days is fine.
Okay, so in Feb we're trading close to 88.
Yeah. So down $5, up $5. So
45, around 46 cents, down $5.
And then up to
52 cents.
So the skew is pointed higher.
Mm-hmm.
I don't always put my faith in the skew, but the market's pointing up, and I would be very cautious about if you think TLT is going to stay down and interest rates are going to go back up, and yeah, I get it. I don't disagree. And with a 39% IV rank, TLT is not a bad product. But selling a call spread here, I think, is riskier than selling a put spread.
Right.
That's it. That's just me. Do it. If you're bearish, do it in a defined risk way.
I just thought we'd be getting. How high did TLT get today? I guess 88.03. So, and where's ZB right now? 113.30. I just can't believe it's up to 114 for a split second and then to back down.
Yeah, I mean it's the same thing. Low volume. It's it's not. This is a weird week. It's like Thanksgiving. I've seen some of the biggest moves in the market around the day after Thanksgiving. It's a nightmare, and so. This is the same thing with New Year's in the middle of the week. It's a pain in the neck, Jenny.
It is.
I don't like these holidays. It's a lot of pressure on trading, and it's a lot of personal pressure. There's a lot of things you have to take care of.
It is.
You
kind
have a
of
sick
odd.
husband.
But what and then I brought up how the market will be closed when they have the funeral for President Carter. So it's like, okay, we're closed this Wednesday. We were closed last Wednesday, and we're probably going to be closed someday next week again. So it is. There'll be 3 weeks in a row where we have a day that the market's not open. It does seem a little odd.
It's hard. It makes it hard,
Mm-hmm.
and so I love trading. I love it. It's my safe space. Right?
Liz and I, we love it. We say we'll be like 90 years old in the nursing home and we'll still be trading.
Yeah, because it's fun and it keeps me engaged, and it's this is how I make a living. But my point is, so I get it if people want a day off. I understand. I appreciate days off, and most people have regular jobs. It's nice to have a day off. But it kind of sucks trading. I think if the markets were open literally 24 hours, 7 days a week, all the time, it would reduce my blood pressure. It's when I can't trade and I have to go do other things, when people make demands of me. That's when it gets hard.
Okay, we're out of time. It's 10:59. I'm going to give you 60 seconds. Is there any truth to, Liz and I have talked about this and heard about this, end of year, end of quarter, end of year. Tomorrow is December 31st. At the end of the day, and I've seen these options priced high at the end of the day compared to how they are typically. So let's say we're at the end of the day, it's 2:55, end the day tomorrow, year end of quarter. And this call, this just out of the money call or just at the money call, will be more expensive than usual, that there's like a run up at the end. Have you ever seen this?
Yeah, I can see that. If you one of the things to look, Jenny, I'm sorry, is to look at, because I know I've talked to Liz about this. Look at the open interest on some of this stuff, and there might be some pin risk. There's a lot of open interest at the 59.50 strike.
59.50.
And it's also down on the lower strikes too. There's a lot of open interest on the downside. So they might forget this end of year window dressing. You know, that's traditionally when money managers start rolling positions, getting ready for the next year, and they start buying stocks and that sort of thing. I guess there's some truth to it, but I would look at the open interest and see if we get pinned either the 59.50 or the 5900. My bet's the 5900.
Okay. All right, we'll see. We'll see what tomorrow brings. TP, thank you so much for joining me last minute. You're the best.
Thank you, Jenny.
Have a happy anniversary. Happy New Year. I will see you in 2025.
Yes, I'll see you. I hope your husband feels better. Hope the family gets better and kicks this Novavirus. Jenny, Happy New Year. Let's kick some butt in 2025.
Agree. Everyone out there, remember to trade small, trade often, laugh with us, learn with us, and watch the TP and J show. See you tomorrow.
Dear Braden, big thanks to you and the nerds for the wonderful tech support. Of course I back everything up to cloud, because I'm 60 years old and I know what a cloud is. Yours truly, Larry.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
No, your office is right near a different. You're like closer to the.
Near what?
Whatever.
This is English. You should watch him read.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
You know what my first concert was when I was very young. It's quite embarrassing.
Anson.
How'd you know that?
I mean, I feel like everybody.
How did you know that?
Because who else was popular then in like the late 90s?
Oh my God, that's amazing. That was cringe. There it is, the song. Yes.
Yes. All right. Good luck. Good trading. Let's go eat some roost.
Peace.
We just ripped higher up to 50 points, and I just thought we would stay there. But
the thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man, Mikey Butler, and of course, Ryan Grace in the house with us today for our crypto takeover. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever, just come hang with us for the next hour of the day. My favorite hour of the day. I get to spend with my buddies, Mike and Ryan. How are you, sir?
Doing well. It's good to be back. Rested, refreshed, relaxed, ready to go. How are you guys?
Good. We missed you over the are we out 2 weeks? Was our last one 2 or 3 weeks ago? Were you the last trophy winner? Or no, it was Ryan.
No, I was
You have the
one,
trophy. Okay.
and I need to give it away to someone else because Snoopy Babe is not
Yeah.
Snoopying.
Snoopy
the
Babe
way
got
we
you.
should. But yeah, we can. I will deliver this to whoever is the current bag leader when we get to that part of the segment.
All right, we'll get
But yeah,
to that.
holidays were good. Glad we're back in the saddle here with some bag battles. Your Buffalo Bills, man. I mean, you took the Enigma out of the game. He actually took himself out of the game. He was like, well, are we going to Tyrod here? We're down 40-0. Insane.
Tyrod came in looking fire.
Yeah.
Multiple touchdown passes.
Yeah.
I mean, the fact that he didn't get his 500th TD.
Oh, Devontae?
Yeah.
Or Rodgers to
Rodgers.
Devontae, yeah.
Yeah. That's a cherry on top. Yeah. Hopefully they don't get it next week either. I feel bad for our very own Chris Vecchio that has to experience the pain of Aaron Rodgers,
And then he turns the channel. He's got Drew Lock throwing 5 touchdowns for 400 yards.
Incredible.
Like, it's just so funny.
Incredible.
This might be the craziest final fantasy week in history. I mean, there were multiple games where the QBs just went absolutely insane.
Yeah.
Including Baker Mayfield.
Drew Lock is on. Are you familiar with like the season-long best balls?
No, I'm not.
So you draft a team before the season starts, and it's your team for the entire year. It basically optimizes your scores throughout each week, right? So like you draft, 8 wide receivers, 5 running backs, 2 QBs, or 3 QBs, tight ends, whatever. And it does it. So you don't set your lineup. There's no pickup, nothing like that.
Just takes the best of what you've got.
Best of what you got, optimizes it week to week, and you're in like little pods of 12 people. You win, you go on to the into the playoffs and the semifinals. So this week is the championship week. So it's like a 1.5. Is it 1.5 million for first?
Mm-hmm.
The big one is 1.5 million to first. We got into the semifinals. Both of us got knocked out. In the championship, there's like 300 or 400 teams, something like that.
Yeah, for underdog, it's like 400 or 500.
The team in first place right now has Drew Lock as their QB. Yeah. He's the only person in the entire grouping that even had him drafted.
Wow.
So just an absolute tail event.
Black Swan.
That Black Swan for 1.5 milli.
Well, you already know that I was bounced, and then I got to watch Baker throw 5 touchdowns for 500 yards yesterday. And I had Kelsey, and I had Dobbins, and I had Evans.
Shoulda, woulda, coulda.
Yeah, probably would.
What do you get for that? Zero, Mikey.
And here I am.
Zero.
Top 20%, I think I would have got if I advanced. Yeah. But there's always next year. But we'll get you in on it next year because I think you would.
Hell yeah.
I think that is something the Gracer boys would definitely enjoy that.
Yeah.
Yeah. Chris he's a little bit more on the sports gambling degeneracy side, I feel.
Oh yeah, he's right there. We're there together. Yeah, we go at it from more of like the expected value kind of side. So I have been placing a lot of bets. I was going to say something differently there. I call myself a lot of bets.
Trade small, trade often.
Yeah. I don't win very frequently, but when I do, I win huge.
Okay,
so
there you go.
It
That's
offsets.
my style.
Yeah, I've been able to grind it out really since June with this strategy. Once I really learned more about it, didn't know much about it, but I love to bet, guys.
Okay.
So I'm in.
I
My
love
brother's in. He is a degenerate. Yes.
I love it.
Well, as your brother probably already knows, this week is a fun one because there's so many players that are playing for their little contract bonuses.
Yeah.
So you know that they're going to be just feeding the ball to these guys. So if you know what the contract bonuses are, could make it for an easier hit.
That's some edge right there. Real edge.
Yeah. But the books know that too. So
of course. You're not outsmarting them with that.
But yeah, we are streaming live on YouTube. If you want to join us there, just pop over to Tasty Live. And you'll see this video. You can put in your trade ideas and questions along the right-hand side chat. I'm going to put in the Tasty Crypto newsletter right now. Get that for free. Comes out every Saturday morning. And it is the end of the year almost.
Yes, we have SPX Guess the Market tomorrow. We got about 22 people that are within the expected move for tomorrow, which is a bit shocking considering the year that we've had.
Yeah.
I mean, I think we're up like 30% this year. So I had
the norm. That's a new norm.
Yeah, I made a distribution of all the guesses, and we're on like, here we go. Here we got my peeps up. So these are all the people in the running, all over the place. And if you haven't signed up yet to make your guesses, Ryan, I hope you give us a guess. tastylive.com/guess, free to enter. You just put your name, where you're from, and your guesses. And if you're close, we'll put you up there. So these are the people that are within this range. Obviously, I tweeted this out. You got to have a little game theory here. You see all the people that are at 5,850, at 5,900, 6,000. You got to get off those numbers and go to 59,9925, that sort of thing. Like
the price is right.
Yes, exactly. And it's whoever's closest, so you don't have to go above or below. That doesn't matter. It's just whoever's closest. So game theory it a little bit, and it gives us some funky new numbers to put up there too. So on the next slide, give us this little distribution that I put together. So take a look at this thing. So, obviously when we started the year, there's always going to be your upside bias. I mean, that's just positive drift. And everybody's, the distribution, it's amazing to see a distribution like this in a totally random set of people and
so bearish.
Seriously, I mean, everybody's up has a conservative 10 to 15% upside target. Like that. We started the year at 47 something.
Okay, yeah. So when did everyone start to place their bets?
This time last year.
Oh, okay. I thought this was recently or
no, this is blind guess, man. This is like starting now. We're guessing for Q1, Q2, Q3, and Q4 of next year. So you have to do all four at once.
Got it. Okay.
So it works out that most people think 10, 15%, maybe 20% is like the middle of the distribution, and we're all the way on the tail. It's a beautiful thing. But we have people that are out there, which is great.
Yeah, I got some threes. Certainly that looked a lot more realistic at the beginning of the year.
Yeah.
7,800, ambitious, aggressive. I like it.
I think there was more than one that was out there too, because like the people that are like, I think I batched this in like 5 guess increments in the 50-point range. So when you get out on the tails, there's only a couple there, but pretty interesting look. So we'll see. Somebody's winning $2,000.
That's awesome.
Tom Bucks.
It's worth like 5x.
Yeah.
Yeah. If you could pry $2,000 from Tom's hands, that would take a lot.
Yeah. Nobody was bullish enough.
This is like the crypto meme where you have the distribution in the middle is like, it's a fake token, blah, blah, blah. And the other one is like, the other tails are like, just buy coin, or like hodl.
Yeah.
Like that kind of thing. We got hodlers. They win.
Yeah.
In real life, here.
I think you see that play out so often, too.
So often. And more than you would expect, which is
a little alarming.
Is that recency bias, though? Because there's a lot. You
Could
think?
be.
Because there's so many that where, it just goes basically to zero.
Yes.
It's the big ones are the ones that get like publicized. So I feel like, your fart coins are more prevalent than the 1,000 others that were zero in the week leading up to that. Wonder if that's a...
Yeah, I think that people see it though, and the people that tend to be successful don't overthink it, like you're alluding to. Don't mid-curve it.
Yeah,
it's either going to zero or it's gonna do something that you don't expect. So I would just bet on, just buy it.
Yeah, and there's not much like
you don't expect.
Yeah, you're not like there's no thesis here.
No,
there's no like
it doesn't need to be.
It's 0 or 100, and like that's the outcome.
Yeah,
and if you're comfortable with that, you stay on the tails of the distribution.
All the analysis in the world doesn't matter.
No mid-curve.
And it hasn't here when you look at the S&P either over the last few years.
100%.
Right? I mean, what did people think in COVID? This was the end. And you could have done all sorts of analysis around this. What are the valuations of these companies, et cetera, and never could have predicted what happened next.
Rates went higher, and everybody thought, that was like bearish for the market. Markets have gone straight up since then. You have NVIDIA, you have the Teslas, Palantir's at a 300 PE ratio. I mean, there's a lot of tail events that have happened.
Yeah, it's almost like you get paid if you bet on the tails one way or the other, which is, I guess, counter to the message that's typically presented here to sell those tails and sell volatility, which obviously a small, a high number of occurrences and a small bet size does pay out over time.
Yeah.
But you can also get those exponential returns just betting on the tails.
Yeah. You just have to be comfortable with zero. You have to expect. Yeah. You have to expect zero.
Yeah, it goes back to our sports betting where you're going to hit 2 out of 10 times, 20%, and make more money than you lost. That's what you have to do.
Yes. You just have to be able to withstand the pain. As Mike knows really well.
Yeah. A lot of pain this year. A lot of pain.
Quick little market update, then we'll get into our crypto segment because it's my favorite. E-mini S&P 500 futures down 54. That doesn't really tell the story because we were down 100 and change this morning. 59.18 was the low of the day, so 60 handles lower from here. It's been a little bit of a volatile morning, but volatility itself has come in significantly. If you look at the vol futures, 1685 right now. We got as high as 1860. I don't know if that's a combination of just buy the dip. You got some holidays coming up. You got New Year's on Wednesday, so no markets will be closed. You have another day off next week for Carter and MLK coming up at the end of January, so there's a lot of time off in this stretch, so maybe that's kind of influencing volatility, but still an interesting move to see volatility now down on the day with E-minis down 54. NASDAQ down 222. You got Dow futures down 355 and the Russell down 16. So the NASDAQ actually the weakest of the group today. Some big moves in some of the big name tech stocks. Apple has been weak the last two sessions after its meteoric rise. Tesla giving up a little bit today, down $10 and change. Google and Amazon, kind of same story here. It's definitely been a little bit of a pullback in some of the big names. Oil futures up 86 cents, 71.46. We talked about volatility, 1680. Bonds up 21 ticks, but they are just getting killed over the last couple of weeks here. Gold and silver both near the lower end. Gold's down $15, silver down 53 cents. And Bitcoin 92,000 near the lower end of the range today. We got down to 91.3, but it's been a tough little ride the last couple weeks.
Yeah, it's seen pretty much the same unwind as the S&P here, and we'll note the correlations in a moment. But yeah, coming off of not quite 110, call it 108 or so, back down to the low 90s, as you mentioned, bottom of the range. I think when you look at it, still structurally bullish. But again, the trade is to sell the top of the range, buy some back at the bottom, rinse and repeat. We model those ranges when we look at implied volatility. And this is the range that we've seen towards the low end. Let's call it 92, 89, somewhere around there, right around 90. That's been the low end of that implied range or expected move on a weekly basis for most of December. We did push a little bit higher, obviously, the second week or so in December. But I don't think there's anything out of the ordinary here, and really is seemingly correlated to what we're seeing in equities and everything else as well.
Yeah, it's interesting to see the market kind of sputtering out, but as we've talked about before too, the volatility products, the premium volatility products like MicroStrategy is down almost 40% from the highs. But I mean, that's to be expected. This, like MicroStrategy, when you look at a chart, it looks like an implied volatility chart of Bitcoin.
Yeah, Coinbase too.
Yeah,
they're all kind of taking it on the chin.
Yeah, but like Ryan said, if you're bullish the space, like this is what you wanted to see if you're looking for a space to get in.
Yeah, this is right about the time when the news cycle FUD starts to really come out, because you've had the down move. So now everybody says, see, I told you so. This is like bounce time is what it feels like, in my opinion.
Yeah. Prove the talking heads wrong, is that what you're saying?
Yeah, it's
like
just
the people that were always bearish on Bitcoin.
Yeah, it's
like,
been
see,
forever.
I told you so, blah, blah, and then just skyrockets to 200K.
Yes.
That's what we're looking for.
Like Peter Schiff is like, he's ready to like ride on his horse to Sailor's house or something and like, tell him I told you so. Like that kind of thing.
Yeah.
That's what it seems like right now is the perfect time for that.
But yeah, objectively, if you were a FOMO person at 100K, you got to be a buyer at 92, right?
You'd think so.
But this is the beauty of iBit. It's that, it's such a low price product that you can really do whatever you want in here. You can sell the premium in a neutral way. Yep. You can skew it bullish. You can do defined risk. So we're in it the whole year. We did place the year-long trade in iBit. So I've got a 50-65 strangle in there. And my plan is to just skew it to the upside, take advantage of the call skew, and just sell premium in there all year. Mm-hmm. So it'll be interesting to see how we end up in there. Because the strangle I sold was 565 in credit for the Feb cycle. So I'm estimating we'll probably be at like 2,500 to almost 2,500 in premium by the end of the year. And then it's just a matter of where the market is.
Yeah. Should be a perfect one.
We'll see.
There's risk there, of course.
Sure is.
Should we do it? Give me my updates, because
we'll update for you.
Yeah, I feel like you scurried away right when we were at the top, like you were just dropping your bags off on me, like just dumping on us, right? You pumped it all the way to 108, and then you're like, yeah, DJ stuff, like do it, and then you scurry away with your bags.
He gets stopped by TSA with his duffels, and they're like, "What's this?" Yeah. Long fart.
My coworkers. This is there.
Yeah, I think there's definitely some pockets of outperformance that you'll find in the AI agent space and the meme space that we've talked about. You have seen a little bit of a pullback in a lot of other areas of the market, and certainly when we look at the largest market cap tokens, whether that's Bitcoin, ETH, Solana, a lot of downside there. But let's do a little update and a quick plug of the newsletter, because we're not on the show every day or every week for that matter. We do put these ranges, expected moves, and performance dashboard in the newsletter. So you'll get that or get an update. If you check this out on Monday, you'll get that update again on Saturday. We'll try to increase the frequency of that. But if you're looking for the ranges, it is in the email.
Sign up for that. We have that link in the chat on YouTube. So sign up if you haven't got it. It's really great stuff. Ryan and the team work very hard on putting that together and getting you that alpha, which I need to give you a shout out.
There's been some decent stuff in there if you've been reading it every week for the last year. You would have been long Bitcoin, you would have made some money. But yeah, we've been able to hit on a couple things here and there.
Definitely.
So thank you for that. That said, as you guys had mentioned, we're seeing a pullback here in the market, maybe no surprise after the ripper that we had. I use a lot of different signals. I know people don't like technical analysis. But there are a lot of signs that you're probably a little overextended in the short term when you were up at 108 or higher in some of these other tokens. That said, we have, short-term momentum has shifted bearish here on the daily. So we're just looking at exponential moving averages. These are just crossovers, not much to it, but it helps to stay on the right side of the trend. What I will be looking for is whether or not that kind of turns into more of a weekly momentum slowdown. If we see that go neutral to bearish, that would be the sign that you might see a bit of a protracted move to the downside here beyond what I think is a bit of a pullback, within that bullish trend. So if you look at Bitcoin on a 1 month basis, down around 5-6%. 3 months, bullish trend, up 45% year to date. It's been a terrific performer. Volatility hasn't changed too much there. You see the same thing when you look at ETH, look at Litecoin, Bitcoin Cash, Solana, Doge, which is now available to trade through Tasty Trade and Zero Hash. Really seeing the same thing. A bit of a correction, short term. I'm not seeing any signals that show you that this has changed structurally at all, whether that's from a volume or volatility perspective here, but momentum has definitely shifted, a little bit bearish here in the short term. Takes us back down to that 92, 90 area, low end of the range, with 108, 110 being the top of the range. I think you trade this in the same way that you've traded it really for the last year, within that range. That range at that point in time was 50 to 75, and we ping-ponged back and forth within that range for about 6 months or so. At least we spent most of the summer and into the probably October period in that range. So I don't read too much into this, but again, if we do see change in implied volatility and we start to see weekly performance look a lot worse from the momentum perspective, that would be the sign.
I'm interested on your thoughts, because I'm looking at the implied volatility, and it's a little surprising to me that Doge doesn't have that much higher of an implied volatility than like ETH, Solana, even Bitcoin itself. Do you think that's just because of the size of it now? Like, is it getting grouped into the like second order crypto? Solana, Ethereum being like the second grouping, so to speak?
I think to an extent. I'm just pulling up CoinMarketCap. Dogecoin is the 7th largest crypto asset, digital asset by market cap. That does include US dollar Tether. It is ahead of USDC when we think of it in market cap terms. Current market cap is 45 billion. It's been closer to 60 billion. One thing I will point out is that what you're looking at there, that 91%, is a 30-day realized vol.
Oh, okay.
Because there are no options markets yet on Doge.
Okay.
That said, for context, realized vol on Bitcoin is in the 40s. Implied's at 60. Doge realized vol is 91. It was like 130 or so if we go back to a couple weeks ago.
Yeah.
Because this is something that, if I'm looking at the chart here,
like it's realized I think it's up like 200% or something.
We went from basically 10 to 15 cents to 40 cents at the top.
Yeah.
And you're pulling back here kind of mid-range. You're at about 30 cents right now. So yes, these things are extremely volatile. Volatility has come in because that realized vol exploded as this went, almost tripled.
Okay. That makes sense now. All right.
So, but to your point, I do think that you'll see lower levels of realized and implied volatility over time. Volatility is dampened as these asset classes, or this asset class and these tokens, mature, right?
Sure.
More participation in Bitcoin over time is going to lead to, I think, more liquidity and lower volatilities versus what we saw years ago where, a vol that was 100 plus was pretty commonplace.
Yeah. You think that's actually a good point, because I like that you mentioned the liquidity being a dampener of volatility. Like if you think of like SPY versus, even the top names, an Apple. Apple has higher implied volatility than SPY, even though Apple's a massive part of SPY. And that's just because, liquidity in SPY is massive, massive, massive. Do you think there's like a perfect price to get that sort of vol dampening in Bitcoin right now?
Yeah, it'll probably be something like 500,000, a million, where the volatility, if you got to that point where your percentage change, you still have these very large dollar moves, but you wouldn't have a 40 or 50% realized vol, because that would equate to, on a 30-day basis, this thing moves $500,000, and you would have so much capital in it at that time.
Yeah.
I don't think that would be as realistic. The market cap would be so much bigger. So I say that arbitrarily, but I think it's at a much higher price because you're going to see more participation come in for that to be true, and then you'll get that higher price as a result. I think, just as this sees higher rates of adoption, market cap grows, obviously as a function of price there. There's a limited supply when we talk about Bitcoin. I think it's just a function of time, really, and more participation that will drive prices higher, generally speaking, over time, all else equal. But I think that's what it'll take for lower volatility.
It's a great point.
Yeah.
Where that equilibrium is, I'm not sure, but I think it's higher.
Yeah.
Yeah.
It's very similar to, like, I guess if you were to bring it to the equities world, it's the same as like when a stock split happens. Volatility of that product typically goes down because of the influx of capital into that product. It's harder to move a product that's a $3 trillion product than it is any other product that's lower than it.
All these stocks, like when you think of like an Apple or even an Nvidia or any of those, the price of them, if they had not split or done any adjustments, is hundreds of thousands. Apple, one share.
Oh, it's like a Berkshire Hathaway at that point.
Yeah, it's just that now the numbers have been divided so many times that it seems like it's cheap. It's that same sort of that was exactly what you were putting in there, is like there's no stock splits in Bitcoin. It just, the number goes up. I mean, you can measure it in sort of synthetic stock splits when you move the decimal place in terms of like how you're quoting it in US dollars. Moving the decimal place is, for a lack of better words, splitting it in terms of like the actual value. You're changing the unit of measure.
Yeah.
For it in dollars,
Yeah, and I think one of the reasons why you see much higher levels of volatility in meme coins, obviously a much smaller market cap, but very few participants. If I just look at how many people, and you can see this when you look at the like Etherscan, or you look at you look at some of the data around SolScan for Solana. I'm looking at the AI16Z token right now, and it has 54,000 holders, which really isn't that many people in the grand scheme of things. And then, how does that kind of play out in terms of the people that make up the majority of the position? Is it only 1,000 people, 500 people that are whales in there versus everybody owning a little bit? When you have those sorts of setups, which is really the case in all of this stuff that hasn't existed for more than just a couple of months, you're going to have extreme volatility. Over time, though, as more people participate, like we've talked about with anything else, that vol will come down.
Can you look it up, Babe? See if Mike is.
There's like 10 people. The market cap's like 70 grand.
Yeah, I'm not laughing. I'm not making fun of Mike here. Just the market cap I think now today is like $30,000.
Wow.
So we got rug pulled.
Snoopy Babe, S Babe holders. Not sure if I've got data here. I've got 5,153 to the extent that that's accurate.
Wow. An average allocation, if you just took that as
so to put
$6.
So you
could be
you have a position in there, big one.
A whale.
Yeah.
In theory.
Yeah. You should load up.
5,000 people is not a lot.
Oh.
That's like, I'm trying to think of how to like bring that into the real world. That's like one section of a stadium.
Yeah.
Like one row.
No, it's not.
That's not even it.
That's not good for you.
It's gonna be okay. I do have the golden ape here.
Yeah, you got it once, so you.
But we're gonna deliver it to the next bag champion.
Yes.
In a few minutes here.
Cool.
So that is a quick look at performance, guys. I have a few more data points, I suppose, we can just run through quickly, go anywhere else. Here we've started to look at momentum and performance around those different pairs too, just to get a sense of where we are in the market, looking at Bitcoin market cap dominance, BTC, spot D. Sticky at 58, not much of a change in the last month you can see, or really last 3 months, though it should be noted that the momentum has recently flipped bullish. To what extent that's measurable, if you look at these the same way, there is a signal there, I suppose, in the same way that we look at the price action. but market cap dominance still right up there around 60%. So we haven't seen much of a change off of the highs, but again, not much of a change. And then everything else against Bitcoin has been pretty bearish. You see that on the performance dashboard when we look at the year-to-date versus BTC. See that here when you look at the ETH-BTC spread or ratio, Solana versus Bitcoin, Solana versus ETH. Longer term, still structurally bullish, just given the outperformance and how much some of these have risen versus the change, on a kind of multi-year period versus Bitcoin. But short term, it's back to Bitcoin over everything. And I think you do see a little bit of a rotation into larger market cap tokens, obviously, into Bitcoin when you have more volatility in the space. And I suppose you're seeing that a little bit more here today and over these past weeks. What do you make of this? To me, it's just simply that signal that there's a larger rotation into alts, into meme coins, and that it's kind of shitcoin season later in the cycle. It's just not where we're at right now. You could get a cycle where Bitcoin dominance, given ETF inflows, is at these levels here and is sustained. But we've been at these levels for some time. I do think that this plays out as it naturally has in the past, where you see that capital rotation, people start to spend money on NFTs, et cetera, as they make more money in the space. But we're just not seeing any signs of that just yet.
Retail has not arrived, it seems.
To the extent that we've seen extremely bullish exuberance in the market previously, I don't think that we're seeing the same signs right now. It's not as crazy as it was or has been previously. We're not getting everyone texting us just yet about these things.
You think it's coming?
I think it will. Maybe it's less pronounced because you have more participants this cycle than you did, say, 4 years ago. But I do think that history rhymes. The same thing that we see in equities, we see everywhere else. I think you're going to see that continuously in crypto.
Yeah, you're not a mid-curve loser.
I'm not. I've been there before. It didn't work.
Yeah.
Didn't work.
That's fair.
I will say that we are in an interesting period of the calendar year because a big chunk of companies, if you're getting a raise or a bonus, like you're getting it soon because it's the end of the year. So, and we see that pretty common too, to just see like more activity in the markets, more account openings and blah, blah, blah in the new year for that reason. Yeah. So maybe you see some more activity, some more influx into the crypto space, which has definitely been one of the top 5 headlines this year of where to put your money.
Yeah. And I think among, probably a younger demographic, there's more appetite for participating in the space. I think that you see that evolve as well over time, where people that are still maybe on the sidelines and are becoming a little bit more interested in whether or not Bitcoin fits in their portfolio. I think inevitably a portion of those people find out about Ethereum, Solana, the technology, and then you get onto the margin. You have your kind of degen meme coin bag in the same way that we like to bet on sports and we'll take some flyers on call options here and there, but we do have portfolios and investment strategies and longer term things that I wouldn't say are necessarily more serious, but you probably take less risk with larger amounts of capital for the most part.
Yeah. I mean, that's an easy way to put it. I mean, that's like a very, there's always room for risk taking if you understand the risk. And like, I think that goes to the whole like mid-curve thinking of like, you have to have some sort of opinion on something.
Yeah.
And to not allocate some sort of high upside trade, for lack of better words, to that would be just it wouldn't make sense. Like you if you have the bullish, bearish, whatever, and you don't put some sort of asymmetric position on, you shouldn't, then you got a little sissy Mary.
Yeah, why even have an opinion? You can passively invest in index funds.
Yeah, and just
they do okay.
Yeah. Different game.
I will say what's been interesting to me since we started this show is just to see how much the chat has changed in a sense where we've got, just looking at some of the tokens people are talking about in here, virtuals, bonk, dog with hat. I mean, we're talking about all these different symbols we're having a lot of fun, hopefully, but people seem to be really kind of more in the weeds than ever before, which to me is just, again, another sign, anecdotal evidence that we're going to continue to see adoption.
Yeah, and it makes sense because, our space, people are thinking about risk taking. I think there's a lot. I referenced my friend that literally top ticked the market, not this last down move, but the one like 2 or 3 weeks ago in SPY where he texted me he wanted to buy call options. It was like a week after the election where we had that explosion to the upside. He's like, we're never going down again. I need to buy call options. I'm like, okay, where do what's your time frame? He says through the end of the year. And I'm like, okay, going to January. I'm like, how high do you think we go? And he's like, I don't know, 5%. I tell him to buy the 610 calls in SPY. It's like $10 or $15 out of the money at that point, or $10-ish out of the money. And that was basically like the top tick of the market. I feel like our viewers get more into, are not like that. They have some risk tolerance. They have some opinions. They know enough to be dangerous.
Oh, absolutely.
In the space, which is good to see. They're not the texters. They're not the SPY. I need to buy SPY calls at the top texters. Yeah. They're dabbling a little bit so that when they get their feet wet, they're going to know exactly where to be.
I love it. I think this space is a lot of fun. I think there's a lot of money to be made. There's money to be lost as well. I've been in the space for quite some time, and maybe that's why I'm so encouraged by it, because I've seen a couple of cycles now. Mm-hmm. But yeah, to me, as somebody that likes to trade options, futures, stocks, whatever, crypto is a lot of fun. Put it that way. So relative performance, guys. Let's just jump over to the next slide really quickly, and just take a look at expected moves. So we do our volatility analysis with Bitcoin and ETH. We have implied and realized vol, so we can do some comparisons of a bit of a premium still in Bitcoin options, though it's come down a little bit, less of a premium. And what I mean by that is just where is implied priced versus what's actually happened in terms of realized. Still some premium in ETH options there, but more so premium with IV at 60 and realized vol at 44% for Bitcoin. IV ranks elevated, but still kind of mid-range on the 1-year basis. And then when you look at the weekly expected moves, ran these numbers about 9 o'clock this morning, so things have clearly changed. They are not static. Mm-hmm. Bitcoin's up at 93. I think we ran this at 91.8. But you're looking at an expected move of about 8,000, or more so 7.5. Gives you a range of 84 to 99.5. ETH 340 has been about 10% of the underlying price, is what we continuously have seen here. So your range is roughly $3,000 to 3650 or so. Solana, Doge up there as well. But again, nothing out of the ordinary. Clearly, these ranges have lower lows and lower highs from where we were over the last couple of weeks, but no explosion in vol, no widening of the range, no signal there. Continuing to chop within it. The way that I trade this is I have a core position, long-term view, and then I'll add at the bottom of the range within a bullish trend. I'll sell a little bit at the top, rinse and repeat. When that trend changes, get out or readjust. Maybe you look at it from a short perspective with futures, as you can't short sell the spot. But within a bullish trend, that's how I would trade this.
Well, now you can use IBIT.
Yeah, exactly. That's a great point.
You can use short shares, or even just like selling call spreads, or buying put spreads. Like, that's now opened up the game, so you don't even have to get rid of your core position. You can hedge it via IBIT if you have the capital to do so.
Yeah, absolutely. And the way that I would use some of this data here, when you see much less of a premium where implied and realized is much closer together, or even at times implied trades at a discount to what's happened, at least in the previous 30 days with price action, you might want to buy options at that point. They're cheap.
Tails.
Yeah.
Either side, whether you're bullish or bearish, you think upside is the play, obviously, because you have the explosion of volatility if it does go up.
But yeah, that's where you can hedge as well. Mm-hmm. So that's a quick look at our volatility dashboard. If we jump to the next slide, relative performance, we've kind of gone through this already, so nothing new here. As we've moved through this last month of the year, Doge is still outperforming everything else we've got on the board there. One thing I wanted to call out before we jump into bag battles and pick our new tokens. Yes. Cross-asset correlations have strengthened here quite a bit, so I think keep your eye on the VIX. If you get a breakout in the VIX, breakout in volatility, you're going to obviously see some more downside in the S&P beyond this kind of correction we've seen here into the end of the year. Given how this is traded, I would expect then further downside in crypto, in Bitcoin. Some of the strongest correlations we've seen in some time here over the last few weeks when we look at that 15-day and even that 30-day, whether it's the S&P, it's the NASDAQ, a little bit of a positive correlation with the dollar, gold back there, bonds, and ETH remain elevated.
We, in perfect timing, I think the start of this segment was the bottom for Bitcoin today. We're now up 300 all day.
Yeah.
So, and
Must be it.
I've been waiting to get into the bag battles. In the last 25 minutes, the token that I was going to get into is up about 12%.
Okay, so it's warming up for you.
Is it warming up, or am I about to top tick it?
12%.
And you got to start the engines for blast off mode.
Yeah. So I was really excited. I felt like this one fit all my narratives, and it's moving. So,
well, let's do it. I think we all had a crap week last week. Really, it was 2 weeks ago where we were decimated, and you're seeing somewhat of a recovery here. Mike's in S-Babe. We talked about that already. Nick has been in Bonk. I've been in Society Library. We're all deep in the red here.
But you're
double digits.
You're the winner because you've lost the least.
Yes.
Which is
smallest loser.
Yes.
Winner.
You have the smallest bag.
Oh, thank you. Yes. Yeah.
Which is, impressive in this space.
But to your point, everything's kind of bouncing right now. I'm going to stay with Society Library. I like this trade here. I like the fact that it's like $4 or $5 million in market cap. It's tiny. What do you guys want to do? We'll book the trades, put these on through the Tasty Crypto app.
So, I had to go into something AI was my thinking.
Yes.
Because that's obviously hot right now. And what is hotter than degen AI?
Well, I like it. I haven't seen this one, haven't heard
This is why it's degen AI.
Okay.
It's on Solana.
Oh, I know. Okay, this is off of the AI 16Z.
Yeah.
Okay. Sorry.
So I picked one out of that batch. I think this is the perfect setup here.
I like this.
Narrative-wise.
I think that you see more participation in this theme. I think it's still relatively early. People are aware of it now, whereas maybe a few months ago, certainly not. AI agents, the tokens that represent them. We talked about this a couple weeks ago too on the show if anybody wants to review it. But we will put you in at, what are you, about 81 cents or 8 cents? Spot 081.
I don't think this actually has any AI agent. I think it's just in name.
In terms of what it's actually doing.
Yeah, it's not like an actual, it could be, I don't know.
Hey, you don't need a reason.
Yeah, no.
I like the token.
It's degen AI.
Yeah.
All right, we've got Nick in degen AI. We will, after this, I'll swap out of Bonk and into degen AI. And we do that all through a decentralized exchange and through the Tasty Crypto app if anyone wants to check out the Tasty Crypto wallet application in the iOS or Android app stores.
Yes. And we're going to be using it. We're working out all the stuff, all my tech peeps. Shout out to the production team to get us hooked up with a mobile app in here or with the iPhone so we can get it all in here. We can mess around with it. I know we have it on the web as well. You have your widget web thing. What do we call it?
Oh, the browser extension.
Browser extension. Yes, we have that as well. So we're going to be messing around with it live. We're working out the kinks and the details. Michael?
I think I need to make a change here because S-Babe is just not. It's not working for me.
It's all right. You can make it back.
You're right. You know what? I like the idea of getting into Chill Guy.
Okay.
Now, Because we saw the meme, we saw the chill guy make its rotations through the Instagrams.
Yeah.
And now we're seeing it kind of go away, but there's going to be something that happens in the next couple months where chill guy comes back. And
you're playing the bounce here.
I want to play the bounce because it is down 6% over the last 7 days. I think getting into chill guy playing for a bounce could be my ticket back to even.
I like that.
You like that?
That was good thinking.
Thank you.
Yeah,
but as we've learned, maybe the best thing is to not think and just.
That's true. That's why I went with DGen AI.
Yeah.
Don't mid curve it.
Yeah.
Don't mid curve it.
Don't mid curve it.
My favorite meme right now is the when I first learned about meme coins, and it's this big brain guy, and then now, and it's the guy that's like drooling.
Yeah,
he's
like
putting this circle into this
potato.
square, and he's like, haha, fart coin funny, lol. But yes, I would like to play for a chill guy bounce here.
I like that.
I think it's at the very least it's a coin flip.
Mm-hmm.
Cool. Glorious. I think, is that it for the slides? We good? I believe so.
Yeah, I think so. That is it for quick crypto market update. Bag battles locked in.
Love it.
Here we go.
I've got.
We got any stuff in the chat? Anybody asking?
I think the chat is going off. Yeah. We got some love. We got some hate. It's all good.
Oh.
Appreciate everybody showing up.
Yeah. Harsh is asking about quantum computing. We've talked about this before. Will it ever break crypto? Or, in the near term, how do you think quantum computing might affect the crypto space? I think is another way to put it.
I don't know. Honestly, I've seen the same thing that everybody else has seen. There have been some recent advancements. I think it's years away in terms of a problem that we really have to worry about. And I would assume that just given how much money is in this space, the industry looks to solve some of these problems. I have no idea, though, I don't know anything about quantum computing, guys, and I don't know how it's going to impact the security of Bitcoin. Maybe it completely disrupts it.
Or anything else.
AI and its impact on humanity is also one that, it's like, yes, I think there could be some impact, but I don't know.
Yeah.
In this case, maybe AI is going to be positive for humanity in some regard. But crypto and quantum computing and encryption, I don't know. I'm here to trade Fartcoin.
You're the mashed potato brain.
Number go up.
Yeah, number go up.
Yeah, I wish I had a better answer. I haven't.
Hole.
Yeah, I don't know. There's definitely some people that have done the work on this and have a strong opinion. I do not.
Yeah, I think if I've learned anything through trading, it's hard to. I don't plan that far out in the future. It's just too much.
Yeah, but this is why I think segmenting where you put your money is I think a smart way to do it, because like you have your conservative things. And then you've got you could be selling a put and SPY on one side of the coin, and you could be buying meme coins on the other. Like there's different volatility aspects to different asset classes. So I think it's an interesting way to think about it. What are some non-meme coin alts with use case and utility? Can we talk about those?
Ooh.
Yeah, I mean, when I think about an alt, I think of it as anything that isn't Bitcoin. I don't know if that's the right way to approach it or not. In my opinion, it's still very early for a lot of layer ones. I'm looking at, do you see some sort of relative catch up in market cap between ETH and Solana? Do you see a bid in ETH in 2025? I think there's some promising signs. Presumably, we'll get some regulatory framework that the industry can adhere to in the United States. I think you could see a resurgence of DeFi. You're certainly seeing a lot more trading activity on decentralized exchanges versus centralized exchanges, though centralized exchange volumes still dwarf DEXs. There's been a significant jump. A lot of it probably is attributable to the meme coin trading activity that we've seen. But I think there's still trades to be had there. If you think that the space is going to grow, then Solana and ETH are interesting to me. Bitcoin is still interesting to me. Outside of that, right, it's trying to find these pockets of opportunity and things that pop up, and you've got to be kind of close to it, or more so just doing the work and spending time on this. But I'm looking at, AI agents, that theme, real world assets, that theme. What are the protocols that support that? When you get back to the idea that there's some sort of regulated DeFi, what do decentralized exchanges like Uniswap look like? Maybe there's an opportunity there. Scaling solutions for Ethereum, right? To some extent, they take away from ETH revenue, but you look at the success of the base network and the adoption by users. You look at Optimism, Arbitrum as a couple other examples of layer 2s. So there could be opportunities there. A lot of this is all positively correlated. So, it's just what degree of volatility are you going to experience for the most part if you're right on the direction. But I still think, again, that it's probably the Solana ETH catch-up trade or the ETH 2025 story that to me is interesting beyond all the other AI agents and all of the other kind of themes that we're starting to see develop, and some of those that we're not yet aware of. It's just more so keep an eye on everything and don't overthink it, I suppose. If something new pops up, as I like to say, put a little bit into it, and then it forces me to explore it a little bit more and find out if there's something there.
I like it. There's a question about January 9th with the markets being closed. How might they settle January 9th options that already existed? It's a good question.
So I believe they'll settle to the close of the previous day, would be my guess.
Yeah.
I do not know for sure. I will look into that and try and post something.
We'll have more info tomorrow. We can.
But it's a Thursday expiration, so you're only looking at ETF, the major ETFs like SPY, Qs, stuff and SPX. It's not like single name stock options, because those have weeklies, they don't have the dailies. So, but I will look into that. It's a good question.
What do we think of SUI? I think of Ethereum, Solana, Bitcoin as core.
Yeah, I mean, for a lot of these things, it's kind of the same story. You have an L1, it's faster than ETH or Solana, higher transaction throughput. It's more scalable in some cases when you see things like SUI or SWI. I own some, but what are you starting to see? Well, you typically see these developments where there's more stablecoin trading volume, stablecoin market cap on that chain is growing. There's more kind of DeFi use cases. What's benefited Solana recently has been pump.fun and the meme coin use cases. You're seeing AI agents on Solana and in Base, Ethereum layer 2. So what are these other chains going to be used for? I haven't looked at it that closely. I own some of it as a way to just kind of play that theme that you're going to see the growth in other L1s. Maybe they're all interoperable over time. I don't know. It's extremely early for a lot of this stuff. I think you also want to look at the fully diluted value versus what the current market cap is, because there's a lot of supply unlocks that are coming for a number of these tokens in the future. So that could have an impact, negative impact on price to some extent. But I'm interested in those ideas. What is going to be the next Solana killer? And is that a trade idea? Because Solana is supposedly the ETH killer, and that was an initial idea. But what are you seeing? Kind of the same things happening on all of these different blockchains. So how many do you need? I don't know. But definitely that's one that's on my radar.
It's the same narratives you have in the markets.
Yeah.
Like people say like Tesla is the, automobile killer. Like Tesla's going to take all them out. And there's, always, what's the NVIDIA killer? AVGO is like, Broadcom is there. There's always the same thing.
There's always a lurking stunk, But yeah, I think it's interesting to, it really comes down to where people are wanting to park their cash at the end of the day. Yeah. And I mean, Tesla's an interesting one because Tesla moves in reasons not related to their car company at all. Like if you look at a post-November 6th chart of Tesla, it has nothing to do with their car production. It has everything to do with everything else.
Yeah. Yeah.
One more here.
Rapid fire.
Let's see. Seeing a lot of activity here. We appreciate it. What's the crypto newsletter email address that it comes from, I assume?
Support at Tasty Crypto?
No, I think it comes from marketing at tastycrypto.com.
Okay.
Yeah, but if you head over to the Tasty Crypto website, I think you've got it posted there.
Yeah.
If you want to sign up for it and get the newsletter that way.
Yeah, you can sign up at the top of the newsletter, but if you're worried about it going to spam or something, you can go to your email settings and whitelist marketing@tastycrypto.com, and that will bring it to your inbox. Yeah. I feel like we had that issue many years ago with some of the
all of our stuff, because there's always so many links and images and
and all these rules around emails now.
Yeah, Tasty as a financial firm kind of gets stuck in the spam catchers. It's not like this is like Fidelity newsletter.
We got one trade idea here in coin.
Mid curve newsletter.
This is a left tail.
Here's your top 10 dividend stocks in the last 20 years. None of that crap.
Yeah, this is square peg round hole. This is left tail newsletter for anyone that's interested.
That's a great
left tail newsletter.
That I don't want
copyright it.
That is good. Left tail newsletter.
That's what it is.
215, 225 bull put spread in coin for February 7th. 10 points wide. Defined risk. Playing for a bounce here. Yeah, you're in the earnings cycle. 215, February 7th.
Ooh, he's trying to avoid earnings.
Yeah, avoiding earnings. 215, 225. The problem with these weekly cycles is they're just so much wider in bid-ask spread. Like you're dealing with a almost $2 wide bid-ask spread for this spread compared to just going to the monthly, the Feb monthly.
Yeah, I'm gonna just go to the monthly, go to the 220, 210.
Yeah.
And
pick up a little more premium.
Yeah, $3 credit ish.
Yeah. You won't get as much decay, but this will still move if Coinbase bounces. Yeah. Like you can see today, this spread moved 70 cents. If you just look at the net change on the day, the spread moved 70 cents into this 10-point down move. So it still moves on movement directionally.
Yeah, I'm gonna try and get something.
That's it. We're out of time. 12 o'clock.
Cool.
Thanks for tuning in. Yeah, great one. We have successfully transferred the golden ape into Ryan's hands.
Yeah. For now.
Well deserving. But yeah, if you want to reach out to us on Twitter, I'm at Trader Mikey B, Nick's at Trader Nicky Bat, Ryan's at Ryan Fred Grace, and go give Tasty Crypto a follow as well. Again, we have the Tasty Crypto newsletter pinned to the top of the YouTube chat, so you can click on that, or you can go to tastycrypto.com. It's on the homepage if you scroll down just a tad. But yeah, have a great rest of your trading day. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned, and we'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
Welcome. This is a special edition of Futures Power Hour, our 2024 year in review, and our look ahead to 2025. This episode was recorded on Monday, December 23rd, 2024, and we hope that it provides a jumping point for trade ideas for the next several weeks and months. We'll be examining some of the top themes that could impact markets in 2025, the risks that they entail, and the opportunities that they might afford. With that said, welcome. From the impact of the U.S. presidential election and its policy shifts to the ongoing challenges of inflation and interest rate hikes, 2024 has been a year of significant volatility and transformation. Which of these themes will continue in 2025? For this discussion, we have Ilya Spivak, our head of global macro. Ilya, welcome to Futures Power Hour. You and I have been doing this together for a very long time, so it's fitting that we wrap up the year together. But let's talk about this 2024 year in review, because it was quite the year where a lot of risks never materialized, a lot of surprises came together, and in the futures market, we had some surprising performances across asset classes. To no one's surprise, Bitcoin comes as your top performer, up by about 120% year to date in the futures space. But cryptocurrency aside, it was a pretty good year for equity markets. The NASDAQ right now is our top performing equity market, up around 27% year to date. There are still several days left to go in the year. So by the time you watch this early in 2025, that information may be out of date. So hopefully it's not too out of date. But Ilya, when you look at some of these performances, natural gas up by 46% or wheat prices down by nearly 5%. On the other end, worst performers, you see that bonds at the long end got hammered down to about a 10, 11% loss or so. What was the biggest surprise in terms of market performance for you in 2024?
I think probably the biggest one was the upswell in natural gas, because when you look at this, what you find is supplies are ample. The geopolitical situation is, if nothing else, unchanged. And so to see this kind of a rebound will be interesting, or has been interesting, and it'll be interesting to see what happens next.
Natural gas prices obviously explode 46% on the other end, heating oil down by nearly 12%. Ilya, in 2024 saw a great deal of resiliency in equity markets. The worst performing U.S. index was still up by nearly 11% or so as of December 23rd. And it wasn't a bad year for crypto. Now, the crypto stats are obviously a little skewed because there are only two futures products in the crypto world. So one will be the winner and one will be the loser guaranteed. But if you were an Ethereum bull, it wasn't that bad of a year either, up 43.94%. It would have outperformed every other product performance except for natural gas in terms of top performers. Crypto obviously is going into 2025 on very, very strong footing. But I don't even think that makes the list of one of our top risks for the market heading into next year. These are listed in no particular order. We have 10 items here. Obviously, some may be higher or lower. This does not reflect any order of importance, just to be clear. The top risk to the market is not central bank policy error per se. But as we think about central bank policy errors, Ilya, we're going into 2025 where central banks around the world are facing a complex landscape of policy risks. One of the primary concerns on my end is the divergence in economic conditions across major economies. For instance, the ECB is grappling with stagnant economic growth and rising disinflationary pressures. This could lead to additional rate cuts in the near term, which may impact the euro, could impact global trade dynamics. On the other end, the Federal Reserve is adopting a more hawkish stance due to persistent or more sticky inflationary pressures. We also see that growth in the United States has been much more resilient than many people expected it to be throughout 2024 and perhaps going into 2025. There's likewise some political uncertainty here regarding the independence of central banks. So what are we thinking about for 2025 and the impact of central banks on markets?
That divergence in growth is staggering because the U.S. economy is obviously powering ahead here, while the other two major engines of global demand, the Eurozone and China, are in dire straits. The Eurozone is shrinking again after an aborted attempt to come out of recession in the first half of the year, and China hasn't found any demand in its economy, and we'll talk about this as we go on. It's now into its almost sixth quarter of economy-wide deflation, which makes the U.S. the only game in town. It makes it very challenging for global central banks to dial in the cost of money. And of course, that is the primary input into every other kind of economic activity. So this is a treacherous road ahead because it's all on the Fed, and they really can't get it wrong.
One of the central banks that brought a good deal of surprise to markets this year was the Bank of Japan. They finally started to move away from their zero interest rate policy. Talks of rate hikes have rattled the markets at that point. We saw one of the largest VIX prints in history in the wake after we see a number of BOJ policy moves in July and August. Should we be focusing on the dollar-yen exchange rate heading into 2025? Is this going to be another intervention point now that Donald Trump is going to be president?
If you want to look at what the dollar and yen exchange rate is doing, it's very easy to look at that and then to look at U.S. 10-year yields because it's basically the same idea. Dollar yen reflects the direction of global interest rates because, of course, in Japan, despite a bit of a turn to a hawkish direction by the BOJ, rates are dramatically lower than any other comparable economy. So when interest rates elsewhere are on the rise, the yen tends to weaken and vice versa. So this is a very good barometer, the yen, for the direction of global borrowing costs. And of course, it moves around the clock. So if nothing else, it will be a very important indicator.
As we make our way to risk number 2, global trade war is certainly something that we should be thinking about. One of the primary concerns is the renewed focus on tariffs by major economies, in particular the incoming Trump administration. But it's not like the tariff war hasn't been going on for a number of years. Trump obviously kicks this off in his first term, but the Biden administration has continued it. According to the Tax Foundation, about $89.1 billion worth of tariffs were collected under Trump. About $144.3 have been collected under Biden. According to the Tax Foundation equilibrium model, the long-term impact to the economy has been roughly 142,000 jobs lost as a result of the cumulative tariff impact between Trump and Biden so far. How serious are the tariff threats for next year? Is this a literally or, well, not so literal situation when it comes to the tariff man?
This is going to be the major question for markets next year because, of course, even within the incoming Trump administration, there are competing visions of what this means. There is the perspective from people like a Scott Bessent, a Howard Lutnick, that favors tariffs more as a bargaining chip, something that is a threat that is then used to strike deals that doesn't actually levy the full breadth and the full impact of economic weight with their implementation. And then, of course, the time it takes for them to actually bite. As with monetary policy, this can take months and quarters to be fully realized. Then there's, of course, those people that see the trade deficit as a problem unto itself, though that is, of course, a very debatable conclusion economically. And what they then do is want to impose those tariffs to correct those imbalances because they believe that is an instrument that can do that. And so that, of course, raises very important risks as to how serious are these tariffs actually as a lasting policy tool, and also what kind of retaliation they'll bring, because of course it's the countervailing response that then leads to escalation, that then leads to global calamity, not unlike what we saw during the Great Depression.
Risk number 3, staying with the political course, is that the labor market in the United States could be destabilized in the next year. One such reason is because the incoming administration has been promising a high degree of deportations almost immediately. There has been a high influx of undocumented immigration into the United States under the Biden administration. The figure here on the left illustrates that. No more words needed. But the impact of deporting some of these people would be profound because we're taking people out of the economy. According to various estimates, one of which I have here on the right, it could result in a cost of about $114 billion to the U.S. economy if the deportations go through. And this comes at a time when the prime age working force in America is really sitting at multi-decade highs. For all intents and purposes, everyone who is able-bodied and wants to work is working right now. So where is the friction here right now? Where is the problem, so to speak, that could emerge in 2025 if mass deportations take place? Is this a growth story? Is this an inflation story? What do you make of this?
Well, it's both of those things. We just said how critical it is that the U.S. economy continue to grow because there is no plan B. Between the Eurozone, China, and the U.S., you have 58% of global GDP, and the remaining 42% are largely vendors to the former three, without which they don't have demand. So in an environment here where the U.S. is the last peg of the global growth stool standing, it would be very disruptive to, first of all, hurt consumption by removing people from the economy who consume any amount of them. And secondly, of course, there's the inflationary impact of disrupting labor markets. We've heard from the Fed repeatedly that one of the reasons why we've been able to have a disinflation that hasn't created mass unemployment is that the labor market has been well stocked thanks to immigration, and that has continued to create a level of economic activity without lifting prices and getting in the way of the disinflationary move. If that were to change and inflation were to spike because the supply of labor were significantly diminished, that would, of course, entice the Fed to keep raising rates at a time when more rate hikes would not be helpful for a U.S. economy that's already dealing with high rates and where that U.S. economy must keep growing to avoid a global recession.
The U.S. economy has seen a really resilient labor market in recent years, and obviously there is a huge increase in undocumented immigration. Whether or not those jobs could be filled by American workers is certainly open to debate, but because of, let's call it, the wage expectations gap, particularly that younger workers have right now, to fill those jobs, we would require higher wages throughout the food chain, essentially. And that would mean higher inflation, stickier inflation moving forward. So that big spike in food prices that we saw over the past 4 years, that would not go away and perhaps could actually get worse. 2025 is not the only year, of course, where that would be an issue. It's something that would continue thereafter. We'll see how that plays out. What about risk number 4? What if inflation is stickier for myriad reasons? What if it's because of the labor market being destabilized? What if it's because the economy is just staying strong? New administration brings in tax cuts, deregulation. The Federal Reserve is actually able to keep cutting rates. And we kind of glide into that, well, super glide scenario, Ilya. It also brings up the question about what would happen if inflation goes up for the wrong reasons. This is a chart that everyone likes passing around from time to time. I happen to pull up the one that Bank of America put together. It's the 1970s inflation analog, which in recent months, we've started to see that headline CPI, core CPI, PCE, core PCE have bounced up a little bit here at the end of the year, which when you look through the data series and the base effects, it's not all that surprising, right? But this is still sitting in the back of people's minds. Should we be taking inflation analogs to the 1970s seriously as we go into 2025?
I think we have to be taking seriously the possibility that inflation is not done rising, even if we don't extrapolate from that it's necessarily going to follow this exact path. So we see here the analogs are really about the trajectory, not the individual moves. You can't expect things to rhyme perfectly, as the title of the chart here implies. But what you have to absolutely take seriously is that increasing the price on imports, which tariffs are, if you do it in earnest and in a lasting way, is inflationary. Mass deportations that reduce the amount of available labor and thereby increase the cost of that labor and increase the cost of producing anything and doing anything in the economy. That's inflationary. We add on top of this inflationary pressures from abroad, where there is a situation where all this capital starts flooding into the U.S. because of anemic conditions elsewhere, lifting prices for all kinds of other things. And so you have here a situation where things could get unfavorably sticky. The UK right now is a good foreshadowing of how this could look. In the UK, inflation is primarily for discretionary income reasons, one would think, hospitality and recreation. But despite the fact that the economy is vastly slower than it is in the U.S., they're not falling apart because all of those things are labor costs locked into markets that cannot be shaken even with economic malaise. This is a very scary sort of a scenario for the U.S. economy, given how important it is, and certainly a cautionary tale.
Risk number 5, wars and sanctions end. Why would that be a risk? Well, it's a risk for financial markets. Having capital unlocked that's been sitting on the sidelines for a number of years, changing the flow of where commodities move throughout the global economy, not needing to use intermediaries like India, for example, or maybe moving more money into a financial haven like a Qatar or Switzerland could be very real impacts of the sanctions against Russia ending if that were to transpire in 2025. Ilya, there's also the prospect of sanctions going in place against Europe, as we've recently learned, unless they just buy more gas and oil from the U.S. So what do these sanction risks entail? What does the end of wars in the Middle East or Eastern Europe entail for markets, knowing full well that this could not be a risk per se, but really an opportunity because there's now peace, an opportunity for prosperity, and more importantly, asset dislocation because of this new future that is unfolding?
Well, the first chart that we see here tells us a story of abundant supply. This is U.S. oil production, and in overall petroleum terms, the U.S. is now a larger producer than Russia and Saudi Arabia combined. So we're looking at a world that is awash in supply. The second chart here is showing you that even as OPEC plus production declines, that's the yellow line, the price of crude, that red line, it actually keeps falling. Not only does that tell you that there's abundant supply in the U.S., it tells you that the counter to that, the OPEC cartel and its allies, they cannot manage the price higher even when they reduce their output. In other words, if you were to take geostrategic risk and geopolitical fears out of the equation, if you were to start to wind down some of these wars, the bias for crude oil prices would be probably lower as supply and demand entered the picture. Of course, you'd have to counterbalance that with the economic benefits, as you've just mentioned, but those are much longer to finally arrive and subject to all kinds of other factors. This, of course, factors into the inflation calculus because crude oil is such a huge input into that story. And so this has implications for what the Fed does, for what rates do, for what the U.S. economy does. It could be a tailwind. It could be a headwind, depending on which assets you look at. In any way, though, this is a very important thing to watch.
The branch of the Federal Reserve in Dallas does a survey every few months where they ask producers locally how much it's costing them to take oil out of the ground, the cost of maintaining a well, the cost of putting a new well in. And right now, the break-even rates for much of Texas are in the 50s or low 60s. U.S. productive capacity is near its peak. That said, the definition of productive capacity is how many wells could be turned back on within 30 days. And so we are tapped out to a certain extent from that metric. But there are many more wells that could be turned back on. It would just take more than 30 days. And that potential influx of supply coming into the market is obviously something that's concerning other oil producers because OPEC Plus has announced going into next year that they are not only delaying the resumption of their production, but when they do resume, they're going to be extending the window from 12 to 18 months for that supply to be reintroduced in the market. It's not just that they're worried about demand, they're worried about more U.S. supply coming. This is a significant overhang for energy going into next year. It's one of the reasons, perhaps, that despite all of the headlines we saw in 2024 about Eastern Europe, about what's happening in the Middle East, if it was Israel or Lebanon or Iran, and Iran is having a whole new can of worms going into next year, oil has been mostly range-bound. And it's because there's so much supply keeping things at bay. Ilya, risk number 6, fiscal policy errors and the siren song of populism. I take very specific issue with the promises being bandied around by certain political interlocutors who are suggesting that the U.S. government is going to trim all of its spending, all of its government waste in one fell swoop and unleash an era of productivity for the U.S. economy. I'm taking particular aim at the Doge Commission, which seems like a nice trinket for Elon Musk and Vivek Ramaswamy to play with. But in reality, the way it's been structured and has been established is it's what's known as a blue ribbon committee or a blue ribbon commission. And in the United States, blue ribbon committees or commissions don't have any statutory spending power. They need to produce a consulting report, if you will, like a McKinsey. And they give that to Congress, and Congress then needs to make the decisions on what to actually do. But part of the reason why I'm so down on the idea that we're going to be able to deliver on these promises of getting rid of all this government waste is because, quite frankly, the places that have been identified to get rid of the waste, you really can't get rid of. For example, the chart on the left comes from Elon Musk's At America political PAC, super PAC. It's one of the charts that he's been bandying around in support of Doge. And he points out that there's about $659 billion out of the $900 billion or so every year that are being wasted to pay down interest on government debt. Now, I'm obviously not as smart or as wealthy as Elon Musk, but my basic understanding is that you can't just decide not to pay your interest on your debt. If the United States were to do that, it would put our credit rating at risk. So in reality, looking for $900 billion of spending cuts, unlikely. it's probably closer to 250 billion or so, being generous. And then you have to think about the timeline for all this. And so when I think about fiscal policy error, if the market's expecting any sort of slowdown in government spending coming, I would say it's the exact opposite direction. The spending that we've seen over the past few years, these big government deficits and ballooning debts that have emerged, they're likely to continue. They're not going anywhere. Ilya, there's been fiscal dominance recently, and I think that the error here that people may be assuming is that that error may be over, when in reality it's probably here for a very long time.
Indeed. As you've just pointed out, what the Doge Commission is empowered to do is study the issue and tell Congress what it thinks should get done. And then, of course, the people in Congress, many of whom have tied up interests in the spending that they ostensibly would be cutting, have to come up to a consensus to vote it out. And then there is the time that would be elapsed before any of those things kick in. And then after that would be the time when they actually have an effect that's meaningful on government outlays. So we have a very long, winding road in the best of times if this is going to work, assuming everything goes magically according to plan, which is, needless to say, very unlikely. Meanwhile, passing tax cuts should be quite simple to do, given that you now have a very strong constituency and an executive that is single-mindedly focused on getting that done. In other words, you probably don't have a big reduction in the amount of money going out, but you probably do have a reduction on deck, at the very least in making the first Trump tax cuts a permanent fixture, in money coming in. All of this, of course, actually speaks to fiscal expansionism, not fiscal austerity, which again fuels growth, but also, of course, fuels inflation and empowers the Fed to keep hiking rates. That's the right decision if inflation is sticky for the U.S. It is a scary decision for global economies where the Fed, despite their own central banks, is the pace setter for the cost of credit at a time when those economies need lower rates, not higher ones. So the risk here is very significant, and again stokes the possibility that a global recession is somewhere on the horizon.
You know, I'm reminded of what happened in 2017. 2017 was a year of really, really low volatility, and it felt like there was so much uncertainty around Trump and what he would do in his first term. People were kind of waiting for the shoe to drop. And in hindsight, a lot of the actual policy things that were done, not all of them, but a good chunk of them were kind of just standard Republican policy fare, because the first administration was staffed by people who came from the Republican establishment, for lack of a better phrase. So maybe that's what happens here, right? Maybe that's what we're looking at in 2025, where we're waiting for the shoe to drop of this big spending cut initiative. We're waiting for some big debt agreement. And we kind of just kick the can down the road. Nothing's really addressed. And so while we're all waiting and watching and just sitting around, these issues never really come home to roost. That's kind of my disposition here. Fiscal policy is on a preset course right now. It remains expansionary, and that's unlikely to change. The Javier Milei taking a chainsaw to the budget is not as easy to occur here. And then I would actually point to what just happened with the government shutdown in December, Ilya. That almost happened because of the thin majority in the House. And who's to say that a thin majority in the House in the next Congress won't make life difficult for passing significant spending cuts? Ilya, risk number 7, China deflation continues. When we think about the past few years, China's been mired in a bit of a slowdown since COVID. We've seen that the real estate market has been in a constant state of decline. The Chinese government has announced wave after wave after wave of stimulus, some fiscal flavored, not to the degree that we think it's appropriate, more about supply than boosting aggregate demand, but a lot of monetary policy efforts as well. The issue here, however, is that as the Chinese government's been pumping all this money into the market, fiscally, monetarily, traders, investors, mom and pop homeowners, they're not putting it back to work. They're putting it in their pocket. They're putting it in the bank. They're putting it into Chinese government bonds, which are trading at the lowest yields that we've seen since the global financial crisis. Ilya, we think about inflation risks here in the US because our economy is going so strong compared to everyone else. Is there a global deflation risk at foot because China can't get itself out of the slump?
Absolutely. And much of what we have been talking about is China having so much excess capacity and so much excess stuff that it is dumping it on global markets, which is part of the reason why there's been such pushback against China's trade practices, not only by the U.S., but also by Europe, also by other economies, because that drives deflation and disinflation elsewhere when all of a sudden, let's say, a whole bunch of Chinese steel at rock bottom prices shows up in your markets. The situation in China is indeed dire because they are not creating demand. We're looking at, as we mentioned at the top of the show, 6 consecutive quarters now that real GDP growth is outpacing nominal GDP growth, which tells you that the price coefficient, essentially the implied inflation GDP-wide for the economy, is negative to the tune of almost a full percentage point of GDP of the world's second largest economy. That is a staggering deflationary environment that basically speaks to a total lack of demand, and the authorities in Beijing do not seem all that serious, despite their talking about fiscal stimulus, about countering it by pushing real demand through the system. The implications of this are multifaceted. There's social cohesion risk in a country that got their zero COVID restrictions taken away with protests, which were not crushed, but which were caved in to by Beijing. There is the hoarding of cash and the lack of any kind of confidence domestically in the ability of the government to turn this around. Then there's, of course, as we've been talking about, the lack of a safety net for global growth. If the U.S. stumbles while China continues to take this problem in a non-serious kind of way, we have a very significant one single point of failure situation for the global economy in aggregate. And that, of course, is a very dangerous place to be, generally speaking.
Thinking about the 2024 year in review, the worst performing metal was copper, HG, down nearly 5%. It's an interesting dynamic because when we close out this year, we see an Australian dollar that's falling on its face, Chinese bond yields falling on their face, copper holding near recent swing lows around $4 a pound. The China story, for all intents and purposes, isn't looking all that strong. And we talk about their potential trade issues. If they get some inflation in the economy in 2025, one reason may be because they have to stop buying oil on the black market. Sanctions end, there's no more workaround for Russian oil. And so they're bringing inflation in because the cost of actually energizing the economy is going up. That's not the right kind of inflation they're looking for. That's not going to boost aggregate demand overall, and it leads to a different kind of issue, not stagflation per se, but still a flavor of something that you don't like. I have a hard time trading FXI, A-shares, Baba Baidu around these stimulus announcements, only because it's such a one-way street. Yeah, sure, some of it overdone. Yeah, we know that, of course. But at any moment in time, overnight, the Chinese government can pull the levers and send asset prices soaring. So as a retail trader, when you approach this in 2025, it's much easier to fade weakness than it is to fade strength, if you know what I'm saying. There's a lot less risk, if you will, trying to stand in front of the PBOC. Maybe that's not the best decision, as some gold bears have learned this year, as China's been buying up all of those assets. Ilya, risk number 8. Is this a risk? The U.S. economy continues to perform like it's the number one economy in the world. It's really difficult to put into terms how strong the U.S. is, so we'll try to do that here. But before we do, Ilya, I want you to walk us through this S&P 500, or rather this S&P Global US PMI chart that you put together for us today. What are we seeing in the economy heading into 2025?
What we're seeing here is a measure of U.S. economic activity and the pace of its growth across manufacturing and the services sectors, and then the composite brings the two together and, of course, scales it by the reality that services is a much larger portion of the economy than manufacturing. Now, global manufacturing has been anemic basically since COVID, and so what you'll find is that it is slow, shrinking, or otherwise idling in almost every single economy, and that's no different for the U.S. The way these indices work is 50 is neutral, neither growth nor contraction. Below 50 is contraction. Above 50 is growth. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. So what you see here is U.S. manufacturing is in mild contraction territory, but it isn't deteriorating. It's basically digesting COVID irregularities in goods demand, in supply chains, and this is a global story. But the real runaway success here is the booming U.S. service sector. The issue here, of course, is that most of these service providers are domestic. And so what we have is a U.S. economic boom with surging economic growth here. We can see the trajectory of the composite index is steeply up and to the right. But all of that demand is staying in the U.S. for the most part. It isn't spilling over to other economies for whom both that orange line and the comparable dark gray line are pointed down. In case of Europe, all of this is below 50. In the case of the UK, all of it is idling at around 50. In the case of China, it is nowhere near historical norms and basically at standstill. So we are looking at a situation where the U.S. has completely veered off somewhere to such an extent that even Canada, which exports close to 80% of everything they sell to the U.S., isn't able to find a sympathetic rise because external demand is just not there. This is a precarious situation where the entire global economy is teetering on one leg.
It's a pretty strong leg, though, Ilya.
It's a very strong leg.
Throughout 2024, I was fairly, indignant about the fact that we were going into recession. We did our scorecard updates here on Futures Power Hour, talking about whether or not we were looking at a soft landing or no landing or hard landing. And quite frankly, when the Fed cut rates in September, we were of the mindset that this was a maintenance rate cut. It was not because of a recession or an emergency. It's because the economy was doing well. And that cornerstone of our belief system helped guide us into staying long equities for the end of the year because stocks like it when the Fed cuts rates for maintenance reasons. Ilya, you mentioned the services economy booming. What does that mean for an index like the Russell 2000, which for all intents and purposes was the worst performing U.S. equity index this year? If smaller cap companies with a more domestic focus have this tailwind of strong U.S. consumption and money circulating internally at their backs, maybe the story of 2025 is of a small cap outperformance over those mega cap names, even if you look to the Trump administration's first term, those mega cap tech names were really the winners 3 of the 4 years in 2017 through 2020. Ilya, risk number 9. Commercial real estate has been a thorn in the market's side. Of course, everyone remembers the 2023 episode when we have Silicon Valley Bank, among others, go down, which amount to some of the biggest bank failures in U.S. history, eclipsing what we saw with Washington Mutual back in the global financial crisis. The Fed didn't really change course. They hiked rates a few weeks later back in 2023, if almost to signal that this was not a systemic risk and it was nothing that the market should be broadly concerned about. But because of that episode, there has been a slowdown in the commercial real estate industry. Maybe that has to do with the pandemic. The shift from working in office to allowing employees to work from home has led to depressed activity in major downtown areas across the United States. Going in a bit of a clockwise fashion here, starting in the top right, we see that commercial real estate prices are down about 8% year over year in the most recent quarterly update. Likewise, we've begun to see that commercial real estate default rates are starting to tick higher. They're not accelerating by any stretch of the imagination, but they're rising to a point where they were back in 2014, 2015. And moreover, when we think about the decline, the recessions that have set in previously, when you have these big pullbacks in commercial real estate prices, it usually means defaults go up in the commercial real estate sector. So this risk, it hasn't been front of center. It has been front of mind. It's been kind of festering and percolating in the background. Ilya, walk me through chart number 3, I suppose, on the far left. Is this the year that we need to be worried about the real estate market, or is it just going to be that thing that kind of stays in the background that we all know about but don't really worry about?
One of the critical things happening here on the residential side of things, as all of the issues in commercial real estate sort of digest over and hopefully work themselves out slowly and not all at the same time, is the difficulty with which the residential market has had in basically clearing markets and turning around. What the Fed's rapid rate hike cycle did was lock in both sellers and buyers. Sellers looked at the market and said, well, the average U.S. outstanding mortgage rate is less than 4%, locked in for 30 years, mainly. You then have market rates that got up near 8% through that rate hike cycle. If you're a seller, you're not exactly enthused about selling the home that you have that you've financed at less than 4%, and then going into a home, because you do have to all have to live somewhere, that you have to finance at close to double that rate and with prices higher. So sellers have been discouraged from selling. That, of course, has discouraged prices from falling. That, of course, has discouraged buyers from buying. And so the market has been locked up with very little inventory for a very long time. Now, the mortgage market is, of course, a derivative of credit markets. And when those started to anticipate Fed rate cuts, yields came down, as did mortgage rates. And what we see here is we've seen something of a stabilizing here going into next year, but with a bit of a worry. The traffic from this survey by the National Association of Home Builders and Wells Fargo, the traffic of prospective buyers that the survey shows us has anchored but hasn't gone up. It's stalling at the lows. Meanwhile, the number of prospective sales over the coming 6 months has been rebounding. This, of course, implies that sellers want to be selling, but buyers don't necessarily want to be buying. The difference? You need a downward adjustment in price. As these sellers come in and finally start to sell, the market starts to become unlocked, prices start to clear, inventory starts to change hands, things start to come down in price. And this can be a process that takes a long time in housing. It's not like selling a stock, click and it's done. This can take months per transaction. So we are looking at maybe the start of a protracted adjustment lower in the residential market, even as the commercial one is still very much working out its issues.
Yeah, with the residential market, it's one of those really interesting facts. One of the reasons why people think that buying a house is such a good investment is if you look at the house price growth in the United States going back to the end of World War II, it's been positive basically every single year, but for 4 or 5. Where like 1 year it's flat and you have a few declines of 3 to 5%. Of course, who can forget 2008? And so when you see like a slowdown in the real estate market, a lot of it's regional. In New York, for example, rent prices are still going up in the city. But in Austin, Texas, they're, I think, down 7 or 8% year over year because of all the additional supply that's been introduced to the market over the past 5 or 6 years. And so there is the national home price story. If it slows down, that means house price growth slows to like 2 or 3% as opposed to 5 or 6 or 7. If it goes negative, that's actually a really unique historical situation, and a retrenchment, a pullback on the national level in home prices would likely mean more dire economic outcomes in other segments as well, because it's just such a rare thing that occurs. But then again, if that occurs, you probably get more interest rate volatility and certainly more equity market volatility. Ilya, as we wrap this up, let's talk about another risk here, which This is more of an investor risk, but it's certainly something that traders talk about: valuations and sentiment. As we look ahead at 2025, valuation and sentiment risks are clearly key factors because we're talking about a market going into the next year with stretched levels, for example. This is now the second year in a row where we've had gains of 20% plus in the S&P 500, 3 out of 4 years where we could be looking at a 24% plus gain, and that's led to a run-up to valuations to relatively high levels by historical standards. For example, the S&P 500's forward PE ratio is projected to be around 24 by the end of 2025. This effectively means the market's price for perfection. Decomposing what this means, because PE ratios aren't necessarily something that traders care about. It's math. Anyone can do it, as Steve Cohen might say. High PE ratios indicate that investors are willing to pay a premium for future earnings, reflecting optimism about continued economic growth and corporate profitability. However, this optimism can turn to pessimism if there are unexpected shocks. High levels of investor confidence can lead to complacency, making markets more susceptible to downturns. So why do we preface all that with this? Because we go into 2025 where, according to the Conference Board, this chart produced by Axios on the left, shows Americans are the most confident ever that stock prices will keep going up over the next 6 months. And I juxtapose that with the chart on the right, which comes from Ed Yardeni, and these are the PE ratios for various segments of the market. The dotted pink line would be those mega cap 8. We think about the mega cap 8, Alphabet, Amazon, Apple, Meta, Microsoft, and Netflix, Nvidia, and Tesla. The S&P 500 large cap is the red line here, sitting up at a PE right around 22. We see that the mid cap and the small caps much lower, near 16. Ilya, long diatribe to get to this point. Are the valuations, is the excessive optimism going into next year enough of a reason that traders should be cautious trying to run up the ball in 2025?
I think you have to take into account that sentiment is most positive just by definition at the top. Now, is this the most positive that it can be? Maybe, maybe not. That's unclear. It can get more positive. This does not mean that just because it's very positive that it's the top. However, historically speaking, we are getting to scary levels. We've had for the past decade plus a very closely watched Bank of America survey of fund managers that asks them how overweight they are equities relative to benchmark. December gave us a record number. It also gave us a record number of money that funds pumped into American share prices. The U.S. share of global market cap is at unheard of levels. Records there. We are currently looking at the U.S. stock market being over 70% of developed market equities. So this is a situation that is very close to watch. That same survey from Bank of America, as well as data from JP Morgan, tells us that the allocation to cash is at record lows. So we're looking at a market that is incredibly positive, incredibly optimistic, incredibly imbued with risk appetite. That doesn't mean it's the top. It does mean that if you are worried that the peak in all of these indicators is at the top, you need to be looking at this, because the runway is very clouded now with a lot of these metrics at levels they've never been to before. And you're muted.
Well, there you go. But good ending to this. But, I think about what you mentioned here with these valuations and this potential bubble blowing, and I'm reminded of the reread I just did of The Alchemy of Finance by George Soros, and how Soros would be approaching markets like this where valuations are getting a little out of whack, and you're seeing signs with certain types of financial assets, particularly in the crypto space, that maybe things are getting a little frothy. I think Soros would have emphasized the importance of understanding reflexivity in markets. Reflexivity suggests that markets' biases and actions can influence the market fundamentals, creating a feedback loop. This means that bubbles are driven not just by fundamentals, but by the psychology of the market participants themselves, which, as you mentioned, really, really optimistic right now. I think Soros would advise traders to identify the underlying trend in the short term and the misconception that's fueling the bubble. For example, in a real estate bubble, the trend might be rising home prices due to easy credit, but the misconception would be the belief that prices are going to rise forever. So if you recognize this dynamic, you can see when that relationship pulls apart like it did in 2007, 2008, and try to find a way to capitalize on it. But he would also focus on the importance of timing, because if you're right at the wrong time, you just lose money. Trading bubbles successfully requires entering and exiting positions at the right moment, which is obviously very difficult from a timing perspective. But that really means riding the wave of the bubble. It means trying to profit from the upward momentum and then ruthlessly getting short once the momentum breaks, but not a second sooner. You don't want to be a hero here. You don't want to try to call the top. So investors are looking at asset allocation going into next year and thinking things are really expensive. But as a trader, you have to look to what the market gives you in terms of pricing, volatility, the chart setups, and you have to stay open-minded to change your mind at any point in the future. Ilya, I think that we've done a good job covering 10 risks here for today as we wind down this year in review and our look ahead to 2025. I think that wraps it up, quite frankly. I hope that people listening in, if it's over the break while Ilya and I are taking some time off on the holidays, they find this interesting, engaging. Hopefully it stirs the pot and gets people thinking about certain sectors they should look at, certain products they should look at, how they may want to approach different themes, challenging their own views, reaffirming their views, what have you. But it was a great year on Futures Power Hour, Ilya. You, of course, have been a co-host year long, so I thank you for that. I want to say thank you to everyone who's tuned in over the course of this year. Hopefully 2025 brings more good things to come. So for Ilya Spivak, I've been Chris Vecchio. Good luck trading, and see you in the new year.
Finding where markets meet politics, if you will, is kind of a passion of mine. We're changing cycles right now. We're moving into a different political complexion down in Washington, D.C. We're moving into the end of a potential Fed rate hike cycle. And as you change these economic and political regimes, asset prices behave in different manners. So I do think what's worked over the past, say, 1 or 2 years may not work so well in the future. I have like a kind of a core satellite portfolio mix where I keep some assets for multiple months, even quarters, years at a time. But then I augment that with some options trading in order to help provide a little bit more convexity to my portfolio. Risk management is the most important thing. You can't control where the market's going to go on a day-to-day basis, right? No one individual investor has that capability. But what you can control is where you get in the market, where you get out of the market, how big your position size is, and learning that the market is not always going to move in your direction. You have to appreciate the fact that you will make mistakes. But the idea is that you make enough of these trades with a consistent enough edge that over time, as you stockpile some results, then ultimately you are profitable over the long haul.
To rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Grax, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
So I studied economics and international relations, and I wanted to do the hands-on rather than the academic version of that, and the most natural thing was global macro investing. I begin with a sense of where I think the overall direction is for the macro theme for the next 6 to 12 months, and then look at some basic response from the price action to see how it's going. I think the price itself is the purest of indicator. It subsumes within it the collective emotions of the market. One of my favorite mottos, if you will, comes from the always great Ira Harris, who said, if you're right at the wrong time, you're wrong. And so, for me, every macro narrative begins with what's the price action saying, rather than this or that economic indicator or some such thing.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
We are ready to build. This is make or break for this team. It's down to the last 2 minutes, and it's time to rock and roll, baby. That's all I got is 2 minutes, and that's on a good night. I don't know if they're going to be able to make it, but I think they can just slip right on by and maybe take it through to overtime. I think we're going to overtime. Here it comes. Man, he hit the boards hard on that. Wait, this is football, right? Woof! Woof! Take one. Hey, baby. I like the looks.
I bet you work a lot of hours.
Yes. I bet you can't guess how many hours a week I work.
Really?
Mm-hmm.
60.
61.
Oh, God.
$1,000.
So
Boom.
close.
Oh,
so
my day
close.
is starting out great. Want to go double or nothing?
Let's see. What color are jeans?
Blue.
You got it!
Common color of jeans. They write songs about it.
I thought it was tough.
Double. I win double.
Great job.
Yes, and you get nothing.
I'll pay you in love.
That's not how this one works.
I will pay you in hugs and kisses.
There is no hug and kiss worth $1 million. Cool.
I could make it worth $2 million.
I've kissed you before, and it's not that good. Woo! This is what I love. Every time the game hurts you, she gives it right back to you.
What do you mean I don't kiss good?
You're awful. You're very mouthy. Man, this feels good. Oh, this is why I do it. All right, come on, let's keep going. I'm on a roll right now. What's the matter?
I didn't know I was mouthy.
You think it would be good, but it's not. You should practice more.
Okay, my turn.
Okay. Try to make a little money back?
Okay. You want to go big?
Yeah, let's go big.
I'll get it on this man's game. I'll get in this man's game.
Yes.
$5 mil.
$5 million?
$5 million and a speedboat.
A speedboat?
Uh-huh.
This is serious. Yes, I'll take the bet.
Okay.
Oh, boy, here we go.
I bet I know the name of your childhood friend.
Nobody knows the name.
Really?
I never talk about it.
Oh, really?
Oh,
Lenny Cancelleri. Bam!
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
So what are some things that we know? We know that time will pass. We know that the hourglass will empty. We know that the calendar will march forward. So what do? We sell premium. We generate positive theta. We take the short side of the options contract. Before you ever think about generating returns, you need to control that risk. The returns will come. You need to make sure your risk is mitigated in the most efficient way possible. Now, the fun stuff. Let's talk about managing those winners, right? You have a long put spread on and the stock goes down. That's going to work out pretty well. You have a long call spread on and the stock goes up. That's also going to work out pretty well. You set your profit target at 50% of max profit. When it gets there, you take it off, you move on, you find another opportunity.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Monday edition of what it is that we are trying to do. Welcome to the Man They Scared the Children edition of what it is that they're trying to do. But don't you worry, they're sending them right back to Unst as we speak. So thank you for being here. Thank you for being a part of what it is that we are doing. If you are watching over on the Tasty Live Network, then I would actually bounce on over to YouTube, because you can join the conversation, you can join the discussion, you can communicate with our brethren that are also watching the show. You can celebrate if you're a bear. Maybe celebrate if you're a bull. I don't know. It feels like we're going to close green today. So, man, I have no idea. But you can celebrate with your brethren. You can commiserate with your brethren. Your brethren are there for you, and you are there for they. And, of course, you can ask me whatever questions you have there on the YouTube, in the YouTube chat, and I will try to get to as many as I can here in just a little bit. We do have an extra long show today, so we are all the way to 3:15 Eastern or 2:15 Central, and so get your questions in early, and I will get to as many as I possibly can. The expected move on the number of questions I get to per show is somewhere between 0.6 and 0.9, so I'll drop it in the chat earlier rather than later. So let's do it, Josh. Let's hop in, man. What's the market doing today? Man, it's been a day. It's been something. Got EMI S&P's down 40. Got the risk-free instrument, also known as the NASDAQ futures, down 160. You've got the boomers down 250. You've got the Russell 2000 futures index down 5. And, man, it's really been – have you guys been watching the market today? Like, do you guys trade? Like, are you guys, like, in this? Like, this is some crazy stuff, man. Like, earlier today, this was today. Like, this wasn't Friday. This wasn't, like, last week. This wasn't, like, Thanksgiving. Like, this was, like, 2 hours ago, right? The NASDAQ futures were down, like, 450 at one point. I mean, hold on a second. Let me look at, what is that? Oh, that's a monthly chart. Yeah, I don't want to see a monthly chart. I'm like, that doesn't look right at all. Let's go to a daily chart. And let's go, like, I don't know, just give me like a 6-month deal. So look at, in fact, let me zoom in just a titch. So you had the NASDAQ futures were down to 21,250. Yeah, so they were down 450 on the lows. That's 300 points lower than where we are right now. And I mean, if you've been watching the tape at all the last, I don't know, maybe hour and a half, like, this morning felt like, ooh, man, this is nasty. Like, it's going to be down 6, 7, 800, no problem. Like, they couldn't catch a bid. Like, all the tiny little rallies were just getting squashed and steamrolled and whatever. Then all of a sudden, the tide turned, and now it really feels like we are going to close green today. Like, it really feels like it may not be much. It may only be 300-400 to the upside, right? But it feels like we are going to close green here on the major indexes. Got the NASDAQ only down 150 when it was down 450. That feels like a W. And then you've got the E-mini S&Ps, similar type of story. They're only down 40. They were down another 70 on top of this. So they were down 110 at one point, down to 59.18. And they are currently down to 59.86. And so some really significant strength off the bottom. And the Santa Rally bros just won't be denied. I mean, the Santa Rally bros, they typically sleep in, get up around 11:30. So that kind of makes sense that they would, not really be putting in their orders until right around lunchtime. And so, yeah, we've got a rally that's happened in the market. We're here for it. We're doing it. And there you go. And look at volatility. So what an interesting little thing, because volatility is down today. So volatility futures are negative, down 10, 12 cents. And then if you look at this VIX, the spot volatility, that's up a little bit, but still it's only up 60 cents. I mean, if you look at where volatility was, I mean, you look at the VIX here. Hang on a second. Let me move my little box out of the way that you guys can't see, but it's kind of in my way. So the high, wow, the VIX was up over 19 earlier. So the VIX was up to 1922, and then they squashed on them. They stomped on them. And now you've got the VIX down to 1660. Now, again, I don't know if this counts. I don't know if this is just an imaginary VIX print, because that happens 5 to 10% of the time. But just looking at what's in front of me, the VIX is now 1660. It was up to 1920, and it's now sold off significantly. The volatility futures, which are typically branded as not having any imaginary prints. Look at this thing, man. This thing was up to 1860 on the high. Now it's 1680. And so right around unch, it's up or down 10 cents or whatever. Not a big move either way in volatility, but in terms of the day-to-day change. But there's been a huge move today with, again, volatility spiking up over 19 on the VIX and almost 19 on the volatility futures. And here we are with volatility futures down to 1685. And so, man, that is some really, really wild stuff. And so if you look at what are the metals doing today, not a ton, just a little bit. You got gold down 12. You've got where's silver at? Silver is down a little, down 51 cents. So silver getting hit, gold getting hit. You've got the indexes getting hit. It's going to be really interesting to see what happens in the next 2 hours. Like, I'm very curious to see what happens, between now and the close. I really assumed, just like everybody else, that Monday, Tuesday was going to be pretty quiet. Like, I really felt like quiet, or maybe a modest to reasonable push higher. I didn't really think there'd be anything crazy. I didn't really think there would be any wild moves. And we've already chalked this up to a wild move. Like, this is crazy. Like, regardless, or even irregardless, if you like to be a little innovative with the English language, irregardless of what happens next, right? No matter what happens the next 2 hours, even tomorrow, it's been a pretty crazy last couple of days to 2024 in my estimation. And so we'll see what happens, whether you're long or you're short or you're neutral. I'm sure you're in it and you're checking it out for yourself. And yeah, man, if they really send them back down today, like if they really, not even on the lows, not even taking on a new low, but if that happens, then that's going to be pretty wild. But if we get NASDAQ down 300 on the close, if we get E-mini S&Ps down 75, 80 on the close going into tomorrow, like tomorrow's the day. Tomorrow is the time to shine for all the portfolio managers. Tomorrow is the time to shine for all the window dressing, all the goosing them up on the close. I mean, it's end of year. It's all kinds of crazy stuff. Like, you would expect there to be a lot of bullish activity as everybody's trying to get the final buy orders in to kind of mark up their books for the end of the year, for the statements to their clients, blah, 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 blah. But man, if they squash them today, now all of a sudden it doesn't become who can make the most. It kind of becomes who can lose the least. And so does that carry over into tomorrow? Like, if there's more selling pressure going into the close today, does that selling pressure kind of continue into tomorrow? I mean, I don't know the answer to that question. If I did know the answer, I wouldn't tell y'all. I'd be off in some remote location trading that information, and then y'all can just figure it out for yourself. But I'm curious to know what you guys think. Let me know what you guys think about the tape so far today, because it has been pretty crazy. But man, I see you guys already in the chat. Look at my overachievers, man. I see Jason Doss in the house, Sergio's in the house, Weiss Anka's in the house, Peter's in the house, Emmett Jr. Mac. I see YouTube Jim's in the house, Sergio and Proto Man and Don and David Gallimore and Tond. Man, you guys are amazing. I'm going to get to as many of you guys as I can here in just a couple of minutes. But let's go ahead. A little bit of weakness in the indexes. NASDAQ now down almost 200 now. Let's go through the positions we have in the portfolio. Let's clean some things out because tomorrow's going to be a fun show. So tomorrow we have an extra long show. So tomorrow we're going to 3:15 as well because everybody's off. But man, I'm here working. Right? Everybody's gone, but I'm here working for the Styles and Off Enterprises. Tom, you make sure you make note of that on my annual review. Tomorrow, though, we're going to have a really fun show because I am going to offer my predictions for 2025. And let me tell you how amazing my predictive abilities are. If you find a way to do the polar opposite of everything I say tomorrow, it's safer than a US T-bill, man. It is safer than an 18-month CD at Chase Bank. Like, you are going to make some money. I'm like 65% sure of it. And so pay close attention tomorrow, kind of clue in to what I have to say and find a way to do something that is exactly opposite. Sometimes it's very obvious. You know, I'm selling puts, you're buying puts. I'm selling calls, you're buying calls. But sometimes you got to work a little bit. Like sometimes I'm going in with like a crab and you're like, well, what's the opposite of that? You got to figure that part out. But tomorrow we're going to go through my 2025 predictions. And of course, I will show you what I predicted for 2024. We'll go back and I'll give you, my S&P, SPY prediction, my QQQ prediction. I probably did a bond. I probably did a gold. I can't remember actually the ones that I did. I know I did the major indexes, but we'll see how far off I was for tomorrow's show. It'll be a good time had by most. I'm pretty sure. So we'll do that tomorrow. So don't miss the show tomorrow. So, all right, let's go ahead. Man, let's see where we're at. All right, we've got 1, 2, 3, 4, 5, 6. We have 10 positions, so a nice kind of feng shui number there with the 10 positions we have in the portfolio. I'm very comfortable with 10 positions. It's a good number for me. I feel good about managing 10 positions. It's if I get around 12, 14, 15, it's a little bit too much in terms of, I miss things. I mean, things slip under the radar. We miss opportunities and, because I'm trying to explain my thoughts pretty fully as we move through each position. And so that's one of the things that I'm trying to do with this show to make it a bit unique for you guys. And that I won't trade as much as some of my own brethren and things won't happen as quickly and as fast as some other traders, on the internet or even on the network, but hopefully we give you a more complete picture of everything that's going on. And so we have to move a bit more slowly. We have to move a bit more methodically, but I think it's worth it. I think in the end it's worth it. So, all right, let's go. MES. So this is our ratio spread that we have on in MES. You can see it's working out pretty well so far. We sold it for 84 points. It's now marking for 45 points. And so that puts us at a profit of about 40 points. And I'm no Julius Pina, but at $5 a point, that's about a $200 winner. And it looks like we're just a nudge under $200 over there. And so that's pretty good. We still have 32 days to go. There's still a good amount of time left in the trade. I don't really want to take this trade off yet because, you can see right here that, it's 59.20. Some time's ticking away. This is kind of setting up pretty nicely. It'd be kind of cool if 10 days from now, the S&P 500 was like, 40, 50, 60 points lower, because that would get us closer to that long put vertical, but there would be less time on the clock. There'd be less time in the expiration cycle, which would work to our benefit when it comes to trying to drain the extrinsic value off the options to maximize our profitability on the strategy. And so I'm going to sit tight. We're not going to do anything on this trade just yet, but right now it's working out pretty well. And if you had a similar trade on and you wanted to take it off, I would have no problem with that. I would have absolutely no problem with that. But again, you can go back. I'll even show you guys really quick. If I bring up my chains here, if I bring up my jar of flies here, you can see that we did this trade back on December 19th. So we did this guy, it's about a week and a half ago. You can go back and watch the show on December 19th and you'll see me walk through and talk about what my goals and aspirations are for the position. I thought I was pretty clear when I put this on in terms of, hey, this is a bit of a longer term play. I'm not going to be looking to exit right away. So that's the nice thing, or at least what I'm trying to do with the show, is kind of give you guys that complete picture. So maybe you're brand new to the show. Maybe this is day number 1 for you. Maybe you're getting a jump start on your New Year's resolutions. Welcome to the show. I'm so honored that you're spending time with me, that you're spending time with all of us. It's amazing. I really hope you get some value from, my show or any of the other, amazing shows on the network. If you pick it up though midstream, like, if I'm talking about a position, oftentimes I will go to the Allison Chains and I will show you, this is when I put the trade on. You can go back into the archives, find the December 19th show. You can watch that show. That will give you a very complete picture of what I was trying to accomplish with that position. Because sometimes it's obvious when you just see it in the portfolio, it's pretty clear what I want to accomplish with that position. But sometimes it's not as obvious, especially with a strategy like a ratio spread that is a little bit more complex. It has, additional layers of flexibility to it. And so with that kind of comes a more nuanced approach in my view. So MES, we sit tight, we do nothing. Moving on. AAPL. So Apple, you've got Apple down today, which makes sense. You've got the NASDAQ now down over 200. So we're kind of moving back lower here the last couple of seconds. But you've got Apple down 275, and we have on a 260, 265 short call spread. And so right now, everything is looking good. We're up like 30 cents on the trade, 25 cents on the trade. We're not going to do anything. We're not going to go in there. We're not going to start fiddling with things. We're not going to try to make this something that's not. We just sit tight. We just let it churn and just kind of let it cook. And then we'll check in on this guy, tomorrow. We'll check in on this guy, later in the week. And then next week, of course. And so right now we don't do anything. We just kind of let this guy go. But the one thing I did want to point out, though, because this is defined risk, right? Defined risk strategies have a home and a place in most portfolios. Maybe not every portfolio, but most portfolios. But you guys know I've been very, very transparent about this and very clear about this. Defined risk strategies, they're only going to do so much for you, right? They're not really going to be the thing that moves the needle at the end of the year. Now, I know that there are some of you that are watching this program right now. They're like, Jim, I've made my whole career on defined risk strategies. All I do is I buy, broken toe butterflies, or I sell broken toe butterflies, or whatever. That's amazing. That's terrific, right? That's what I want this to be. I want this to be, kind of like a think tank. I want this to be for idea generation. This is not about I say X, and so it's just, X has now been, ordained as gospel. Like, no. Like you need to think for yourself and use the tools and skills that we try to develop here on the show, my show and the other shows, to kind of pave your own way through the forest. My experience has been not only with my own personal trading experience and professional trading experience, but with most of the traders I've talked with. I'm talking 90% plus, 95% plus, 98% plus. There are a couple stragglers. There are a couple outliers. Undefined risk is going to be the thing that's going to get you from A to B. It's going to be the thing that's going to get you from where you are now to where you are trying to go as a self-sufficient trader. If where you are trying to go involves any type of making money, any type of generating profits. If you're looking for something else out of this, then I don't know. Like it could be some other, end objective, of course. But when it comes to defined risk, right, everything is going to move more slowly. Everything is going to kind of slow down a little bit. It's very similar to, for all my Kevin Costner, for love of the game fans, when he clears that mechanism and he's on the mound, everything just kind of slows down. Now, with defined risk, it's very similar. While, for love of the game, it's a positive connotation of clearing the mechanism. I'm kind of painting this as a negative connotation with clearing the mechanism from a defined risk standpoint. So the analogy is falling apart here live on the network in real time. But nevertheless, you can see that the theta on this position, it's not very much. Like you can just compare it to the position right above it. I mean, the one that we just talked about, the MES trade, right? The ratio spread has like over $7 in theta, whereas the Apple short call spread only has $1.50. And that makes sense because it's defined risk. You have to buy the leg to define the risk, to get the safety net in there. It's going to move more slowly. Shout out to Kevin Costner and all my baseball fans that might be watching the show. So MES, AAPL, we sit tight, we do nothing. App Lovin'. This is an Anka special, which I saw her name in the thing. So she is watching the show. And so Anka, thank you so much for this trade. It hasn't worked out as swimmingly. I think I glanced. I don't think I got to a comment on Friday. I think I was a couple short maybe. But when I get done with the show, sometimes I'll glance through the comments because you guys usually you get me to chuckle at least a couple times. So I got to see what I missed, right? Because I only go through 3 comments and then the show's over, even if it's a long show. And so I want to see what I missed. Like you guys all got to enjoy the rest of the comments. I want to see what I missed. And so I think Anka, you closed this trade. Is that correct? I think I saw that you closed this trade. So the Anka special, Anka, you got to be a little bit more of a team player here. Like if you're going to be closed in trades, I need emails. Like I need phone calls. Like I need a heads up that these trades are getting close. And here I am holding the App Lovin', and I'm like, I'm down 30 cents on the trade now. Like I'm actually holding a loser. and you snuck out the back door with like, $1, $1.50 or whatever you got out of the trade. So we're sitting tight in AppLovin, and we're not loving it. I got to be honest. But waiting a couple weeks to say that. And so AppLovin, we sit tight. It wasn't great, but it was right there in that B- lane that we've all grown accustomed to. So AppLovin, there you go. Bank of America. All right, here we go. So I'm going to open these two up together because they are brothers from another mother. You've got Bank of America, 100 shares. You've got Starbucks, 100 shares, right? These are our long share positions. This is a project that we got started about a month and a half ago with Josh's help. Great idea, really good idea. It's been kind of fun to do something a little bit different here on the show. And so we have some long stock positions that we are just going to carry for a while. We're just going to carry these guys for a while. We're reinvesting our dividends. We're dollar cost averaging. We're getting all kinds of tax benefits. We're doing all kinds of amazing things with these positions. And it usually just involves doing nothing. It usually involves doing a whole lot of nothing. I mean, don't get me wrong. We have a lot to say about it, but we don't actually do very much, right? You buy the shares and you sit tight. You buy the shares and you admire the shares. That's basically all you have to do with long stock. And so Bank of America, Starbucks, we're going to sit tight and we're not going to do anything right now. And the reason why we're doing this, by the way, if you've been following the show, you already know this. If you haven't, I want to make it kind of clear. The reason why I'm doing this is because so many of you out there, right? You start with stock. I mean, almost every investor starts with stock, and then you don't really know where to go from there. You're like, hey, I've got these shares, Bank of America, Starbucks, Panera, whatever. I've got indexes, I've got mutual funds, whatever. I want to do some more, but I don't really know what to do. Like, I want to add some more skills and abilities to my toolbox, but I'm not quite sure where to go. Well, I wanted to kind of, reach out to you all, give us a common denominator to work from, the long shares, and then we can branch out into derivatives. Then we can branch out into selling premium. Then we can branch out into, what we talked about this morning with Tom and Tony, short indexes and long individual positions with trading the skew in the market, which Tom didn't love it, but I had to teach Tom about skew before the show. Like in the 90 seconds before we went live, I had to teach Tom about skew. That's not easy to do, right? And so the fact that he grabbed on to any of it, that's pretty impressive, honestly. And so Bank of America and Starbucks, we sit tight, we do nothing. All right, so Bank of America, Starbucks, boom, there you go. All right, IBIT. So this was, is this our Bitcoin play? Yeah, this is our Bitcoin Bros play. A little IBIT. We have a strangle on. Man, how's MicroStrategy doing? Are they still in business? Is that Ponzi still going strong? Oh, it's going, but it ain't going strong. Man, look at that thing. Down $14. Ooh, man, that music's about to stop any day now. Man, that's some crazy stuff. Michael Saylor, man, he's pulled the wool over all y'all's eyes. And apparently you guys are waking up. Got MicroStrategy down 14.15. It's like, man, if you want to buy Bitcoin, just buy Bitcoin. You don't have to buy it from the middleman. Right? You got access to the wholesaler, go to the wholesaler. That's like saying I live right next to a Costco, but I'm going to go to Publix or whatever. Like I live right next to Costco where I can get organic strawberries for, $3 for 5 pounds. Or I can go to Publix and pay $13 a pint. That doesn't make any sense, right? It's the same product. In fact, it's a better product at Costco, right? And so it's kind of the same thing. But MicroStrategy today, down $14. Man, they're really getting blasted. And so, but we've got IBIT, which is a pure play on Bitcoin, I believe. You guys brought this to my attention. It may have been Friday. Was it Friday? Yeah, it was Friday. So we did this trade on 12/27, which was Friday. And so we, selling premium in Bitcoin. You can see the stock is at 53. It's between our strikes. When it comes to strangles obviously go-to strategy. Strangle's obviously going to be, your classic, tried and true, your Betty Crocker, right? Tasty strategy. I typically don't like to adjust my strangles until one of the sides gets hit. Now, I know that some of my own brethren on the network, like a Tony Batista, right? Like a Tom Sosnoff, just hypothetically speaking, they like to potentially roll the untested sides more aggressively. Like they'll wait until, or not even really wait, but once their deltas get kind of out of line one way or another, they want to kind of recenter, neutralize their deltas, and just have it be more of a pure play on extrinsic value. Okay, I don't typically do that for two reasons. Number one, I like being more patient in the marketplace because I I think the marketplace cyclicality is a very, very strong force. And I don't have hard stats to back this up. I can't give you a bibliography to say, hey, check out these citations. This is just my own experience. And that's what's fun about trading. Like we have so much, so much quantitative stuff, so much, mathematical stuff that kind of, undergirds what it is that we're doing on a daily basis. But then we all have to layer on our own personal beliefs. We all have to layer on like, hey, this is what I think I know, but I can't necessarily prove it. And for me, it's the marketplace cyclicality. So that's why you guys hear me always say, do nothing, be patient, blah, 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 blah. I mean, take it with a grain of salt and don't do it. It's probably going to be a smart move for you in terms of fading whatever it is I do. But I like to do nothing and be more patient. Okay. But that being said, it's not only that, but I'm also not in the markets 25-8. Like a Tom Sosnoff might be, like a Bob Nosnoff might be. Right, which is Tom's, twin brother, of course. And so when it comes to, your own availability, when it comes to your own schedule, this stuff matters, man. It's not just about X's and O's. It's not just about, kind of the game plan and the strategy. It's about, can you actually execute the strategy? It's very similar to, like in the bodybuilding world or in the fitness world, which is another huge love of mine. I mean, it's right up there with, finance. In fact, it might even be a little bit ahead of finance, to be real with y'all. But when it comes to that, we can talk about keto. We can talk about intermittent fasting. Man, we can talk about whatever you want to talk about. Doesn't make a difference. Doesn't make a lick of difference what might be best or what might be optimal or what might be whatever if you're not going to actually do it. Like, who cares if keto is best, which is not, by the way, but let's just say that it was, right? If you're actually not going to do it, does it make a lick of difference for you? Does it matter for you? No, it doesn't. Not at all. And so it's the same thing when it comes to, how you adjust, how you manage your positions. You have to think about, all right, what is my availability? What is my skill level? Like, where am I at right here? And try to, find something that's going to fit where you're at on the learning curve. Otherwise, I feel like you're just trying to square a circle and it can be really frustrating. And so for IBIT, anyway, that's a very long-winded way of saying I'm not going to do anything. So now IWM, which if you are brand new to the show, that's pretty much how it goes. And so that is not the exception. That is the rule. And so IWM, so we have a strangle on an IWM. Man, this trade has worked out really, really well. We've got 53 days to go. You can see we're already up almost $3 on the trade. We're not quite at 50% of max profit, but we're only like 20, 25 cents away. And I kind of feel like, we've got the end of the year tomorrow. It's kind of, the craziness is picking up again here with the NASDAQ now down 200 and EMEA S&P's down 52. Tomorrow could be kind of wild and crazy. And then obviously we're off on Wednesday. And so I'm kind of thinking, I don't usually like to do this. I usually like to stick to my profit targets. And I think I do a pretty decent job. Maybe you guys can tell me what the real truth to the matter is when it comes to that. But in my own head, in my mind's eye, I think I do a decent job. I'm kind of thinking, let's go ahead and take this trade off. Let's take off this IWM strangle. Let's bank the profits. That way we got really close to 50% of max profit. And we don't normally sell IWM strangles for $6. Right? Here's another thing. I mean, this was an incredibly juicy strangle because we put the trade on when volatility was so high. I mean, if I bring up the chains again, you can see we did this trade on December 19th. We did this trade on December 19th. And here's what's really cool. Inside of Tasty Trade, I can right click and go to view market state snapshots. And it will show me not only what this yellow diamond will show me what the underlying price was when I put the trade on. You can see, oh, look at this. This is pretty cool. The price when I put the trade on was $220 and 98 cents. So 221. The price of IWM right now is 221. That's pretty cool, right? There's been really no delta effect. I mean, it's 221 and a quarter. So it's basically unchanged from where it was almost 2 weeks ago. And so this has been a pure play on time and volatility. And so time has gone by, of course, to the tune of like 10 days. But time over the course of 10 days ain't going to get you a $3 profit on, a strangle. And so this has been a tremendous play in volatility contraction. And so when I look at this, if we look at the IV rank, you can see right here. The IV rank was 53.8. Now look at the IV rank now. I don't want to move my mouse because then we'll lose kind of the pop-up window on top of that diamond. The IV rank right now is 21. So the IV rank when we put the trade on was 53. Now it's 21. So there's been some incredible volatility suppression over the course of the last 10 days that has helped us being premium sellers. That is one of the biggest helpers or drivers of profitability when you do sell premium. And this is why it's so advantageous to wait for implied volatility spikes before you sell premium. I present to you Exhibit A. And so IWM, the IV rank was 53 when we put it on. It's 21 now. And the implied volatility index, which is kind of the implied volatility, was 30.5 when we put this on. I feel like we looked at this last week, but since we're about to take it off right now, we'll look at it here again. But the IV index when we put the trade on was 30.5. And right now in IWM, you can see it right over here. I just clicked on the overview in this little right-hand menu. The IV index is 23.5. So we've picked up 7 volatility points in the implied volatility index for IWM. And of course, we've had the 9 or 10 days worth of theta that we've collected along the way as well. And so, man, just a really nice trade. If we weren't off on Wednesday and it wasn't like end of the year shenanigans, like it's going to be crazy stuff tomorrow, and I think it could go either way now. I think the shenanigans could take them lower, or they could take them higher. I still would say the chalk is probably higher, just given the tremendous force that is end of the year, money managers, window dressing, marking books up, blah, 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 blah. I do feel like the favorite is the market moving higher, but it is fascinating because this shakes some things up. Because if it does start to move lower, then again, all of a sudden, it's not about making the most, it's about losing the least. And now it's how quickly can I get to the exit? Well, if that's the case, then the next thing you know, you got NASDAQ down, 550 tomorrow. That could happen. That absolutely could happen. And so let's go ahead and close this out, though. If it was going to be a normal, like I said, if it was like a normal week or whatever, I'd probably leave it on, but it's not a normal week. Let's go ahead and free up a little bit of buying power, and then we can just kind of move on to greener pastures. So let's go to 338. And, you know what? That won't work because I'm buying this back. So I should probably try to pay more. They're not going to take less. I don't think, at least. All right, so we bought it back for 343. Beautiful. All right, so that's IWM over and done with. NVIDIA. Oh, NVIDIA. So we're at 18 days in NVIDIA, which, by the way, it's pronounced NVIDIA. If you were unsure, like, why is he saying it like that? Because that's how it's pronounced. 18 days to go. Our NVIDIA trade is right there in the middle of our strikes. So you've got NVIDIA at 139. You have the strikes at 136 and 142. I mean, it is right there. We're down a little bit on the trade, which is a little bit weird. I would expect us to be closer to break even. But I think that we're going to be able to roll this forward for a credit. So I think we highlight both legs. Let's see if they can get us out to February for just a tiny little credit. I'm not looking for anything crazy. But, I'll pretty much take anything green, I think. So let's roll this guy. Ooh, it's a debit now. Wow, they're going to do it like that. How about that? Man, I looked at this before the show and it was a credit. Was NVIDIA higher before the show? Maybe it was. Wow. So right now, apparently it's a 1 penny, it's a 2 penny credit. I'm going to lock that in. So right now, the mark price, it was a 2 penny credit. So you can see right here, 2 cents. And then if you look right there, you see that little CR, that's a credit. You can also go right here to kind of make sure that it is indeed a net credit, which sometimes can be tricky when you're kind of right around, like parity, you're right around zero. You're like, is this a debit or a credit? It's kind of nice to know, which side of the market you're on. It doesn't really make that big of a difference either way, I guess. But it's just kind of a nice to know. Oh, now they're headed back to unched. Yeah, don't even worry about it. NASDAQ down 170 now. And so, yeah. Oh, yeah. And so let's go in here, though. Let's see here. Now it's a 4 cent credit, 7 cent credit. Ooh, let's try it. Let's see if they'll let us roll it for 4 cents on the credit. Ooh, no takers. Maybe can we get a 1 penny credit on the roll? That'd be kind of nice. We can move this guy out. We got filled and improved to 2 cents. Beautiful. All right, so we moved out NVIDIA to February. And so we sit tight. We sit tight on that guy. Starbucks, we already talked about Starbucks. Man, look at Tesla. So Tesla, the down move today is helping us. And so that's good, of course. We've got 18 days to go, but we're not going to be able to roll this for a credit. I know that for sure. So right now it's a sit and stew situation. We sit, we stew, and we have our fingers crossed, and we really hope that this guy continues to move lower. And, if the NASDAQ does indeed move back to unched today, then that's probably not going to happen. It's probably going to carry Tesla with it, or maybe it's Tesla carrying the NASDAQ. I'm not exactly sure who the chicken and the egg is there, but they certainly go together. So Tesla being down today is nice. We need a little bit more than that, though. Only 18 days left on the strategy. And then Uber, this was our, I think this was a diagonal spread. And Uber just, our call diagonal spread, you've got Uber down to 61. We have a 67.5 call, and Uber's just crashed basically since we put this trade on. You know, if you can believe it, when we put this trade on, Uber was over 67.5. I'll bring up my chains here. You can see that we did this trade on November 14th. So a little over, well, about a month and a half ago. Wow, that doesn't feel that long ago. That's crazy. A month and a half. Man, that month and a half just melted away. Just melted away, which is probably how many of you feel about 2024. I mean, it still feels like 2019 to me. I'm like, man, like the last 5 years? You mean to tell me it's been 5 years since 2019? 5 years? Like, that's crazy. Amelia's going to be 5 in March. She's going to be 5 in March. That's crazy. That's so crazy. I mean, she was born like basically during all of the COVID hysteria. I mean, her birthday is March 9th. March 9th, 2020 is her birthday. And so that's when everything was crazy. Like, we went into the hospital on March 9th, like early in the morning, and then she was born at like 10 or 11 o'clock in the morning, I think. I think we went in at like 2 or 3 in the morning, and she was born like 10 or 11, something like that. So we went in, right, and the world was like about to be crazy, and we were kind of like, I think it's going to be a little crazy, but everything was pretty normal. You know, I mean, we were in Chicago at the time. When we came out, though, on March 11th, I mean, everything was crazy. Everything was totally crazy. Can you believe that that was 5 years ago now? Like, man, that's wild. That is some crazy stuff. But anyway, I can't believe we did this Uber trade 6 weeks ago. Wow. So this was a diagonal spread that we did on November 14th. And again, if I bring up my trusty market state snapshots, you can see what the underlying price was. Ooh, 2 diamonds. I've never seen that. Really interesting. Huh. That makes sense, though, because we have 2 trades that are part of this package, right? We have, you know, well, here, hold on. Let's color code this. Here's the first trade, November 14th. That's this trade right here. And then here's the second trade, December 10th. That's this trade right here. And you see them both on the market state snapshots. That's pretty cool. That's pretty cool indeed. So you can actually see just kind of visually here. When we put the trade on, look at how high Uber was. Uber was almost 72 when we put the trade on. I mean, I bought that 67.5 call. There was like a 75 delta call or something. It was pretty far in the money. And now it's really far out of the money. And so it just goes to show you, man, markets move and things change and a lot can happen. But then on December 10th, which was not even a month later, you can see right there with your own 2 eyes that Uber was down to under 65. And that's when we bought back the short leg of the diagonal because it wasn't worth anything anymore. You can see that right over here. It was only worth 9 cents. And so right now, you know, I mean, when I did that, when I bought that back on December 10th, I was like, yeah, let's just wait for an uptick. Let's wait for an uptick and then we'll sell some more premium against that long. And lo and behold, the uptick never came. Like sometimes when you wait for the uptick, it doesn't come, which I don't necessarily mean that was a bad move. I mean, it's easy to say it now. It's easy to look through the rearview mirror and always say I should have done X or Y or Z. That's a difficult game to play, though, because, you know, in the moment, we don't have the rearview mirror. And in the moment, none of us had the benefit of hindsight. And so I'd be very careful kind of being too harsh on yourself in terms of the decisions that you make, you know, in the moment. The most important thing is, do you have a good reason for making that decision? And is this the type of decision that you would normally make in terms of, you know, building some repetition, building some consistency with what you would do? And, you know, just given the huge drop in Uber, it made sense to me to wait for a little bit of an up move to sell some premium. And, you know, it either never came or we missed it when it did come. And, yeah, so Uber, we sit tight, we do nothing, and we lament our situation. This is absolutely grounds for a lamentation or 2, or maybe a full book of them. Yes, this is not great. But we are going to, yeah, we're going to do nothing. And that's going to be that. But, man, wow, this perfect timing. Man, it's almost like I've been doing this for 9 years. It's almost like we can act like a professional from time to time. We're halfway through the show, and this is around the time I like to get to y'all's questions. So that's exactly what we're going to do now. And let me see where you guys are at. Man, I see you guys in the house. Mike in the house. I see RC's in the house. I see, you know, Mr. Pillows in the house. Man, Sam L's in the house. I'm just scanning names right now. I'll try to get to as many as I can. Vaughn's in the house. Christian Koo's in the house. Man, Hellbane's in the house. Man, look at you guys. Look at you guys. I appreciate you guys. All right, where are we at? Let's go. Tond says, Dr. Jim, Happy New Year 2025. Man, Happy New Year to you too, my friend. I hope it is, man. I hope it is blessed. I hope it is wondrous. I hope it is everything that you hope it will be and more for you and your family. Tond, thank you so much for being here and being a part of what it is that we do. It really is only because of you all that we can do what we do. So thank you guys so much. Let's see. David Galmore is in the house. Dr. Jim, I have SPX trades that expire on January 9th. Okay. Closed for Carter. I don't know what that means. I don't know who or what Carter might be. You talking about the Sylvester Stallone movie? Was it Get Carter? I don't think that was his best. Like, I'm not sure. It may be ahead of like Rocky V, which is a pretty low hurdle to jump over. But yeah, but David Galmore goes on to say, last day to trade will be January 8th. Anything special I need to know? No, I don't think so. January 9th, that's a Thursday. I know it's a Thursday because my daughter Penelope's birthday is January 10th, and we've got the party set up and the different things that we're doing. I know that's a Friday. So just doing some real quick, simple calendar math, that would make January 9th a Thursday. But no, I don't think there's anything that you need to know. Other than the fact that I would look up, was it Sylvester Stallone? Was it Get Carter? I'm pretty sure I got this one. I'm not like 100% sure. I'm going to say 60, 70 delta. Like, I mean, if I was going to trade it, I'd feel confident that it's going to go where I need it to go. But somebody tell me in the chat, am I correct about this? Did they do more than one? Like, did they get Carter and did they have to get him again? Like, was it get Carter and then get Carter again? Like, I think it may have been a 1-2 punch deal, but you guys got to let me know. So no, nothing special that I'm aware of though. I mean, other than, you've got end of year flows, you've got beginning of year flows, which, you can try to read the tea leaves into whether or not that's bullish or bearish. I'm not your guy to help you do that because I don't know that it's that simple. There's always, this isn't going to help your cause at all, but there's always some base level of bullish flows into the market. Always. Because we're all doing it. Like Michael Saylor's got his own little Ponzi scheme. We have a much larger Ponzi scheme that we're all participating in, right? With our retirement plans and this and that. It's like, man, we're all constantly feeding in, kind of buying indexes, kind of buying, the major players and all those things. Now, are the flows more pronounced at the beginning of the year or beginning of the month or whatever? I'm actually not sure. Like, I'm not a flow guy. And so I don't know the answer to that question, but I just know that there's, always some bullish flows that's why I'm always kind of amazed at, like, even like a day like today where, the sell-off has been a bit muted now. There's been quite a rally back. We'll see what happens again the next, hour and a half. But whenever you see a big down day, it's always fascinating to me because that means that the selling pressure must have been really, really, really significant, because first you have to overcome, just the natural flow of the market to move higher. The natural flow of the market from a macro, from kind of a mechanical standpoint with like innovation and growth and kind of risk premiums and those kinds of things. But then there's also the flow component. All of the money coming in from like, my 401k, your 401k, everybody's 401ks and 403bs and whatever, right? And so it's like you already have all these things. And so it's like, man, for the shorts to come in and kind of wipe all that away and send them lower in a significant way, it always leaves me pretty amazed at what the market can do. And so anyway, I digress. And so Proto Man says, what is the market going to do tomorrow? Man, I don't know. I do not know. But like I said, if the selling pressure intensifies in the next hour and a half. So let me give you my prediction. So I'm already going to give you a whole year's worth of predictions tomorrow. So let me give you a bonus prediction. If we stay right around this level over the course of the next hour and a half and into the market close. So right around NASDAQ down 200, let's say, between NASDAQ down 100 to 200. So, let's give ourselves a little bit of a range. If we stay somewhere within that range, I say tomorrow is bullish. And it's going to be bullish in like, I'm not talking about like plus 20 points. Like you're probably going to get 100 to 200 points in the NASDAQ, if not even more. And so that's how I would classify that. I think the bullishness for tomorrow will take over, and it will pull rank over, whatever bearish, flow might come in. However, if they stomp on them, if they get them down 300, if they get them down 350, 365, 333, right? I think tomorrow's bearish again. I think the bearishness will continue going into tomorrow. Because again, I think at that point it becomes a game of who can lose the least, not who can make the most. Whereas, this, somewhere between 0.5% to 1% move lower is not that big of a move. But you start getting a 1.5%, maybe 2% to the downside, that's gonna change some bottom lines. And so that would be that's my prediction for tomorrow. So I would find a way to do the polar opposite of everything I just said if you like making money. And so Don 721, hey Dr. J, what's going on there, Don? What are your thoughts on a strangle in XBI? 83 put 99 call in the February expiration. Man, I don't know. Let's take a look at it. This is your biotech ETF. You've got the IV rank is 29, so that's not too bad. That's very decent. You go into February, and what are you looking at there, Don? 83 put, right on the expected move. 99 call, so a little above the expected move. Man, this is a good looking trade. And since we took off IWM, so we lost some theta there. I don't mind kind of replacing that theta with a new trade, and especially it's an index we're not worried about, because we're getting into January and we got earnings coming up. Like all the big dogs are going to be laying out their earnings calls, and that's going to happen. It doesn't usually pick up until the middle of the month or even the back half of the month, but that is coming up. So it's going to be a bit harder to find trades and find positions that aren't in line to contend with an upcoming earnings call. Whether it be an Apple, an Amazon, or basically any individual name. And so finding these ETFs and kind of these X guys, you've got XLU and XBI, XLE, things like that. These can be nice substitutes to get some occurrences, get some exposure, and kind of keep the premium working for you. And an IV rank of 30 is really not too bad. It's really not too bad at all. Shout out to the Volatility Crash Course, which is on the YouTube channel. In the Volatility Crash Course, I remember because I did the whole thing. 30, was the IV rank that was used by the Tasty Research as a good cutoff point to kind of demarcate between high implied volatility and low implied volatility. And so I used the same marker in that crash course when we went through the different, kind of elements of, selling volatility and just, understanding volatility in your portfolio. And so this is a good kind of marker for, the difference between low volatility and high volatility. Now, you could certainly adjust that number. You can make it higher. You can make the hurdle higher if you want to be more conservative. You can make it lower if you want to be a bit more aggressive with how you sell premium. But this is a really good starting point for trying to decide, is volatility high relative to volatility being low? And so right here with you see the IV rank. It just ticked up to just barely over 30. At 30, above 30, we can throw the greater than or equal to sign out there if we need to. Math, the great thing about math in 2024 going into 2025 is it's whatever you need it to be. There are no objective rules with math anymore. It's just whatever you need in that moment. 2 + 2, it used to be 4, lock, stock, and barrel, but now it can be whatever you need it to be. It can be 5, it can be 4.5, it can be 3 3/4, right? It's what do you need to get you where you're trying to go in that moment. And so right here, IV rank, we do it, man. I like it, Don. I like it a lot. Let's do it for 214 on the mid price. And we got filled. Nice. There you go. And the great thing is, if it doesn't work, it's Don 721. It's not Dr. Jim. It's Don 721, not Dr. Jim. And so thank you there, Don. So Peter's in the house. Peter says, celebrate good times. Come on. Yeah, let's do it, man. I'm ready. Let's go. Sergio says, Dr. Jim in the house. It's been so good here. Thank you. Man, I appreciate you there, Sergio. Thank you for being a part of what it is that we do. You're part of the core position, man. You are one of the staples. You are the peanut butter and oatmeal and blueberries. You are the daddy's chicken, Sergio. You are daddy's chicken. Thank you so much for always being there when you've been needed, much like daddy's chicken. And so thank you so much. My kids, by the way. This might surprise you guys. But I'll get on a kick sometimes around the house, and I'll just start saying things over and over again, like daddy's chicken, for example. And it drives my kids bonkers. It drives Autumn bonkers, but she's realized I can't stop it. It's one of those things where you just got to kind of let it fizzle out, right? It's kind of like, if something gets set on fire outside, you don't typically stop it. You just kind of let it fizzle out, right? It's the same type of thing. But my kids, they're like, Dad, please stop. Please stop saying that. When their friends are over and stuff, oh, it's great. Yeah, it's absolutely amazing. Their friends will be over, you guys want some daddy's chicken? And they're like, well, whose chicken? I'm like, it's my chicken. It's daddy's chicken. And they're like, but you're not my dad. I'm like, doesn't matter. It's daddy's chicken. And my kids, yeah, they're not digging it. But anyway, I digress. So Weiss says, "Hey, Dr. Jim, watching you on a leg day on the tonal. Ooh, man, a leg day on the tonal. I don't know there, Sam L. Can we do leg day on the tonal? Are we allowing that? Because now we're doing front squat lunges, and we kind of let that one slip through. Are we going to allow a leg day on the tonal there, Sam? I don't know. I mean, I love the fact that you're getting after it, Weiss. I love the fact that you're getting after it, right? But there are certain rules that have to be followed. Like there are certain customs and guidelines that we have to adhere to as gym bros. And this is very basic bro science. This is like, the first day of bro science class. You learn what you can do and what you can't do, what you can say and what you can't say, and where you can train legs and where you can't train legs. And again, I mean, front squat lunges, I didn't think it was a thing, but apparently it's a thing. And so maybe leg day on the tonal is acceptable there, Sam. Let us know. But Weiss, that's amazing. All kidding aside, man, it's amazing. It's incredible. And I'm so humbled that you're actually bringing me into your workout with you. That's incredible. Right? That's absolutely amazing. I mean, I know when I'm training, I need to have something on that doesn't really distract me. That kind of, is kind of something in the background that I don't really need to pay attention to. I have a feeling you feel the same way. So that's amazing. That's absolutely incredible that I made it to your workout. So Junior Mac's in the house. Dr. J, good morning from Australia. What's going on there, Junior Mac? The age-old question, do you hold iron condors past 21 days to go to eke out a profit if the underlying is smack bang in the middle? I love your work, man. I appreciate you. I appreciate you so much. It's a great question. So a couple of elements to the answer here. So iron condors are traditionally slow moving strategies because you have all that friction with the longs on both sides they're needed to define the risk. So you have to have them there if you want to have an iron condor. But when you have a tighter iron condor, so let's say anything under $10, it's going to, in terms of the width of the strikes, it's going to be slow moving. So it's not that uncommon that you get to 21 days to go and you're not at your profit. Now, it would be pretty uncommon if you're at 21 days to go and it's smack dab in the center, kind of the way that you crafted it, and you don't have any kind of profit, that's pretty unusual. It can happen when you have maybe a big volatility increase or something like that. It certainly can happen, and it will happen from time to time. But it's going to be a lot less common. You're probably going to have some kind of profit. Now, is it economically significant enough for you to take it off at that point? That's usually the question that you have to answer. So let's say, and this might be what you were getting at, let's say you have an iron condor on, and I'm just making up a number. Let's say I sold it for, $3, right? I'm targeting $1.50. I get to 21 days to go. My profit is 40 cents, right? What do? That's a difficult question, right? If you were up $1, that's easy. You take it off. If you're up a nickel, that's easy. You leave it on. But let's say you get to like 40 cents. It's like, do I take it off or do I leave it on? You can make a good case for either, in my opinion, because that is now getting into kind of an economically significant profit. Personally, I would probably leave it on. I would probably leave it on for 3 reasons. Number 1, it's not quite economically significant enough for me personally. Number 2, it's a defined risk strategy. So if this thing completely blows up in my face, it can only get so bad. I'm not really playing with fire. I'm not really playing with, Bitcoin straddles and gold strangles and things like that, right? And so that's really helpful. But then also number 3, remember that because you have all the friction on the iron condor, you have all the friction from the longs on both sides, it takes a while for that strategy to pick up traction. It takes a while for that strategy to gather and gain momentum. And so when you get to 21 days to go, ironically enough, typically we're looking for the exit ramp. That's when things are just starting to pick up steam, especially for defined risk strategies. And so a lot of times, man, if you just hang in the strategy for a couple more days, maybe up to a week, you can hit whatever profit target that you're going after, or something that's even just a little bit more economically significant. And so that's how I would manage that situation. That's how I would view a trade like that. And so I would probably be looking to stay more than get out, but I completely respect the fact that a lot of other traders would be looking to get out, and that's totally fine. And I think Tom would probably be looking to get out in that situation. So just for the record, my official answer is I do whatever Tom does. My official answer is whatever Tom says is okay is A++ by me. A++. And so Junior Mac, I hope that helps a little bit. So Emmett's in the house. What's going on there, Emmett? I appreciate you, my friend. Thank you for being here. I appreciate you very much. And so let's see. Weiss is in the house. Hey, Dr. Jim. Weiss is back in the house, I should say. In between sets, of course. I have a January AMD 125, 135 put spread that is limping. I can't roll for a credit to February. Would you close it now or let it limp? Let's see. Is that a long put spread or a short put spread? It must be short. Because if it was a long put spread, you'd be up money because it would be fully in the money. So you must be holding an in the money short put spread that is indeed limping along. So you are in January, you said? 18 days to go. Yeah, so 125, 135. So I'm assuming you can't roll it for, you can't roll for a credit to February. Yeah, that makes sense because the stock is at 123. So the question becomes, what do you do? Well, the answer I think is actually fairly simple and fairly straightforward. With defined risk strategies, it's very, 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 very important that on order entry, you size the trade correctly such that if it comes to it, you're willing to take maximum loss. You're willing to accept a max loss on the trade. Now, nobody wants to do that, and I hope that doesn't happen for you, but you have to be willing to go there. You have to be willing to accept that that's what it comes down to. You never want to be in a situation where you're doing, defined risk strategies. You're like, man, I just got to get out of this thing. I'm okay losing 50% of this or 60% of this, but I can't lose the full value. That's a big, big, big mistake because you're not playing with a full toolbox at that point. Like you're missing some pieces that could be, really helpful later on. Case in point right now, you're at, 18 days to go in this AMD spread. You can't roll it for a credit. I would just hold it. You need to be in a position where you have 18 days to go. In AMD, man, that's a lifetime. That is an eternity in AMD. In these semiconductor names and these tech stocks, it's like, man, 18 days, a lot can and oftentimes does happen in an 18-day time horizon. So I would sit tight and I would do nothing. If you get a rally, later today or tomorrow or this week or whatever, and you can roll it into February for a credit, then do that. Right, then I would go ahead and do that. But I don't see the reason to close it out early unless you sized up too much and it's causing a little bit too much pain. Which, of course, when you have a losing trade, it's always going to cause pain. So the expectation is not no pain. The expectation is not zero pain, but the expectation is a manageable amount of pain. And so that's how I would kind of look at that. And so let's see. Peter says vol is volatile. Yes, it is. I don't do a lot with VVIX. But VVIX is, this is the volatility of volatility. I mean, there's something here for sure. And I think I've looked at this before for the skinny maybe, but it's not one of those things that I do on a regular basis. And so it's not something that I can just kind of, pull out of the back of my mind like a file cabinet and say, oh, well, this is, what this is. There's plenty of things that are not like that in the market for me because I don't do them on a regular basis. And VVIX is one of those things. But yeah, I think volatility is volatile today, even though VVIX is down. But again, volatility the whole day has been so weird. I mean, you've got the VIX is only up 56 cents. And it's kind of like, it's just so interesting because it's like, if you just woke up, right? So let's say like you just woke up, you were playing chess all night, just getting creamed. Right, it's hypothetical. This isn't me personally, but maybe you're like, man, I really shouldn't be playing at night because I'm not paying attention. I'm playing too fast. I'm getting crushed. I'm hanging queens. I'm hanging rooks. I found a way to hang a queen and a rook on the same move. Not even a fork, but they took both pieces with the same move. So like maybe I shouldn't do this. Well, maybe that was you too last night, and you got steamrolled for like 4 hours, and so you slept in this morning and you just woke up. If you looked at the market, S&P's down 42, Nasdaq down 170, you'd be like, man, wow, this is crazy. Volatility's probably up significantly. And you looked at the VIX. And it's up 56 cents. That seems a little light, right? That seems a little light for where we are now. However, when you look at where we were, again, just 2 hours ago, just an hour and a half ago, it's like, all right, maybe only up 60 cents makes sense because it was a little crazy just a couple hours ago. But yeah, it's fascinating. Absolutely fascinating. And so Anka says, always time to celebrate, regardless of bear or bull. Happy New Year's Eve. Yes, Anka, it is always time to celebrate, especially if you took off your app love and trade early, which I know that you did. And so good stuff, though, Anka. Thank you so much for being here and being a part of what it is that we do on a regular basis. Without you, we couldn't do what we do. So thank you so much. You are certainly part of the core position And I appreciate you so much. YouTube Jim in the house. Hello, Dr. Jim. Happy days, man. What's going on there, YouTube Jim? I appreciate you, my friend. You are slowly becoming part of the core position. I mean, I don't think Jim's missed a show in a while. Like, I think he's been Johnny on the spot for at least a couple of weeks now. And he's usually in the chat too. So thank you there, Jim. I really appreciate you, my friend. Of course, if I can ever help with anything, let me know. And so let's see. Jason Doss says, wow, I totally missed it. I didn't realize it was even rallying. I know that you wrote that comment like an hour ago, and so it may be a bit dated now, but don't worry, the market's still rallying even an hour later. The market is rallying. NASDAQ only down 160 now. And so yeah, I mean, it feels like it wants to close green. That would really be something. If this thing closes green today, that's going to be crazy. The whole thing is rigged. The whole thing is just fixed. It's all just made up. If they close them green today, that's crazy. Man, I say that facetiously, of course. But it's, man, it would be crazy. It'd be so crazy. So Sergio is, Weiss earnings in February are a problem, in my opinion. Oh, Weiss was about AMD. That's true. Good point there. Good point there, Sergio. For AMD, yes. If we look at the trade page. Yes. Okay. So the plot thickens a little bit there, Weiss. Thank you so much, Sergio, for bringing that to my attention. It was right there on the screen. I missed it. You do have earnings on February 4th for AMD. So, I still think the move right now is do nothing. I think the move is do nothing. Where it might get a little tricky, which this would be a good problem to have because it's better than the alternative. If AMD does rally, what do? Do you just hold it? Because again, it's defined risk, so you kind of have the luxury of being a little, you could be a bit fast and loose with the rules if you want to. Do you hold it to avoid rolling into earnings, or do you just roll into earnings, also thinking I have defined risk? If it falls on my face, I'm totally fine. Like, you could really make a case either way in that. Yeah, you could go either way with that. I'm probably 50-50, honestly. But it is worth noting that there is AMD earnings on February 4th. So yes, definitely be aware of that. So thank you there, Sergio, very much. Let's see. And then Weiss actually said in the next comment, for sure. So he's aware of earnings. I'm just wondering if it may recover before a bit to lessen the pain. Yes, that very well could happen. Vaughn says, why are bonds so oversold? Thank you, Vaughn. Well, bonds are catching a huge bid today, and so maybe they're not as oversold as they were. But it's so interesting, that ever since Powell made the bazooka cut, which we can look at a chart of ZB. If I bring up a chart of ZB, I bring up the daily, we just kind of, we zoom out a little bit. I mean, this is it. I mean, look at that. That's pretty much a straight line down, more or less. It's maybe 45 degrees, but you can see right there. I mean, that's the bazooka cut. That was the 50 bips cut back in September. When it was the first Fed meeting or last Fed meeting that I've seen in a while where it wasn't telegraphed what was going to happen going into the meeting. It was literally 50-50 or 55-45. I can't remember which one was in the lead, the 25 bips or the 50 bips. But either way, it was wow, we really don't know what Powell's going to do. And he went with the 50 bips. Well, as soon as that happened, bonds just started selling off, which is interesting because that is putting downward pressure on bond prices, which is putting upward pressure on bond yields. So what that is doing is it is sending, especially the long end of the curve, up. So this is kind of the steepener trade, right? Where the curve is getting steeper again in terms of kind of coming out of potentially being inverted. I don't think it's inverted anymore. It might be flatter, but I don't think we're in an inverted yield curve situation anymore. Well, anyway, when the rates are rising on the long end, one kind of school of thought behind that is, hey, the bond market doesn't believe that inflation is defeated. The bond market doesn't believe that rates kind of writ large are going to be going lower in the economy, right? Irrespective of what Powell might be doing. Even though he is cutting rates, even though he's trying to make money cheaper, he's trying to, stimulate growth or, kind of not really stimulate growth because there's still been plenty of growth in the economy right now. I think he's trying to get ahead of, potential slowdowns later, trying to kind of thread that needle. And I think he's done a really, really nice job. But one school of thought is that the bond market is just basically saying we don't believe that inflation is defeated yet. Now, who's right, who's wrong? I mean, we'll have to wait and see. I mean, time will tell. But I mean, the market itself is the arbiter of truth. Doesn't matter what I say, doesn't matter what Powell says, doesn't matter what I do, doesn't even matter what Powell does in some ways. The market is the arbiter of truth. And so the fact that bonds have been so oversold, as you said, and just been so weak going all the way back to September, it's pretty interesting. It's pretty interesting, especially when, if you look at like, textbooks and academia, which is where I came from before I joined the Tasty Network, you have rates going down, you have bond prices going up, right? This is a very simple relationship, at least at the base level. But when you dig a little bit deeper, you realize it's pretty complicated because the real live markets don't necessarily behave the way that they're supposed to behave inside of an ivory tower. But also B, you do have a curve, and you do have a curve where, the rates on the front end are typically lower, the rates on the back end are typically higher. And if that, apple cart gets upset in any way, then equilibrium needs to be restored. And a lot of times it can be a painful process to get back to that, kind of equilibrium point, which I think is kind of what we're doing now. So, all that to say, Vaughn, I don't know why they're so oversold. I don't really think anyone does, but that's at least one school of thought in terms of, the inflation angle. And so let's see. Nicole says, what's your opinion on selling at the money covered calls on a high implied volatility stock? I love it. I absolutely love it. And so, it may seem kind of, what's the word I'm looking for here? Dumb to sell an at the money call on stock that you own, because you're like, wait a minute, I'm capping my upside at where the price is now. Like, that doesn't really make a lot of sense. Well, maybe not, but it can make some sense. Like if you're in like I'll just take AMD because AMD is a very high implied volatility name. Like AMD, let's say I own some shares in AMD, right? And maybe I just bought the shares today, or maybe I've held the shares for a while, whatever. Maybe I go into February, disregard earnings for right now, and maybe I sell this 125 call, which is basically right on top of the stock price, right? I go in and I sell the 125 call. Now, what I've essentially done, let me delete those circles because they don't make any sense anymore. What I've essentially done now is I've capped my upside in the stock at 125. The stock's at 123. I'm only leaving myself 2 points of upside in the stock from a stock appreciation standpoint. But what am I getting in exchange for that? What am I getting what's the other side to that trade? Where is the gimme that comes with that gotcha? Look at all the premium that you're collecting. You're collecting $8.60 of premium. That's a lot of premium for a $125 stock. That's like what, 6% of the stock price in premium for one 53-day cycle, right? Now, again, it's that high for a reason. AMD could be 140, 150, 160 after the next earnings on February 4th. February 5th, it could easily shoot up 20, 30%, right? But if you're in a situation where you're like, all right, I like the high implied volatility, I like the implied volatility rank, I want to sell an at-the-money call because this is going to buffer my downside, it's still going to give me a really nice return if the stock does rally, this can certainly have a place in your portfolio. Certainly. It probably doesn't make I don't want to say it doesn't make a lot of sense, but it usually doesn't make the most sense, let's say that, to do it on order entry. I don't know if I would buy stock and then sell the at-the-money call. I don't know that that's the sequence of events that a lot of traders will kind of follow. I think it makes more sense for this to be on an established position. So it could be something that, went down and now it's back to where you bought it and you're like, all right, I took a crack at getting some stock appreciation. It didn't happen. Let me sell the call. Another option would be you buy the stock, it rallies a few percent. You're like, hey, I feel so happy with this 4% pop the last 2 weeks or whatever. I'm going to sell the at-the-money call now because now I'm just layering that on top of what I've already made in the stock. That's probably the most common occurrence with an at-the-money covered call. But there's a lot of different ways you could play that, Nicole. So hopefully that helps a little bit. So Arjun Purr's in the house. Continuing on your piece for this morning. Yes, let's go. I'm ready. If playing the skew, like I think you said, it would be on the low premium side for both, correct? So this morning, just to give everyone some context, well, first of all, you should watch this segment from this morning if you haven't seen it already. I was on with Tom and Tony for the Skinny on Options Abstract Applications. I do that every Monday morning at 8:40 Central and 9:40 Eastern. We try to do some more kind of off the beaten path topics to kind of, expand your intellectual horizons, let's say. So this morning we talked about positive skew and negative skew and talked about how, the markets, while the normal distribution kind of is the foundation of what we do with so many things, the real live markets are not perfectly normally distributed. I mean, you've got log normal prices, you've got, positive kurtosis, you've got a lot of things happening in the marketplace. But one of the things that is happening is some level of skew as well. Well, the empirical research has shown that, overall indexes are negatively skewed. That means the outlier moves, the big moves that happen, typically happen to the downside. Positive skew shows up oftentimes in individual stocks. So like Tesla, like AMD, like NVIDIA, these are going to be positively skewed individual names where the major move potential is typically to the upside, not necessarily the downside. But it can also be the downside because it's still an individual stock. But generally speaking, indexes, you're not normally going to see a 6, 7, 8% up day in the indexes. It can happen. It has happened. It will happen again, but it's not common. It's not common on the downside either, but relative to the upside, it's a lot more common on the downside. Okay, so that gives everybody kind of some context about this morning. What about the low premium side for both? So actually, it's going to be the opposite of that. So whenever you're trading on the side of the skew, you're actually trading on the side with the higher implied volatility. Because if the velocity of risk, as Tom phrased it this morning, which was really well done, especially given the fact he just learned about skew before the show when I taught him for the 90 seconds we had before we went live on air. When you have a high velocity of risk to one side or the other, that is indicative of skew on that side of the market. That's going to show up in the implied volatility numbers for the out of the money strikes. So for example, here, let me just show you guys what I mean by this. If I go into, let me just look at AMD really quick. Hopefully this will kind of be the case. Let's see here. So AMD, I've got the stock at 123. So so those are my at the money strikes. If I go out to the 18, let's go to the 18 delta. So the 18 delta call is a 150 strike. The IV on that is 51%. The 18 delta put, so it's only 17 delta on the put side, but you can see that's the 105 put that has an IV of 49%. So you can see there is a little bit of skew baked into the market, and the skew is pricing in a higher velocity to the upside. So if you were going to, kind of play this, to the upside, then, there's a number of different ways that you could do this. But I would say, the most classic way to do this would be with maybe an at the money call spread, where you're actually, you're buying some call down here. Right. So if I was going to just erase the circles and get some circles that make more sense, maybe if I've got the stock at, let's just say it's 125, just to make it simple. You buy a 115 strike and you sell a 135 strike. So you can see that, well, this one doesn't quite work out as I would have hoped because the implied volatility is higher on the 115 strike because we're not that far out of the money. But just picking these things up on the fly, sometimes this happens live on the show, only on the Tasty Network. This doesn't happen anywhere else on the internet because all the internet furu traders on Twitter, they never make mistakes and they never lose. And so you buy a 115 call at a 52%. Now I'm selling a 135 call at 50%. You're not exactly capitalizing on the implied volatility differential. But hopefully you can see, what if you did this? What if I bought the 125 and sold, that's still really not going to work. What about the 135? I got to make this work before we move on to something else. And then I sold the 150, let's say. This is not a great trade, by the way. I'm just kind of piecing this together as we go. But to make the point I want to make, you can see that you're selling higher implied volatility and buying lower implied volatility. And so that is kind of leaning into the skew. That is kind of leaning into the skew and allowing the skew to work for you. Now, what makes it a little trickier, and I'm not sure if that answered your question there, Arjun Per. I hope I at least gave you something to think about, even with the train wreck of examples I was able to concoct here in the moment. The thing that's tricky is if you really wanted to capitalize on the skew, you got to have some static exposure. If you really want to play the skew, really play the skew, you don't want to be fiddling around with, premiums and deltas and blah, 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 blah. You want one-for-one exposure. You want one-for-one delta moves with the stock or the index. And so I think that's harder to do with individual stocks. I think that's easier to do with the indexes, in just my personal opinion. And so when it comes to, if you are going to have some short delta to hold as part of your core position, I've said this many times before on this show. I've said it on the Skinny and Options Abstract Applications with Tom and Tony. I think you got to have some static delta that is in your portfolio. And static delta simply means your short stock or your short futures where you don't have a dynamic component to the delta. Like if I sell calls, that's bearish, that's negative delta, but that delta is dynamic. That delta changes. And if the market does crash like 450 points this morning, and now it's back down to being down, 200 or whatever, it's like, man, when you sell a call, it can be hard to make money on that trade because the delta dries up on the way down, so you don't really get paid on the delta effect. And oftentimes the short vega that you're having to hold with the short call, it blows up in your face. Because volatility explodes like it did this morning. The VIX at 19, volatility futures at almost 19. Right? That's just a difficult trade. When you have static delta, though, you don't have to worry about any of that. Right? You have a clean move with the index on the way down. You're not getting hurt by volatility. It's all perfect. It's all fine. Now, I've heard it said before, for every gimme, there's a gotcha. She might be thinking, Jim, that sounds amazing. Nothing but gimmies. Au contraire, mon frere. There's plenty of gotchas. One of them being you're fighting against the natural drift of the market to move higher, and you don't have anything to help weather the storm. You don't have anything to help you kind of absorb the blows. Whereas if you sell calls, you have out of the money distance, you have theta, you have, potentially short vega that can help you on the way up if you get hurt by the delta move. So, it's gimmies and gotchas, man. I mean, it's back and forth. But that's how I would think about it, Argent Per, from a skew standpoint. So let me try to get to one more really quick. Oh, it's Mike Nematoka, which I know every time I see it, man. I know I got it right one time in the past, and I have since botched it every time since. But it's Mike Nematoka is in the house. Dr. J, he says, the market secrets, and you're not going to share it with your Bowberry biscuit bestie? As Biden says, come on, man. I'm telling you guys, I don't have the market secrets. When I finally get them, you'll know I got them, because this is what's going to happen. There will be no more From Theory to Practice. There will be no more Dr. Jim. Dr. Jim will cease to exist. I am just going to disappear. I am just going to ghost y'all like Goodwill Hunting. Just gone. No goodbyes, no sappy hugs. Like, it's over. It's done. It's gone. So as long as I keep coming back, you can rest assured I have no idea what I'm doing. You can rest assured we're all in the same boat, man. We are 100% peer-to-peer conversation. So hopefully that helps you there, Mike. But I got to go. I got to get you guys to Tim. I appreciate you guys so much, man. If I can help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Hey, everybody. Well, this is the penultimate show for 2024. And just as a reminder, well, not a reminder, it's new news as of today, we have an unexpected holiday next month. Now, there were already two market holidays in January. There was January 1st, which is on Wednesday, New Year's Day. And then there's January 27th, I think. Forgive me. No, actually 20th. I beg your pardon. MLK, which also, just by coincidence, is Inauguration Day. So we already had the 1st and the 20th. Because of President Carter's passing this weekend, they are going to also close the exchanges on the 9th, which I believe is next Thursday. And I tweeted this out. Some folks thought it was a joke or I was kidding or something. It's like, it's not. This is tradition. When a president dies, former president or current president, of course, it's a big deal. And so they fly flags at half-mast for 30 days. The federal government basically shuts down on a day of mourning, and the exchanges, out of respect, also shut down. So just note that next Thursday, there's a unscheduled market holiday on the 9th, and rightly so. He was a man of intellect and honor and fidelity, and sadly heralded and loved more in his death than earlier in his life, which is unfortunate. But in any case, if you've seen the news, the media generally, there's a lot of warmth around the world noting his passing. So for us traders on the 9th, yes, it is market holiday, so just know that. Having said all of that, it's a pretty red day. And it was much redder earlier. We were down triple digits on the ES. We're only down about 41 right now, which I'll take, but I kind of prefer the triple digit shtick. That lines up nicely. I still don't know what Thursday is going to hold. And I say that it'll be interesting to see what happens after a year packed with fat profits, when people have the opportunity to take those profits and get an extra year bonus before paying taxes on them. So that might provide some selling pressure on Thursday. As it is now, there's still a lot of optimism, and we've talked about this. And it is interesting to me that Bitcoin isn't at $250,000 by now, because I can't imagine any more good news for crypto than they've already gotten. I mean, they're shoving the federal government full of crypto maniacs and fans, and there was a time when the notion of a market capture, that is to say, having those in the government that would help out your industry, used to be kind of on the sly, kind of sneaky. And now it's just blatant. It would be if the government had like a department of technical analysis, and the government got to tell people what charting platform to use, and they appointed me. Well, what do you think I'm going to tell them to use? It's completely self-interested if I have that kind of power. Everyone should read Slope of Hope and use slope charts there. That's edict now. But in spite of these crypto bros being put in positions of tremendous power, Bitcoin couldn't even manage to hold six figures. It's down around 94,000, which is still impressive. And I always take caution saying anything about crypto, because there's no religious zealot more passionate and loud than a crypto person when it comes to their beloved BTC. But I just think that, how much more good news can you possibly get? What will it take to push this thing to your $1 million per BTC target? I suppose the elimination of the US dollar completely and required to use crypto. Although something like that will probably be coming at some point. Anywho, we'll take a peek at Bitcoin in a minute. Let's look at the charts that I've got preloaded, and we can catch up on this rather red day. Here's the spider. We had a beautiful week last week where we rallied right up to the broken trend line, and we fell like so. And this trend line represents strong resistance now. And the next support levels, as I've mentioned, are twofold. One of them is the midline to this channel that goes all the way back about 16 years now, and the election day gap. So, so that's what we'll keep watching. The diamonds are also down. And in this case, we got kind of close to the election day gap, just like we did last Wednesday, but we didn't get past it. So we're essentially near today's highs. We've been rallying mightily off of this morning's initial weakness, which is annoying. Here's the cubes, which are down about 0.8%. And happily, these are cleanly below the broken trend line. They've been kind of monkeying around here for the past few days, but we have a clear break. And in this instance, the election day gap is way, way, way down here. So it would take a lot more selling to get us in that neighborhood. Although there are some really high flyers that have really flipped lower without hardly any general market weakness, like Carvana is one. It peaked on its counter trend rally at 268. It's down to 209 now. That's something like 20%, maybe more of its value. Jumping overseas, EFA is down about 1/3%. And we've got kind of a sloppy top here. But the more important thing is that this wedge has been very cleanly broken. And this goes back to that important October 13, 2022 bottom. And so this entire object here is really kind of a diamond. Let's just rough it out here. That's actually pretty good. Do this long enough, you get good at it. So let's just like so. Yeah, so that sort of suggests the diamond pattern, even though it's egg-shaped. That's going on with EFA. I would also note that Mexico is down pretty hard, and I've mentioned Mexico many times as a prospectively good bearish play because not only is the trend line completely busted, but just from a narrative standpoint, it doesn't seem that U.S. economic relations with Mexico are going to be anything glorious with the new administration. So this is, I don't know, if you squeeze your eyes just right, you can kind of see a head and shoulders top on this, but everything above the bottom of the semicircle represents the top. And so this is slipping pretty hard. Like I say, this is over 2.33%, pretty big down day for Mexico. Speaking of Bitcoin again, let's zoom in on this. This is worth keeping an eye on because the lifetime high for this so far was over $108,000. That was around the middle of the month. And we have shed about 13 to 14,000 of that at present levels. And we're just sort of grinding around here. I mean, for like 6 weeks now, it's just been kind of meandering up and down, not really doing much of anything interesting. I would say that should we break 90,000, here more precisely 97.70, that would, I think, open up the prospect for a trip down to the lower 70,000s. And the 90,000 level is psychologically important because just like we all saw the mania that took place when six figures was breached, which lasted a few days. Should we slip below 90, that puts 100K, so it's like over 10% away at that point. It's just these big round numbers matter. So if we crack 90,000, you can expect to see the selling accelerate. And like I said, I would expect that it's completely plausible that we would ultimately head down to the lower 70,000s. In turn, MicroStrategy is off about 3.5%. And from this great distance, it looks like MicroStrategy is doing just beachy. They're down just a little bitty bit. No, it's not a little bitty bit. It's about 40%. With this sort of scale, because basically this was a failed internet company and they were a penny stock. And sailors recrafted this into a giant Bitcoin holding company by borrowing tens of billions of dollars in cash and buying up Bitcoin. So they own, I think, 2.8% of all the Bitcoin now. But in spite of what looks like a little bitty blip, it has moved from 543 to get to almost 300 today. So pretty big drop. And if Bitcoin does start to really slip lower, then obviously that will bleed right into MicroStrategy. Their average holding price, incidentally, their average purchase price on all that Bitcoin is around $62,000. So it's profitable. They're about a 50% profit right now. But, sink below that and, all you've got is a giant losing position and nothing more. That's all you got to show for it, but it's not there yet. I want to talk about fads real quick because I'm almost out of time. over the past few years, there have been a lot of fads. Like one was a cannabis fad. Here's the weed ETF that's, kind of bombed out. Another one was DNA editing, designer babies, CRISPR technology, all that. Here's Edit, one of the big leaders there. You can see the results. 3D printing, that was a big one. You can see where that's at. And my point being that, these fads all capture the public imagination. It creates huge trading volume, and then they just flame out. The latest one is quantum computing. And so you've got stocks, and I'll just turn the volume on here, which we usually don't clutter up the screen with volume, but just to show how these have gone from stocks nobody cares about to the only thing people care about. So even on a day like this is up. Here's Rigetti computing. Here's quantum computing. And again, take note of the volume. I'm mainly showing this because the volume here is D-Wave Quantum Inc. But the one that I found kind of amusing was this one right here, Quantum SI. Now, just like there are other quantum compatriots, the volume's gone crazy. Look at this. The volume used to be 300,000 shares, 500,000 shares, 100,000 shares, etc. Then what happened? 280 million shares, tens of thousands percent increase, just absolutely bonkers. I can even make it really big like this. You can see what the volume did. And, kind of makes sense. Quantum is a big deal. Everybody's into quantum. There's one problem, though. They don't have anything to do with quantum computing. They make devices for, biology. It's zero. It has much to do with quantum computing as the slope of hope, probably even less. But the magic was that they have the word quantum in their name. That's it. So this goes to show, it's amazing to me that in this age where we have never had easier access to abundant information, this sort of bizarre behavior can take place. So just saying, it was just like, remember Long Island Iced Tea, that company a few years back, and they changed the name to Blockchain or something like that. They just want to hop aboard. So kind of amusing, kind of crazy. Just thought I'd say. Anyway, getting away from quantum for a sec. Gold, GLD, is down a little bit, about 0.25%. And silver is down about 5 times as much percentage-wise. And I've been kind of bearish on precious metals, not directly, but mainly because of the miners. Because I do have some June puts on GDX, and that's doing okay. We're off about 1% on GDX today, and the Head & Shoulders top on that one's banged out pretty nicely, too. One of the top stocks of the past 8 months, Tesla, is down a little, but the Fibonacci's continue to rule the roost here. You can see that was the former lifetime high, and thus far, here and here and here and here, and even today, it's providing support. Very important that support maintain. Since this is obliquely correlated, energy still really pretty. Rounded tops on that one as well. Schlumberger we haven't seen in a while, so just thought I'd share that chart too. So in closing, SMH, the semiconductor ETF, demands vigilance. Keep an eye on that. I think that is key to getting any kind of real selling going. So far, it's pretty kind of held up with NVIDIA at its side. But this reversal top, should it complete, would get things rocking. And should it be escaped, would spoil the party again for the bears. So very, very important to watch SMH. All right, well, tomorrow is the last day of the year and of the program. So I will see you then. Thanks for coming by.
If you missed the live show, here's our cherry on top weekly recap.
Beth got us presents. What is this all about?
This is so nice.
Oh, a little mini fridge. I love it.
Oh, I love it. That. And it's red.
It goes well with my Mr. Coffee here.
She gives you something hot. She gives you something cold.
Tom's is a regift.
What? Man.
Beth wrapped up something that she'd already given you.
No, I think I've given you this before.
I want the refrigerator.
It's for your pistachios.
Pistachio. No, you put your pistachios on top. You stick your nuts in you don't have to take it out. You stick your nuts in the little space, the little hole. Don't
And
use
the
that hole for
shells,
anything
right.
else.
Shells
Use
in there. Yes, to keep it clean.
I love it. Good job, Beth. Good job out of you.
I want the mini fridge.
Aw, you're literally a billionaire. You could buy your own mini fridge.
So if you're in a random store, right? You're at Trader Joe's.
Okay.
Okay.
Trader Joe's.
You're standing on.
Am I holding a cart or am I pushing?
You're
Am I
holding a little
basket. I got a little basket.
Okay, you're at
go
Trader
ahead.
Joe's.
Okay, that's fits me.
Random guy, me.
Yeah.
Standing in front of you. You don't know me.
Stands in front of me. Okay.
Right in front of me. I turn around. You look at me. My fly is open.
Nah.
Do you say anything?
I think so.
It's a serious question.
I think
you don't
so.
Say anything.
I am not clocking men's in the line.
I would say,
do that.
Hey, your fly's open.
I would do that.
I would think it's a trap that he would want me to talk with, like, purposefully. So I'm not going to say anything.
What if he says to you, more importantly, what if I'm the dude in front of you?
Yeah, do
and
not
my fly
engage.
is open, and you say, hey, your fly is open. I go,
thanks.
Do you like that?
I would like.
What do you say next?
Thanks.
I want to go home.
I was a late bloomer. Were you? Too big.
Oh.
Yeah, I was an athlete. I was. Oh
yeah. You're too busy with Aragon and Argon?
Yeah.
In the shower, what's your go-to for soap?
Like a Dove liquid soap.
Thank you.
Unscented.
Thank you. Liquid soap.
Yeah.
These
Hate
two
liquid soap.
These two
Hate it.
guys use a bar. I'm like, what year were you born that you still use? It's disgusting.
Pretty disgusting.
Huh?
I can't stand liquid soap.
So that when you pick it up, there's hair all over the bar, and you're, oh my God, it's disgusting. Like, actually, I got to remember in your bathroom, do you have a pump with liquid soap, or do you have a bar in your bathroom in the first floor?
No. Communal bathroom use the liquid soap.
Yeah, right.
This I have to hear. What's the logic that in a communal bathroom it's liquid, but in your private?
Yes, I agree with Tony.
They're not cleaning their in my powder room. Okay, that's the logic.
Oh my God.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with the last call. Well, what those in the know are calling the bat bottom, even the S&Ps are now only down 56 and change, 59.70 after the bat bottom of around 59.30. NASDAQ down 230, the Russell down 11, and the Dow down 352. Volatility up by 24 cents to 17. I'll round up and say 17.20. Bonds are up 24 ticks to 114 even. Bitcoin back to 95,000, Sadnoff, after trading under 92,000 earlier this morning. Oil hasn't moved much, 61 cents to the green side. Gold, $10 to the downside. And nat gas hasn't moved much off of its highs it was making today. I guess it's off of its 420 number, but 390 up 51 cents is still a big move, 15%. On nat gas. NVIDIA was our leader to the upside most of the day today. It was green. It's up $1.55. It's been a bucker all day long. Sadnov, what say you?
I would guess that I was surprised that we made a low early, but then
when the back called it?
Of course, yes, of course, you're amazing. But once we started to rally and vol started to come down, at one point we had the VIX futures actually down on the day. They're up.
We did, Sadnov. We did have the VIX futures down on the day. You are 100% correct. What is this showing up on my screen here? I apologize. Go ahead.
Yeah. Well, anyway, for us today, it was a pretty good day all in all. Second to last day of the year. I mean, it's going to help us tremendously because the Russell, S&P, NASDAQ was a very good trade today. I took off the Russell NASDAQ today. I left the Russell S&P trade on So that Russell NASDAQ trade was a good one. Russell S&P we still have on. Bonds up 25 ticks today. That's a good one. You know, because I'm setting up for the new year, I rolled my bond position today and put myself into a bunch of at the money short puts and bonds, kept my long positions in there. Japanese yen had a nice rally today. The only thing we got hurt on, two things today. Boeing, we got a little chopped up in there. It was open down about 8. It's only down about 4 right now, or 3. Yeah, about 4. We got a little chopped up in Boeing, and then we had a big loser in.
Did you read more about some more flights that are having problems with landing gear and stuff like that for Boeing? Did you? Was it all the same?
It's pretty much, there was the Air Canada flight, but then there was a near miss in California. There was a weird stuff today in
right,
airlines.
Like the UNLV basketball team or something, right?
I think so. Yeah.
Yeah, I read that too, real quick.
Yeah. Worst stuff for us today was Boeing, but it came back nicely. And then also nat gas by far. There was no way you couldn't really defend nat. If you had a short premium, you couldn't really defend nat gas. But, you know, nice day in the bonds, nice day in yen, nice day in a lot of, you know, short positions. They absolutely demolished premium in Tesla today. I don't know how big your positions are in Tesla or what you're trading in there.
Tesla's one of my biggest positions, and by default, not because I wanted it to be that way. But you are right. Tesla volatility 75 IV rank. It was in the 90s 48 hours ago.
I have a Tesla strangle on today in Feb. Right now I'm in the 525 360, so it's pretty delta neutral. Okay. The put side of this strangle was let me just tell you exactly. The put side of the strangle was lost $1.50, and the call side, because the stock's down $12, and the call side to the strangle made almost $4. So the strangle, which is an out of the money Feb strangle, came in $2.50 today.
Yeah, that's big.
That is a very big move. A $2.50 collapse on a $25, $30 strangle. That's a big move. It came in almost 10%.
Yeah, it's definitely a big move.
Yeah, and that's a big move in Tesla.
Your deltas will change too a little bit. It's got earnings coming January 22nd, Tesla too. Just letting you know.
Yeah, our theta and delta numbers are very small tonight. We're going into the end of the year kind of in a wrap-up mode. Also, they took a lot of premium out of MSTR, and they took a lot of premium out of Coinbase as well. So all of those, on a day that volatility was higher. That's why I'm bringing it up.
Sure. No, I get that.
Huge move.
Coin IV rank is 16 now. Earnings February 20th. You are right. Volatility collapsing in coin.
I did not cover. I may cover my coin position tomorrow if vol gets any cheaper in there. Huge move in the 10-year notes today. I'm not sure if everybody's trading bonds, but they're up 0.5 point. That's a very big move with bonds up just a little less than a point. That's a nice turnaround. And if you're trading, let me just see if there's any other big commodity move. No.
Well, didn't you do something in lean hogs too? Lean hogs are down pretty good, 3%, $2.50 move.
They had a very big turnaround today. They were actually up this morning, but since you mentioned lean hogs, which is LE/LE. I have
HE.
Oh, I'm not in that then.
Oh,
I'm sorry. I'm in
LE is live cattle.
Oh, that's what I have. Live cattle. I apologize.
Got it.
I do not have a lean hogs. I have a live cattle position, which I don't usually trade, but somebody on What's Your Assumption got us involved. So I have a position on in there. And what's interesting is I only did it because I wanted to see how much these things move around, right? And what's funny about it is that I definitely don't like trading it. Like, I won't trade live cattle again. The markets are too wide. I don't think it's a really good trading vehicle. We are Let's see, are we up or down? I can't tell because I don't think this is right. Because it's showing me, no. I don't think that the option chains and live cattle are correct. But whatever it is, it's like pulling teeth in there to adjust your position. So I would recommend not trading live cattle in the future.
Understood.
In the commodity world,
because the markets are no good, right?
Yeah, in the commodity world, we're going to end the year. We're going to end 2024 with positions on in soybeans, wheat, bonds, notes, silver, gold. I made my first official trade today in the in our brand new small exchange future, which we haven't launched to the public yet. But I'm very excited to say that it worked perfectly.
Good.
So within the next couple of weeks, we're in the final stages of beta testing our brand new small exchange product, and very excited about it. We have a stock index that the symbol is /S5C. You can't get it yet. You will be able to very soon. And the nice thing about it is it trades in dollar increments. So
dollar increment. Oh, so each change in price is $1?
Yes.
Very cool.
So it's very straightforward. Cool. It's imagine trading 100 shares of stock. It's just the same way. Each ticket is $1.
That's good. That's good. Easy breezy.
Yeah. So we're excited about it, and it's good news, and everybody is happy that everything worked beautifully. So also on the future side, we're going to let's see. We're going to finish the year with a Russell position, natural gas.
Well, you still got one more day, right?
Yeah. I'm just telling, I'm just going through like how many different futures options we have on, because I think at the end of the year, it's important that people kind of know that, we trade kind of pretty much everything, but we have about 18 different futures on ending the year, which is, I guess, a reasonable amount for us. 18 different futures options.
Yeah, sure.
In the equity option world, this is what I would do with 1 day left to go. I'm cleaning up all the garbage. So like tomorrow, if there's anything I don't like, I'm done. You know what I mean? Like I don't want to take positions I don't like into next year.
Only Tony you're gonna take into next year. That things that you don't like.
I'm taking things that that there are certain things in life you can't get rid of. Like, like you might not like
gum on a shoe.
What?
Like gum on a shoe. It's like, it just sticks there. It just stays there.
Like, one of your kids that may not have panned out the way you thought, or one of your animals that may not have worked out, or something.
Touche.
But you're stuck with them, right?
Yes.
So
I understand.
Yeah. So it's kind of like that. So occasionally you're stuck with stuff, but I don't think there's anything you should keep that you don't have to. I have a few stocks. Like I'm looking at some of my stocks. I'm like, do I really want to take Walgreens into next year? Things like that.
Yeah.
Yeah. Do I really want to take CVS into next year? I'm not 100% sure that I want these stocks around in 2025.
Understood.
I will tell you that I am surprised by the tape action today, because it is very weird that we had 2 days in a row, like Friday and today, where at one point we're down over 100 in the S&Ps, and they can't hold the sell-off and they come back. I find that to be strange. Usually when you get a sell-off with that kind of velocity early in the day, that can amount to something pretty damn ugly.
I said you would. I called it with Scott on the show. I said, Tom, you're going to be annoyed when we're only down 40. And we were down 40 just a moment ago. And you're going to say, you know what? When we're down over 100 like that and we come back, you don't see this all the time. But we've seen it every time this year. Every time.
Yeah, you don't see that. And I don't like that. Hey, do we have, Laura, do we have the... like who's in the running for the Guess the Market? Do we have a picture of how many people are
for the end of the year? Yeah, ooh, look at these guys. Yes. And you want to know something? Hey, these guys, these peeps, these followers, these tasty traders, they're gonna win for 2024. But you can win for 2025 by going to tastylive.com/guest and guess and put in your submissions.
Okay,
Go ahead,
so 59. We're currently at 59.22.
59.25. Let's just round up. That number sounds very familiar. Who said 59.25 at the end of the year? Who said that?
Well, Curtis from Parts Unknown is 59.24.25. And this is the pretty wide range. Tom and Bart are at 5,900, and Michelle from New Jersey and Paul from Rhode Island are right above the market. This is going to be a little bit more.
I'm pulling for Baby in Vegas. That's who I want to win. 58.90 right there. Come on, Baby.
Who do you want? Baby in Vegas.
Right underneath Bart and Mark. I want Baby.
Okay.
Okay.
Well, this is kind of we usually are much tighter than this. But what's so weird is because the market's so outside of
there's more people around that number. But look where we are, though, Tom.
Yeah, I mean, we're at crazy numbers. So there's a lot of people at 6,000, but we're going to be like, well, we're right now. Curtis from Parts Unknown is.
If anybody's going to learn anything from this slide, you might want to be a little bit more like Ryan or some of these other people where you don't have the round number. You go, 6,003. You know what I mean? So you're not splitting it with 6,000 with 17 other people, that kind of thing.
Well, right now it doesn't look like we're
trying to help the peeps in 2025 who are going right now to tastylive.com/guess.
Okay.
So that they can win $1,000 to $2,000.
Okay. Well, what is the expected move for tomorrow?
I will put it up there for you. In SPX, you're looking at around $50, under 50, $47 or so.
For tomorrow, it's $47. That's a lot. Okay.
Yeah, it is a lot.
That means the following people, based on the expected move for tomorrow, are in play: Bill from Rochester, New York; Baby from Vegas; Mark from Raleigh; Bart from Redmond, Washington; Tom from Houston; Curtis from Parts Unknown; Michelle, Paul, Kelly, and Lee from Nashville, and Dan from South Lyons, Michigan. South Lyon, Michigan. Those are probably the 10 people. Oh, maybe it's 10 or 11 people that are in play with the expected move for tomorrow. So we'll have some fun with this. We'll have some fun with this tomorrow afternoon. All right.
Absolutely.
Take this down, guys. Thanks. That's awesome.
$2,000, Saz. Oof.
That's a
lot
nice
of money for you. I know how you give away $20 on Venmo. $2,000. I mean, that's gonna set you back.
That's okay. We are happy to do this. This is the fun. We get to have a little fun. Okay. So all this being said, again, let's talk about today. Anything jump out at you? Yeah, there's the fun little chart. Anything that jumps out, that's why we're nowhere near the middle of that distribution curve. Anything that jumps out specifically in any crazy stock today?
No, I mean, you mentioned Boeing. I tried to mention NVIDIA, which was green when even the S&Ps were down over 100. I thought that was a little peculiar. Volatility, I think, was really the play when I talked about it early this morning, when it started to come off of its highs, and then it really collapsed by about $1, Sadnoff. And even the S&Ps only moved about 10 or 15 handles to the upside. I felt like, the bottom was in, at least the short-term bottom was in for the time being. So For me, I thought it was pretty telling that way. 3 million SPX options trading, relatively small amount today, even with the large move. A decent amount of E-mini S&Ps, 1.33. That's good. That's good volume there, but not too much on the option side. 3 million is on the low end. Usually 3 to 5 million. 5 million being the high end for some content.
Okay. And it looks like S&Ps are, for the second straight day, are going to close about 50 handles off their, a little over 50 handles off their high, which is really weird for 2 straight days.
Yep.
And again, on the good news front, let's just see where we've got anything else that jumps right off the screen at us. And the answer is not really. Bonds are 114 on the nose. That's a nice little rally from Friday. Notes I already mentioned. Bitcoin came back a little bit. It's only basically unchanged. And some of the other commodities came back a little bit. What do you think about, what is the VIX one day right now? Let's take a look.
Go ahead.
Yeah, VIX 1D.
VIX one day is trading 16.5. 1605, sorry.
I kind of think it's a VIX one day trade.
So it's doing something in SPX overnight?
Yes. I think with the VIX one day over 16 and the market kind of closing at a little bit of a dead level, I kind of feel like it's a 16 delta strangle kind of day.
In the quarterlies?
In the one day.
Yeah, which are now the quarterlies, right? December 31st is going to be the quarterlies. It's the end of the quarter.
Oh, yeah.
Oh, my God. I mean, the platform's actually set up that you can't fail. There's a queue next to it says December 31st, 2024 Q. What'd you think the Q stood for?
So I haven't traded a lot of the 0 days, the 1 days in a while. I just sold for tomorrow the 58.70,
59.85.
Yes, for
$11.10.
And it looks like mid price is $11.35 somehow.
When did you become so bad?
I don't know. I thought it looked like a good price when I put it in.
When did you become so bad?
It must just be a bad quote. Because now it's 11.40.
11.40 bid. I can see that.
What the hell?
You know why, Saz? Because nobody's selling this. Volatility's expanding. Everybody can see that going into the quarterly.
I waited till there was like 2 minutes left.
Did you just go through puberty? Jesus, I waited.
Seriously, I waited till there's 2 minutes, 2 friggin' minutes. God, yeah, you're right. I must stink. I thought I was good at this game.
I thought so too.
And let's take a quick look here. MSTR. That's a little bit of a. I'm going to make one minor adjustment in MSTR, and I'll be all done for the day.
MSTR. That's another one that's fallen from grace. I mean, I know Bitcoin's fallen from grace, but I mean, you know, it did have that spike up to what, 600 there? It's 305.
Yeah, I'm just going home flat. Mm-hmm. I find the fills in MSTR, like I mentioned earlier, better than the fills in IBIT.
Them.
So
yeah, you like them.
Yeah.
Mm-hmm.
I'm surprised by that, but I'm not complaining.
Would you like to bring my friend Ilya in? We've got one little Indian. Would you like to see him?
Sure.
Ilya, my friend, welcome to the show. We'll put you right in the middle of us like a pancake. What's up?
How goes it, gentlemen?
We go well. I want to wish you a happy new year if I don't get a chance.
Likewise.
You and yours. Fantastic. Now, get back down to sports. What's going on with the market here?
I think we might have a bottom in the bonds here. I think this could be a thing. This was a spirited move today.
Sadov was hoping 118 would be the bottom on the way down.
Well,
So
hold on,
114
Ilya. I told you the 2, 3. I mean, I'm not a technician, but you have 3 1302, 1303, 1304 lows, 3 consecutive days in a row. You have the same low. And I said this day 1, day 2, and day 3. So now they've had 3 consecutive lows all at the same price. Yeah, that's a nice little triple bottom.
Well, so
you
you don't have
never
to
have
be a
triple
technician here, and you don't have to like technical indicators. The one that I use because it's the third grade level arithmetic, and it's the relative strength index. All it is ratios of closes up to closes down. So all you're looking at basically is momentum. If something is setting lower lows, but its ability to close down relative to up is fading, it just tells you it's slowing down, it's losing steam. It's like third grade addition. And so when you look at that, you see it fading. You see over the past 3, 4, 5 days, it's losing its ability to close down, even as it's kind of touching at these lows. So you see it turning, and you don't always get a momentum shift at a turn, but today you get some real confirmation. This is a big rally on a day when everything else is kind of quiet, and stocks are actually down. So you get this risk-off dynamic that you haven't seen in a while. I think this could be something.
Yeah, I agree. And notes were really super strong today too. So it was across the whole curve. It wasn't just the long end, which is good. Hello, Mr. Radigan. How are you?
Hey, I'm good. How are you? Nice to see you.
Buongiorno.
We're good.
Buongiorno. Tony Battista. Anthony, how are you?
Ciao, bello.
Ciao.
Yes, I'm good.
We're in year-end wrap-up mode, Dylan.
I know exactly. I can show up late. I still know what's happening. Is you and Ilya are stroking each other about the pleasures of the bond market, behaving in the way that you've long desired it to move, and you're taking advantage of the fact it's a holiday week. No one's even here.
Everybody's here. Everybody's here. And we're not exactly stroking ourselves over this thing. We're still down. I got long at 118. Okay, they're 114.
Yeah.
Okay, I'm
not doing good on the first leg of my.
Yeah, right. I'm not exactly like.
I bought some more though.
Yeah, what I bought yesterday worked out great, but what I'm already in, that hasn't worked out. So I need a 116 here to break even.
I know, but still, it's nice to see the bond. Listen, the bond should move. I think it's illogical. I mean, we talked about this a bunch on Thursday, Elliot and I. I mean, not to jump all over your bond conversation, but what's the bond doing? How can rates go this way and bonds go that way? If it's how long can this continue? What's happening here? So it's nice to see something.
Can't keep cutting.
Logical
Bonds keep going lower. Yeah, for sure.
Yeah.
I love when people use the term illogical when it comes to trading.
Listen, how can the Fed cut rates by 100 basis points, and whatever it is, the 10-year, the 30-year goes up 100 basis points? Doesn't make any sense.
The markets are ever forward-looking, and their question for the Fed is, "What have you done for me lately?" Every single time.
I have a new theory. I have a new. You want to hear my Christmas theory? We got a minute left here.
Sure.
I'm thinking both Trump and Biden. Both between now and it's going to be President Vance. It's going to be President Harris in 2 weeks, and then she's going to hand it to President Vance. I'm anticipating all natural causes, but just a karmic sweep.
You could get a lot of money on that. You get a lot of money on that. In case you haven't noticed,
the market is open.
In case you haven't noticed, for some reason, they can keep presidents alive till they're like 100. Okay. Jimmy Carter was in hospice for like 6 years. Okay.
We'll see.
This is true.
We'll see.
Yeah.
Anyway, I'm not going to comment further, but I'm imagining a 10-day President Harris handing off to a President Vance. You'll see.
I'm not even going to touch that with a 10-foot pole.
Let's hope that's not the case.
I am not. Disengage. I am not doing this.
Abort.
Abort. We're going to take a quick 90-second break and come back. We got more Tasty Live after this and more overtime. Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today. Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
And we are back. Once again, the 2 of 3 version of overtime here, but nevertheless, here we are. I'm ESP back from San Francisco. Chris Vecchio from New York is still out there being celebratory. And Dylan Radigan here from an undisclosed location outside New York City. Sir, how goes it?
Very well, very well. Nice to see you. I hope you had a nice holiday, first of 2 holiday weeks. I would say these are some of these days between Christmas Day and New Year's Day, as we all know, are some of the most glorious days available to humankind, at least in the Western world, because they're highly unaccountable. Lots of movies get watched and inappropriate foods get eaten. And so I think there's something to be said for that. And children become generally the primary focus of all activity, all of which I think are lovely, lovely things. So anyway, I'm in a good state of mind. The the stock market, when you like it's sort of the thing, like, listen, we can talk markets. Obviously, we're going to do this for the next hour.
Yes.
If Mr. Citation is not with us because he's still being festive somewhere, as you said.
Mm-hmm.
But to what degree is it? How consequential are any of these price moves at this point in time, considering how few people are engaged?
So I think when we look at what's going on with volumes here, they're not so low as to say this means absolutely nothing. So if we, for example, were to take a look, let's take a look at ES. So it's kind of a weird day in ES, kind of up and down in every which direction, but the actual volumes changing hands here are not all that awful. I mean, we did what, 1.47 million shares today, or contracts rather. That's not terrible. It's not the highest. It's a little bit down from Friday where we did 1.54, but it's kind of in the realm of what average looks like over recent weeks. We did, of course, have a bit of a volume spike back on Fed Day. That was the 18th right here. But generally, at least in sort of S&P 500, at least there, the volumes don't look like they're so light as to think, okay, well, this means nothing. The larger question, I think, may be what are we looking at here? And I've put the volume on here just so we can see sort of in relative terms. There it is. If we sort of think that this confers any kind of directional conviction one way or another, and I'd say no. I mean, we're still kind of within this band where we've sort of been digesting since the Fed. So it's not a terrible amount of contracts changing hands, but does it tell us anything? I mean, we're kind of sitting on the bottom of the choppy post-Fed range. So here was the Fed, we corrected, reset back down to the bottom of this range, and we're still kind of scratching our heads at the same levels. So it does look toppy, but I'm not sure that I've become any more confident in how toppy.
But again, at the end of the last discussion, you were suggesting that the move in the bond market today was not nothing. I'm not saying you weren't suggesting that it's some grand event, but you were, but you and Sosnoff were assigning some consequence to it. Care to elaborate on why that is?
Sure. So I think for me, it's the nature of the price action first and foremost. So if we look at what ZB here looks like, and by the way, when I say light volume and when we get concerned about light volume, here we have light volume. So if we look at what the bond market's been doing here, we notably are sort of at the lower end of average, as it were. So if average is about here, we're certainly light. So not so much in stocks, but certainly here. So
what's the consequential part of the bond market today?
So if we take a look, and I'll take that volume indicator off just so it doesn't get in our way. This right here, this structure, is about as key of a reversal technically and from a price action perspective as you might imagine. So if you want to get cute with candlestick names, what this is a bullish engulfing. So you get a strong day in the direction of whatever the dominating move was, in this case down, and then the following day, not only do you engulf the entire body of this, but you actually come back over. So you completely erase this day. You open lower and then fully erase it. as if to say there is no conviction in that move. That move is capitulation. And that's just reading the price action. This is not an indicator. This is not some like magical formula. The great thing about candlesticks is all they do is they allow you to visualize the price action in a convenient way and to kind of start to surmise what the emotional response of markets is that would give you that. So when you get a swing like this versus you get a swing like that, which is not that much of a smaller move, but as we can see, there's no conviction. We get this low, but then ultimately close very little changed. Those kinds of internal dynamics give you a sense of just how confident the market is in a given thing. How committed is the price action to going in a direction of some kind. And so here we have a very convincing reversal. And if we zoom in here, what we find is there is a kind of range that develops here at the bottom. The top of that range is actually taken out on today's move. So not only do we set this very convincing candle, we also seem to start to break away from whatever this congestion is. And then on top of all that, we can see, I was mentioning before on last call, we have this kind of a thing happening in the relative strength index. And it really doesn't matter which oscillating index you use here of relative strength. Chris uses some more complicated ones. I use this one because it's built on basically third grade arithmetic. It's just a ratio of closes up to closes down and gives you an average that tells you, okay, something might be setting lower lows, but losing its ability to close down relative to up. It's telling you it's losing steam. And so that's what you see here. You're setting lower lows, but you're losing steam. You're not setting those lower lows on the indicator. And so here, there's a lot of things going on here now, just technically saying lower lows and the candlestick and the divergence and the turn through this range top. This looks very bottomish.
Yeah. I mean, obviously, it's sort of self-evident in that regard. And then despite Sosnoff's snide remark, it is illogical for the bond yields and prices relative to the Federal Reserve to do what they're doing in perpetuity. And so I just think that further validates the idea that maybe the best trade going into the new year is some version of a long bond position. Obviously, the TLT outright, the TLT with a call spread.
That's what I put on today.
A TLT.
So I added some. I just put on the call. I just bought a call.
Open calls on the TLT.
Yeah, I just bought a TLT call. Now, in fairness, if we look at where TLT is currently, so I bought the 88 call here. The previous one I bought was the 93 call here. There. So I've been sucking wind on this for a while.
Sure.
But thankfully, it was a very cheap call. And this one is a little bit more expensive, but not that much more so. And so what you end up doing is, I mean, yes, the call is at max loss. I'm probably going to let it expire worthless, but because it's such a small stab at it, it ends up being a loss of something like less than 1% of equity.
Sure.
In which case, well, so it goes. This is sort of part of my theory of taking small stabs into things that might be bottoming and saying, okay, where is the bottom? And here you can see why one would want to start looking for a bottom in here somewhere. So once it came down, so that's one level, that's another, and something seems to be occurring now here. So my attempt started here. It obviously didn't work. But so it goes. And if this one does, then the idea is the upside is asymmetrically large relative to the risk.
Is there a reason why an open call as opposed to just because the absence of what's the implied volatility 39? That doesn't give you any incentive to do something else.
It's pretty low, relatively speaking. And I suppose you could look to sell puts here, but if you did, let's just see what that would look like here. So if you just wanted to go out right, and let's say you do a vertical here, something like this, and maybe you're looking for, let's say, a move back to 93. It's not the worst. It's not the worst. So it could be something, but there's just not a lot of vol here. And my sense is that because these are bonds, vol should go up on the way up. And so
so that basically long bonds, long vol in a call is a reasonable position.
Yeah, I think this, if you're expecting risk aversion, and if you're expecting for basically the market's Fed calculus to kind of go in for a rethink, let's say, and the market goes, yeah, okay, the Fed was definitely too dovish in September. They admitted it on further inspection, obviously, because the markets wanted the Fed to be really dovish in September, and then they were. And then everybody's data outlook changed because the data changed. And very quickly, the market looked at it and said, okay, this is reflationary. You're not going to be able to be this dovish. You overshot. We overshot. Let's rethink this. And for 2.5 months, bonds went down, yields went up, the dollar went up, and everything readjusted. So when the market went into December, they wanted the Fed to be more hawkish. And again, this sort of judo move from the Fed goes, okay, and they lean in, and they give them hawkish. And now all of a sudden the data is turning the other way, and the market is going, wait, they gave us again what we wanted, but now maybe the economy isn't quite where we thought. It's certainly hotter than it would have been were they to stick with September's forecast, but maybe we've gone a little far to sort of rethink all of this. And it would make sense then that there would be not only a response from the bond higher because of the Fed calculus, but also why that response. Because the economy is not as hot, because the outlook on earnings maybe is not so great. So we've seen stocks come down, and we've seen bonds come up today. I think that's the other real interesting part of today's thing. This is not a stock market, looking at S&P here again, that says, oh, goody, bonds are up, so yields are down, so we're going to get cheaper money. And we should celebrate that. That's not what this market is doing. It's down, as if to say, uh-oh, this is a growth concern. The economy is not maybe going to be as hot as we thought next year. And maybe that's an earnings thing as much as it is a bonds thing. And so then you would expect vol to expand on the way up for bonds, because this would be some sort of like a holy moly, this is not good kind of a dynamic. And so if that's what this is shaping up to be, I think just buying the call. And whether you want to do it in the bonds themselves, I mean, obviously, you could do verticals in ZB, but That's a little large of a contract for me.
Especially when you have so many other ways where you can, if you want to get big, you can do it.
Yeah. Yeah. I mean, the other kind of way to do this, if you didn't want to go so huge and you wanted essentially a version of this, but with smaller kind of upfront outlay, would be to do it in currencies. And the euro is basically this same move. So you're starting to see kind of signs of starting to bottom here. It's not as convincing as it is in the bonds, but obviously this decline in the euro and rally in the dollar is exactly the same, a reflection of exactly the same sentiment from mid-September onward as is the move in the bonds. It's this idea that, okay, no, you're going to reflate the economy. You're overcorrecting, way too dovish. Go back. And so this is a stronger dollar. If we now start to correct the other way to higher bonds, lower yields, this should come up. And the margins on this, I mean, if you look at just outright buying the micro contract here, I mean, the margins here are relatively low just to buy the future outright.
Do you prefer that to the FXE in terms of being long the euro?
Oh, yes. Yes.
Just because of liquidity?
Because it's available overnight. You can trade this after the U.S. close, because this is not a stock, it's a future, and they moved 23 hours a day. So if something happens overnight in Europe and there's some kind of a bananas response, you could open your platform and get in and get out, and there's liquidity. And of course, you're subject to European event risk. So if something happens while U.S. markets are closed because some data comes out of Europe that influences this, or somebody says something, the ECB does something, you have liquidity and you have access. You also have relatively low margins on micro FX futures. So the capital outlay is very capital efficient. So I just usually do this unless I'm doing spot. And of course there's Tasty FX and you can do spot there.
The S&P is up 23% for the year.
Yeah.
This will be our last conversation this year.
Big year.
Basically, I don't recall anybody, and I think there's a Bloomberg story that no one expected a 23% up move in the S&P this year.
No. Myself included.
I don't know anybody that was like, this thing's going to go up another 20-odd% this year.
Except maybe Vecchio.
Except maybe Vecchio. To what degree does that make? I mean, I guess it's one of those things where it's an unanswerable question. So I'm trying to answer it in a way that you have a chance to give it an answer. But does this year's incredible up performance make the probability of a good 2025 higher, lower, or is it irrelevant?
In my mind, it is irrelevant.
So there's just as much of a chance it goes up 23% again.
I don't think there's as much of a chance, but that's my kind of bias. I think it is much likelier in my mind that we get a smaller rise or even a decline. I don't know if we get a decline for the whole year, but it's in my mind likelier that the next leg is lower, but my thinking has been that for a while. And so you have to, I think, look at that and say, well, that kind of an idea has been wrong for a long time. And so, and I can think of exactly why it's been wrong, and the kind of uniqueness of this cycle. We've talked about the idea that this tightening cycle is different from every single other one since 1972 because interest rates on U.S. corporates did not go up in a way that would make them pay more for credit the year after the aggressive rate hike cycle. So 2023 and 2024 did not have the kind of transmission of higher rates to U.S. economic activity that every single other tightening cycle since 1972 has done. And I think that's in large part why everybody was calling for recession and saying, well, this has happened every other time, but this time it didn't.
Mm-hmm.
And it's the weirdness of COVID and everything like that that's
making things
the
even
issue.
more frustrating for anybody who's not just an open-faced bull. 2023 was also one of the best years in the history of the stock market, and
Yes.
it's one of the best 24-month periods for the U.S. stock market ever.
That's right.
Do you
That's
think
right.
putting together two of the best back-to-back years in the history of the stock market increases the probability or decreases the probability of an underperformance in 2025?
In my mind, the likelihood that we have another year like that is low relative to something more modest.
Furthermore, whether it's the FANG or the Mag 7 or whatever, I'm going to say the 10 highest performing stocks in the S&P 500 account for 2/3 of the gains.
Yes.
So it's also a nifty 50. There's all this sort of concentration narrative throwback from this time and that time in the late 90s and the 1960s and whatever. I guess what I'm getting at is, does a macro short position in the S&P 500 going into short stocks, long bonds, short dollar,
that's in fact
long
what I have
euro,
on
as a first quarter position as a macro position?
That is in fact what I have on. So, I mean, I think so. I think yes. But again, I want to caution that by saying I've thought that for some time. But I think the architecture of what's made me bearish and what's made a lot of people bearish coming out of the tightening cycle, I think that has a chance to sort of normalize to some semblance of reality this year, because a lot of those loans that people took out during the COVID years, a lot of that hoarded cash, it resets in large numbers this year or this coming year, almost this year. We're but 2 days away.
Sure.
And in 2026. So the way forward is a way of adjusting to a lot of this stuff. We've also just had the yield curve uninvert by a significant amount. And of course, that's how we generally would look at it and say the bond market is starting to see some sort of economic down move ahead. The yield curve is uninverted rapidly. And so you look at all of this and you say, okay, if the bill on the credit finally comes due, then really what's coming next isn't some more gamesmanship around how the Fed will lend the economy. It's the downturn that everybody's been waiting for. And with all of this delay, it finally arrives. And that's just a straightforward bonds higher, stocks lower kind of world.
And if it's bonds higher, stocks lower, does it then stand to reason, rather than S&P, short S&P or even short NASDAQ, to actually go to the like, if you, I guess let me ask you before I get to the final question. Is it possible for stocks to go lower and the Mag 7, FANG, Big 10, whatever you want to call them? Is it possible for the big names, the concentrated super names, to continue, or in other words, do they have to go down for the market to go down?
I think they have to go down for the market to really go down. I think the market is going to have because there's such heavy pieces of what's going on.
Yeah.
And I think if you look at, one way you can sort of get a sense for how this behaves is if you looked at the NASDAQ, let's call it Russell, and get a sense of it that way. So if we were to look at a ratio of these two, I don't think anybody would accuse the Russell of being terribly sensitive to Mag 7 performance. Obviously, we can see here it is possible, certainly, for outperformance to exist here and for periods of underperformance to exist here. So we can see instances where, for example, NASDAQ is doing poorly relative to Russell, or NASDAQ is outperforming relative to Russell. So early in a business cycle turn, sure, I think it's totally within the realm of possibility that you might have, let's say, a period where everybody says, okay, well, it's going to be a growth scare, but it's not going to hit these big AI names because that's not what they're all about. They're about the super glide and the magical future that awaits us all in the great AI-powered utopia of efficiency and productivity and earnings expansion. So you could see that. But if you're going to have a real sell-off, if people are going to start to sell things that aren't nailed down because finally the cost of credit starts to roll over and there starts to be a premium on cash, could be a different story altogether, because if the stock market then starts going down as a whole, then what you're looking at is something that's more correlations go to one, everything goes down at the same time kind of an environment. And if you look at what's been going on... Right now,
you're short S&Ps and long with the 10-year? You're long the 30-year. The TLT is a 30-year proxy?
It's a 20-year
20
plus.
20-year, okay.
It's a 20-year
But it's a long-end proxy, and you're short the S&P. Would you have any inclination to concentrate into short NASDAQ, for instance?
No. So what I did here, and we'll go back to ES, and let's go back to a daily chart. What I did here was I started to put on SPY verticals right here. Because it looked like, and we'll go to SPY itself. Why don't we just keep things easy? So SPY started to form this little range here. And for me, this started to look like it was topping out. By the way, here's that same divergence on RSI that we were looking at, just upside down. We're setting higher highs, but momentum is fading. Same thing that's happening in the bonds, but it's setting lows, and that's not matching the lows on the indicator. For example, sort of like we might see here. So you look at this, and for me, I was looking at this doing nothing for almost a month and saying, I'll take a shot. It's low risk. As long as it stays under this, I'm okay. But if I'm wrong by a little. If it gets up here, I'm out. And it rolled over. And once it came back to retest this underside, it's now moved back down again. So I have a vertical on from here. And then the other thing that I have on is the Russell, and I have it on via IWM, again, a put vertical. Same kind of a range break up here. So I've been holding this one for a while. That's my short exposure. And then on the long side,
and the logic on that is you don't know what you don't know, so why bother getting more like it's basically the most generalized way to be short. And you're
right.
And
if you look at NASDAQ here, exactly. And if you look at NASDAQ here, it hasn't made the same move.
Mm-hmm.
The NASDAQ here, sort of to the point, can NASDAQ hold up and can the Mag 7 hold up? At least early in the game, it seems the answer is yes. Because what you see here is you're holding basically at former resistance, now support. So whatever was holding you up right here, you're still holding. Now, if we got into here, yeah, I'm short. But not yet.
Right, but that's one of those ones where you wait for the confirmation. I guess I'm more interested in if I'm writing the year-end stock market story for the Wall Street Journal tomorrow.
Right.
My headline is U.S. stock market completes 2 of the best years in its history.
Yes.
Driven by
great.
Right. Yeah. It's a great, that'll sell papers, driven by concentrated performance of technology names.
Yes.
Like NVIDIA, Tesla, we all know the list.
Mm-hmm.
The logical thing, now Sosnoff is going to throw me off a bridge if I keep using that word, but the logical thing is there's no way that the S&P 500, which is up 23% this year and up 23% the year before, can be up again in any meaningful way this year.
I think that's the best. I think the best thing in the world
as a macro trader, right,
is going to be to look at all these headlines, to see everybody screaming, "Whoa, the stock market is so amazingly strong."
Sorry for the camera there, yeah.
And to look at that and be validated in your bearishness and say, "Oh, great. The market is heavily skewed in a way where everybody isn't on this side," which is exactly then the side that I want to be on. And if you did that from 2023 to 2024, you'd better have done what I did, which is you stayed really small because you were wrong a lot.
Wrong a lot.
A lot.
But what I'm thinking is like the contrarian. That's why it'll be fun to have Vecchio next week, because the contrarian thing would be to get big long in 2025.
Yes.
Like because I'm sure the consensus is, like, if I come back to my Wall Street Journal headline, U.S. stock market completes 2 of the best years in its history, driven by a concentration of technology names delivering unprecedented gains. Right. That's your lead.
Yes.
And so everybody's going to read that and say, well, of course, I don't know what's going to happen, but there's no way it's going up again like this. Can't do 3 years in a row. No one at Morgan Stanley thinks that. No one at Goldman Sachs thinks that. No one at BlackRock, Blackstone, Tasty Trade, Schwab. No one thinks that.
Sure.
So the contrarian position suddenly becomes long stocks. Which, by the way, I'm sure Vecchio is, because he's nuts. But it's working.
That's right. I'm confident that Vecchio has not touched anything, and he is going to hold this until it stops working. And I don't think he's wrong.
But you refuse to participate, and as do I. I'm over here fiddling around with my oil position. I was on the wrong side of the stock market every time I even looked at it. Yes. I was lucky that I had a handle on oil to even have a year worth of damn in terms of anything. And I was lucky that when I did noodle with the stock market, it was little. But the obvious thing was to own stocks, whether it was directly, indirectly, derivatives, passive, active, futures, whatever you want to do. And the conventional thinking has got to be for 2025. There is no way there will be gains like this again in 2025. And the attempting trade is some version of short stocks, long bonds, as you are. I'm not, but I'm certainly likely to put on a long bond position. In that, I like your TLT call at 88, for instance.
Yeah,
that'll probably happen before Friday.
Yeah, I mean, as I look at sort of measures of investors' sentiment, and the American Association of Individual Investors, AAII, is a good kind of standby. People have looked at it for a while. It's not sort of screaming at you one way or another, but it does tell you that people are pretty bullish at this point. So, very few are bearish. The handoff seems to be kind of most recently, as of let's call it the beginning of this month. People have become a little bit less bullish, and a lot of that sentiment has gone neutral rather than bearish. And so there's a number of reasons to think that the sentiment is not terribly extreme, but also there's a great article in The Economist last week that showed that according to the conference board, which does a consumer confidence index, the number of respondents expecting stocks to go up next year, record high, never been this high. So we look at this as people that have been watching markets for a long time and say 2 years of 20+% gains, like 24%, 25% on back-to-back years. You think we're going to get a third? This looks weird. But sentiment-wise, in the zeitgeist, apparently people are the most bullish they've ever been, approaching 60% of survey respondents thinking stocks are going higher next year. And while the allocation to equities, if we look at JP Morgan data, is only about as heavy-handed, close to 50%, as it was back in sort of 06, 07, which, by the way, that preceded a crash. But the allocation to cash is the smallest on record going back to 30 years ago.
Mm-hmm.
Therefore, everybody is uber bullish. Mm-hmm. And so maybe I think the obvious contrarian thing is to think that there is a top here, but maybe it's not obvious because maybe after a year of getting kicked in the skull, those of us that thought that we're onto something at the start of last year have capitulated, and I'm just stubborn.
Mm-hmm.
At least I hope that's what it is.
Yeah. I mean, why not go into some of the super names and express some skepticism?
Well, I don't think that that's necessarily a bad idea. It's not sort of what lines up with my kind of general macro disposition. But there is some interesting price action here. I mean, you want to look for diverging momentum. In Apple, it's screaming, and you've just broken past the former swing high, which suggests that even just today, you might have a key reversal in place in Apple.
Mm-hmm.
In Tesla, you're starting to roll over, but you're still kind of holding the bottom of this range, so maybe not here. In Microsoft, kind of in the middle of the range here, but it looks bearish, but it's a bit choppy here. There's a lot of fuzz in here, so who knows what kind of sideways action you might see here. Alphabet, I would say not yet.
Mm-hmm.
It seems to be holding here for now, and you'd want this to kind of give way in a more material sense. NVIDIA, again, you're kind of in this chop in here. Mm-hmm. Although on a longer term basis, this is your line in the sand in NVIDIA. 133. If you take out this right here, you've got a top in NVIDIA. Is what I would think.
But again, getting involved with the super names before they break down is a fool's errand for obvious reasons.
Yes. Oh, yes. I mean, it is already a fool's errand, and a fool's errand I am running, to try to short a market that fundamentally doesn't like going down. Stocks are biased higher because there's so many huge institutional investors that never sell.
Mm-hmm.
And so they're just structurally biased higher. In commodities and currencies, it's two-way action. When the winds change, the market moves. And that doesn't mean like every day, every second. You can look at it in quarterly terms, in weekly terms, in monthly terms, and say, well, the macro cycle takes XYZ quarters to do, so the dollar will have a trend against the euro for this long or that long. But it's a two-way market. Gold, crude oil, these are two-way markets, usually.
Mm-hmm.
But stocks are not. They're biased higher. And so it's already a fool's errand to want to fight it, but sometimes it goes through significant, let us say, distributions.
Mm-hmm.
And that's what I'm waiting for and looking for here. I mean, I think, let's see, beyond NVIDIA.
I mean, and the only reason I'm even suggesting it is just because of the newspaper headline of the best performing stock market of all time. If your first step is this can't possibly continue, your second step is if it can't possibly continue, the reason it can't possibly continue is because these concentrated names have to break down at some point.
Right. Yeah, and that's, by the way, that's not because the promise of AI will have been a false dawn. It is just because markets get overstretched, they get overhyped, and they start to think that gravity doesn't work anymore. But it does. Mm-hmm. And we've seen this with the dot-com crash, obviously not derailing the great and powerful future of the internet. We've obviously seen that the crash in railroads at the turn of the century did not derail the connecting of the continental U.S. and the building out of railroads and the Industrial Revolution. Obviously, that's not what we're saying. We're not saying that the great techno-utopia necessarily isn't coming. What we're saying is we've seen a lot of hype, and now the reality has to catch up.
Mm-hmm.
And so even if you wanted, so Apple, I think, is probably the one where there is something that actually looks like a move that's live. And you can kind of see, by the way, where the breakdown is here on the 8-hour chart. So if you thought, okay, I'm going to take a stab at maybe seeing it come back to the top of this range here. So let's call it something like that here.
Mm-hmm.
So really all you're looking to say is just take me back here. And this is what, 236? So if we wanted to do this the simple way and say we're just going to go long a put vertical and we're going to take it out, let's say here. That's not bad risk reward. I mean, that's pretty solid. That's better than 2-to-1. Now, of course, markets are closed, and we need to get a live price on this tomorrow. But that's not a bad setup. It's not at all kind of weird as far as what you're asking of the market. You're not asking a lot. I suppose if you wanted to pull it in, you could look even a little bit better, but then you're giving yourself less time. But this is not a bad risk-reward setup.
Mm-hmm.
And so I think if you wanted to express something there, if you wanted to go by the names, you would just go down and say, okay, where has the move materialized? Where is there something that's actionable? I think in Apple, maybe you have something now.
Do they matter to each other, do you think? I mean, do you think if Apple's weak, it implies that another, because Apple sort of famously very sort of a very hardware heavy, obviously, very sort of, closed, walled garden, one of the ultimate walled gardens in terms of a closed ecosystem. Like, does Apple's performance indicate anything outside of Apple?
I think if you look at something like Apple versus something like, let's say, an NVIDIA or a Meta or a Google, I think when you look at Apple, you get a hardware piece that's a consumer hardware piece. With NVIDIA, there's obviously a huge hardware piece in NVIDIA. In fact, most of it is the hardware, but it's data centers, it's corporate clients. It's a different set of folks. And with something like Alphabet, Meta, there's no hardware. All of it is software, and that's the kind of stuff you generally have available for free. Like, yeah, you could pay Google extra for all of its many subscription options or other things it sells, but you don't have to. You could be a user of Google stuff and pay nothing. You could be a user of Instagram and WhatsApp and pay nothing. And so I think when you look at something like an Apple, given its kind of consumer and retail flavor, maybe you get some of the cyclicality that you don't get elsewhere. And on a day like today, when you see stocks down and bonds up and you go, maybe the great and powerful recession is finally coming next year, it'd be Apple that you'd think would lead the way, because you'd think it would be those things sensitive to discretionary spending for consumers. That would be the worrying part first. Because if there's a turn in the business cycle, then the first thing consumers are going to think about doing is not buying a new, really expensive phone. So maybe that you could make the argument, let's say, that Apple suffers in a recessionary fear environment before a Meta or a Google does. For those reasons. And of course,
that makes sense.
You could be a simpleton then and say, well, aren't you just rationalizing the price action? Of course I am. That's the point. You have to start with the price action. You have to let the market tell you first. And the only one, as we've just looked around, let's take a look at Meta here while we're at it. But the only one that's really made the move that we've seen so far has been Apple. Meta made an earlier move, but now it's sort of back inside this range. And so it's, again, not, I would say, at the previous level it bounced, an attractive sell. So you look at all of these things, and only Apple looks like it's an attractive, kind of actionable sell right now. And then you back away from that and say, well, why on a day like today when stocks are down and bonds are up, is Apple the one with the move? And one way of thinking about it is this is a cyclical concern.
But I guess what I'm thinking as you speak is, well, then is that an indication across? Is that why the luxury retailers are having a lousy overall? We're like, is Apple really a luxury good?
I would think so.
And is that why Louis Vuitton is lousy, or Gucci, or, all these luxury brands are sort of putting up relatively lousy numbers and certainly relatively lousy demand? And then if that's what's happening, is that an indication of anything other than its own self? In other words, is it an indication of retail generally? Is it an indication of, cyclical slowdown to come in the first half?
Well, I mean, let's take a look at XLY here, right? This is the spider sector, a consumer discretionary. It's down 1.6% today and is easily the weakest sector on the day. So, stocks are down today. Energy is up a little, a hair. But the big losers today all look cyclical-ish, and consumer discretionary is first among them. It is the biggest losing sector for the S&P 500 today. After that comes materials, again, another kind of business cycle sort of referendum, down 1.2% almost. And then technology is down today, but it's only down about 1%, and consumer staples down about 1%. So it makes you think, in seeing that consumer discretionary is the weakest, that there's something to this whole why is Apple down and the others aren't as much kind of a thing.
And if there's a discretionary or cyclical slowdown, is that a leading indicator of, is that a good, or maybe instead of short stocks, you should be short the XLY in long bonds, for instance?
Not a bad idea. I mean, when you look here, I think what you see is maybe the start of something, but you're just holding right here. So you're just on the cusp of what a turn would look like. So if you wanted to say, okay, right there is where we held, and this was the prior low from whence we bounced. So if you closed under here, you'd have your confirmation, and then you'd look, let's say, down here conservatively. Or here, if you wanted to be more aggressive. If you wanted to, let's say, price up a put from here, let's say down to 212 or something
going
like
into
this.
I like short XLY and long TLT, for instance.
Let's say we go to our 53-day, and yeah, I mean, we're looking for something very modest here. So again, great reward. Excellent risk reward on a fairly large swing, actually. And so obviously you have to get a look again at the liquidity when you come back at the open tomorrow, but there's but a hair's worth of confirmation until you get to something that's very attractive here.
All right. Well, with that, I'm going to wish you a happy New Year. It's been nice to work with you this year, Ilya. I'm sure
likewise.
If Vecchio was here, he would be telling us to buy stocks.
Of course he would.
He probably is right, but anyway.
He probably is right.
Anyway.
Maybe,
but I will see
maybe
you
after 2 years
year,
of Vecchio saying this, maybe he's due for a reversal.
We'll find out.
And that, folks, is our last overtime for the year 2024. We'll be back with you Thursday next year for the first show of 2025. Have a great and safe holiday. Be merry, but without consequences. And we will see you on Thursday to recap.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that. Having trouble understanding what your trader buddies are saying? Here's what it means when they say catch a bid. The term catch a bid is in reference to the stock's price action. The bid price is the price at which you can sell a stock at. When a stock continues to go down, so do bids, meaning the price at which you'd be selling the stock is continuing to go much lower. If you miss it, you can't catch a bid.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
At tastylive, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The tastylive research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it. Join the club, genius.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
The last really big day of liquidity for 2024, and the bond market seems to make a play for a reversal. What does that mean? And what could we expect from here as the calendar turns to 2025? That's what we're going to concern ourselves with as we discuss what happened and how things are lining up for the rest of the week here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And what we are going to have a look at here is, first off, how last week's holiday aborted week worked out, and then take a look at what we're seeing setting up here for the rest of this week, and put a little context around what could be the catalyst for the turn that's starting to emerge and that we're getting a bit of a flavor for in the bond market after today's session. So here's how the markets did last week. And obviously, there was a big holiday closure for most major markets in the middle there. The Christmas holiday had markets offline for most of the world's major bourses. And then outside of the U.S., there was the extra closure for Boxing Day. So things were very light in terms of the amount of just hours of trading even that went into the results that we're seeing on the screen. But as we can see, the S&P 500 managing a slight uptick, giving stocks a little bit of a respite after the prior week's sell-off. Same thing for the NASDAQ. It's up fractionally. Doesn't obviously claw away its prior week's losses, but manages to steady a little bit last week. The upswell in yields continues. Another week higher for the 10-year, up 2.2%, and for the 2-year, although there things are very modest, just a 0.3% gain this time. Crude oil continues to march to the beat of its own drum. It's at this point stuck in a digestion range for quite some time. Crude oil hasn't really left the sort of 72.50, 66.50 range since essentially the middle of October. And all we really did last week was notch back up toward the top of that range. So not a whole lot going on there, but the story in yields, as it has been spilling over into precious metals and the dollar. Gold again down, this time 0.5%, and the dollar up against its major counterparts, both the yen and the euro lower. And what we see in Bitcoin is a little bit more modest of a sell-off, but nevertheless a leg down. And what we find here is really just continuation for the most part, at least as far as bonds and the dollar and gold goes, of dynamics that we've seen for some time, and really going all the way back to the shift in expectations that we saw for Federal Reserve monetary policy starting in September, and the various kind of reflections of what that has been across markets. That, of course, sets us up in a very interesting way for what comes next and what the bond market might be telling us as of today. So let's unpack this a little. This is what we've seen from the market's expectations for Fed monetary policy for this coming year. And we can very clearly see how it has evolved. Here is September's Fed meeting. This is where the Fed comes out and says that they're finally starting their rate cut cycle, and they actually start to deliver on it. They, of course, began talking up the incoming rate cut as recently as July. But what we have here is when that actual cut starts to occur. And so we can see here in September, the markets are much more dovish about where monetary policy is going than they ultimately end up already by November. See here in the big dashed line here, here's November. And in that period of time, we can see there's been a significant shift. To put this in some perspective here, what we have when we look at the sort of end of the cycle, that last point on the September line. When we look at where that ends up, it's 2.78%, whereas where we are now is 3.9. So we are about 112 basis points, or 1% and some change, less dovish at our current setting than we were in September, in terms of where rates are going to end up by the end of next year. And we can see that already by November, the shift was made. We got a little bit more hawkish into the Fed meeting in December, only just a bit. And we've since sort of moderated a little bit. But we can see here from November, all of this has been very clustered, and major changes haven't really occurred. So really the last time that there was a major shift in the Fed view here was back in early November. And between mid-September and early November, this massive revaluing of what the Fed is likely to do occurs. Why does that occur? Here's what the Fed says in September. Mind you, the baseline is rates at 5.3, 5.4%. That's the median of the Fed's target range of 5.5 and 5.25, from which they're counting these numbers. So they're saying that in June, they thought we were going to go down from 5.4 to 5.1. That's one rate cut. In September, they say it's going to be 4 rate cuts. So from 5.4 to 4.4. And they deliver half of them. So 50 basis points up front. They then forecast that they're going to do another 100 basis points next year, from 4.4 to 5.4. That's another 1% decline. So 1% down on rates in 2024, 1% down in 2025, and the 2024 tally, they give us in half of it in one shot in September. But by the time they give us this very dovish outlook, we can see what's already occurring with U.S. economic data, not in absolute terms, because that's less relevant to near-term speculation, but in relative terms. Because what gets markets to move isn't data being good or bad necessarily. It's, is the data as good as expected, better or worse, as bad as expected, worse or better? Because markets at any given moment reflect what is the baseline outlook, give or take. Volatility occurs when markets get something that doesn't line up with the baseline view, and then assets have to change hands in order for portfolios to rebalance to what is the new reality. And so what we have here is, by the time the Fed comes out with this ultra dovish outlook in September, the U.S. economy has started to turn, at least in relative terms. And so this U.S. Economic Surprise Index from Citigroup is already starting to turn up. We've talked before about when this thing convincingly moves through its 20-day moving average, it suggests that the data cycle is turning. And that's not because the 20-day moving average is magical or has some sort of mystical technical powers. No, we're certainly not doing technical analysis on economic indicator or this kind of index. That's not how technical analysis is used, really. You really want to have actual tradable volume behind an instrument that you then do technical analysis on. Only then is it really that meaningful. No, instead what we're saying here is this is a daily index that's published every trading day, so about 5 a week. So 20 days is about a month's worth. And then we consider this is relative to expectations. So as analysts that are looking at economic data say, you know what? The data keeps outperforming relative to our forecasts or underperforming relative to our forecasts. Maybe our forecasts are wrong. Maybe we need to retune our models. And since most economic data is on about a month-long cycle, some is quarterly like GDP, some is weekly like jobless claims, but most economic data comes out once a month. Once you get through the approximately 1 month average of what the trend is, you get the sense that maybe these analysts are starting to turn the dials, that they've seen enough data over the course of a month-long cycle plus to say, we need to adjust our expectations. So when you get a prolonged period like we see here of data underperforming relative to forecasts, 0 would be squarely on forecast. And incidentally, after you get that long slide into underperformance from mid-April going into the second half, this is where the market starts wanting the Fed to be dovish. But of course, once the Fed actually delivers the dovishness that the markets want, by then, the ship has already turned. Things are already starting to correct the other way. So what happens here? This is the market, by the way, since mid-April wanting the Fed to be dovish. There it is. Inflation expectations, so-called break-even rates, baked into the bond market going into September's move are trending down. Bond yields, both the 2 and 10-year, are trending down. The dollar is trending down. That is to say, the markets want lower interest rates from the Fed, and they're expecting that the economic cycle cooling will compel them. That's this right here. But by the time the Fed makes good, things are already turning. And we're through the 20-day moving average, and we're starting to find our way higher, suggesting now the data is going to start improving relative to forecasts, and there it keeps going. As it tends to, again, when the 20-day moving average is crossed in a lasting way. So, what do we end up with? As soon as the Fed makes this announcement, the market goes, well, since the economy is improving when you've given us this, again, in relative terms, now that you've given us this dovish forecast, you're going to have to walk it back because actually we don't need that many rate cuts. And so inflation expectations are going higher because we think that the dovish Fed and a chipper economy is going to end up with more inflation. The dollar comes up because all of this implies the Fed does fewer rate cuts because yields are going higher. So all of this is telling us, we're doing the opposite of whatever this was, because now the Fed has given us exactly what we thought we wanted here, but by here, we don't want it anymore. Because by early September, this is already occurring. So, once all of this occurs, and once the market gives the Fed this signaling, what happens in December? Well, by then, the Fed delivers for 2024. It gave us that 50 basis points up front in September, gave us another 25 basis points for 75 total in November. And then in December, it finishes. But then for next year, notice, the outlook is much more modest. No longer are we looking for 100 basis points. We're looking for 50. We're looking for half. And notice, what was supposed to be the year-end rate next year now has been pushed forward to be the year-end rate in 2026. Now we're looking at only 50 basis points here and another 50 basis points here. So this whole change has been extended out by a year and made more gradual, made to arrive slower. As for the markets, they're even less dovish than the Fed. Here's, by the way, that shift from September in expectations for next year and for 2026. And we can see now we're barely looking for 2 cuts over the entire 2 years. The Fed, incidentally, is looking for 100, right, from 4.4 to 3.4 over the next 2 years. The market is only at 58 basis points. And for next year, they're lighter than the 2 cuts that the Fed has, only 44 basis points. So the market has shifted to quite the hawkish setting. They are more hawkish than the Fed's own forecast here. And this, naturally, raises an important question. Because what we then have to contend with as we consider next steps is where we are in the cycle now. Now, to be sure, the U.S. economy is looking very strong, so that there was an adjustment from the Fed's more dovish disposition in September. That certainly makes sense, and the markets didn't go on a 2-month readjustment for no reason. Clearly, the U.S. economy is performing very strongly. We can see here from the latest PMI numbers that a booming service sector is powering the U.S. economy in a very robust way. We're looking at the strongest growth we'd seen since sort of the early stages of this cool down from the COVID catch-up. You can see these were obviously very heady growth levels because we're just in early 2021 here. So we're coming out of the pandemic. We're turning the economy back on, and things are absolutely roaring. As ever, what the PMIs measure is not just growth, but the speed with which it is occurring. So 50 is neutral, above 50 is growth, and the further you go above 50, the faster the growth. Below 50, of course, is contraction, and the further you go below 50, the faster the contraction. So this is not only a sense of whether we're growing, but also how fast. So when we look at this composite index, the reference points for it are back here in sort of latter part of 2021, early part of 2022. That's maybe about halfway into the adjustment that is the cool down after the COVID catch up. We can see here the pace here in early 2021 absolutely off the charts because the economy was completely closed. And so when we turned it back on, the speed of catch up was rapid. So it's not just growth, but very fast growth. And then, of course, things cooled off in terms of pace. But we are now looking at still a very healthy level of expansion overall. And indeed, if we look at the Atlanta Fed GDP Now forecast, nowcast, we're still tracking north of 3%, about 3.1% for the fourth quarter for GDP growth, which, needless to say, is very impressive for an economy the size of the U.S. and suggests that the very strong momentum we had last year continues. But again, these things matter in relative terms. Take a look at what's going on here with this index, and we can see that while the September FOMC happens at a time when the Fed gets dovish into an upturn for economic performance, which is what gives the sort of counterintuitive response, the Fed cuts and bonds sell off and yields rally. Here we have the flip side. The Fed gets hawkish as relative performance cools. This is where the Fed gets hawkish. By then, notice we're through the 20-day moving average in the opposite direction. And so now it looks like maybe the bond market is too weak, like maybe this move has run its course back up at these levels, much like this move ran its course when this policy shift occurred. And so one opportunity we're going to get even this week, bridged though it is, to get a sense of whether the market is indeed looking at it this way is going to be the manufacturing ISM survey. This is a version of PMI-like data from the Institute of Supply Management. The service sector component is coming next week, but later this week we're going to get the manufacturing side. And what we're looking at here is another modest contraction, 48.3 on the index. But what the number is ultimately not that important. What's important is whether it'll be higher or lower than expected. And if what we're seeing here is increasingly a cooling off in outperformance for U.S. economic data, then we should come in line or even a touch lower than expected. And if that occurs, then perhaps what we've seen in the adjustment toward reflation in this move here has run its course. And when we look at what the bond market then does today, what we find is a key reversal, a sharp bullish engulfing candlestick pattern squarely at the lows that we set when we first started to shift in a more dovish direction again back in April, when we started doing all of this and all of this. And so what we could be looking at here is now a bottom with some scope to correct higher. Now, we are still narrowly within this range, but the shape of the price action suggests that perhaps going into 2025, even as the market is hopped up on a strong economy and a Fed that's seemingly moving into a much more hawkish setting, to actually the flip side, much as we did in mid-September, where the market finds it's overcorrected and bonds look poised to bounce. The dollar looks poised to correct lower. And a broader rethink of just how hawkish the Fed is going to be next year comes as a kind of inverse of the rethink that followed September. And that is Macro Money for today. This will be our last show for 2024. We come back after the holiday on Thursday of this week for the first show of 2025. I want to wish everybody a safe and happy holiday. However you happen to be celebrating it, happy trading. Macro Money is back next year. Take care.
Rewatched that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Grax, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots. Okay, thanks for the heads up. Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace. With me today, of course, Katie McGarrigle. Where do I start? Crypto for Beginners, episode 9.
Niner.
How are you?
I'm doing well. How are you?
Yeah, pretty good.
Yeah?
We're getting through the week, right? It's hump day, Wednesday.
Cruising?
Yeah.
We're
I like
not
Thursdays.
boozing, but we're cruising.
Not boozing yet.
I saw they popped some bottles out there.
Without us.
Without us. How rude.
Per usual.
Yeah, I know.
We always get left behind, Katie.
I know. Maybe there'll be some leftovers when we're done.
Maybe.
We can only hope.
Katie, we got to shout out the chat. We're streaming live on YouTube. If you're watching anywhere else, get over to YouTube if you want to type something crazy into the chat. Grumpy Mike, what up? VW Diesel Dork, what up? Those are the only two I see thus far. So if anyone else types in there, I'll scream out your name as well and say, what up? Where do you want to go first, Katie? This is going to be the last episode of Where Do I Start? I think you're going to continue to spend some time with me on air. We've got a lot of exciting things planned for next year, but it's going to be our last show of, I guess, pre-Christmas season. I'm out next week. I don't know what your plans are, but I'm not doing
girly.
this show. Okay.
That's okay, though. You know, it gives people a chance to miss us.
Yeah.
You know?
I'm sure
you
we'll
want
be
to,
missed.
like, have a little mystique, a little, I don't know, je ne sais quoi, so that when we come back, it's going to be even better.
Coming back, bigger, faster, stronger, 2025. This will be the last one for a week or so, but we will be back on Monday the 30th. Last episode of Where Do I Start? We're going to talk about DeFi, liquidity pools. We talked about Uniswap a bit on the last show. Before we do that, though, a little bit of volatility in the market today, Katie.
Indeed. A little choppy chop after that little FOMC announcement.
A hawkish rate cut, as I understand it, and everything's unraveling. I personally think this is a dip to be bought in crypto specifically, but in other areas of the market. How are you thinking about things over the last couple of hours? Because this is pretty quick unwind. I mean, the VIX went to, what, almost 30, maybe almost doubled.
Yeah.
3% down in the S&P. I mean, that's a big move post FOMC.
When you get the text from your dad, like, hey, what's going on? That's when you know.
That's when you should be buying the dip.
Maybe.
Yeah.
I mean, I'm with you.
The fear is real.
I think I don't think that Santa Claus. Mikey said it earlier in one of our side chats. He's like, "Uh-oh, Santa Claus fell off his sleigh before the rally." I'm with you. I think he maybe just lost his footing a little bit. I think we will see a little bit of a rebound. But as far as crypto goes, I wanted your thoughts on that because this is my first. I'm trying to think of when I bought like my first little bit of like Bitcoin or ETH. First or second FOMC announcement. And this is obviously the first one I feel like we've had a material reaction.
Yeah.
So what are you thinking in terms of like how does it normally work when you see, these larger market moves in terms of like correlated assets kind of all falling at the same time? Or do you just tend to see a little bit more volatility in terms of price action?
You definitely see more volatility with the price action. I think as a result, you see the correlation strengthen. So there are periods of time where we see this positively correlated. There's a strong positive correlation across risk assets when you're moving higher. Right. You do see that at times. But like everything else, correlations go to 1 on those down moves. So you have a risk-off move. There was a catalyst today. Jerome Powell, FOMC, interest rate cut, but maybe not as dovish as everyone had priced into in terms of the forward projections into the market. So you see that correlation strengthen. How long does that last, though? Mm-hmm. No idea. I don't think it persists. I can look at pockets of crypto right now, some of the areas that we've talked about that are interesting, whether it's in memes or it's in these AI agent tokens and other areas of the market that in some cases, we've got stuff that's up 10 to 20%. When I look at the move to the downside, well, yes, everything is selling off. We were down a lot more in percentage terms, a couple weeks ago.
Right.
Down 4.5% right now. So a little bit of a recovery. We've got ETH back towards 3,700. This is kind of normal course of business. I think if you're, excuse me, I've got something popping up in my chart. But yeah, just looking at a couple of things here. I mean, we got trading view up. So what? It takes you to the bottom of the range, off of the top of the range. We're going to ping back and forth in between that. We were here just a few days ago when you look at Ethereum. If we go back to Bitcoin, right. Same thing. I think your range is, probably 105, 95, 110 to 100. But I'm looking to buy pullbacks here. Okay. Still structurally very bullish. Aside from the fact that, maybe caught a little bit of levered longs off sides with the commentary here following the FOMC. I don't think anything has changed necessarily.
Yeah.
Could this be a redo of, I think, 2018 in December?
Oh, yeah.
We were, this was, I think, the Fed hiking or attempting to hike and then kind of had to reverse that. There was a little bit of volatility in the market. Maybe it's something similar to that. I don't necessarily think so. I think when you look at the kind of more macro picture, still pretty supportive from that kind of growth inflation perspective. So yeah, again, just long-winded way of saying, I think you have an opportunity to buy the dip. Does that dip extend into the mid 90s? Possibly. We know again that Bitcoin can move 10, 20% in a week. So down 4.6% on my screen right now isn't that crazy. I don't think you rush into it, but in terms of how you think about it, I mean, maybe that was it and this is the beginning of the end, but I don't think so.
Yeah. I tend to agree with you. We'll see, right? I mean, and the interesting thing about this is that it trades 24 hours. So, like you're saying, you don't have to have like this lull period that like the futures are closed right now, right? And so is the U.S. market. So you can just keep watching it all night.
That's a great point too. And I want to expand on that in that this is not just a U.S. thing. It's not the S&P 500. It's not a single stock. Do things like interest rates have an impact? Absolutely. We've done some research previously looking at this, though, and there's not that strong of a correlation. Over time, this stuff has gone up. So with a limited data set, it's hard to find a very strong relationship given that it's trended higher and you have volatility in between. Some FOMC announcements, it's up a lot, others it's down a lot. But there really isn't a strong correlation between that announcement and what happens, within the moments thereafter or the following day. We can't forget, though, that this is global. It's an internet digital asset. Yeah, rates matter. The Fed matters. Absolutely matters to global markets. But so does, Chinese liquidity, liquidity out of the ECB. What the Bank of Japan does, what the Bank of England does. Like those things matter too. And so again, I just want to reiterate the point that this is so much more global in nature that I think Fed interest rate decisions probably matter less over the long term. Like, you remember what happened in the S&P, the last FOMC decision? Like, do you even know if it went up or down?
I mean, I'm assuming it probably went up a teeny tiny bit.
I don't know. I don't remember. But, I think you kind of apply a similar perspective here.
Exactly.
I don't think this was a make it or break it FOMC announcement for the future of Bitcoin.
Yeah. Well, something that I want to reiterate really quickly before we actually get into the meat of today's topic is that we have a couple of new digital events live on tastylive.com. And one of them, if you are just tuning into Where Do I Start Crypto Edition for the first time, Ryan is actually going to be doing our January digital Tasty Live event. So everything you wanted to know about crypto, but we're too afraid to ask, hosted by you. I'm super excited for it. You can also sign up for 2 other events that we're going to be hosting in February and March. Yeah, look at that. Great pick of you.
Not bad. They found one good one.
Hey, trust me, there are so many
it's the lighting.
Awful pictures that are probably floating around after having been here this long. But yeah, sign up, tastylive.com/events. It's free. You will get access, of course, to the airing of the digital collectible, and it will be given to you as a collectible after the fact.
Yeah, you can see the others here that are coming in 25 as well. We got Dr. Jim, Mike, his friends, and his whiteboard.
Yeah,
so,
I wonder who his friends are.
I don't know.
We'll find out.
Yeah, I'm excited to meet his friends.
Yeah, I'm excited to meet his friends too. I'm excited that he's reviving the whiteboard though.
Hell yeah.
It's going to be great. So anywho, I just wanted to give you that quick little plug because I have just gotten so much out of this, very short series with you. I'm looking forward to continuing it as we kind of enter 2025. But if you want to get caught up while we are, in a lull period, you can of course rewatch all the archives that we've already done, and then you can catch up again in late January.
Yes.
It's going to be dope.
Well, you want to wrap things up, talk a little bit more about DeFi, Katie?
Yes, I do, because it is still an elusive space to me. I sat in with a meeting with you and Shelly and Tom today, and Lawrence, and I think I got every third word.
Okay.
So I'm excited to continue to discuss all of the applications and uses of DeFi. So what are we kind of talking about today in that space?
I want to throw up the slides here, and today I want to talk about the other side of what we illustrated on Monday, and that was decentralized exchange. On Monday, we talked about decentralized exchange, trading tokens on a permissionless peer-to-peer basis through a protocol, a platform, whatever you want to call it, but in this case, Uniswap, trading through the Uniswap decentralized exchange as being a very pure form of DeFi. What represents DeFi? We're talking about decentralized finance and this concept. Here's a real use case, which is just trading tokens, but without a brokerage firm, without the New York Stock Exchange, without some of those traditional intermediaries or counterparties that you would think of. Instead, it's just using smart contracts, using code. Mm-hmm. So we talked about that. We hit on Uniswap a little bit. I want to talk about where that liquidity comes from and how you can also participate in DeFi as, I suppose, a market maker or a liquidity provider. Mm-hmm. And you can generate yield by allocating your capital to facilitate the trading process.
Okay.
In the same way that you have market makers that facilitate the trading process in the traditional sense, you can play a similar role on chain as an individual. And it can be quite lucrative.
Okay.
So-
I'm curious. Tell me more.
All right. Real quick primer on Uniswap, decentralized exchange built on Ethereum. We've talked about this last show. We've talked about this many times on the show. You can swap tokens. You can also provide liquidity. You need to do that from a self-custody wallet. You have to have control over your keys. You have to be able to sign the transaction yourself, and that gives you the ability to interact here. So you need a self-custody wallet. You plug the wallet into the exchange, connect it to the exchange, however you want to think about it, and then you can participate in this way. Couple high-level things, more jargon, stuff to explain here. This uses an automated market maker model instead of a central limit order book.
Okay.
So there's not really a bid-ask in that sense. You have a single price that's through an algorithm. Automated market maker is the model.
So is there slippage? Is there arbitrage?
There is, yes.
Okay.
Yep. All those things exist. And all those things help to, in some ways, keep the market in line. Arbitrage opportunities do for sure. You interact with smart contracts to execute trades. We talked about that. You don't have a counterparty. You just interact with the code base, if that makes sense.
Yep.
It's non-custodial, self-custody wallet. You maintain control over your funds. So you don't have this risk where the exchange is the custodian in the way that FTX was, right? So you are always in control. You're just using this application, but you remain in control of your capital. It's trustless and it's permissionless participation. You simply just connect and you use it.
Okay.
So that's Uniswap. Liquidity pools are one of the ways that you can participate. The liquidity pools themselves facilitate this automated market maker model. So the trading works because liquidity is provided in these pools. It's provided by individuals, institutions, you name it.
My question is like,
anyone can participate.
okay, so is there a single wallet for the institution as well? Or do you think that that's kind of dispersed?
It's the same for everybody. Now, you might have infrastructure that has varying degrees of security that's internal to that firm and its own risk controls.
Sure.
But the way that you participate is the same. At the end of the day, that big hedge fund has a wallet, and you have a wallet, and you're interacting in the same exact way.
Got it. Okay.
Now, what kind of security surrounds that wallet and what services support it might be different than what piece of software you use, but you're interacting in the same way.
Got it. Okay.
So where are we? So liquidity pools and liquidity providers facilitate this whole process. To do this, to facilitate the process, you deposit a pair of tokens into the pool. I'll show you this and it'll make more sense in a second when we look at Uniswap. But if I want to provide liquidity for people to trade Ethereum against US dollars, so just ETH priced in dollars, I've got to have some Ethereum, I've got to have some US dollars. I bring both to the table, put them in the pool, that facilitates the trading process.
Okay.
When people use the exchange, they're either buying or selling one of those tokens. So if people want to buy ETH, what's actually happening is that they're selling USD and they're buying ETH, or in this case, USDC, the stable coin. So that pool is going to reflect that for every trade. There's going to be more or less of each one of those tokens coming into the pool. It's called a constant product model, which is going to be used to calculate the price. But at the end of the day, the output is a price of the token based on how much of each one is in the pool, or a price for the pair. In this case, what's the price of Ethereum?
Sure.
So in the pool, if there's less Ethereum because people are buying it and they're putting dollars in, they're selling dollars, the price of Ethereum in dollar terms should go up.
Right.
If it doesn't, well, then that might present an arbitrage opportunity that you could take advantage of, because over here you can buy something that's cheap relative to where the rest of the market might be.
Okay.
I know that's a lot, but we'll make it real in a second when we take a look at the protocol. The thing that's important about this in providing liquidity is that when you're using this platform, Uniswap, to trade, I want to buy ETH, I've got stable coins. You're going to pay a small fee, 5 basis points in this case. When you trade at tastytrade or any other brokerage firm, maybe you pay a commission, there are some associated fees.
Sure.
The difference here is that those fees go to the people providing liquidity.
Okay.
Those fees are charged on the notional value of the transaction. Those fees do not go to a company. They don't go to a brokerage.
Yeah.
Go to you, the user. In a way, you can run your own brokerage on a blockchain 24/7, collecting a portion of a fee that's charged on the notional value of the transaction. And when things are humming, like they have been over the last month or so, and this month's been pretty good as well, there's a lot of capital that flows through this. And if you're providing liquidity to facilitate the trading, you're making a lot of money.
Yeah.
Like we're talking about annualized rates that are at times, and you just look at the 24-hour period and you can annualize it. So it's not perfect. It's going to be wildly variable.
Mm-hmm.
But well over 50%. In some cases, well over 100%.
Is there a minimum amount that you would say you would need in order to start participating?
Used to be that you would need a lot more money because the gas fees were so high on Ethereum. When I started doing this, you really only could do it on ETH. And you would pay $60, $100 in gas just to put your pool on. If you wanted to rebalance it, do something with it, interact with the network whatsoever, might cost you another $25, $50. So you had to have enough capital and you had to have a return that generated something, well in excess of the cost to put it on.
To offset it, okay.
Nowadays with layer ones, to set some of these pools up, it might be a couple of pennies. So $500, $1,000, I think is a pretty good starting point. So a minimal amount of capital on a layer 2 like Base, Polygon. You could do some similar things on Solana, but we're talking about Ethereum here today. So we're probably going to run out of time, Katie, but I'll try to get through a bit more of this and show you the protocol and interacting with Uniswap. But how do you participate? We're going to take a look at that in just a second. One, get some crypto in your wallet, connect your wallet. So get a wallet, get some crypto, get on chain. Once you're on the Uniswap protocol, you select your token pairs, you set up your pool. I mean, it's pretty straightforward. I'll show you the interface in a second. And then once you do that, you're in.
Yeah.
Generating fees, you can make some changes to your pool, but why don't we just look at it instead of talk about it? Because you can do this in the Tasty Crypto wallet. We've got the DeFi dashboard now. You can do this with the browser extension. You can connect to Uniswap with a browser extension. So just very quickly, and then I want to jump to the browser because I do have Uniswap pulled up there. But here is the current version of the Tasty Crypto wallet. Here's our DeFi tab. Click on Uniswap, and that'll take you to the protocol. You can connect the wallet. We're working on this automatically connecting.
Oh, sure.
But you still have to go through that step and connect the wallet. But you can do that in the upper right corner there.
Either with like your phrases.
Oh, no, this is just a pop-up and you hit another button.
Oh, beautiful.
It's just signing a transaction and basically logging in. You can think of it that way.
Okay.
What we'd like to do to make it easier for people is just push the button and you're automatically logged in.
Yeah.
You can see on here a few other ways that you can interact with DeFi. So a lot of exchanges, Aerodrome, PancakeSwap, Radium, and Jupiter. Those are on Solana. So you want to trade some of these memes and other things that we've been trading. You will go there. OpenSea, you can buy NFTs, that sort of thing. But Uniswap is what we're talking about today. That said, let's jump into the browser, and I want to show you the other side of this, the liquidity pool side, because if you recall, we were looking at swapping through this interface last time. The wallet is connected here, so you can see we've got a little bit of capital in here. Probably can turn this into dark or light mode, maybe a little bit easier to see if we turn into the dark mode. So our wallet's connected. Straightforward process though. You just click the connect button and then click wallet connect if you're using Tasty Crypto. You can find the Tasty Crypto app on there, or if you use something like MetaMask, whatever, some of those bigger ones pop up first. But point being, connect your wallet. Once your wallet's connected, the app is able to read what's in that wallet. So it knows, how much of each one of these tokens we have. You can see we've got a couple different chains in here, a couple different tokens. That said, this is the trading interface where we can swap ETH for USDC and any other token that we want. What we want to do next, or instead, is go to pool. So here you can see all of the pools. We've got wrapped Bitcoin versus Ethereum. So this is Bitcoin, Ethereum on Ethereum. USDC, Ethereum. Ethereum, USDT. Another stablecoin, US dollar Tether. So you can see that these pools here are listed by TVL. This is total value locked. You can think about that as the amount of capital in the pool.
Okay, that's what I was going to ask.
Here is the extrapolated or estimated annualized percentage return, and then here's the one-day volume. My advice, if you're just getting started, is to probably go into something that's a dollar base, because now you only have to deal with the volatility of one token. You know, if I'm trading a pair like Bitcoin and ETH, I've got to be aware of both their notional value, the volatility. They are correlated, but does that correlation ever break down? Sure.
Sure.
So if you just trade ETH versus dollars, or you provide liquidity that way, it's a little bit easier to get started, and you remove the volatility from one side.
Sure. It's like trading, I mean, kind of like a micro currency future or something along those lines, as opposed to a cross, right? Where you're doing like, you know, Euro Sterling or Aussie Canada. So I get like not wanting to overcomplicate it right away.
Yes.
Okay.
Yeah, I would stick with this, and I would go into something that's got a decent amount of both TVL and also volume. And so you can see here that TVL is 143, but volume is almost 4 times that. So this is turning over quite a bit, which means that a lot of trading activity, a lot of fees. In the last 24 hours, this pool of $143.9 million generated almost $250,000 in fees. Decent.
Yeah.
Decent return. You can see the makeup of the pool and some other details, and you can just watch as the transactions go through here. So you can see that there's a lot of trading activity that occurs on here. It's not anywhere near what you see in traditional markets, but it's growing, and there's trades that occur frequently enough that you can generate some yield. So all that said, Katie, I want to now set up a pool, or kind of just walk you through how you think about it. Very easy to do that. Here we can see some details about the different pools and then what chains they're on. Here we can create a new position. So when you create a new position, the first thing that you have to do is select the token pair.
Okay. Which two you're going to be entering into the pool.
Exactly.
Got it.
In this case, I want to do this on base because it's a lot cheaper. So I need both Ethereum and USDC on base, which we have a little bit for this example, like $40, $30, somewhere around there. But just make sure that you select the token, and then it's also on the right chain. So you can see there's...
you know that that's on base because of the small little icon in the lower right of it.
Yeah, you have to know that this is the base icon, I suppose, but this is the base icon. This is Ethereum on Ethereum. It is a little confusing that way, and there are a lot of L2s, but you'll see Optimism, Arbitrum, you'll see Polygon. This is base. This is Coinbase's L2 base network. And you want to make sure that the token that you're going to put into that pool, I mean, this is the way that you would do it, is also that same network.
Got it.
So for here, it'll tell you the fee or the pool that you want to be in terms of the fee tier. When I first started this, the fee tier was 30 basis points. It's crazy. But that was on Ethereum. That was bigger transactions, lower volumes. What you've seen is that this has shifted over time. It's the lower fee, higher volumes. There's more money being made, even though there's a lower fee tier.
It's like a ticket charge back in the day.
Exactly.
The trading desk.
Once you do that, and we are going to run out of time, but the next thing that you do, and we'll continue this conversation into the next show, is you just set your range for where you want to provide liquidity. I'll use a 1 standard deviation range for a weekly basis, given whatever the implied vol and the spot price is. You can provide liquidity across the entire thing, but if you concentrate your liquidity, it's a more efficient use of capital in that for the range, you're going to be providing liquidity only there versus the whole thing wherever it trades. So you're going to get more fees, if that makes sense.
Sure.
So once you do that, you click continue, and you then just simply pick how much of the balance of each token that you have you want to allocate to this. If you were to click the max and you have the appropriate amount of both ETH and dollars, you would just then click review. That'll ask you to sign your transaction. You create your pool. And I don't have one loaded up here, but next time I'll show you a couple live pools. It looks a little bit like a strangle in that you want the price to stay above the low end of the range and below the high end of the range. And as it trades around there, you just generate fees. Then you can collect your fees or shut down your pool. But this is a way to put your capital to work. Yeah. You are effectively constantly trading ETH for dollars at different prices around this curve, but you're receiving a fee for doing that. And so if you're bullish ETH and you put this pool on, this looks a lot like a covered call because you limit your upside. When it goes out of range to the upside, you've basically sold all your ETH. So you just have dollars.
Yeah.
So you're out of range. But you've generated that return off of not only the price appreciation of ETH as it's gone higher in the range, but also the fees that you generate as it just chops around and trades going up there. It's not a straight line necessarily. A lot like a covered call. You have a yield in terms of the premium from selling the call option. You cap your upside. You are bullish. You do want it to go up to that short call strike. But here, you're participating more like a market maker and constantly generating fees as it goes both up and down and chops around versus a static premium received for selling the call option.
Okay. Yeah. This is super fascinating to me. One really quick question. So if you were to flip-flop those and do USDC on top in this example and then ETH on the bottom, that is a different pool?
Nope, same thing.
Okay.
Yeah, you can look at it and set it up that way too. So I could set the price range up as USDC or ETH, just depending on how I want to look at it.
Okay.
To me, it's easier to see it priced in dollars.
Yes.
But yeah, it's the same thing. So the ETH USDC is the pair. You might have people that are buying ETH, selling dollars, or vice versa, buying dollars and selling ETH.
Got it. Okay.
So selling ETH $4.
Right. You're just there on the dance floor.
You're the market maker.
Yeah.
The market maker is the algorithm, but you're providing liquidity for the algorithm to make markets. And the algorithm, people can read the white paper. They can learn a bit more about how this works. There's a lot of similar mechanisms across decentralized exchanges. But the fact that you, as an individual participant, can allocate risk capital to facilitate the market making process and then generate fees as a result, I think is pretty interesting and real use case here of DeFi.
Ryan, I'm very, very excited for what is to come as we close out. Where do I start? My learning journey is not over.
Yeah, we're going to naturally keep this going, and we'll be back on Monday the 30th. But I think we're going to start to trade a bit more, actually do some of these things that we've talked about, put our money to work, talk markets a bit, and I'm sure there will be almost this educational component to it, even though it's not where do I start.
Yeah.
You'll have a lot of great questions. Hopefully I'll be able to answer some of them, and we'll go forward.
I'm sure you will. All right. Well, if I don't talk to you, have a lovely, time off.
Thank you.
Away.
You too.
You deserve it. And hopefully
You
we see a
too.
little rebound this afternoon and into tomorrow.
All right, fingers crossed. That's going to do it for our show. We'll be back in another week or so. Until then, I'm Ryan.
I'm Katie.
Peace.
Peace.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Oh yeah. Tasty Nation, good morning.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Christy Ross, St. Norbert College, Wisconsin. Number 85, because I like trades that have an 85% probability of success.
Lindsay Grata, University of Illinois at Chicago. Number 14, because that's how many times Tom asked me, where's my lunch?
Tom Sosnoff, State University of New York, Albany. Number 0? Really? You gave me 0 because I like being delta neutral?
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
You hear it all the time. Spoos up or spoos down. What exactly does that mean? Spoos is a slang term for the S&P 500, specifically the S&P 500 futures contract /ES. It's the world's most liquid asset. In the S&P 500, billions and billions of dollars trade hands each day. The S&P 500 represents the top US stocks, all in one basket, traded through one contract. The S&P 500's movement day to day gives you a good overview of the market as a whole and what it's doing.
People are always asking, where can they find my podcast? There it is, son. Look at that option. Look at that Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
To my trusted financial advisor, let me know your thoughts on reinvesting what very little remains of my money into ramen noodle stock, now that I'll be eating it for every meal until I die. Best, Cynthia.
Sometimes it feels good to get smart. Get even smarter with live market insights and insults.
They're all frickin' losers. There's no skill.
From the smart mouths at tastylive.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Grax, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
No, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this.
To me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yes.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon. Every Tuesday and Thursday. You too can stick with the bat.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Grax, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
last really big day of liquidity for 2024, and the bond market seems to make a play for a reversal. What does that mean? And what could we expect from here as the calendar turns to 2025? That's what we're going to concern ourselves with as we discuss what happened and how things are lining up for the rest of the week here on Macro Money.